morning, sir. How are you? It's a bright and beautiful Tuesday. Actually, not so bright, but I left early yesterday. Got out of the office at 3 o'clock.
Did you see the sun yesterday?
I saw the sun. This getting dark at 4:20 thing is just messing with my mood ring is like black, and it's flat black. It's not even shiny black. It's flat black. So yeah, it was like to get out and start driving home, and traffic wasn't bad. It was great, but it was nice to see the sun at least a little bit and do that. So thank you that was good advice. Frank just looked at me and he's like, "You should go home." So.
Well, because it's that time of the year where there's a lot of darkness all hours, and especially we do this show, which I don't know whose idea it was to do it this early and to start it.
Best part of the day. These 3 hours, the best part from 4 to 7 in the morning are the best parts of the day.
Agreed. It's pretty solid, but it is so dark when I walk into work, which is probably an hour or two after you drive into work. And so I'm sure it's really pitch black when you're driving in. And then Pete will stay until like 5 p.m., which at this point in the year in Chicago means the sun is down. You're done for the day. And so if you can leave an hour or two early, and you're not doing us any favors sticking around, because at that point in the day, there's just like a lot of like blank staring and kind of like rubbing of the chin. And,
here it goes. And do the sigh.
What?
And then the sigh, right?
You do a lot of sighing?
That's what you told me.
Oh, no, you're perfect.
Okay. Yeah, nice try. What, are we in bonus season?
But yeah, it's a tough time, but I'm glad that you got to see some sun. I don't know, it must be a relatively modern invention, the fact that we don't see any sun throughout the day, even in the winter in northern parts of the planet. Because, like, I have to imagine even, like, pre-industrial age, people were outside in parts of the day, even during the winter, right?
Yeah.
Like, it can't be good for... It's got to be, like, the last 150 years that we haven't been seeing sun. Really, like, you could go weeks without standing in the sun for 15 minutes, don't you think?
Yes.
And that has to be relatively modern.
So if they eliminated daylight savings time, it'd be darker longer in the morning, but we'd have more nighttime, right?
Sure.
Okay.
Yeah. Which fine. Anyway you skew it, but I'm more just saying that, like, we work in these offices and we have our Teslas now in our garage, and we don't spend any time outside at all. And it was funny when I was down in Oklahoma, there were like 2 or 3 different points where it was cold down there, but the sun shined a lot more than it does here. It could be overcast for like 3 weeks at a shot here. And I would just stand there in the sun for like 20 minutes, even though it was like 40 degrees. But I was like, I haven't stood in the sun.
Stand there in the sun,
for 20
or
minutes.
sitting on your fine steed, surveying Kevin Costner, all that you have of brownstone.
There was a little of that. Well, my fine steed,
your Oklahoma version
I had
of Yellowstone.
my small mutt dog sitting there next to me, not sitting, but rolling in the horse feces, which is like her favorite activity when we're down there. But yeah.
Apple doesn't fall far from the tree.
But yeah, I'm glad that you got some sun. We need some sun because between the driving to work when it's dark, standing in an office or sitting in an office all day, and then driving home when it's dark is brutal, man.
It is brutal.
Did the sun brighten your attitude? You seem pretty chipper today.
Yeah, it was nice. It was good. It wasn't just going from cave to cave. So all good. All good. I'll take the wins where I can find them. So
and we have some extra people in our cave this week. We have some friends. I know that one of them brought you a gift.
We have, yes. And when I was in Krakow a month ago, I was introduced to one of, I don't know if we can get this up here, but
it's on there. It looks pretty good.
It looks pretty good. There we go. Hold on, right there. This is cherry vodka. Now, it's not like vodka you get in the States. It's like 80 or 90 proof. It's lower proof, but it's got a cherry taste to it, which makes it especially dangerous.
Sure.
And but we actually were joking that they serve this in bars that are cherry themed, and they only have tables in there. There's no chairs. and you can buy it by the bottle or buy it by the shot. And it's really kind of interesting. We were joking we should do a live show segment from it with all the cherries. It would be so tasty ass.
Yeah.
So, and Thomas Kazabuski, one of our lead technical, our lead developers, was kind enough to bring me a bottle because we had been joking we were going to be shooting show segments. So we have this fine example of, again, we should get a sponsorship of some sort involved with these guys, or at least a co-marketing effort.
It seems a little risque. I'm going to be honest. I mean, she's got two cherries that are kind of
easy.
Yeah, you're you're uncomfortable considering.
They're cherries,
Really,
Frank.
we've seen your. I'm not going to.
The show doesn't have a lot of sex appeal. The network.
You're
in
50% right. I know I can call home and get an 11 score. So I don't know if you can. So I mean, maybe that's
Listen,
what we need
I
to
got
do.
plenty.
Maybe
I got plenty of
And
stuff going on.
I want to
okay?
hear the viewers, the traders' thoughts. Do we have too many monochromatic mustards going on here?
Everybody always makes fun of this shirt that it's a mustard yellow. I kind of like it. And also, what's funny, I've been told by several women that the cut of this shirt is very nice on me because my
Really?
arms are looking pretty good these days. I've got a
Pretty
little
jacked?
arm, shoulder, back thing going on, and I mean, when I was down in Oklahoma, more than one woman wanted to rope me down there. So I'm just saying.
I would imagine.
But that is a
So and no shaming with the string pants. Again,
no
Frank's
shaming
got
publicly.
a young childhood
Yeah.
phobia around buttons and zippers, so he's compelled, and it's by doctor's orders. He actually has a prescription from a licensed
not true.
medical telehealth professional that he can only wear pants with strings and not belts and zippers. So
No public shaming. Honestly, I think
Really?
I think they maybe see a guy like me and they're like, oh, look at this is like a modern city guy. He's got some interesting stuff going on. Maybe I should look into this Lululemon. No, they don't.
I bet that's exactly what
they definitely
Why don't they
didn't
carry
think
this
that.
at Farm and Fleet?
Yeah. But yeah, I got plenty of going. I don't know. Just the cherries over the breast thing is.
It's uncomfortable for you? I'm sorry.
This is a family show.
Okay. Is it really?
No, not at all. Anyways, what's going on today? There's not so much going on in the way of large price action.
No, but
as
some
I look
interesting
through the,
divergence here. Euro actually holding in above 105. Is it a rally? It's not putting in new lows. Sterling actually rolling over a little bit. So we're seeing a little bit movement across this. Now we're in a story of where's the dollar? It's kind of flat. Yen's up a little bit. Sterling's down a little bit. Aussie's bouncing a little bit off of its lows. None of them to a big degree. But as traders, we're getting two-way action, which is what we want. So you can trade a little bit of both sides of the market. But we're definitely seeing sterling underperform euro right now. Swiss and yen, both. Swiss is finally getting some legs on it. Right? Dollar Swiss getting sold a little bit lower, but nothing moving by huge chunks right now.
Yeah, not a bunch of big action, but a little bit of reversal from yesterday. I mean, yesterday throughout the day you just saw, and let's actually take a look at some of this movement if we dive deeper into
This
something
is one
like Aussie.
That's interesting too. Yeah.
Because yesterday, I believe if I have this right, yeah, here's Monday. Huge sell-off as we were ending the show.
Right.
And then just continuation throughout the U.S. Open, got all the way down to 64.50. And then a decent bounce here of, 20, 30 pips by the end of the day. And today, continuing to bounce back a little bit throughout Asia and Europe, and now giving back a little bit of ground here. But what's interesting, Pete, is yesterday seemed like a classic outside day with some mean reversion.
Right.
And what I mean by that is you and I'll never forget this guy, Gene, who is the risk manager at the prop shop I worked at the Chicago Board of Trade. And he, of course, I studied math, and so like all this modeling of markets and everything else. And he was this like older guy who I'm sure had seen everything, and he was like, you really just have to think about things like a rubber band. And sometimes the rubber band expands and it comes back, and sometimes the rubber band expands and it breaks. And that's really it. And that's all that we're doing here, because we were trading treasury spreads, a ton of spreads. And so when you're spreading off all these markets against each other, the theory, at least at that firm, is that if you're trading, I was trading Asia and Europe, if you're trading whatever sessions and you're getting flat by the end of the day, that like everything should pretty much equal out.
Right. And again, spread trading is pairs trading. It's mean reversion. So same thing there. You're just trading different maturities within the treasury cycle.
And we're not too far from that when it comes to currencies here, because you can see that there are two markets that have a slash in between them, and they're seen, I mean, it's a Forex pair, right? And so that being said, you do tend to see, Pete, that the rubber band expands and then comes back more often than not. We talk about standard deviations, and just by a pure probabilistic mode, you're talking about a 68% of the time it stays within this range, and a 32% of the time it goes out of that range. That's one standard deviation. And the one standard deviation, I'm sure you did this with Glenn in the last couple of weeks, in Aussie, I'm just going to say back of the envelope math, is probably around 40, 50 pips.
Yeah.
And so yesterday, Aussie being down, I think it was, down at certain points, like 60, 70 pips. So outside of that standard deviation, at that point, when it was, down here at 64.60 and 64.50, kind of the outside territory, one of two things is going to happen.
Right.
It's either going to expand and break, and we're going to close down here at 64.50 or even further, 64.40. Anything can happen, obviously. Or it's going to contract a little bit, and the market is going to say that was actually too much. Especially you see a move like this, Pete, where they're selling going into the U.S., and then on the U.S. Open, they're really trying to push it. Yep. And then they can continue to push it, but a lot of times you'll see, okay, we pushed it here. It was a little bit too far, and then you see the bounce of 20, 30 pips back into what's inside territory. And so yesterday, a really classic example of, a good contrarian day or a mean reversion day or a normal day, as Gene at the Chicago Board of Trade would say.
Great walkthrough. And this is why we look at, and you highlighted it perfectly, the one standard deviation range is it takes that 50-50 bet and makes it 68%. Now that's 68% of the time the market stays within that range long term. So you have to accept that 32% of the time it will continue to move. But that, if you think about it, that in and of itself as a tool for reversion traders, for people trading extremes, is a powerful dynamic. If you can, you pair that with disciplined metrics, with disciplined profit and loss targets, you've started to develop something that has potential to have edge for you.
Yeah.
But that is, again, one set of tools that you can use to take advantage of market movements like this and put scale around. What I love about this is, having traded so many different things in 40 years, the hardest thing for us was when the markets started to experience a run, volatility would expand. That one standard deviation, we weren't looking at numbers back then. We were all kind of just gut.
You were doing it without.
And we were used to fading a 30 pip or 40 pip range, but the market was giving you 100 a day. Adjusting your methodology was a painful exercise because you were too involved too early and usually sitting on bad positions. By being able to look at that, and that it's a dynamic indicator that gives you a sense of basically what opportunity the market provides for you. So that is a nice piece of context to have. And different markets give you different elasticity depending on the volatility. And that's what that provides for you. So it's a nice way. It's one we often reference as a valuable tool. Again, not a guarantee, not the single thing we base our decisions on, but it's a tool. It's part of our decision making.
Well, and it helps with decision making in a number of ways, which I'll get to in a second. But just to hammer on Pete's point there, these things absolutely do change. For example, here in the summer and spring of this year when we saw some really low volatility.
Right.
The standard deviation in this Aussie market is probably more like, honestly, like 20 or 30 pips. Getting into the fall here, it started to heat up, but really still nothing outside of the normal. And you were still looking.
But this heated up a lot more than Euro did.
Yeah, and especially going into the
Yes.
election, and then now post-election, there's been some
Which
big
is
moves
nice,
as well.
because if we know that we have liquid markets to trade and tight bid-ask spreads, I should be able to move from Euro to Aussie to Canada to whatever is giving me that elasticity and that bigger reversion to play pretty comfortably. And when we were down to 21 ticks in the Euro, and I went back to Glenn, Glenn, run the numbers, you're wrong, it can't be that small. And it actually was. And what that tells me as a trader, nobody's going to be, 21 ticks is so tight, no one is going to be able to pick the right 10 or 11 to trade in that range. So better, let's find something with more or less. So here was a case where if Euro was your primary market, you might look at adding another currency to trade because it did provide you a better opportunity around ranges.
Yeah, and you saw a similar thing here in here's the euro dollar market, and what Pete's talking about is when the ranges were really small in here, where you had like 1 or 2 big days. This was probably like a Fed. No, that was non-farm probably. That's a Friday. Yeah, first Friday in June there. You had 1 or 2 big days, but look at all of these just like 20, 30 pip days and less. But if I go back down to the 15-minute chart, you'll see a similar thing to what we were just looking at with Aussie, where you have the big sell-off here to start the week,
Right.
and then a bounce back throughout yesterday. And then, Euro, you're right, is holding a little bit stronger here to start today's session than Aussie, at least, in sterling. But it also, something like this, Pete, illuminates a bunch of different things, because let's say you were short Aussie yesterday. You were short from a trade from a week ago or 2 weeks ago or 2 months ago, because you had a great hunch that Aussie was going to move lower.
Yes.
Would have been a great trade, and to hold all the way until yesterday, good for you. But let's say you were short from just last week. Okay, you thought there was more room for that Aussie to run, and then you saw yesterday that there was a huge move to the downside, and you knew, okay, a normal day in Aussie is 40, 50 pips. This market's down 70. I'm gonna cover some in this move, and if I get the ability to sell them again later in the day or today or later this week, then great. But I know at least I'm covering, in a relatively big move in my favor. You know what I'm saying? Because it works both ways, that if you're flat and you're looking to enter something at an extreme, that's your type of trade,
Right.
then great. But also if you have positions on and they're working in your favor in an extreme way, that might be a point where it's like, okay, I should stop being greedy here, or this is just a good opportunity for me to get out. But I do agree with you, and maybe this is a last piece that we
and
cover.
this is the one thing we see and that people struggle with. It doesn't have to be all or nothing. You get that down move, you're right the market, you get to that extreme, you can cover half.
Yeah.
It seems that, especially new traders, and having mentored so many traders, it's always this binary outcome. I got to either have them all on or all off. And that's not the case. And so, you may still think there's room to the downside to go on all these. In terms of dollar strength and currency weakness, managing a portion of them, there's nothing wrong with that at all. And using those type of numbers to do that is a really effective way to start to, I've seen so many guys who have either on the winning side or the losing side, taking half of them off. And if you're long and you're covering losers, sometimes you'll sell at just the opposite at the low, and that always stings. But more often than not, what you will have done is taken half off, the market continues to go, and you're in a better mental space to manage the balance of that trade. And you can look at that, and I've seen guys who've taken winners off. It's like, take half off and have that be the worst trade of your life, and have the market continue to go. So looking at that as a tool to start managing position size and portionality is something we always need to be thinking about.
Well, and I think it'd be nice if we close on something that you touched on, but is essential to this, because again, and now we're in the euro dollar market, and again, this was a different market yesterday, obviously, than that Aussie, but a really similar move in that this, at certain points, 100 pips sell off to start the week. When you include Sunday's action and Monday's action, outside of the norm.
Right.
Euro dollar, I would say, because it has heated up recently, is probably more like a 50, 60 pip range the last handful of weeks
Agreed.
here. But still, everything here, everything below 105 really was outside of a daily normal range, we would say. And so let's say you did, put on this trade, you bought at 105 or 104.90 or 104.80, or you pinned the low down here at 104.60 or 104.70, anywhere in there outside of that normal range. Now, what is essential to this, because a bad thing can happen even if you have the 68.32 in your favor, which is in that 32, there's no guarantee that the loss that you might incur, whether you're buying into a down move or selling into an up move, is the same as the profit you would incur on the 68 side. In fact, there are a number of black swan funds and traders out there that will take 68% losers because, 32% of the time they're taking bigger winners. Right. And that's what trend followers are telling themselves and strategizing about a lot of times. So if you do use this tool and you do trade that way, you probably would benefit from a set of mechanics that are relatively strict, that it is like, okay, if I bought down here at 104.80 and I was going to hold for, a 30 pip rally, which you would have got up here to 105.10, I'm only holding for a 30 pip loss to the downside.
You've got to have some structure, and I think you hit on a great point. Making decisions on Delta 1, static delta scalping, making those decisions ahead of time is really important to staying mechanical. You're more likely to stay mechanical and not let the outsized losers consume the gainers by making those decisions ahead of time. Sticking to them in the moment. When they get down there, it looks like, it can't go any lower till it does. But that will help you stay mechanical. And you're right. That's part of the statistics work if you use them both in a way to identify opportunity, but also to define loss.
Well, you can't only use them in a profitable way.
Right.
And then essentially just black tape all of the losing positions. Or, and I've seen, we've done this.
Yes.
Where it's you have a good month or you have a good year or whatever, and then you not only, buy the 105s and then they fall to 450 and they're already outside of what you normally would have done.
Right.
But then you buy another one.
Right.
And you buy another one. And that is how you undo weeks
a lot of good work.
Months
right.
of using those statistics in the profitable favor, because there's going to be those 32% losers, Pete, but you can't let those become asymmetric losses to what's been, a static, consistent profit. So an interesting day yesterday. Hopefully we get more days like that where you get some outside of the normal moves. It doesn't always come back, but yesterday it did come back, and we're seeing this euro dollar continue to come back a little bit here today. We'll see if 105 holds.
Yeah, and it'll be interesting to see rolling through the U.S. equity opening whether or not we see that selling come in and pound it again, or we actually see some two-sided risk come back into the market. But lots of interesting pieces. Stay tuned. We'll be back with you tomorrow. But coming up next is Tan Sazov, Tony Batista, and Vanetta Logan. Have a great day.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at tastylive.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Got the need for speed?
No problem.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
It was a beautiful fall weekend in Chicago. Lots of sun, warm temps, and tons of people out in the neighborhood. To try and be more normal, I decided to work from the coffee shop all weekend. You know, mingle with the common folk for a bit each morning. In fact, I wrote the cherry bomb yesterday while talking markets with complete strangers. What started as a discussion about fried clams in Cape Elizabeth evolved into a heated debate about junk bonds and cashless collars. That was fun. You see, every once in a while, you need to challenge yourself. That's why, for the Bears game, I made Jamaican-inspired oxtails. Who says I'm not a risk taker? But the real reason I'm sharing the story about talking finance with random strangers is because that's what makes Tasty so special. Unfortunately, we live in an incredibly divisive era of interpersonal communication. When talking to people we don't know that well, we can't talk about politics, religion, social issues, education, or even current events. I feel like every topic becomes an instant powder keg. Every topic except for finance. Tasty Nation speaks their own language. They're different. They can articulate certain aspects of investing that always intrigues and engages random strangers. I commonly hear, "How do you know that?" Strategic financial know-how and articulation skills are an amazing bridge between people with very different views and opinions. Let me give you some examples. The next time someone says, "Isn't Trump amazing?" you say, "I just bought a broken wing butterfly in the SPX." Or, "Kamala is just incredible." You say, "I just sold a jade lizard in NVIDIA." On immigration and taxes, you say, "I really love the leverage of span margin." Tasty Live really is making the world a better place.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Happy Tuesday to you both.
Hello.
Hola.
Oh, look who's back.
What's happening, my little bear friend?
You know, I'm trying to wear all of my holiday sweaters because it's December now.
There is no holiday here.
No, I think I have like over 20 sweaters, so I'm trying to wear like one a day.
How many sweaters you got, Saz?
0.
Yeah, me too.
I have 0 sweaters.
Yeah,
I'm not a sweater guy.
Pullovers, maybe.
I have lots of pullovers, sweatshirts, and I have lots.
All of your clothing comes from here.
That is true. You better be putting that on your tax return. I'm telling you right now. I'm gonna check that out.
I don't have any sweaters. I don't like.
Get you some sweaters.
I don't like a sweater.
You don't like a sweater?
I don't like a sweater.
Itchy.
It's not my thing.
Yeah.
I would never like wear.
I like a woman in a sweater though.
Okay. Just don't make it weird. Where'd you go yesterday? Where were you?
My wife had to have a colonoscopy, and I actually requested one.
Oh,
No, I'm just kidding. My wife had to have a colonoscopy.
Ooh, wet and wild.
You missed an exciting show with Tom Preston.
Don't worry, I got the emails. I heard about it. I actually saw a small clip. I never knew that his dog's name was Slimmy.
You didn't know that?
I had no idea. I forgot.
He's talked about it all the time.
I had forgotten.
It's a good name.
That was very funny. That was the highlight. It was down the hill from there.
Yeah.
It's a great name.
It's always fun when TP's on, but
I know. I hope you guys see him a lot more these days coming.
Why? You're gonna flex all your vacation time?
Yes, I'm not losing the 25 days again this year.
Right?
Unbelievable.
Right? You and me both. Let's go, girl.
So my wife had a colonoscopy. That's not the best part. So she's done with that around 10-ish. And we get an email from my son's school. There was a water pipe burst and a fire in the shop room, which is the second time in 3 months that the shop room has caught fire. So the shop room is done. These North Shore kids shouldn't be working with their hands in fire.
No.
Okay, nope.
They're going to be going to Goldman Sachs or something like that.
They don't need to learn how to make a bowl.
They don't need to, right. It wouldn't involve stupid. Nope. Right? I mean, it's dumb, right? And then they got to cut off a finger. I mean, it's not.
Anyone can go into the trades, but that's fine.
They don't need that.
North Shore kids don't need it.
Don't need the shop class. Yeah. No way. So my son calls me up and says, will you pick me up? I happen to be like right down the street. The hospital's right behind where he goes to school. I'm like, okay, great. I'll pick you up in 15 minutes. So we pick him up and he goes, why are you home? What are you doing out? I said, well, I took the day off to take mom to the doctor, blah, blah, blah. He goes, wow. He goes, it'd be a great day to go skiing.
There's no snow.
Oh, they made Alpine Valley. It just opened up and stuff like that.
Yeah.
So I go, get your hoodlum friends and I'll drive you up to Alpine Valley if you can get a ride back from some other mom or dad.
Wow.
Hour and a half.
An hour and a half drive out there?
Yeah. From my house. Hour and a half.
Why don't you go to Wilmot? It's way closer.
It's not open yet. Next week.
Again, because there's no snow.
Yeah, this week.
Okay. All right.
So I drove the 4 hoodlums up there, and they went skiing. They got home around 10 o'clock at night last night. They got there around noon, 12:30, something like
They
that.
didn't have hockey practice?
No, hockey practice got canceled. The other kids' basketball practice got canceled because it was in the school, so they.
How'd they get home?
Another mother drove them.
Oh, somebody else actually went out there to get them?
Yeah.
I've never. Where is Alpine?
You went to Alpine?
No.
Elkhorn? I think Elkhorn, Wisconsin.
I have no idea.
Elkhorn?
Yeah, I've never been there.
Elkhorn? It's 3 straight expressways. It's an hour and a half. You're doing 70, that kind of thing.
Yeah, it's far.
Far. Yeah.
So wait, does Vinny know how to ski?
Yeah.
I'm confused. I just thought
he's only been a handful of times.
Okay, I thought he had just expressed interest in skiing.
No,
I didn't know if he knew.
He want Uncle Tom to show him
how to.
His one friend's on the ski team. He says he's very good. But yeah, Uncle Tom, you could show him the move. I don't know if I can get you on Alpine Valley molehill that we have there. You know what I mean? But yeah, sure.
I did go. We went to Wilmot once. We were trading on the floor one day, and it was boring. There was nothing going on. So we're like, let's just take a drive up to Wilmot.
Mm-hmm.
So
Wilmot's more like an hour, at least from my house, like an hour and a half probably.
Yeah, it was still far from my house. Went up to Wilmot one day.
It's in Wisconsin.
Yeah.
I don't know where it is.
Well, no, I'm telling you.
So that's what I did on my vacation day.
That's great. I thought there would be rules about if you're a top tier hockey player like your son is, that you can't go skiing in the season because then you because then you go on the
he's exempt.
Right?
Matter of fact, he doesn't show up, they'd be all right.
I'm just saying, I thought he was elite.
Yeah, no.
Okay.
No, that's not a problem. It had never really been a problem for Batista, to be quite honest with you.
No, a couple people they have in their contracts, they'll have a clause, no driving motorcycles.
Right. He's not one of them.
Some even can't play golf. Like some contracts get that serious.
Michael Jordan always had a love of the game clause in his contract. And I remember we had a lead developer once, and he goes, "I'm going to go skiing." I go, because he wasn't very athletic. He was like,
not like you. That's not what peak male performance looks like. Yes.
I'm going skiing in Finland. I go, no, you can't. You
have to protect the head.
Protect the head. Yeah. We had to protect the head clause.
Yeah.
You got to protect the head. What the hell does that mean?
Another thing Batistas don't have either. We don't have to worry about
protect the head.
Yeah.
That means you have to wear a helmet. We had another lead developer that goes, I'm going to go skydiving. We're like, you can't go skydiving. He's like, why? I can do it. We're like, not only are you not coordinated and you're probably going to kill yourself, but
if it's a tandem jump, you don't have to be coordinated. The guy behind you
just jumps. Yeah,
the guy behind you does all the work.
Hey, sounds like a Saturday night.
Only problem was this was in Russia.
Sure. Okay,
anyway,
all right.
Anyway, he broke both his legs.
Skydiving?
Really?
Yeah, landing? Yeah.
Both his legs?
Both his legs.
I never heard that story. Wow.
Whoops. Yeah, but that's not the head.
It wasn't the head. It was
You sit in a chair to code anyway. He's okay.
We were like, don't do this. You can't do this. You're just not. It's not your thing. He's like, I really always wanted to go skydiving. I'm like, no. And he's like, I'm going.
I've been twice. It's a rush, man. Yeah, and I got some plans to do some more stupid stuff in the new year. So I don't have a clause. Like,
well,
yeah, I think
we couldn't afford to lose our lead developer.
All right. Look, when I'm not here, it's just the two of you being like, so
again, we couldn't afford to lose our lead developer.
Okay, yeah, you. I got a trick for you.
He's nothing if not consistent.
Nothing if not consistent. All right, what have you been up to, Sunshine Susie?
Yeah. You want to go skiing next time the kids go?
Maybe.
All right, cool.
Yeah, I don't have skis anymore. I have to rent them.
Rent them there. Yeah.
Why don't you go to Viking and buy some?
I don't want to buy them.
I don't want to buy them.
It's a pain. I liked it last year when I went to Park City because
Sure, you had a ski valet.
They had a valet. They do everything. They just show up in your room. Here's your skis. Here's your boots.
Yeah, would you pay for that?
I don't know. But it was worth it.
It was worth it.
Whatever it was worth it.
Yeah.
I go, let me help you with those boots. Sure, here, go help me.
Thank you, young girl.
Yeah, let me tell you something. My legs don't work the way they used to.
Yeah. No, ski boots are hard to get in and out of.
Well, the thing that saves me with ski boots is they also they keep you upright, so they're good.
They keep you upright.
Yeah.
Okay.
They're rigid, right?
Yeah. Ski boots are fine. It's believe it or not, the hardest thing for me.
Lifts.
What?
Lifts, getting in and out of the lifts.
Yeah.
I know. I can tell.
Yeah.
I've watched you for 40 years.
Getting off the chairlift because they.
Do you use poles?
No.
Oh.
They have. Well, I ski use poles, but they have quad lifts now, so you can be in the middle where you don't have anything to push off on.
Sure.
I mean, all the.
I'm surprised you didn't sacrifice the young child next to you and just push them back as you
throw them off.
Right.
Yeah.
Or hold on.
I like how you're explaining all your problems to an actual snowboarder who has real issues.
They
at
have
least
snowboarding at Alpine.
I know, but at least when you get off the chairlift, you can go. I still gotta.
Snowboarding is the most ridiculous thing in the world because
you're the most ridiculous thing in the world.
The problem with snowboarding is you have to just drag yourself everywhere. It sucks.
Yeah, I know. Or you make friends.
All of a sudden, you're Josh.
No, you make in the flats. In the flats, you make friends with the skier. They stick their pole out and then they pull you.
You sit there the whole time, just
it's fine.
No, it's not.
Whatever.
You spend so much time just buckling and unbuckling. See, I could never.
You're just mad because you tried to snowboard.
They got slip-ins and slip-outs now in some of the.
They have you can step in. They have step-in bindings, and then they have more traditional bindings.
Hey, I went one time.
There's options.
I don't. It's so much of a pain snowboarding. Okay. I did it once.
One time.
It wasn't.
You went snowboarding?
Yeah, Scott and I did.
He did. He took a he
Scott
rented a board.
You mean 30 years ago?
Yeah.
We were skiing.
Does this have an
Is this Jackson Hole or is this Sun Valley?
Jackson
Hole, yeah.
We're skiing Jackson Hole and they shut down the mountain because
it was 35 years ago.
No, it was 30 years ago. Probably mid-90s. Anyway, so we were skiing and they shut down the mountain because of wind.
12, mid-90s, close to 35 years. Go ahead.
Anyway,
89 is 35 years.
Yeah. No, this is 90s.
Yeah.
So they shut down the lifts because the wind was too strong, so the major lifts were all shut.
Sure.
We only had the Bunny Hill open.
Right. The green runs.
Yeah, the green runs.
And the magic carpets or whatever.
Yeah. So we rented snowboards to mess around because we didn't want to.
Right. Yeah.
and that was a mistake.
Well, you could have taken a lesson.
Could have.
Would have been the intelligent thing to do.
I'm just saying, like, in the age before, like, YouTube
I didn't think I needed
or like, making of it. I know, but if it's a new thing,
He
like,
was so good at everything back then that he didn't think he needed.
I didn't think I needed a lesson.
Okay, well, just how'd that work out for you?
It didn't.
Okay, well,
It was a disaster.
well, Bat, how was your Thanksgiving? We didn't get
Quiet.
Yeah,
Well,
how was the Parsons?
It was excellent.
Okay, was there
It was
enough?
phenomenal. It was really, really good, and it was too much food. I know you're gonna think I'm lying. My hand to whoever's
Does it have
listening.
bones in it or is it boneless?
Bone in.
Oh, okay.
Yeah. Whoever's listening, we ordered 4 trays, and it was 2 per tray, and we only had 8 people. But of the 8 people, 2 of them don't eat. So
Right.
we figured that was gonna be enough food. I gave 1 whole tray. We never even opened it with the sides, the chicken, and everything else like that to my son-in-law to bring to his family's house. And I had another whole tray I gave that we never even opened that we gave back to Sasha and my other son-in-law.
That's great.
So it was so
Where's my
much.
tray?
It was so good. It was excellent. It was fantastic. It was really, really good. I'll never do it another way. You got to order out for Thanksgiving. Bring it home. That's the way
Nice.
you do it. And I made a turkey breast that came, just the breast, bone-in breast, that came out great.
That's what I did. Because
No, I didn't do anything to it. I didn't do anything to it. I took it out of the
Brine it.
package. I threw some seasoning on it, threw it on the smoker, let it cook for a while, took the thing out when it was about
165.
What's that? 165. Yeah, just under. And I let it sit there for a while because it was beautiful.
Beautiful.
Phenomenal. Best Thanksgiving ever. No more Italian food, no more nothing we order out.
Well, what was the Italian food dish?
She didn't make it. We just did the turkey breast. I haven't Italian food, no nothing. I know. I have fallen. I am
You are so
Nadia, I told you it was Stouffer's
You have
lasagna.
dropped
Pop
down.
that in for you. 40,
I am
50
so
minutes.
disappointed in myself.
Oh, but that Rayo's eggplant parmesan is really good. The one
He's
that-
obsessed.
When they sell at Costco, it's great.
in like a little container, like in a black container, like a regular container, like in a.
It's frozen.
Yeah,
frozen
right,
eggplant.
right.
It's actually really good.
Interesting.
It's the best I've had. The Rayo's.
I got another one for you, Mama Maria's or Maria.
Eh.
Something. No, don't give me. You never had it.
I had
If
it.
I could sit here and say your Rayo's
Had
is
it.
good.
Had it.
I don't know what's happening, but we're just we're gonna keep it moving. I
How was
guess.
your Thanksgiving since I didn't hear?
No one cared. No one.
Oh, we care.
No one.
Don't be like
cares.
that.
No one.
Don't go away,
no one
man.
asked.
Just go
No one-
away.
No, it was good. It's
Good.
super low key, but everything turned out flawlessly.
Of course. I would expect nothing else.
And I tell you, I made my own. 'Cause I make my own gravy every year with the drippings. But we just do it like a turkey breast, like
You
in
do
a
it the
crock pot.
traditional way.
Yeah,
Sure.
yeah. But I make my own gravy, and it's so good. So my dad took like a sous vide bag, and he took half of the gravy, and so he froze it. So we'll have
You
it.
sous vide his turkey?
No. He just took a sous vide bag to put the gravy in it because we
Oh,
ran
okay.
out of Ziploc bags, and so he froze the gravy. So we'll have it for Christmas.
So you
but
can bring some into Tom.
I like it. I don't like it thick though.
you thin it out with chicken broth.
Right.
So,
I don't like it too thick.
Yeah, it's.
And I did tell you what I did. I purged my freezer.
Ew. I don't want to go to that
So
dinner.
all the stuff from '96 is not in there.
And then you
Everything.
made it for Thanksgiving? You did, didn't you? Because there's no way you see, I knew where the story was going. He goes, I purged my refrigerator. Other people go, if it's expired, we'll just throw it out. And you get this big bag of food and you say to yourself, oh my God, I'm never doing this again. And then 2-3 years later, you do the same exact thing again. Tom made it off for Thanksgiving. You did.
No, but I
You did. I
purged-
know you did.
I purged everything that was pre-2022.
Yeah. Hey, look at you.
So
We're in this decade.
everything
That's amazing.
before 2022 is gone. It was 2 full garbage bags of stuff.
Sure.
Yeah. My
Just think about it. You've been traveling with that. You've been
Wait,
freezing
how
that for
big
years.
is your freezer?
I have 2 freezers.
Oh, okay.
So I purged everything pre-19 per 2022.
Per 19.
The saddest thing was there was.
How old was the oldest thing you saw? You remember?
I mean, are you
I'm gonna
not?
text her and find out.
Oh no, she doesn't know. Are you not counting the? She wouldn't even look at this stuff. Are you counting the? If you don't count the Omaha steaks from 2012,
Oh.
Are you serious?
Possibly. No, the worst thing I had that I didn't refuse to throw out, I don't know why, was a brisket that I bought in like 2017. It was frozen.
Saving that thing.
It's like
it was a big one. It was a
huge brisket, like one of those giant Costco briskets.
You
like
gotta throw that
15
out.
pounds, you know?
Yeah.
And I was like, gotta I've been saving
15 pounds?
at least. Maybe it was bigger than that. And finally, I had to part with it because it looked gross. I never wanted to part with that brisket.
Ugh, that's just nasty.
Hey, Mike says you look wonderful and super cute in your sweater.
Thank you very much.
Yeah.
Thank you so very much. Hey, we got a great show for you
You also
today.
said Tom. Well, he's Tom.
We got a great show for you today. A lot of good content headed your way as we come spinning out of the turn. We're in December. One more month to go. But at the top of the 8 o'clock hour, we have Options Jive, Premium Decay when breached. What?
Like when the head is coming down.
No, the head's supposed to come down. You said that before. Breach is when it's
the
feet
other way,
first.
feet first.
Yeah.
Oh, darn.
Yeah, no, the head's supposed to be. Yeah,
all
that's
right.
the way that you want it to
Beautiful.
go. Okay.
Beautiful.
No uterus, no opinion.
Only watched it 5 times. Now I finally got it right.
No, premium decay when breached, Tom.
Premium decay when breached.
What does that mean?
That's
Like
a
just
really
one
good,
side gets breached? Like what gets like what?
No, like
who's breaching
like,
what?
when you have a position on and one of your strikes gets breached, you know, like can you still make money on the position?
Okay, all right. Well, that I would like to know the answer to that. The 840. Let me explain. Chris Vecchio in the house. What are you talking about with Chris today?
Ooh, you know what? I don't know because we got busy yesterday afternoon, so TP and I forgot to include Chris in the show.
Okay, cool. That's I'm sure he loves that.
Chris and Ilya, we left them hanging yesterday. We didn't. I just spaced out and
because you need Bat. That's the one that keeps you together.
Oh, we don't need those guys. We had a lot to talk about. We were fine.
Okay, all right. Well, we'll see how that comes together. 9 o'clock. Well, market measures. It says what to consider before executing an iron condor. Are there a lot of things to consider when you execute an iron condor?
Yeah.
It's like 1/3 the width of the strikes,
it's a good
and then that's it, right?
It's a good one. It's a good one. It's a really good one.
And then live from the trade desk, big boy Scotty S. Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. Is Scott escorting you out to Arizona? Like, are you gonna all go and then like you guys will come back and Scott will just stay there?
No, but we are all staying at his house. He doesn't know it.
Got it.
Are you excited for Arizona this weekend?
I mean,
Me and you, baby.
You haven't been on the road all year.
no, he doesn't.
You haven't had a wingman like me on the road now for about 4 years. And I do good work in Arizona. You know I do.
Believe me, I'm fine with Liz and Jenny. I don't need you. But
Oh yeah, that's top tier, Liz and Jenny.
yeah.
I know. You love the men they attract. I got it.
But no, it's gonna be great. Yeah. We're everybody's looking forward to it. We got our final last planning stage out of the way yesterday. So
Wait, is JJ going to be with us too? Because I don't know if I have enough in me for the two of you to carry. I don't know.
Seriously.
I don't think I can carry both.
He hasn't been on the road with us for a while. He's gonna be on the road too this weekend.
Yeah, I don't know if I can carry both you guys. You're going to have to be one or the
flights?
other. One of you guys are going to have to
What's
decide.
the flight situation? Because Premier 1K JJ, like he's gonna go first class.
No, he
You-
sits coach because he has to be with his people.
So are you
He
going
has
first?
to be with his people.
With his people.
Are
Who
you
knows?
going first class?
I don't know.
Bat, do you get first class?
The hell do you think?
So, but only you get first class?
Only I do. So
What?
So I pass back the nuts already. You know, Tony has to sit. Well, Tony.
I hold the door open for the bathroom.
Wow.
Yeah.
So JJ doesn't get first class. You don't get first
JJ,
class.
No. JJ's in the last row of the plane.
Man, oh man.
JJ's in the back. JJ's in front of
JJ's
me,
job
but
is
in the
to
back
guard the
with
bathroom.
me.
His job
Okay.
is to guard the bathroom.
Tom and Britt are in first class.
Yeah. Wow.
Yeah. We get the upgrades.
Wow. Anyway, hey, that is
It's just law of large numbers. That's
that is our run of show for today. Tomorrow is Wednesday, so we need your trade ideas for what's your assumption. If you have an underlying and a directional bias, we'd love to hear from you for tomorrow's show. But in the meantime, and in between time, do you want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news.
Coming
across the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's December the 3rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
There's not earnings, are there, Mr. Bat? Today, into tomorrow?
Earnings for
companies?
CRM.
All right, CRM.
Yeah, you're down in Dollar Tree if you're really interested.
Well, there was one. What was the last? Oh, Zscaler was last night, but we didn't trade it. We talked about it. We took a quick look.
Okay.
I think the expected move was like, I want to say about $15 or $17. I'm not sure what it did. ZS.
What is it? Which one?
ZS.
ZS.
Did you? Was that Escobar or whatever?
No,
Zscaler. Escobar.
Something like that. I don't know.
Yes, it's Pablo Escobar.
It's ZSCALER.
Yeah,
Zscaler.
Yeah.
Yes.
What's the stock do?
190. Uptick would be 194. Close at 208.
Down 14. The expected move was like 15.
Okay. Hey, getting to
So
the
TP got you into that?
No. TP didn't trade it. No, we didn't trade it. We looked at it. There was pretty decent volume, but I didn't like the implied volatility at 21%.
The S&P 500 and NASDAQ closed at record highs yesterday, and JP Morgan traders say that the math is mathing, and it places the S&P 500 near 6,300 by the end of the month. You've been getting a lot of emails. You had some in Confirm and Send about this so-called Santa Claus rally, people asking you what's going to happen in December. What do you think of a 6,300 hundo for the end of December?
See what you did there?
Mm-hmm.
So
What do I think about 6,300 by the end of December?
Yes.
I don't like that December. In this business, we say Dece.
Okay, in Dece.
In Dece.
Are you going to get fleeced in Dece?
You're going to get fleeced in Dece. I do not think that's going to be the case.
130 points for SPX, which closed at 60.47. So 130 points gets you just about 6,200. So they're going well outside the expected move.
Yeah, I mean, this is just this is what do they call this? Girl math.
How is this girl math? This is analyst math.
Oh, we're allowed to say that now. I forgot. Never mind.
No, there's girl math. No, there's legit girl math. But this
I don't
is
even know
just,
what girl math is. I just heard an
adapted
expression
real
before.
this is just
Girl
like
math, boy math, whatever.
analyst math.
Analyst
Yeah.
math.
All right. Hey, well, keeping it moving, Fed Governor Waller says he's leaning towards a December rate cut, but still worries about inflation. Waller cited recent data indicating that progress on inflation may be stalling. Markets expect the Fed to lop another 0.25 percentage point off its benchmark overnight borrowing rate when it meets December 17th through the 18th. Before that, though, you will be getting your jobs number on Friday. Let's talk treasuries.
I don't know if you had your bonds trade up to 120 on the long note yesterday.
Yeah, did they trade 120?
120 is the high tech.
Oh, okay. I didn't see the 120.
Winner.
We saw them up there. They were down a little bit this morning. They've been trading in that, basically for 2 days. We've been right here. They were down 13 yesterday morning, up like 6 or 7 in the afternoon.
Down 9 right now,
Down
119,
9.
13, but they're no longer in the 116 or 17 handle.
Or 15.
Or 15 handle.
I'm staying long bonds.
Uh-huh.
Hey, something that's crazy. The French government is literally on the verge of collapse. Ooh, c'est dramatique. Literally, the French government could collapse by tomorrow. That's cool. The far left and far right have submitted no confidence motions, and it's thrown the EU into a tizzy. France is, of course, the EU's second largest economy, and it sent the euro into kind of some weird movement. I don't know exactly everything that is going on in France, but it can't be good. When their government could collapse, like I said, tomorrow. So, sacre bleu. But I did want to talk about the euro.
I do like the.
But I love their parliament.
Try to find a cheap chateau somewhere in France.
Yeah, look at their parliament. It's so fancy.
Yeah, it is
C'est
fancy.
magnifique.
Yeah, the whole parliamentary system is fascinating.
Also, Germany facing elections and doing stuff there too. But let's talk about the euro overall, because this
Euro took a little hit yesterday. It's rebounding small this morning.
Yeah, the euro's up. The euro's about down. The euro, I think, has bounced a little bit, but it's our biggest. The yen's our biggest long of all the currencies, and the euro's our second biggest long.
They all took a little bit on the chin yesterday, and they've all rebounded slightly today.
Yeah, exactly. Yeah, the euro's up 200, yen's unchanged, and the pound is up small. But euro and yen are our two biggest longs. against the dollar.
Speaking of Europe, U.S. liquid natural gas exports to Europe surged in November as the world's largest producer of the super chilled gas sent more cargoes to the continent and fewer to Asia and Latin America. Let's talk natty gas.
Well, we could talk natty gas, which is down 8.5 cents or so, which is almost a 3% move. It is flirting with 312-ish, which was all the way up to 350, which is huge because it was under 3 a month ago. Or we could talk about girl math, and we can use nat gas as that.
Okay, break it down.
You ready?
Mm-hmm.
So it's trading around 312. If you were buying nat gas and you were a girl, you would say it was about $3. Now 312 is $1,200 more than 3. So there you go. That would be girl math.
It's immaterial. It's immaterial.
Natural gas down today.
Natural gas down. What about crude oil?
Up.
286 a gallon in Wisconsin. 69.16 for crude oil, up $1. It's a big move, 1.5%.
Hey, Coinbase announced an integration with Apple Pay on Monday, allowing app makers to build the ability to buy crypto with Apple Pay directly into their apps. Coinbase has been pressuring Apple Pay for the integration for a while, and it looks like that's finally come through. The integration is part of Coinbase On-Ramp, which gives app makers a way for customers to turn their traditional currencies, such as the US dollar, into cryptocurrencies. Let's talk about crypto and Coinbase.
You know what? Crypto's down 1,000, trading at under 96 at 95.5, down 1% or so. Coin, which I know you're going to ask, Ivy rank of 53, relatively high, but off of its highs when it was in the 70s and 80s when BAT did a double ratio spread because it uses so much buying power for his option trades today, every Tuesday and Thursday. Today has to be Tuesday. Now we took that buck and a half in a day or two. We'll see what we can do today. I don't know if I can do as good, but I tried.
I got a lot of crypto news today. MicroStrategy's inclusion in the NASDAQ 100 is imminent, and it could reportedly spark up to $2 billion in inflows. Tom, what are your thoughts?
Stupidest headline ever. Just completely.
I don't know. Victor sent me a
The change is based on market cap rankings as of November 29th, and it will take effect after December 20th.
Yeah, well, that's why you're buying MicroStrategies, you're an idiot.
MicroStrategy has a $94 billion market cap, so who's the idiot?
I have a position on there, but it's just short premium, but stock's down today.
Ivy rank is 63. It is down around.
MicroStrategies is overpriced by $60 billion. So I mean, they actually have enough Bitcoin to value the company at $30 billion. They're trading for $90 billion. So you tell me.
But don't you think because the passive funds are going to have to rebalance?
I don't give a crap what it is.
Talk about the inclusion of it, and I mean, you're saying there's no credence.
I'm saying it's the biggest scam in a long time. It's similar to, what was the other one? SMCI.
Yeah.
Very similar to that, except this one's even a bigger scam.
Okay.
So I wouldn't touch MicroStrategy with your money.
Hey, in other crypto news, Ripple-linked XRP is now the third largest token. Congratulations. The XRP, the token linked to Ripple Labs, has vaulted rivals to become the third largest cryptocurrency in a $100 billion rally. The token rose as much as 32% on Monday to $2.87. I have such FOMO about this because I know people that were buying it at like 1 cent, 2 cents, 3 cents, or like whatever, I don't know. And I don't know.
Yeah, I wish we had Ripple on the platform.
But it's not our fault that we don't.
It's not our fault. We weren't allowed to.
Right.
It wasn't worth a $10 million fine.
Sure.
Post Ripple on the platform, that's for sure. But I'm just saying I wish we had it because I think there would have been a lot of interest.
Mm-hmm.
Ripple has, there's a lot of interesting things about Ripple. I mean,
are you surprised by this move? I was surprised that it's now the number 3 token.
I mean, I guess I'm surprised it's number 3 token, but in reality, they are market leaders.
Sure.
I mean, they've been the most aggressive, so.
Okay. Hey, here's something interesting. Maybe you can get into it in a broader discussion with someone like Dylan because he has a penis. But I will bring this up and I'll try. CEO turnover has reached record levels in 2024 as
Yet we can't get rid of one here.
As increasing complexity drives executives to the exits. Obviously, the banner headline yesterday was Pat Gelsinger forced into retirement from Intel. But,
as he should have been because he stunk.
Also, the big boss
Like
of
90
the
cents
auto giant Stellantis also announced his departure. Boeing CEO has been out, and according to Challenger Gray and Christmas, through October, more than 1,800 CEOs have announced their departure. That's the highest year-to-date figure observed since the firm even started tracking this.
They're cashing out.
What do you think is behind this trend? And
There's just an
what can
incredible
come-
amount of pressure on CEOs to deliver, and when they don't deliver, you got to get rid of them.
Okay,
It's not a bad thing.
no, I know, but it's.
I mean, the problem was exactly the opposite. This is why one of the reasons why our economy is so strong, because we now start to get rid of people that aren't competent.
But you would think with the massive stock market gains that would sort of
There's a lot of CEOs.
whitewash some less.
No, there's
than,
a lot of CEOs that given the massive gains, their incompetence was essentially whitewashed. And
right, that's what I'm saying. Is like it seems like it would help them hide for longer.
it did help them hide for a long time. But you know what? Getting rid of CEOs is actually a really good thing, and it's something that should have been done for a long time.
All right.
So
cool.
It's heading in the right direction.
Hey, let's get to some chip stock news. Supermicro popped 30% yesterday after a special committee found no evidence of misconduct. Supermicro shares soared after the company reiterated that the committee found no evidence of misconduct. The stock is still down around 65% for the year. Supermicro's new auditor, BDO, has yet to certify the company's filings or publicly address governance questions.
Up another $3 this morning to 45. Nice, closed at 42.
Huge
All the
move
way
from
in the teens just about 2 weeks ago. Happy for people. I think everybody's playing that from the longer side. Or
Would you trade SMCI now or no?
I haven't. Go ahead.
I mean, I have
markets are good in there. 10 cents wide.
I have a butterfly on at the 18 strike. I had a ratio spread. I butterflied it off. So
Look at you.
I have nothing on.
You're going to hate this, but I'm going to do it anyway. Oracle is set for its best year since the dot-com boom after a 75% surge. The enterprise computing stock has benefited from strong demand for cloud and AI infrastructure, and Oracle's up 75% since January. Let's talk about it.
What do you want to talk about?
What are you doing? What are the opportunities in Oracle, or what are you battling in Oracle?
Nope, not doing anything in there, and I don't think there's much opportunity.
Up around $1, 182 and change.
Yeah.
Ivy rank is 90. It does have earnings December 9th, so if you don't have anything, maybe you'll wait.
Yeah. Okay. Tough stock to trade.
Hey, it was trading at a low of around $60 in late 2022. Boosted Oracle's market cap from below 165 billion to north of 500 billion. So
there's that.
That's where the big dogs play.
When we started, when we originally built Thinkorswim years ago, one of the founders of Oracle, not Ellison, but one of the founders,
Sure.
one of the top.
Not this James Bond villain looking dude.
It's good for, what is he, 80?
Yeah, I think he's 85.
Yeah. So there was about maybe he was one of the first 5 or 7 people there, and he was a crazy option trader, loved it, nice guy, and Oracle was trading $9, $10
Whoa.
at the time. He's like, if this stock ever gets to 15, I'm out.
That's
182.
crazy.
182, but that was 2001.
Ooh.
No excuse.
Hey, ads might soon be coming to ChatGPT despite co-founder Sam Altman not being a fan. OpenAI is toying with the move into ads, and that's per the Financial Times. They are weighing ads as a business model as they move to go from a not-for-profit to a for-profit. What are your thoughts?
I mean, they got to do something.
Yeah.
I'm not sure how else they're going to monetize it.
Well, they charge for it. For enterprise, like we pay for it.
Enterprise, yeah.
Yeah,
But customer.
Literally what I just said.
Yeah, but individuals don't, right?
Sure. No, I think there is a free version, yes.
Yeah. So, I mean, I had the free version. It's pretty good. I don't know. I mean, I guess I don't really care what they do.
Okay.
I mean, honestly, I think I've used ChatGPT twice. Do you use it at all?
I've used ChatGPT, yes. I've never paid for it, right?
No, I know, but how many times do you use it? Like, it's not part of your daily routine.
No. Not part of my daily routine. Only when the company makes me fill out like silly things about how I should be performing.
I mean, there are people. There are people that are on like Apple on iPhones now that use it all the time, just for like not ChatGPT, but Apple, whatever the Apple.
Apple Intelligence.
I was
Apple
actually
Intelligence.
sitting with a hockey MILF mom that is a teacher, and she says that they're trying to embrace the ChatGPT because they have a very hard time figuring out when the kids are using it or not. So they're trying to find out a way how to put it into the curriculum.
Sure.
To make it, make their writing better by using ChatGPT. It's very hard.
Yeah.
I bet it's hard to figure out exactly what's real and what's not.
Yeah.
Hey, the FTC, Federal Trade Commission, is opening up a Microsoft antitrust investigation that is kind of similar to the one that they already opened up against Google. They're investigating Microsoft's business cloud computing practices and whether their related product lines such as AI and cybersecurity are too, all involved together, that it makes it hard for consumers to be able to separate, just like Google bundles, their ads and their search and everything together. What are you doing in Microsoft? Because this is a big deal.
$4.29.
And then the incoming administration, I guess, will also determine how far this does or does not proceed.
Ivy rank under 5. If you still have a position there, you might think about closing it.
Wolf.
We do not have a position in Microsoft.
Ethiopian coffee. I can't get behind it. Got to go with the Colombian. I'm sorry. Too nutty.
Oh, here in the office?
Yeah.
I like the Ethiopian.
I tried.
Yeah.
Francis made the coffee this morning. He beat me in. And he went with the Ethiopian. I'm going to have to slap that kid.
Apple has been accused in a new lawsuit of
Can I get you some bad coffee?
Yes, you could. I don't know why we don't have bad coffee here.
It's too expensive. That's Costa Rican, just so you know.
It's because you still don't have a license from the city.
Allegedly.
Apple has been accused in a new lawsuit of illegally monitoring its workers' personal devices and iCloud accounts, while also barring them from discussing their pay and working conditions. What does this sound like? The complaint filed in a California state court was by a worker who works in digital advertising for Apple, and he claims the company requires employees to install software on personal devices that they use for work that allows Apple access to their email, photo libraries, health, home, and other personal information. Too far.
I like that rule.
You really want to see all the pictures I take of street cats?
Sure you do.
Sure you do. What are you doing in Apple?
Apple $240 and change, up around, let's call it 50, 60 cents. Market's a little mixed here. Even the S&Ps are up, NASDAQ down small, basically unchanged on the overall market. So,
what are you doing in Apple? You don't want to see what's on
I have no Apple position.
7 Ivy rank.
I know.
Ugh.
That's why I have no Apple position.
Ugh.
Yeah, starting to get low.
Hey, Tesla's market capitalization increased by the most among top global companies in November, boosted by expectations that the automaker will benefit from CEO Elon Musk's close ties with incoming President-elect Donald Trump. Tesla's market value surged 38% to $1.1 trillion last month. That's kind of bonkers. Tesla got upgraded by a couple of places yesterday. Not sure what you're doing in Tesla.
Tesla's gotten around this 360 range, closed at 357 4 or 5 times in the last month or so. It's backing off this morning, 353 and change, down around $4.
One bit of bad news is Tesla CEO Elon Musk did lose his bid to get a $56 billion pay package reinstated. A Delaware judge upheld her January ruling in a case brought by shareholders that said the process leading to the approval of the pay package was deeply flawed. It's fine. He's the shadow president. So
Good Ivy ranking there are 47 in earnings after January expiration. So if you don't have something,
the only stock more dangerous right now, the only stock more dangerous than Tesla is MSTR. I think buying Tesla at these levels right here is probably the worst risk reward I can even picture on anything.
Do you have a Tesla position right now?
I do. I'm short some premium in there.
Okay.
I am too. In January, 405, 310.
I want the stock to be sharply lower.
Well, good luck with that. Creator Kai Sinnott broke a record for the highest subscriber count on Amazon's Twitch during a non-stop live stream for the month of November. He streamed 24 hours a day for 30 days, reaching nearly 727,000 subscribers, and he had 50 million unique views. Tom, listen to me. December, you stream 24/7.
He streamed 24/7.
Because he just was able to stream 24/7. I'm sure he was like sleeping during that time. Like he wasn't awake, obviously, for
This is what I wanted
30. But he had guests and celebrities came through.
Kai
Sinnott.
Who is he?
He's like the most famous live streamer. He does pranks. He plays video games. He does like just
How
like
old is he?
video stuff. I am not his biographer. I think he's in his 20s. I'm not sure. I will look.
I don't know who he is.
I know, but I'm telling you. I'm
Do you know
telling
who this
you.
guy is?
He's 22.
I'm sure my son does.
He will be 23 on December 16th. His social security number is 436.
He's a Sagittarius and likes long walks on the beach.
He actually
Moonlight.
is born in December. He's a Sagittarius.
There you go.
He is
There
a
you
Sag.
go. I knew that.
But Tom, I think you should do a stunt like this because we need the ratings. Like you should just
really
commit
should,
to
Tom.
this and live stream 24/7.
You should do that. That'd be great.
He may have earned $3.6 million in revenue with Twitch taking a cut of that amount. They typically take 50% of the cut of subscriber revenue, but reduces its share to 30 to 40 for top creators, of which he is one. But it's quite the coup because other sites have courted him, but he's loyal to Twitch, which is owned by Amazon. So
Good for him.
but you didn't even know who he was, though.
I still don't know who he is.
Okay.
Except
So you can look him up. You
I
can watch
sent
his videos online.
yeah, I mean, I have a lot of things to do in my life right now, but I'll check it
Well,
out.
then you should be streaming them 24/7. Bat, not sure what Amazon's doing. Had a good day yesterday with Cyber Monday, so I bought some stuff.
Did you have a good time on Cyber Monday?
Yeah, I love
And Black
shopping.
Friday and
I love
every
shopping
other-
on
yeah?
the company's time. Yeah.
It's amazing. I saw a great tweet. Somebody said something about it's amazing how a month ago we couldn't afford eggs, and then for Cyber
Yeah, we
Black
hit Black Friday, hit all
Cy-
records.
we
Yeah.
hit all record
Sure.
sales and stuff like that. It was
You
pretty
do
funny.
realize a lot of people are in crippling debt, though.
Yes,
Okay.
but still buying, still buying.
Okay.
211 up around 30, 40 cents, but it's at its highs, so still doing good.
I'm so excited for this, and this definitely needs to be a case study in business schools moving forward because they are the preeminent example of how a company can make its obsessive data collection on you really cool. And I'm talking about Spotify. We are eagerly awaiting our yearly Spotify Wrapped, where it shows you the artists that you listened to the most, with the genres.
So
the
why
mood.
don't they do that in real time?
And so because they have to compile. I'm not an engineer for them because
No,
they
but
have
it doesn't
to.
make any sense why they do it once
Well,
a
but
year.
if you saw the level of detail and personalization that went into every Spotify Wrap, like on the back end, I'm just saying for the millions of subscribers, like it takes time to build because it's like interactive graphics. It makes you a playlist. It's animated. You can link it to your social. Like it's
Spotify
pretty
is great.
involved, but it's great. But I get mad when my data is used. But I need to know where I rank in Taylor Swift supremacy. Last year, I was in the top 4% of her listeners. I'm hoping I can beat that this year. But something that's interesting, though, is it's not widespread yet, but a lot of people got really devastated when they couldn't get concert tickets to go see, Taylor
They were
Swift or the Eras
devastated.
tour.
They were devastated, South. They were crying in the streets.
There were a lot of moms who wanted to take their kids, and they were sad that they couldn't make it happen because resale ticket
Then buy
like it's
eggs.
super expensive.
Sure.
So I think a very good solution, and that smaller artists are doing this, is before you buy a concert ticket, you have to link your Spotify and then to verify that you at least are a fan of this artist that you're trying to buy
So
tickets
because I don't
to.
have Spotify, I can't go see a concert?
Well, how else? Well, the current system's so broken.
You know what? Just let them know.
I'm saying
yes,
this is.
that's right. You
I'm
cannot
saying
go
this
see
is
that.
just
the
one
dumbest
way.
thing I've ever heard.
Well, the current system, it's all bots and resellers, so the fans aren't seeing the shows that they want to see.
No, I don't like this.
Okay, well, I'm not saying it's widely.
And deal with the bots and the resellers, but don't wipe out the people that don't really want to be part of Spotify.
Okay, well then, so Apple Music then, but some sort of verification or integration.
I don't have any of those. Why can't I go?
Okay, so you're tailoring this to you specifically
why wouldn't
instead of
I?
seeing the greater good for masses.
I don't think
of
that's
people.
the greater good.
Anyway, Spot. I'm not sure what Spotify is doing.
Spotify, $4.80. I don't know. It's a little wide. Market's a little bit wide. Let's just call it up $3 or $4. Trading at new highs if it opens here.
So anyway, Spotify Wrapped. It normally comes out after Thanksgiving. This is kind of the latest it's come out. It's coming out tomorrow at 10 a.m. So look for it'll. Everyone will be posting on their socials about what they were listening to and whatever. Hey, the college football playoff expansion is boosting advertising and viewership, and that's good news for Disney. Disney's TV networks and streaming are getting a boost from the expanded college football playoff this season, particularly when it comes to advertising. I had it for stories yesterday, but I skipped over it with the whole Intel thing, but their Moana made $221 million, good Lord. So that's pretty good for House of Mouse. And then following that up with a blockbuster movie weekend, and now with college football and advertising, because ESPN is kind of struggling. What are you doing in Disney?
Yeah, what are you doing with Disney?
I don't have a Disney position on.
I don't have a Disney position either, but Disney is trading at 116 and change. Let's just call it down 20, 30 cents. But it is at its most recent high. It's got into the 120s back in April or so. Ivy Rank's only 2 there, so you got to be a little bit directional in Disney.
Who do you like to win it all in college football?
It's really this is
you put.
There's not really.
I know, good.
There's not really one outstanding team right now. Obviously Oregon's the favorite, but if I was to just throw, I think I kind of like Texas.
Okay, hook 'em horns.
I kind of like Texas.
Now they got the South jinx on them.
Yeah,
Is that because TP was on and he said his daughters went there?
No, I kind of think Texas is a really good team. They could win.
Okay.
Obviously Oregon, but I think Texas is probably the best team. But I don't know. Maybe there's somebody that's just going to start playing great.
Right, could be a little sleeper.
Could be this year. There's not one team Georgia's not that good this year. I'm not really sure.
And here come the emails. It's
I don't
Tom
think
at
Miami's
Tasty
that
Live.
I don't think Georgia's that good. I don't think Miami's that good. I don't think Alabama's even going to make it. I don't think Notre Dame's that good.
Sure.
I kind of think Texas would be my pick.
Okay. Hook 'em horns. Finally today for my viral video of the day, pickleball, of course, is sweeping the nation as the most favored new sport to hit the scene in a while. But China, always ahead of the curve. Can I present to you legminton, not badminton, legminton. Watch this.
This is going to be good.
Graceful.
Why must they take a nice sport like badminton to do that?
That's not a badminton birdie, is it?
It's a bigger shuttlecock than you're used to.
Ooh.
That's what it's called. But yeah, it does.
I
It
know
does
that.
look bigger. It does
Call
look
it
bigger.
whatever you like, baby.
It
Just call
It does look bigger. But
I got to tell you,
legminton.
that's impressive.
That is impressive.
That's impressive.
I'd like to see this
Sosnov
developed.
couldn't do that with 6 legs. Give and take, okay?
When I was a kid, I could. Not anymore.
Sure.
Anyway, this has been super fun. It's like 1,000 degrees in here. What's coming up next, Bat?
Good job, Eddie. We're going to take a quick 90-second break. Come back. We got more
It's
Tasty Live
nice
after
in
this.
here, finally. Finally, it's nice in here.
Yeah, we got heat. It was cold.
Yeah, it was too cold.
We'll be back.
If you missed the live show, here's our cherry on top weekly recap.
Oh,
Did you watch Pulp Fiction?
I did. I watched it, but it was not very educational. I think it's pure entertainment. So
That's what movies are supposed to be, Jajun. But if you ever had to dispose of a body, you learn something there, right? So you have to look at what you're learning here.
One thing I learned is you never want to go into a basement, and with a cop there.
That's right. Never ever.
We have an over-under, and when you're going to reach maximum crankiness, coming back.
I'm not cranky at all.
I have new toys, Sosnoff. That's right, Sosnoff. I have new toys. How about that? Dr. Jim. Hey, Dr. Jim is in the house.
It may be better for me. I don't know. It might be an upgrade. I'm not sure.
We did a little survey here, Sosnoff. You and Scott talked a little bit about my sound effects. You wanted them to go away. We completed a poll. We had 34,000 votes, Sosnoff. 82% take the sound effects away. No, siree. No, siree. Keep those sound effects. That's right. You know why? The crowd has spoken. 4,000 votes. Enough out of you. Mr. Scott Sheriff from Tasty Trade World Headquarters.
It's the worst, giving this kid a toy.
This is the best. I love this.
Thank you. Thank you very much. We had a poll yesterday. Over 34,000 people, and 78% said that I should keep the sound effects. I really only use them with you and when Sosnoff is wrong about something. It was 82%. Sosnoff said I should keep it. 17% said
1% said not sure. They're on the fence. They couldn't figure out which way to fall.
1% didn't want to vote, is what it came down to. They abstained.
They got into the ballot box and couldn't pull the trigger.
Yeah. They just didn't understand the question.
Get the full scoop by checking out the archives at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Tomas, we're back, my friend, and you know what that means. Time for a little bit more Tasty Live. What was confirm and sense? But before we do, let's take a quick look at the market. I know we're running a little bit late. We'll just basically say this. The market is unchanged, Sadnov. Even the S&P is up $1.25 after record highs in the S&Ps. And the NASDAQ's down by 10, but it's basically unchanged. Volatility is unchanged at 1475, and bonds are unchanged also, up 4 ticks. If you look here on the
up 4 ticks. Here we go.
What's that?
Here we go, loop-de-loop.
Here we go, loop-de-loop. Okay, there we go. You look here on the right-hand side for the biggest mover. It's really net gas to the downside, down 2%. trading 3.146. That's all I got, Sadnov. Go.
Let's do it. Let's take a look at confirm and send. If we could read the screen, it's hard when it's facing the other way.
Nobody does their job here.
Tom, you're so right.
I can read it for you. Oh, look, they moved it for you. How is that? To the powers that be, Sad. If I can read the first one for you, though.
I got it. I noticed early in the day that the VIX was higher, but the VIX one day was lower. How can that be?
How can that be? Well, you're looking at, 1 day implied volatility versus the monthly implied volatility, which is VIX. Really, VIX 1 day is wonderful to look at if you're trading, 0 day to 1 day SPX or any other options that expire in a day, but really the SPX options are SPY. Other than that, I actually like /VX, which is not up here.
The VIX is looking out 30 days, and the 1 day only cares about
here and now.
The next couple hours.
Mm-hmm.
So they really are very independent of one another. In fact, on many days, you'll find the VIX 1 day significantly lower if nothing's going on, and the VIX higher. I mean, that is not strange at all. Especially, you could find it the other way around. The VIX could be low. The VIX could be lower, and the /VX can be lower, but the VIX 1 day could be higher if there's like a big number coming out tomorrow or something like that.
Yep.
Because one's looking out 30 days and one's 1 day. That's it. Yeah, it makes total sense, actually. Let's go next slide.
This is what we thought they were.
If you're trading daily or weekly expirations, do you really care what the IVR is?
Yeah, I think you have to. I know we've done the research where it shows that IVR being higher, you get paid a lot more for it. You could, extrapolate out if IV rank is low, obviously you get paid less, but there's going to be less movement. But that's where you get the outlier moves too. Does it mean you should stay away from the 1 days when IVR is low? I mean, that's open for debate. I think you should definitely reduce your size. At least I would.
If you're trading daily or weekly expirations, if you're trading daily expirations, no, you don't have to care what the IVR is. Who cares? You might want to care what the 1 day VIX is just to see if there's enough juice in there. But no, you don't. Doesn't make any difference to me.
That 1 day we just talked about a moment ago.
Yeah, if you're trading the 1 day, I don't care what the IVR is. You're right. If you're trading the weeklies, it doesn't mean as much either because that's pretty much a directional play at that point. And if you're trading the weeklies, you're probably not playing for a premium decay. But so yeah, I would say that if you're trading the dailies or the weeklies, it doesn't mean as much. No question about it. The IVR is really helpful if you're in that 45-day cycle or something like that, and you're trying to manage premium decay. But if you're trading the dailies, it doesn't matter. And if you're trading the weeklies, it matters less. Okay, let's go next slide. Why are there so many ETFs that track the S&P 500? Is there a reason you use SPY versus one of the other ones?
Liquidity, depth of market, the tightness of the market, most widely watched. If I'm going to watch the S&P and have an idea on what I think the S&P is going to do, why not just trade the S&P? Why complicate it anymore? So that's why I do it.
I don't think first of all, it's the classic definition of a free market. There's so many because different firms think that they can do it themselves and they don't want to pay somebody else to manage an S&P basket for them. So they create their own in an effort to save on, maybe save a little on fees. That's one reason. Other people think that they can create one that's slightly better. So there's lots of ones that look alike, but some have like little tiny variations. And listen, for the consumer like us, who cares if there's 100 of them or 1,000 of them? Always the first to market and the biggest, most liquid one's going to win most of the business. But the reason we trade the SPYs for liquidity, but we don't care if there's a million others. But we always trade the most liquid one. Next slide, please. How do covered call ETFs work? Is there a reason I wouldn't or shouldn't buy one?
Here. You could do it yourself for a lot cheaper. Would be the way that I would put it to you. So why not do it yourself? It costs you less fees. You could be more diligent with it. That's why I would do it. I mean, it's a very capital intensive trade to do. There's probably other things that you could use your capital a lot better by creating synthetic long stock and selling covered calls. But again, if you do the work, you usually benefit from it, and I think you should do the work yourself.
Covered call.
This is a great bullish strategy.
Covered call ETFs work exactly the way you would think. Depending on the type of ETF, they have some for tech, they have some for growth, they have some for utilities, they have some for indexes. They work kind of exactly the way you think they should work. They're pretty basic. In fact, I would say that most tasty traders are significantly more skilled than the people that manage these covered call ETFs, meaning that you're more apt to pick the right delta to sell, let's say a 35 delta. You're more apt to pick the right duration to sell, let's say closest to 45 days. Most covered call ETFs are very, they're not mechanical. They don't really have the research to back it up. They just kind of wing it. I don't like covered call ETFs. I would never buy any of them. The reason not to buy one is just what Tony said. You could do it better yourself. And the fees are probably 10 times what they are of a standard ETF, like a standard index ETF. The fees on those are probably, let's say, 20 basis points. So maybe they're 100 basis points on a covered call ETF, or 125. So maybe they're 6 times as much. That's the main reason not to do it. It's just the expenses for getting probably.
The strategy is very immature typically in this. Then, like
probably for getting less than an expert to be doing it for you. This is like entry level 101. Yeah, that's my reason. Unless you just want the simplicity of it, fine. But it's not that interesting to me. Let somebody else do it and not do a good job of it, and not use any of our optimization or mechanics. That's the reason not to. Let's go next slide. While this may not be capital efficient, I was wondering if going long 1/10 of a Bitcoin, which is like a micro Bitcoin future, but 1/10 of a Bitcoin, and shorting the micro Bitcoin, the MBT, would result in a small Bitcoin arbitrage. Would this also work by going long one Bitcoin or 1/10 of a Bitcoin and selling a call against that? So basically what this person wants to know is, if you were to buy the cash Bitcoin, could you sell a future against it, or could you sell a
fractional
call?
of the
a call against it, theoretically. Could you sell a call?
Yeah, it's a pairs trade like any other. But please think of it as two separate entities. It's more like General Motors Ford. It's not like General Motors stock and General Motors call. So this spread can get as wide as it wants. There's nothing going to hold it together. Now, I've watched the Bitcoin Cash, and again, you're not going to get any relief either. So it's going to be extremely capital intensive on both sides. So I've watched both of them. It gets out to around $1,000 where it is now. It usually is something closer to $500. I think it'd be very, very hard to do. You can't short the Bitcoin Cash side of it. You can only do that from the Bitcoin future side of it. Again, I think you're really getting too deep in the weeds for something that really is no edge there.
Well, first of all, it's definitely not capital efficient because there's no such thing as cross margin in these products, and in cash versus the cash products are not leverageable, or you can't leverage the cash products. So they're tradable, but you can't leverage them. So there's absolutely no relief whatsoever. So from a capital efficiency standpoint, it makes no sense whatsoever. Yep. From an arbitrage standpoint, it also makes no sense because if there was an arb there, people that actually do this for a living will be way faster and way better at it than you would be. In fact, it's not even possible that you can compete with arbitrageurs because they have access to capital much cheaper than you do, just based because they're probably exchange members. So the answer is you can never compete with professional arbitrageurs just because your cost of capital is so much greater that they could be inside of your markets. So if you're going to do this, you're pretty much going to be locking in a loss every time you do it. So this is not something we would ever do or we would ever consider. Let's go to the next slide. And the last one. with regards to American versus European options, why are American options more valuable than European options? If I go to the SPY, which is American just means that you can exercise early.
That's correct.
Okay. If I go to the SPY, which is American, and to the one-day...
Anytime before the expiration.
Yeah. And to the one-day put at 21 deltas, I'm getting about 40 cents. But with the SPX, which is European, can't exercise early. The one-day put at the 20 delta, getting about 350. Remember, it's 10 times the size, so it'd be $4 versus 350.
35 cents versus 40.
So am I missing something about American options having more value than European options?
No, you're not missing a thing. That is that exercise risk, that nickel.
The right to be able to exercise is worth something.
Yeah,
that's what it is. It's a nickel.
It's a nickel. You don't have to do the math. It's right there for you.
Yep. Yeah, that's the marketplace assigns a value to the flexibility or to the optionality that you have with respect to exercise and assignment. And that's, in this case, that's what the market has applied to.
And SPY has stock to it too, where SPY
there's certain there's underlyings that are going to be actually different than this, where there's going to be even more premium associated with it. Like it could be a hard to borrow stock with a really high interest rate. Sure. There's going to be different situations where you're going to have a much higher premium associated with the right to be able to exercise. But that's the reason that American options are more expensive than European.
Very good, my friend. Let's hit a quick 90-second break. We'll come back. You know what we come back with, Sound Enough? Come back with an option jive. We'll be back in 90 seconds. Take it live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under,
Tom's gonna give me a hard time for this. Can't believe I'm gonna say this. I'm in a vulnerable state right now, so I'm gonna say it. Taking tap dancing lessons.
Hold on. What? The two of you are doing tap dancing.
Oh my God! I want to come watch. Please, can I come watch?
Don't maybe come to your what do they call that? Not your rehearsal.
Oh yeah.
Oh yeah, you're coming.
Graduation, like his graduation.
When I recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said.
You're coming. You're coming. I'll tap in here one time. I'm gonna do it
with your hair. You're gonna look like Borat.
I've seen you play golf. I think you should take up tap dancing.
Thank you. See, I knew you had to get a criticism in there somehow. I appreciate that.
TP refuses to adjust his webcam, so he does the show like this. And it's the most Bill Belichick camera angle I've ever seen.
You know what? A couple times I asked him to change it because I thought it'd be better.
Everyone in production has asked him. Every single person.
I decided it looks great. I love it. Just leave it the way it is.
If he can get away wearing that shirt with that pose, he deserves it.
Oh my God.
Like Chilean sea bass. It's actually toothfish or whatever, soft fish.
Ugly fish is what they call
Ugly
it.
fish.
Yeah.
Right. So it's Chilean sea bass. It sounds good.
I got a Chilean sea
$50 a
bass.
slice. He just eats
What do
it
you
up.
mean? Well, hold on. What do you mean you got a Chilean sea bass? If you tell me that you bought one and it's sitting in your refrigerator and or it's been in your freezer for a few years and you just uncovered it, what does it mean you got one?
Every time I go to Costco, I buy Chilean sea bass because I like it.
Ew.
And how do you cook them?
Oh, I have a system down. I cook them in.
Jesus, blessed Mary. I can't. I almost made it. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It's option. Jive.
It is an option, Jive Sosnoff, and we've got that coming right at you right now, right here. Probability of touch.
Option Jive.
Jive. Give me S&P's down 4, NASDAQ down 55, Russell down 2, Dow down 16. Basically unchanged. Getting a little pink.
So I'm breaking down. I'm going to go see a doctor.
I could see that.
Can't handle anymore. My rotator cuff.
Are you sure it's the rotator cuff's the left side? That's your heart.
No. It's right here. Only when so here's the whole thing. The one thing I can't do is open my window and put the card in.
When you
leave the garage.
People, when you're trying to get into the garage, you can't get your ticket in.
Something I pulled something here.
Isn't that how the injury happened?
What?
Didn't that cause the injury?
Here's the craziest thing. When I drive my Tesla,
it has the thing in it. You must have a transponder in it.
How do I have a transponder? They never gave me one.
You're special.
Here's the deal. When I drive my truck, I can drive straight into the garage. It doesn't require anything. When I drive
that's the Range Rover.
Yeah. When I drive Tesla, I have to use the card.
You have the card in your pocket.
No, I have to take it out and hold it against the thing.
So you have your card in your pocket with both cars, but you're saying with one.
No, I leave the card in the Tesla. I only have one card. Leave it in the Tesla.
So you just get in for free with the other one.
Exactly my point. I swear to God, I just drive right in. The Range Rover.
So why don't you save yourself and the company a lot of money and just drive the Range Rover that gets you in for free? Why don't we just park it downstairs and just let every car get in for free?
Should. Just drive in. Just straight drive in. You don't need anything.
You should do it.
There's something in that car that just you get in for free.
I would like to see this. We get in the same time in
Agreed.
the morning. I would like to see this.
I will show you. I will leave my card at home and I'll show you.
And you don't think you have the card in your pocket when you
I don't.
get in? I
don't. I have nothing.
So when you drive that car, you purposely take the card out of your wallet or your cash of money and you leave it at home because you know you're going to get in for free?
No,
you have it in your pocket.
No, I just leave it in my
Tesla. The story
Tesla.
breaks apart.
Oh my God, I'm telling you.
Option Jive. I can't. TP! Go lefty.
Is your arm okay?
No, it's injured, but it doesn't hurt my golf.
So you can do this still. You're fine. I just saw you do that.
My golf swing doesn't hurt it at all. My eating and stuff like that.
It's fine. We use your other arm.
Can do this. Totally fine. Only I can't do
this.
Can't do that.
It's overrated anyway.
I know.
It'll be fine.
I pulled it like 2 months ago. I can't get it. I can't get it fixed. Probability of a touch.
Not a tumor.
What?
Not a tumor.
No, not a tumor. Probability of a touch when managed. Let's take a look where the team is going with this. The last time we tested realized probability of a touch, POT, for 10, let's just see. Hold on, let me get this right. Screen up here. For 10 delta puts and calls by analyzing a basket of 5 underlines. We found that the realized probability of a touch on the put side was half of its theoretical value, while the call side realized probability of a touch is the same as its theoretical value. You know why that is? We call that a bull market. We call that a bull market, Mr. Batista. It's very simple. 10 delta calls, 10 delta puts, the theoretical 20% on both sides, two times the delta, and the actual 9 and 19. Okay, that's an old study we did. Let's go next slide. But today, well, that is a bull market phenomenon. That just means the market's going up all the time. Today, we want to examine what happens when the options are managed at 21 days, at 21 days to expiration. This time, we switched to a more commonly used 45-day 20 delta options and expanded our testing to use other indices like the Qs and IWM.
Nice.
Note that the 20 delta option has a theoretical probability of a touch of 40%, 2 times 20.
2 times delta is approximately.
Let's go to the next slide. So when holding a position to expiration, the realized probability of a touch on the put side is consistent with our previous findings. Again, a bull market phenomenon, in my opinion, showing roughly 50% of the theoretical value. At 21 days, it's reduced further by half, resulting in 25% of the theoretical value. So if you don't want to be threatened, if you don't want your strike threatened, this is a pretty compelling argument that the theoretical's 40, and at 21 days, it's actually 10. At expiration, it's 20, and at 21 days, it's 10. And then when you look at the Qs, it's basically the same thing. When you look at IWM, it's basically the same thing. When you look at the averages, it's the same thing.
And this is at all-time highs.
And this is at all-time highs. Yes. Let's go to the next slide. So on the call side, although the realized probability of a touch is the same as the theoretical number, managing early significantly improves the outcome, reducing it to only 1/3 of the theoretical value. That's cool too. On the call side, it's still a huge improvement. And, even in a bull market. So essentially what we're saying is overall, yes. But even on the call side, even in a bull market, if you manage to 21 days, you really reduce that probability of a touch dramatically. And that's how you perform better as a trader.
And this is why, getting back to the covered call fund or anything else like that, you should think about being mechanical.
There was a guy that wrote me an email the other day, and he said, I was watching a video, and I was watching a video not from you guys, from somebody else, some other buddy else talking about options. He said, and they suggested a different plan of action to something.
Okay.
He said, what is your thoughts on that? I go, we have no issue with that at all, but it's not optimal. Like what our research does, it doesn't say that something else is necessarily wrong, but what it says is if you're looking to optimize things, the reason we do the research is all about optimization. Everything is theoretically in line, is theoretically, accurate. We're not looking for theoretical imperfections or theoretical arbitrage opportunities. What we're looking for is optimizing theoretical value or optimizing theoretical opportunity. And that's what this is. This is how do you optimize something? Well, at 21 days, if you manage calls, there's only a 14% probability of a touch when normally the theoretical would be 40. That's that's
sure.
Real optimization.
Sure.
Let's go next slide.
That's significant is what you're saying, right? I mean,
Yeah. Next slide, Beth. So this makes exiting positions early particularly appealing for premium sellers with a strong directional bias. The realized probability of a touch on both sides is very similar, even in a strong bull market as we've seen in the past. And that's exactly what I just said. So even if you're directional, but you're selling something outside, like the whole reason I'll sit there and say something to the effect of you want to be outside of the expected move is exactly this.
Mm-hmm. You don't want the touch.
And that 20 delta is going to be, that 16 delta is going to be outside the expected move. 16 to 20 deltas is basically going to be outside the expected move. That 14 or 15%.
Credit received here or anything else that gives you break evens outside the expected move.
Yeah. Let's go next slide. So now let's combine the puts and calls and examine the strangles. Once again, managing positions cuts the probability of a touch by more than half just compared to holding the positions to expiration without any adjustments. So what happens, again, we're looking at the strangle here. And so if the theoretical is 80 and expiration is 62, at 21 days, it's 27 or 28 on average, depending on the product.
Mm-hmm.
That's essentially your whole game. That's what we're playing for.
Yep, I love it. Numbers are what you want.
Exactly what you want.
Yep.
Let's go to the next slide. So managing positions before expiration can significantly lower the probability of touching the strikes. On average, the realized probability of touch on the put side decreases to less than half compared to when the positions are held to expiration. The probability of touch on the call side reduces even further. The difference in probability of touch between puts and calls diminishes when managing at 21 days, reducing pressure from a directional market. And that's, again, this is all about
Just
optimization.
trying to make life easier for yourself with just a little bit of work.
It is really good. It's a really good explanation of why you manage early so you don't deal with probability of touch.
Nice work, team. We'll take a quick 90-second break and come back. You know what? The day's got to start, ladies and gentlemen. The opening bell's going to be next. Get your helmet on. Get your bat. Get your ball. Get your mitt. We'll be back in 90 seconds. Tasty Live.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
Don't die like squirrel.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market. Never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Stas. What comes up next? The opening bell. Don't look so surprised, Sadlov. It's been this way since 1980 when you first started trading. Wait a minute. Was it always 8:30? Yes. The opening always was the same. The closing has changed.
Really? What has changed? I don't think so.
The opposite way around? The opening has changed, but the closing's always been the same?
No, nothing's changed.
No.
Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Oh, excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here. We're not cotton traders here.
If you'd like
we're
me to say,
option traders. This is what we do, and that's what we're talking about.
If you'd like me to say yes, you found your minor loophole to get yourself right.
It's not a loophole. It is correct.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock.
When I got in this business,
I'm saying since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that at $20?
Should we phone
what
a
the
Frankie?
hell do you think? You've been trading since then.
$20.
Can we phone Frankie?
Sure.
What did she say?
Phone Frankie.
We'll phone Frankie.
You can phone Frankie.
Francis, listen, Francis. Let me know. I know Francis is in the chat. Francis, let me know. Did we always open at 8:30 in the morning? I believe.
Post 1980. Before 1980, it wasn't.
1980 is when I started. That's the date I gave you from 1980 till now. Don't try to change things.
I'm not changing anything.
Don't try to make your little stupid loophole.
I'm not making anything.
I'm telling you.
We did not open at 9.
You might not know it because you didn't work a full day. Like it wasn't, you didn't always work a full day. You had minions, like you were stirring your iced tea with your silver spoon that you were born with, okay?
Those big spoons.
Upstairs, one of those big silver spoons, yeah. Upstairs while we were downstairs in the trenches trading. Trading through the market crashes, trading through everything while you were upstairs playing house with whoever you were playing house with.
Sure. So you were trading before you were even legally allowed to trade.
That's true. You're older than I am. That is 100% true. That is 100%.
It's 8:27 and almost 8:28, and I'm Tom Sosnoff. He's Tony Batista.
Oh, I can't wait for Francis.
He's having a few little memory lapses, but he's old now.
Francis, look harder. He just said 8:30 always. Look harder.
8:30 always.
No, it's what he said. Look harder.
I'll take the $20 if you.
I gotta find out first myself. Now that Francis said, I could have sworn.
I started this business on Wall Street in 1980, right around 1980. And
maybe it's the time change from New York to Chicago. That's what I'm thinking.
My first job on Wall Street was I had to go in and markets opened at 9:30 in New York.
What year was that? I think I got you beat.
I think it was 1980.
Okay, in 1979, I worked for an attorney who wanted me to go pick up papers from here.
I don't know 1979.
And bring the papers from there. And it was something to do with Wall Street. And then he found out my father had a little bit of
I got my first job.
Storied past, and he fired me.
I
might have been before you.
I got my first job on Wall Street in, I think, 1980. And I came to Chicago in 1981.
I thought I came in 1980. My mom, may she rest in peace, said I came in 81. She's probably right.
Yeah. So I think I came in 1981. And I think I came on the floor in the late 1981 and then 80. Yeah, something like that. I mean, I came to Chicago.
Yeah, but you came again with the silver spoon in your mouth. You went right to the trading floor. I worked for 3 years, saved $5,000, started with nothing, saved $5,000, making $600 a month when I started. How do you save $5,000 doing that? You rob and steal. That's how you do it. It's the only way you could do it.
No, I only had to take
then you start trading 3 years later.
I just had to take a distribution from my trust fund.
I had never heard of a trust fund before I met you.
Either had I. Genius. God.
Are you guys done?
He's never done with this discussion. He owes me $20 though. So
if I owe you $20, I will send it to you. I hate this Venmo.
Beth, text my wife. Tell her we get a good dinner now.
We can order delivery now. We don't have to go pick it up.
She can have a full slice of pizza now.
Did I do 2 or did I just do 1? Was it?
No, you did.
Did I do 2? It was 20?
I have it on video.
It was 20? I got it. All right. Bless it.
God, Frankie's memory's good.
Yeah, well, we're going to check first.
Listen, I remember those kind of things. I remember when there's 15-minute quarters in basketball.
Let's see what's going on in the market here. Basically unchanged. Even the S&P's down $1. NASDAQ down 53. The Russell just turned green, up $1. And the Dow just turned green, up 51. Volatility up 5 cents. Basically unchanged on everything. Bonds are up 3, 19.25. Notes are up 4. Bitcoin hanging out at, let's call it 95,000, down about $500 from the last time I quoted, down $1,600 so far. Oil up 99 cents. That's a 1.5% move to 69.09, catching a little bit of a rally after the last couple of days. Gold also up $17, getting a much tighter range here. A gold IV rank of 59 is good, but I can't make a penny in gold. Silver up 60 cents. That's a 2% move. Nat gas is equally to the downside, over 2%. That's a 0.082 move. And let's see what stocks are moving for us, because that's what we're looking at here. To the downside, MSTR down $16 to $364. Netflix, sneaky, down $9, only has an IV rank of 11. Tesla down almost 7. It has earnings January 22nd. Coin down 4 and change. CRM has earnings today after the close, Sadnov, down $4, IV rank of 52. Let's go to the upside here. The upside, Goldman Sachs, can't make a dime in that stock either. IV rank of 22 is up 7.5. UNH up almost 4. Home Depot up almost 4. Lilly up 3. And JP Morgan up 2. Sadnov, SMCI up $2 and change. That's all I got for you so far.
Yeah, I'm being very. There's markets are a little bit wide, cushy this morning.
In
like some like MSTR and Coinbase and things like that.
MSTR has wide markets. You know that already.
Yeah. I'm gonna roll down. Be better. Be better. Do better.
Sadnov, that ding you may have just heard. That's right. That's my UAL trade from my podcast trade last week. Just taking a quick little dollar at it. I had to roll up some putties in there a little bit. Had to stay mechanical. Took a little profit. Good on me.
I am going to probably.
Don't worry, today's Tuesday, Sadnov. You can find another trade from my option trades today, my podcast, wherever you find your podcast. So just wait for it to be right on our site, Sadnov. Or you know what? Even better, Saz? Go to our follow page. That's right. You have to have a Tasty Live, Tasty Trade account, to see that.
Yeah, market's still too wide and monster.
Help support us. Help us keep the lights on, Saz.
Let's take a look and see what else is going on today. Tesla.
Well, if TP did his job and got you all buttoned up at the end of the day, it's basically unchanged. There should be very little for you to do here but take profits, enough like I did in UAL just a moment ago. Yes, that's right, Sadnov.
You are a special child.
I certainly am.
I'm just going to make some very minor adjustments. I'm just looking to. I need the markets to tighten up a little bit in MSTR. That's my main thing.
Oh, you can do it.
They're getting a little tighter.
They will, but aren't they usually like $3 or so? What are they now? Bid ask.
$2.
Oh, okay. Better.
Yeah, $2. They'll get there.
Mm-hmm.
And let's see what else do we got going on. Just looking around to see stocks with big movements this morning. MU, surprising. That's a big one.
MU, I struggled in there, man. I had to do about 15 different.
It's a struggle town.
To make $1 in MU. It was tough. It doesn't look like it goes anywhere, but man, it's tough in there.
It's struggle town.
Mm-hmm.
MU is all about struggle town.
IV rank of 56 is pretty good. It has earnings coming December 18th.
It's a struggle town. Let's see. Russell's unchanged. S&Ps are basically unchanged. The Dow's up small. The Nasdaq's down. Bonds up small. It's a quiet. Yesterday, I don't know if you just saw the S&P volume yesterday.
I didn't. I'll be honest with you.
Under 800,000 cards.
How much?
Under 800,000.
You mean the S&Ps?
Under 800,000.
Under 800,000. Sorry. Oh, that's light. That's.
It was very light yesterday.
Is that because I wasn't here? Is it the traders decided to back off?
Yeah, it's because
liquidity.
Well, when you didn't show up in the morning, I mean, a lot of day traders went home for the day.
They said they couldn't pick off anybody. Is that why? Is that why?
Yes.
There's nobody to pick off. Yeah, I get it.
Okay, let's see what else do we got going on here. Bum 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 bum.
So what do you do? Just like look at your P&L and say, okay, which pile am I going to put this in? Like, I mean, you have these big piles. Is that what you decide to do? Don't squint your eyes that are already squinted at me.
I look at my deltas on different underlines, and I look for stuff that I think is a little bit out of whack, and
that's why you mentioned MU, because it's out of whack to the red side. You didn't mention Tesla, which is out of whack to the green side.
Because I'm short Tesla. So MU is a position that I need to roll up some putties on.
Mm-hmm.
So I'm going to go here, putty, and there you go. And so I moved my puts from 87.5 up to 92.5. I rolled stocks up $3 and change, $3.50. Rolled my puts up $5.
That's how we roll.
MicroStrategy's down $13 or wherever it is. Let's see, MicroStrategy's.
Call's down 10 or 15 bucks, maybe even 20. Who knows?
Yeah.
Crazy that way.
Well, now it's down 9. So I rolled.
Goldman Sachs up $8. What did Goldman Sachs do here, Sal?
They invented.
Did they cure cancer or something?
They probably have.
What have they done? Ivy rank at 21. Should have closed it yesterday. It's costing me a couple more dollars today because I'm stubborn.
They probably have. Yeah, they're unbelievable. By the way, I mentioned this yesterday afternoon, but I just want to mention again, we won't spend too much time on it, but we have a new email address if you think you are a rising star at Tasty. Oh. We do a segment called Rising Stars. We do about 5 or 6 of them a year, where people fly into Chicago and tell us their story, and we push it out on the
well, they can just drive in for the suburbs. I mean, they don't have to fly from the suburbs.
You could drive in from the suburbs.
If they're here in Chicago, they just come right downtown. You don't have to get on a plane to be a rising star.
We vet you. We have a team here that vets potential rising stars, and we see who we think will be most interesting.
We used to use Ernst & Young. Now we do it internally. Go ahead.
We'd like to see who we think will be most interesting to our viewers. And so the new email address is risingstars@tastylive.com.
It's so obvious, Oz. Why don't you come up with something different?
Why should I?
Like you like things to be obscure, like Tasty Rising Star or Tasty Stars. Like, why Rising Stars? People could find that, Sosnoff.
I want
Rising Stars at tastylive.com. People could find that. You like to make things more difficult for people.
I like when people find things.
I don't think you do.
Rising Stars at tastylive.com. Send us an email if you like. And I think there's a whole team of people that are talking to different people, and we'll see if you qualify. That's
what about
it.
Falling Stars? Do we have any Falling Stars?
We haven't done a show called Falling Stars, but I think it would be actually fun.
Just go to the Trade Desk.
No,
more content there than you could ever find. Matter of fact, if you come to Phoenix, I know he's supposed to be the surprise guest, but that's right. My friend from the Trade Desk is going to be there. You know him as what? T-Mac. That's right. T-Mac is coming with us to Phoenix. That's right. You want to meet T-Mac? You will.
To be a falling star, you have to be a star. At some point, otherwise you can't fall. So we got some work to do.
You're disgusting. You know that?
No.
You mean the S&P's down 7, Did you catch it?
Did I catch it? Well, I'm short. So
we got that for you.
Got that much going for me. We sold some futures yesterday on the close. I'm not covering them here because, like I mentioned, to TP on the close, I fully expect the market to crash and burn at any time soon.
Don't brag.
Well, 6 points is not what I'm looking for. 60, we'll consider. 6.
Saz, do you think your tag is and your transponder is not working in the Tesla because you've been saying some mean things about Elon, and maybe he just shut it off in the Tesla that you take?
I haven't even started saying mean things about Elon. Elon's.
No, don't do it. Don't do it. We're going to take a quick...
Elon has gone to the dark side. I'm done with him.
But never fade a superstar. We are going to take a quick... You'd like to have him on your team. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Saz?
What comes up next?
That's right. You got it, Saz. You're always correct. That's right. Let me explain with Chris coming up next. We'll be back in 90 seconds with Tasty Live. Man, you're so good at this.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door. Oh. Elijah left you a present. Go ahead.
You really want me to go to my front door?
And while Tom is getting his gift...
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like "thank you" and "you're right."
Oh my God, keep your shirt on.
No, right there, please. It's sweep.
Like this? Please. Oh my God, Tom, take that. Oh no, take that shirt off.
Let me see those peanut-sized nipples. Oh, please, go. Oh, happy chauffeur. Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the precision of the short game. Wow, I've seen better putting at the mini golf in the Dells. Tom, do you see holes where there aren't any, mate? Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. But before we get to this gentleman, and he is extremely important, I do have Ron here with an email saying he was a broker for Lehman in the 1980s. The New York Stock Exchange was open at 9 a.m. Central, guaranteed, Saznoff. So that 20 will be coming this direction.
I already wrote him back and said I am not accepting his findings. I need to see proof.
I will find proof, and I am going to get this $20 off of you.
I don't think so.
No matter what. If I have to tie you down and take it from you, I will get this $20 from you.
I have Frankie that's saying differently.
Frankie is getting old. Oh, that means nothing right now. We've got this man. That's right. That guy right there on the screen. Chris, how are you, my friend?
I'm doing well, guys. How about yourselves?
Doing well. Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Saznoff. We're going to be eating good tonight. I already decided that Saznoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
We were on the floor when it happened.
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning to start trading. Saznoff, again.
September 1985.
Didn't wake up that early because he didn't get on the floor. Yes.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me, bitch! Baby, go right there with your fat little fingers and start typing. Since I love Venmo. Start it. How could you not remember this?
I don't remember it.
Yeah, you know what? That's because you didn't play basketball and have fun with the guys beforehand.
Oh my God, I can't
listen.
That.
I
can't
put
listen.
Into your.
Go ahead, Chris. What do you got for today?
I'm not gonna get paid right now, am I?
Oh my God, no.
All right, go ahead.
What do you got?
Thank you, Chris. I'm gonna send you a little something, Venmo.
I'm so
50%, as we agreed before the show. 50%.
About 50%. I might flip you $1 like a tip, like, you know.
Oh gosh, I can go get some gum from the candy shop. Thank you, Tony.
Spend it all in one place, kid.
So this morning around 8:45 Eastern Time, we saw that stocks fell, bonds began to rally, and it's because of a unique event. The South Korean president, Yoon Suk-yeol, declared emergency martial law, accusing the opposition of controlling parliament, sympathizing with North Korea, and paralyzing the government with anti-state activities. He vowed to eradicate pro-North Korean forces and protect the constitutional democratic order during a televised briefing about a half an hour ago. And we're seeing that this is clearly impacting markets here. Now, Tom, you are asking, why is this happening? He's saying that he's having problems pushing forward his agenda against an opposition-controlled parliament since he took office 2 years ago. His conservative People Power Party has been deadlocked with the liberal opposition Democratic Party over an upcoming budget bill. And there are some investigations into him and his wife and top officials, so maybe this is a way to slow those down. But in any event, when the news hit, bonds rallied and stocks slumped. Semiconductors were hit particularly hard, which is no surprise as South Korea's largest company is Samsung. And so the question people may be asking is, does Samsung have anything to do with the AI story? And the answer is yes. Samsung supplies to NVIDIA. Specifically, Samsung provides the advanced memory modules, the HBM3 high bandwidth memory, which is a crucial component for enhancing the performance of NVIDIA's GPUs and AI processors. Broadly speaking, S&P 500 companies derive about 1.5% of their revenues from South Korea, which barely cracks the top 10 of foreign countries if you think about the distribution of where companies make their money globally. So, Tom, Tony, now that we know why this is happening, or why at least this provoked a reaction, the question is, unless World War III is starting, how long can we look to this market to fade it?
Well, I mean, it hasn't had much of a impact already on the market. So I would say that the market is discounting World War III at this moment, subject to change.
I would say that a two-handle move in the S&Ps, Mr. Vecchio, is not exactly panic in the streets, and 2 ticks up in the bonds or 3 ticks up in the bonds is not exactly a flight to quality. So I'm not going to give you this one as it's a...
Just explaining here, Tom.
I appreciate the explanation. I'm not sure that it has had much impact on our markets other than 1 or 2 handles in maybe in the S&Ps or maybe 1 or 2 ticks in the bonds. I wouldn't consider that any more than... I would consider that absolutely a non-event. What else you got?
I happen to agree, and Tony, I don't think there was anything I could say there that Tom would like after I just clarified those trading hours.
No. He's still got $20 on the brain, which I have not seen yet.
Tom, I'll cover that difference so you and I could be copacetic moving forward. Let's talk about the seasonality here at the end of the year. We've joked that I can pull all sorts of stats out of the hat when it comes to these things to fit a view. So let's fit a view of perhaps bullishness through the end of the year, where the market's already up 24% year to date from the S&P 500 perspective. This would be the 3rd time in 4 years that we've seen a gain over 12 months like that, and that is very unique unto itself. Election or not, we've actually seen a pretty strong adherence to seasonal trends as we've made our way through this year, as well as we did last year. December is shaping up to be more of the same. In election year since 1950, the S&P is up in December 83.3% of the time. Similarly, December rarely produces a noteworthy bearish performance, with only 1 time since 1950, election year or otherwise, producing December as the worst month of that given calendar year. But this year, likewise, produced a gain of more than 10% in the first half, and in years with which the S&P 500 rallies more than 10% in the first half of the year, December has rallied 100% of the time to an average return of 3.4%. In recent years, however, this data series is a little bit more wrinkly, if there's a lack of a better phrase. Stocks have been up 6 of the past 10 Decembers, but each of the S&P and the NASDAQ 100 have averaged negative returns over the past decade. And this is the time of year when volatility starts to turn higher, which I think contextually, we're looking at a VIX below 15 right now. December, January, February has been the most consistent time of the year for a sustained rise in volatility over the past decade. So I know you guys aren't big adherents to seasonality, but last year and this year, seasonality has actually been a pretty good guide. Choppiness in the first few weeks of the year, a rally into the summer, you fall off into the fall for a 4th quarter rally to be staged that brings you into new all-time highs. Should we as traders be putting a little bit more stock into this in 2025 if we've been ignoring it in recent years? That's my question to you.
This 100%, should we ignore it?
When you say we should be putting more stock into it, what do you mean by that? Like, I'm asking, what are you thinking? Are you thinking as a continuation or to fade it?
Continuation with the seasonality trends, which would be, quite frankly, given the first quarter, would be bad for stocks. Stocks would be looking at a choppy January, a rally in the middle of February, and then a pullback into March. And then once you get into April, through the middle of April, you look at a more sustainable rally through the middle of the year. Is the table set for something like that as we head into 2025? Should we ignore that tendency of the market as it's behaved for the past few years outside of really 2022?
You're asking the wrong person. So I recently gave a software demo when I was doing a bunch of trading shows in London. I mean, in the UK. And I used the backtesting platform at each event just to give a quick little show of what we have on the software. And every single example I gave in the backtesting platform, Chris, was of strategies that had failed miserably over the course of the last 12 months. For example, the one I used almost every day was selling puts in Boeing because I was going to sell puts in Boeing because the stock got down to 138, 139 when we were doing the shows. And I was showing that if you'd sold puts in Boeing all year, you would have gotten killed. So that's why I was showing it, for the simple reason that as a contrarian, now it's time to sell puts in Boeing. So when I listen to what you're saying, the only thought that goes through my head is, given the size of the rally that we've had this year, and given the fact that we really haven't had any kind of sell-off or anything like that, sure, we should be using this information, but using it with a contrarian approach, I believe. And, it's the dogs of the Dow type thing. It's time to do the opposite. I mean, that's just the way I think. Like, I'm not saying it's right or whatever. It's just the way I think.
So you'd rather be wrong.
I'm not saying I'm going to. You don't know if you're going to be wrong or right. I would rather do the opposite of what everybody else is doing than think that there's any. Think that history would suggest that anything else is relevant. Like the only thing to me that's relevant is to do the opposite of what history suggests.
Well, Tom, let me give you a piece of information here that might titillate you.
Okay.
Typically, in the average year, analysts, when they put together their 12-month ahead forecast for the S&P 500, over the past 25 years, they've been guiding higher by about 8.8%, which isn't really heroes work because if you look at the return of the S&P 500 since World War II, it's about 8.7% annualized. This year, the average return, the average price target for the S&P 500 through the end of 2025 is about 11.1% higher than where it stands right now. This is the highest degree of price improvement that analysts are forecasting going into the next calendar year ever. Everyone's this bullish. No one's ever been more bullish as we make our turn into the next 12 months. So you want to talk about a crowded market and a crowded perspective. Everyone and their mother is chasing this market to the upside right now.
Yeah. We saw a lot of the, 7,000, 6,800, 6,900, 7,100. Yeah, of course, they're all,
why not?
10 to 15% higher. Yeah, why not? I mean,
and nothing but
that's
upside action.
But that's what they get paid to do. They're not paid to trade. There's a big difference. If you get paid to predict, you can't afford to be different. You can only be better than your peers. Like there's no advantage to trying to play it any other way other than to be more right. If you're a trader, none of that comes in. None of that's part of the equation. That's where you draw the line between analysts and traders, and that's why they don't let analysts trade and traders don't analyze. It's that simple. So if you're a trader, all you can think about is, well, if every analyst on this side of the market, then statistically, I got to love my chances to the downside. I mean, you can't think of it any other way. There is no other way to approach it as a trader. That's it. That's why historically the funds that finish every year, the funds that finish in the top 25% virtually never repeat. That's why in sports, the teams that win, almost never repeat. I mean, it's the same. The top teams that make the playoffs almost never repeat. It's just the nature of cyclicality and the way things and the way markets move. So I don't know. Again, it's a beautiful thing for traders. I think it's a dangerous thing for analysts, but they have no choice. If you're an analyst right now and you either miss this year by a lot or whatever, you have to say some number between 6,800 and 7,200. You have no choice.
Gotta save face.
Yeah, it's like if you're managing an index fund, you can't not be 95%. Maybe you can be 99%, but you can't be less than 95% invested. That difference of 1 or 2 or 3% or 4% is your job.
Yeah, we like to say that, if you're bearish in a bull market, you lose your job. If you're bullish in a bear market, not a problem. Your job's to invest money. It's a bear market. People are losing money. But if you're not making money in a bull market,
of course,
it's hugely problematic. This year, there are only 2 of the top hedge funds that are tracked by Bloomberg right now. Only 2 of them are beating the market, beating the S&P 500 this year. Discovery Capital Management, which is up by 46.5%, and Rokos, which is up by 28.5%. Everything else is missing the mark. If it's Citadel or Walleye or Millennium or Balyasny, they're all underperforming the market. So perhaps that has something to do, or we'll see a change in positioning relative to some catch-up that's due to do some window dressing here.
In the world of, the firms that you just mentioned, Walleye and Citadel and those kind of firms, I mean, their business, they're prop houses. Their business is very different. They're not pure directional risk takers. Everything is spread off. And, those firms have an amazing history of, delivering spectacular returns based on their style, but they're not going to be much more than, 3, 4, or 5 times risk-free rates. you know.
Yeah, Ken Griffin's not feeling too bad that Citadel's only up 20% year to date.
No, either is Irv Kessler at Walleye. I'm sure they're okay. You know, I mean, those are the greatest. I mean, I don't know. Tony and I both think he's the best trader in the world, you know, for the last 4 decades. So
you can't argue with consistency.
Yeah, I would never fade him. That's probably the best fund I've never invested in them or anything, but they're probably the best traders I've ever met. So I don't know, you know.
Tom, can we go out on a note that may, I know that you're not the biggest fan of Elon Musk here, but I think the situation with Elon Musk's pay package is a really interesting one.
Really?
Yesterday, yeah, I'm curious on your take about this because I feel like this is.
I could care. I really don't care at all. I mean, I just don't care about him. I feel like I feel we've spent way too much time talking about Elon Musk when he means absolutely nothing to me. Like, I mean, the amount of time we waste on Elon Musk, I mean, I can understand wasting time on Trump or somebody in politics because they're leader of the free world type thing, you know, but wasting time on Elon, who was, you know, I didn't vote for him. I don't care about him at all. I literally don't care. I mean, I think
you didn't vote for a lot of things that people.
I didn't. I think there were years ago, you know, I was really impressed with what he could build and what he delivered, and that I was impressed. And now I really couldn't care less.
Because you've duplicated it.
I just don't care. I couldn't care less. He's kind of like I've lost total interest in him. Like I think he's a whack job. I really think he's a whack job.
The long and short of it is that for Tesla shareholders or traders, at least that are looking at Tesla, the market is coming in a little bit today. Tesla's going to appeal the decision that was made yesterday that was announced. His pay package of $56 billion was turned down. He's not taking a step back from the company at this point in time, and Tesla shareholders can still pass another compensation plan. So some softness there today, but we're going to do a separate write-up for the News and Insight blog. That way we don't bore Tom with someone he doesn't care about.
Tesla down $3 after being up around 7.
No, it was down 7. Not up, down.
Yesterday.
Oh yeah, yesterday.
It was up around 7. Today, Tesla is down around $3, $3.50, $353 and change. IV rank is 39. Seems like it's upticking a little bit.
Tesla.
That's how I use the news.
Yeah, I mean, there's some big rallies. MSTR just rallied. It's up $4 now. It was down $15 this morning.
Bitcoin's 96.5. It's rallied $1,500 since my friend Chris has come on the show.
Chris, you're amazing.
Chris,
clip that. Send it to my boss for review. Thank you, Tom.
Chris, thank you very much for that update on the New York Stock Exchange time. I also sent the article to Sadnov and to Frankie so we can correct all the geniuses in one fell swoop. And hopefully I will be tweeting out Tom Sadnov paying me the $20 on Venmo. Unless you would like to pay me cash, you could crumple that up into a little ball right now and throw it at me. I take cash too.
No, Venmo is much more painful because you don't get to actually see it.
I got so much Venmo cash in there, I don't know how to spend it from you. Like, you know, this is.
Oh God.
I mean, it's worthless there. We have to make bigger bets so I can at least get back to zero. Chris, thank you so much for your time, my friend. We're going to take a quick 90-second break and come back. We got a market measure coming at you. Going to hit you like one of those mackerels in the face. We'll be back in 90 seconds. This is Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. Gotta go to your front door.
Oh,
Elijah left you a present. Go ahead.
you really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like thank you and you're right.
Oh my God, keep your shirt on.
no, right there, please. It's sweeps week.
Like this?
Please.
Oh my God, Tom, take that. Oh no,
let me
take
see
that
those
shirt off.
peanut-sized nipples. Oh, please, go, yeah. Oh, happy chauffeur! Happy chauffeur! Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're gonna wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh, pumpkin. Circles are great.
He's looking for long-term strategies for this bear market.
Well, first of all, I don't think we're in a bear market. But if he thinks that there's going to be a continuation of 2022 and he wants some bear market positions, if you're doing what he's doing, which is putting away $1,000 a month and maintaining some kind of a core portfolio on that, I would have some positions in there that are not correlated to the S&Ps. That's an important thing. You want some non-correlated or negatively correlated positions to the S&Ps, which might be some, commodity ETFs or things like that. And the other choice would be, instead of being long a stock, maybe you'll be short the stock, and against the short stock, sell put. It's the reverse or the inverse of a covered call. So a covered call is long stock, short calls. A covered put is essentially short stock, short puts.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. What do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Wait, she thinks she is mine, but I don't know. Who would my celebrity crush be?
That's what I was gonna say.
I know. No. Do you mind on that you have Vince Vaughn? Yes, she's got Vince Vaughn.
Okay, but
we accept these answers.
90s. So it's like Johnny Depp in the 90s, not now.
Did you get it right?
Sydney Sweeney.
Yeah, that was.
Sydney, Sweeney.
I'm basically a mod for the Sydney Sweeney fan club on Reddit.
Thank you.
I got my wife and Brad Pitt for Tom.
Oh my God. That is the lame. That's a lame answer. I
was gonna do Kate Upton.
I said Kate Upton.
Kate Upton was who I was gonna put down.
That's his style. I wrote Shakira for myself.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend, and you know what that means? Time for a little bit more Tasty Live right now, right here, right now. Market measure.
Right here, right now.
Yes.
Yeah. Anyway, before we do market measures, because we have a really good market measure today, it's called Why Strategy Over Product, and I think you're going to like it.
Before we get to there, my friend just sent me. I will show it to you in 1 second, Sal. Maybe it'll come up on the screen. I'm not so sure. But that's right, Liz and Jenny. They're on Dr. Phil today. Can you see your screen right there, Sadnov? Right there, Liz and Jenny on Dr. Phil. Can you see the resemblance?
No. Who's Dr. Phil?
Who's Dr. Phil? We're not looking at Dr. Phil. We're looking at Liz and Jenny, the pictures in the circle.
Oh, Nikki Glaser and Whitney Cummings?
They look like Liz and Jenny.
They actually do look a little bit like
They got a little Liz and Jenny in them.
Yeah, and I do like...
That's pretty good.
I do like Nikki Glaser and
Whitney Cummings.
Whitney Cummings. They're both really funny.
My friend Real Deal Donuts sent that to me, Sadnov.
They're both really funny.
They are. I see the resemblance.
Yeah, there's a little bit of resemblance in there. That's impressive. Good job at Real Deal Donuts.
Real Deal Donuts.
Who the hell names their company Real Deal Donuts?
It's Twitter. He might have nothing to do with him, but who knows? But he's the Real Deal Donuts.
He's the real deal.
That's right. That's right. Right, he is.
He's the real deal.
He's the real deal.
All right. Anyway, this Saturday, we're joking because we're doing a bunch.
I still haven't gotten paid, by the way. Is that what you're going to talk about?
Oh, you're not getting paid till lunchtime. I'm busy right now. I can't. It's more important I do the show than worry about paying you.
You were just on the phone looking at TikToks a minute ago.
Was not on the phone.
Yes, you were.
What is wrong?
You were looking at TikToks.
What is wrong?
Uh-huh.
Anyway, this weekend we'll be in Phoenix, Arizona, at a place called the Van Buren. It's supposed to be a beautiful theater in Phoenix. And we're going to be there this Saturday morning. Doors open at 8. Show starts at 9. We have a crazy group going out there. Liz, Jenny, Julia, along with myself, Tony, JJ's hitching a ride now. Frankie's coming out there.
Who the special guest was?
Let's see who else is going to be there. Dr. Jim's going to be there. So we're doing. Actually, I thought we were doing 6 different strategies, but now I think we're doing 7 different strategies. But we had to squeeze JJ into the show. So for JJ, we're going to do.
Don't do this. Don't do this. Don't do this. Don't do this. You're going to get back to him.
Don't do it.
Don't do this.
All right, I'll tell you tomorrow what he's going to do. Keep it. We had to like simplify a little for him. Anyway, so on Saturday morning, we're going to have a lot of fun because it's our last show of the year. So whatever we've got left in the tank, you'll see it on Saturday morning. We're going to have a lot of fun with the whole group, including the bat out there. We're flying out Friday night. We'll be out there for the show Saturday morning and can't wait to see everybody. It's been a long time since we've been in Phoenix. I'm trying to think. don't know. I don't know unless
I have to check my restraining order because my ex is out there. I don't know how close, she is to the venue. I don't know if I'm going to be. I might have to stand outside. Like, I think it's like going to be right on the cusp. I know I can get to the airport. Like, I might have to.
I mean, nothing personal, but
outside. I might have to bring the people outside.
I'm not taking a bullet for you, but I don't think she's violent.
She's not violent.
I'm not taking a bullet for you, but I don't think she's violent. In fact, I might like her more than you anyway.
She could just send the authorities. She wouldn't do it herself.
I like her. I just I have to be careful how I approach this. But
I understand. The slippery slope.
Yeah. I just want to go on record. I never had an issue with it. Anyway, I don't think she'll be coming to the show, so we'll be good.
No, but my daughter might show up. My daughter's there, so my daughter might show up. Gina might be there.
I really hope Gina comes to the show.
I do too.
Because first, I haven't seen her in a while, and second,
forever.
I think she should come to the show to see what you do.
Yeah.
Hopefully, she doesn't cry in embarrassment and go home in shame. But let's see. Anyway, if you haven't signed up yet, tastylive.com/events. tastylive.com/events to sign up. And while you're on tastylive/events, if you cannot make this show, we are going to be doing 6 option strategies. We cut JJ out of this one. Of every trader needs to know. So you can stream it, own it. That's the following week on December 14th. It's the same kind of a show, same 6 people. And we're going into a little more detail on the produced version. We're going to be minting it on Saturday morning. December 14th. The show will start at 10 a.m. and it goes for about 2 hours and maybe a little bit less. I think it's, just under 2 hours. And from 10 to 12 Saturday morning. And if you're signed up for it, you'll own it. You can go back and watch it.
Forever and ever.
Forever and ever.
You'll never have it.
It's going to sit on our own.
Written.
It's going to sit on our own private blockchain, and it's going to be accessible to you forever. We're building a portfolio of digital collectibles, as you can see, kind of understanding what we've been doing for the last year, building up a bunch of digital collectibles. We're going to have 3 more starting out 2025, one in January, one in February, one in March. And then you're going to be able to have kind of a portfolio of digital collectibles so that at some point in the near future, you'll be able to move that, if you want to, into your Tasty wallet or into any other wallet anywhere. And I think it's just going to be super cool. And listen, it's something different, and nobody else has this.
Very
so
good.
if you haven't signed up for it, please do. There are tens of thousands of people signed up, and we can mint as many as we have to Saturday morning. So it's awesome.
Beautiful.
All right.
Getting back to Phoenix, special guest working the door. I don't know if I can say his name, but I know he would appreciate it if you said it.
Sir Francis?
That's right. Sir Francis will be working the door. If you're in the chat room, you want to meet
He's a little
Francis?
slow.
Why, for God's
He's a little slow with the when he tries to I think scan everybody's stuff.
He has the iPad wrapped around him, and people give him his name, and he's got to kind of
So we got to give him. If you're having trouble getting in, just say, "Grandpa, speed it up," or hit him over the head. Hit him with your purse, Doogie, and push him out of the way. Whatever you got to do.
Yep.
Anyway, we'll see everybody on Saturday, and if not, don't forget to sign up for this event. All right, let's do it. It's 9:17. We're located in Chicago. It's cold in Chicago, but we've had a bunch of tasty traders over the last couple of days stop in and say hi. It's been great. If you're ever in Chicago, we're in the West Loop. And why strategy over product?
Why strategies over product?
Because we're product indifferent.
That's true.
And we're strategically diversified. That's what I'm going to give you.
And we're good kids.
We are the good kids.
We are the good kids.
Let's go to the next slide. So in our research, we consistently emphasize the significance of focusing on strategies rather than individual products. We aim to illustrate that in the liquid and efficient markets. The controllable elements across different products are implied volatility and notional value, as opposed to the unpredictable nature of price movements. One of the things that I talk about all the time in different lectures that I give and in different discussions and things that we teach just in general about entrepreneurship and business and trading is most important thing you can do, Mr. Batista, Control the things you can control. The things that you can't control, like what is the stock going to do today or tomorrow or next week? You have no control over that. What you do have control over is the strategy that you're going to use, the strikes you're going to select, the duration you're going to do, the current level of volatility. All those things are under your control. And that's control.
What you can control is really what you're saying here. It's the entry.
In life, worry about the things that you can control. Don't worry about the things you can't control. There's nothing you can do. Just worry about the things you can control. This segment intends to update and illustrate how this strategic mindset can be applied to liquid products. And the reason we care about liquid products is we care about you being able to get in and out, and we care about the derivatives pricing to be efficient across various asset classes, prompting the question, why prioritize strategy over product? Let's go to the next slide. So we did a study. 4 different underlying, SPY, Qs, TLT, and gold, 10 years of research. We looked at 16 Delta Strangles, sold the 30, 16 Delta Strangles, sold the 30 Delta short put, and 16 Delta Strangles, and we also shorted the 30 Delta put as a separate test. We looked at 45 days to expiration, managed at 21 days, because we know the short 30 Delta put performed really well over the last 10 years. Since 2014, we compared the average profit as a percent of the premium collected. We looked at the win rate, the worst loss as a percent of the premium collected, and the average P&L as a percent of buying power. All right, let's go to the next slide.
Next slide we go.
So, for our claim of why strategy over product and product indifference to be considered valid, we need to see the following in the results. Since the delta of the strangles is all the same, the win rates must also be similar, and the size of the average profit and the percent of the premium and the worst loss as a percent of the premium should be similar across all underlyings. Since products do vary by implied volatility and notional value, looking at profit and loss as a percent of the premium collected normalizes the implied volatility, and the notional differences takes those right out of the study. Okay, let's go to the next slide. So, regardless of the underlying with slight variance, we tended to see the win rates between 70 and 73% of the 16 Delta Strangle, and the average profit between 7 and 10% as a percent of the buying power. The average loss between 9 and 15 times, and the average P&L as a percent of buying power ranges to 0.3 to 0.5%. This is all just going to validate what we talked about. This is all going to validate the whole concept of this is why we choose strategy over product. Because the product, the Qs, the SPY, the bonds, and gold, it didn't really matter. The win rate was all the same. The average profit as a percent of premium was pretty close to the same. The worst loss, pretty close to the same. And the average P&L as a percent of buying power, all really close to the same. Now, could those vary from year to year? Could the worst loss as a percent of the premium, because that probably happened on August 5th, be something different in TLT and gold in 2025? Of course. But the point here is it's close enough.
And strategy over direction, too. It's just so much easier to do the strategy than it is to pick the direction.
Yes. Let's go to the next slide. So even by selling the short put, it follows the suit. We tended to see the win rates between 73 and 77%. This is a big put, the 30 Delta put. And the average profit between 16 and 21%, again, because we've been in a bull market. So when you look here, the win rates, 77, 77, 73, 73. And the average profit as a percent of the premium, obviously it's going to be much higher in this case because the market just kept going higher. And the worst loss is going to be very similar because that wouldn't affect that one big down move. But the average P&L as a percent of buying power is significantly higher to 1.5%, 2%, 1%, 1%. But that's just because all you do is sell puts in a bull sell puts in a bull market. The point here being that the SPYs, Qs, TLT, and gold were basically all the same. Let's go to the next slide. These findings strongly support the prioritization of strategies over individual products, and the concept of product indifference. Despite the significant differences among the assets studied, such as varied prices, implied volatilities, correlations, and market exposures, but selling premium with a fixed delta on all assets results in win rates, average profits, and average losses that differ by only a small percentage across all underlyings. This is really interesting, again, because this is what we stress. Control the stuff you can control, optimize your mechanics, do what we know is the most mechanical and most optimal thing to strategically to do, and don't worry about the underlying product. Those can be chosen by just levels of implied volatility. Well, let's go to the next slide. So some of the takeaways. The fundamental principle of emphasizing strategy over individual products in trading and indifference of product involves selecting underlying assets based on preferred notional size, implied volatility, correlation, and I would also say liquidity to this. This is essential because the long-term profitability of a trade is determined more by strategy than by the specific product, excluding short-term price variability. When the same strategy was applied to 4 different underlying classes, each with distinct implied volatilities, correlations, notional values, and profitability metrics were consistently similar across all. It's just, listen, this is what we do. That's it.
Just cleaner, it's just easier. Yep. Good job, Eddie Usadinov. Good job by the team. We're going to take a quick 90-second break because nobody does a good job like my friend Scott Sheridan from Tasty Trade World Headquarters. He'll be in this room in about 90 seconds. We'll be back. Tasty Live.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. I thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada
face,
yada
big
yada
bang, blah,
yada
blah,
yada
blah.
yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday, when the markets come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you
can't buy an uptick, that means the market is going down, and it's not, and there's no bounce.
How does Daddy do it?
Daddy does it good.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you'd like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend. That's right. We are not going to take a 90-second break, but we do have time right now to say this. Tasty Trade World Headquarters.
Wrong. Reason set.
I don't know. Your friend and mine. I don't know who that was.
That's not my thing,
Your friend and mine, Mr. Scott Sheridan Studios, and Tasty Trade. How are you, my friend?
Is there a gremlin in there?
Did what?
A gremlin?
Yeah, it must have been something. I don't know who that was.
Hey, Daff, we need a little levity. Any chance you could show the 2 pictures?
I thought you were going to say show something else for a minute.
Oh my gosh. Seriously?
Scott, how could you even ask her?
Sicko.
How could you even ask her?
What is wrong with you? I mean, come on, we noticed that she was a little tiny baby, an infant, newborn.
Scott, ignore them. Ignore them.
Oh my God, what is wrong with you?
Has it been going on like this all day?
Yes.
Oh.
You
didn't like it. You didn't like it because yesterday TP kind of,
So, I really enjoy having TP. I miss you, but here's the thing that I don't get about TP.
I got the email.
There's only one thing you don't get?
Okay. Well,
we call you a professional. It's only one thing you don't get about TP.
First of all, love that he's got a dog named Slimmy. I was very confused.
I forgot about that too.
Scott didn't know. He didn't know, so he was very confused.
And I'm like, Slimmy, did you feed Slimmy? I'm like, I didn't want to say anything. Like, okay, maybe it's Slimmy over, Slimmy's in down, and whatever.
Right.
Not the point of the story. He's got to stop doing the show from a lazy boy.
No, Tom actually likes it.
He gets lower and lower.
I know.
As the show
he was actually high yesterday.
He goes
usually
lower
you can see right
and
up his
lower.
nostrils.
Like you.
I want him to go even lower, so it's just all you see is just
like he's in an iron lung. Okay, have to be in an iron lung.
It's like it's a bubble boy. It's good. I like it. It's a bubble boy.
He likes it. Now, if Tom is remote for a moment, but he always comes in every day, so this really never happens. But he is remote for a moment, and his camera angle is not exactly right, and he's not shown. You know, he does this into the camera when we're on break. He goes, fixes his beanie, and gives you the duck lips.
Oh my God.
It's disturbing. I mean, it's saltpeter. If you want to watch it, it's great.
Okay. I need just the backstory. So you were home early, so I have to imagine that you had a good night's sleep. Did you not have a good meal last night? Was breakfast spoiled?
He's talking about you.
Bad sushi.
You're talking about me?
Yeah.
Yeah, you.
He's talking about you.
I'm asking as a friend.
I'm with him on this.
I'm asking as a friend, what the hell happened?
Concerned friend.
A concerned friend.
What are you talking about? I'm perfect.
He just can't lift his arm like this. He just can't.
I have an injury.
Okay. Oh, really?
Yeah.
Shower, slipped, fell.
No. I pulled something like.
Yo, he was doing a 180 on his skateboard.
I pulled something about 2 months ago in my arm, and it can't get better. So I don't know.
You pulled something.
Yeah, right here.
Oh, I figured out what it is. Actually, my gremlins told me what it is, why he's like this today. Do you want to know why?
Do tell.
Why?
Bad coffee inspection.
Oh.
You're a little bit nervous. You don't want
wait
to
a minute.
fail. You don't
Wait a
want to
minute.
fail again.
Well, hold on.
It's right now. It's right now.
You got to stop. Just leave the poor kid alone.
It's right now.
Leave the kid alone.
And I got to tell you, now if Jamie didn't sleep last night, I totally got it.
Yeah.
Totally.
But I'm telling you,
I'm telling you right now. So here's the thing. When you drive your car into the garage,
oh my God,
into what garage?
This garage.
Yeah.
You just drive right in without the pass?
No.
Really?
Yeah.
Because I can.
I got the
impression
bogus.
that he can.
JJ has that, and I was in his car. I'm like, what the hell is that? I want that. Mine, I go like this, and I have to sit here like
Yeah,
for 5
I have
minutes
to do
trying
that
to
too.
catch the
I'm
green
with
red.
you. Yeah.
I'm the Johnny.
Yeah.
Yeah,
I'm
but
Johnny,
but
too.
listen to this.
Yeah, go ahead.
I can drive in
without even having it in his
without
pocket.
even having.
It's still in your other car. That's how good you
It's
are.
in my other car.
Serious.
I'm not kidding. That's it.
Well, somehow they go off of license plates too, but that doesn't work for me either.
That's what
Oh,
they're
they
doing.
go off license plates.
Yes. There is
Like
a
in a toll
feature.
booth.
There is a feature that goes off a license.
So my
plate
license plate
is
gets-
known.
Yeah.
Yeah, because you're on every police record in the country, so of course it's out there. So they're tracking you.
So
Wait a
I
minute.
just
Sadnov has a
so I could just
transponder
drive right
and-
in.
You could drive in. Mine, literally, I've got to get the right angle,
Me
like
too.
right.
Me too. You got
So
the
I
bar.
am.
You got the barcode.
So why wouldn't you put it on your license? Why wouldn't you get your license plate?
Okay.
Oh, like you did?
Let
Like
me
you
ex-
knew?
Like you know. Let me.
I'm gonna stab you. I'm gonna freaking stab you.
Let me explain to you how this went down. Went on a road trip with JJ. We had to go somewhere downtown.
Because I just drive in and out. I don't even need
He
anything.
pulls out. He just holds the card up. He's not as cool as you.
You don't even need to hold the card up.
Okay, well, he might not know that. But anyway,
This is fascinating technology.
he holds the card
talking
up
about for months.
and we drive through. I go, wait, what was that? I want that. I said, well, how'd you just do that? He's like, oh, yeah, you got to get the new card because the old card didn't work. This.
No, it's nothing to do with the card.
So I asked Tori,
Yeah.
a little bit of an issue. Got the new card. She said you should be.
New card doesn't matter.
Didn't matter.
It doesn't
She
matter
asked me
at all.
how it is. I said it's great. I was afraid to tell her.
Yeah. No, the new card doesn't matter at all.
How do you get set up on the on the license plate?
I'm not exactly sure.
That's a good one though, especially when it's cold out.
I could have my handler look into it for you if you want.
Would you?
Which handler is that? Is that the one that can't throw a football? Or the one that can throw a football? Which handler is that?
Can't throw a football.
Can't. Got it.
So I need to know because that's a good one.
Great.
Really good.
And the hard part for me is since my whole point was since my shoulder is hurting, you can't reach
Oh,
out.
see, they did it for you because you're injured.
I can't do it.
So it's a handicap feature.
Yeah.
Okay. So I had a transponder for going through toll booths. Not that I use a lot. You probably don't use toll booths either. I mean, well, when you travel for hockey, but
Yeah, I have
work.
a thing.
Yeah, the
for those.
transponder.
Yeah.
But
I
there was
have a
always
transponder.
But there was always an issue. Like it never. I don't know.
It never works right on the tollway.
Never worked.
On the skyway.
Right. Never works.
Never works.
So I'm like, whatever. I'll just go online and pay it.
Yeah.
Like you can go in.
No, but they have things that come down on the.
They charge you extra.
I understand, but I just couldn't.
I know,
figure out-
big shot. I know.
So anyway, they now have a little piece of tape. It's a sticker you put in your window.
Doesn't work.
Doesn't work.
Yeah, it doesn't work either.
You got to get the one that goes on your license plate. That one works.
Yeah.
What's that one?
Doesn't work.
There's another one you can put on your license plate. I had the same thing.
How does somebody not steal it?
I got the sticker. Doesn't work at all.
Doesn't work.
I don't live in the shitty, so they don't steal stuff from my car. So you just put it on the license plate. You screw it in.
Okay, well, somebody's gonna steal that and you're just paying for somebody else's tolls. So anyway, so then I'm like, cool, I got this. So we're going up to Madison, went through a lot of tolls.
Yeah, it doesn't
None of them work. So I go in and pay all my tolls. And I keep getting fines. I don't even know where these 35 mile an hour for the speeding cameras. I don't even know where they are.
That's in the city. They
Like this,
nail
I keep
you.
getting them. I'm like, I think I paid. I just pay them.
You know what? Don't pay them. We're gonna don't worry about it. Don't pay them.
And if you're in London, it's 20 miles an hour.
20 miles an hour over?
No, London.
Only go 20 miles an hour in the city?
Only go 20 miles an hour.
Wow.
In London. London's 20 miles an hour. Chicago
they're 30. You're good.
30 or 35.
You're good for 5 over. So if it's 30 and you're 35, you're fine. It's 36 or
every freaking time Sosnoff makes me go to his house.
You get a ticket.
I get a ticket. It's
on Irving Park.
It's on Irving Park.
It's the worst. That one's got me like 10 times.
I watch.
Wait a minute, in the cemetery?
What's that?
In the cemetery?
Yeah, kind of like
coming off the drive?
No,
Or coming up
the other
way,
direction.
way.
Coming from the expressway.
Oh yeah, that's a bad one too. Right, there's another one over by
I even have the thing that says it's you
I have
red
10
light
tickets
camera
for
coming, speed
Great
trap coming.
feature.
I watch every time I get nailed.
Great feature on my car is it.
You know they
Yeah,
sell
mine has the same
they sell
thing,
a
but doesn't
spray you could put on your license plate.
Oh yeah, that'll work.
They do.
I know. I've thought about that, but if I'm going to go down, I want to go down for something bigger than that. Okay, it's not going to be.
You could say, I don't know how that got there.
It's
I
gonna,
didn't do it.
I didn't do it. I have no
I
idea.
didn't do it.
Guy sells his company for $1 billion and he sprays his license plates to save $1.25.
So
looks good in the press.
Every time I have to go see Sosnoff.
But
I
I've
get a
been getting
$50
hit
ticket.
with these. All of a sudden, the 6 keeps throwing me these. I'm like, I paid that, and I go online. I'm like, oh, I guess they got me again. I don't even know where some of these are.
I know.
And I drive by. I'm like, where are they? I think they just are making it up now.
But you guys aren't good drivers. I mean, I'm just saying it.
I'm gonna try. Did you pay me yet? My money?
Speaking of which, because I owe you 20.
Yeah.
But we might be even.
Yeah.
Because
you might have a higher ranking than
well, it's
me.
not we might. We do right now. I just don't know if the season's over. Okay. Now, I just would like to go on record that for a computer-generated team, tied for second.
So you're saying pretty good?
Yeah. So all
So you're saying bots over brains?
Yes. Bots over brains.
Get out of here.
Now,
get rid of him. He's not coming to Phoenix with us, right?
I'm surprised he's not. Everybody else is.
Was that this weekend?
Yeah.
Beautiful weather.
I'm out on the road.
You golfing?
Golfing? You don't understand these shows, do you?
Scott doesn't. Don't spoil.
I mean,
don't
you
spoil.
got a fantasy
Don't
world.
spoil his little fantasy
You fly
world.
in, you're tired. Maybe Sosnoff throws you a sandwich or something like that.
How was the one-wing person?
Awesome.
Couldn't be awesome.
I'm telling you,
Nobody's
it was
ever
awesome.
said awesome with Parson.
Ever.
Okay.
In the
Well,
history.
These are all goys.
Okay, I don't care. You never say awesome. It could be edible.
It was awesome. As a matter of fact, I sent some to
Barely.
Paper World.
Yeah.
And they loved it too.
Okay. Well,
And I sent some down to Indiana, and they loved it too.
You say you sent some down. What'd you send? Just the chicken?
No, the whole. I had 2.
What is in?
oh,
What's in there?
Did you get Tony a spot, by the way? Make sure you get Tony a spot, because I can't listen to him next year.
Oh my God! You didn't get me something that you were supposed to get me, and now I can't get it.
You got to get him a spot.
Oh no!
You got to get him a spot, because I cannot listen to this. We're carving the beautiful Peking turkeys, and Tony's going, what happened?
Oh no, he doesn't care. He already says he's getting Parsons chicken.
No,
every
I
day.
want what I want my spot. What did he? What?
You got to get Tony a spot. Come on, we'll share. We'll just get a bigger turkey. We'll share. We'll carve. If there's no extra,
All right, I'll get him a spot.
Okay, you got a spot.
Sunwa.
Yeah. I love Sunwa.
Yeah.
Drop off your turkey with them,
and they
Peking duck it and give it back to you.
Are you kidding me?
Yeah, I never knew it. They were sold out this year. But next year we're getting in early.
Tom tried to get in. She's like, not yet.
Wow.
The Peking duck, the whole thing, couple dollars a pound. Boom, you're done.
That's awesome.
They hand you back the turkey. Looks like a Peking duck, giant.
It's a Peking turkey.
It's a Peking turkey.
Some name for it though.
Sounds great.
Sounds. The
Does
pictures.
sound great.
Sounds
the
great.
pictures look unbelievable.
Unbelievable.
How did you find this out?
I went there.
No, but you didn't go there for that.
No, I didn't go for that. I was on
You went there to get Chinese food.
I went there to get beef chow fung.
Oh, do they make crispy noodles?
You've never had their beef chow fung? It's the best I've ever had.
Well, first of all, Hong Min, may it rest in
No,
peace.
I know you think Hong Min. This place is the best.
Do they make crispy noodles? If the noodles aren't, if you can't get the noodles pan-fried crispy, it's not. Don't tell me they're good.
They're homemade noodles and they're
soft. Or can you get them crispy?
I never order them crispy because I like them soft. I know you.
Everything condensed in his teeth. You know what I mean?
I know you like crispy noodles. I don't really care about crispy.
Oh my God, the crispy. So their beef chow foon, amazing. I gotta try it.
It is they were on diners, drive-ins, and dives just for that.
Not the chicken, just the beef.
Just for the beef chow fun.
Chow fun. Chicken chow fun. Beef chow fun.
They were on just for that. That's because that's their
I'm gonna
specialty.
get it this weekend.
It's great.
Does it travel?
Travels.
You sure your wife's not cooking this weekend?
I could call her. Hey, dare me?
Oh, please no.
I did it to him.
Please no. I don't want it. I know better.
You want me to get you?
I'm sorry.
Want me to get you a spot?
I'm sorry.
So you want to save a spot?
Yeah.
Yeah.
Beth,
you like to smoke your own stuff, you know?
Yes,
No.
Beth.
Beth, are we not showing the before and after?
We can if you want to.
Come on. Inquiring minds want to know.
Before and after what?
A couple of years, you still look good.
Okay.
Before and after what?
Oh my God.
What is this?
That's from his wedding.
Look at that. Hasn't changed.
Jesus, God, am I old? Sad enough, you have ruined me.
Oh my God.
You have freaking ruined me.
Hey, that black tie thing this weekend, that's not a black tie.
That's what I said. What kind of
That's a black
when
tie.
you say black tie,
I'm wearing a tuxedo.
There's no way that's a tuxedo.
You want to bet $20? I'll bring the freaking thing in.
Hey,
in fact, it's a Gucci tuxedo.
Hey, where was
It's
it?
a Tom Ford tie. You want
Where
to bet?
was it? Where was it?
Lowe's out by O'Hare. Yeah, Lowe's.
You were going down the city.
What are you people kind of thing where they do everything
I
all
thought,
in the same place?
I thought it was you were going down the city.
I didn't say. I didn't know where it was.
You
I
said the city.
You said the city.
You said the city.
Lowe's.
I figured it was in the city. I didn't know where. Well, actually, it is the city.
Look at this.
O'Hare
Your
is in the city,
smile is
by
the
way.
same. Your eyes. Look at this. You have
Lowe's. Where's
a
there?
couple years, but you
Is
look
it
good.
Lowe's movie theater?
Yeah, Lowe's movie theater.
Or Lowe's
It's a Lowe's
department store where you buy the
Lowe's maybe or something like that.
the hardware store? Lowe's?
Lowe's, the hardware store. Yes, it was in the garden section outside. That's correct. They could do
The
the
black tie event in the garden section?
That's your wedding.
That's my wedding.
I see. I don't even remember being at your wedding, but I remember that picture.
I remember.
You had
that.
the,
What
you had the
years?
who's.
No,
what, how many?
You're married 32 years. Oh my God, I didn't mean to put you on the spot like this. You want me to call her? I'll call her right now. You want me to call her right now?
We're not 30 yet. We
You're
got
not 30
married in January of '97. We're coming up on 28.
All right.
Yeah, that looks like you.
Actually, that's
Looks identical.
That's Bride Daddy's wife in the background. I know those tatas from anywhere.
Nope.
I'll bet you anything you want.
I'll bet.
you anything
You're
you
wrong.
want. I know those tatas.
You're wrong.
I know. I'll pay for them.
Who's behind you and the other one?
Ooh, that one I don't. That one I don't know.
Was this another relative that you just met?
Oh, who's behind me? That's some lady.
No, who got married? Some relative you never met again?
My wife's friend from like high school, and they've been friends, like good friends.
Not another offspring.
One of their.
So you didn't embarrass her? Did you embarrass her at all?
I did not embarrass her at all, and they didn't serve dinner until 9:45.
Oof.
Oh, that's a good Jewish wedding.
Oof.
Until 9:45.
Wait a minute. So it's
late.
a Jewish
So
wedding.
by 10:30 we had to
Wait,
leave.
Saturday or Sunday?
Otherwise, we would have left at 9:30.
Saturday or Sunday?
It was so freaking late. It was so freaking late.
Was it a Saturday or Sunday wedding?
Saturday.
Okay, because you get married early because sun goes down. Because you got to wait like an hour and a half after sun goes down.
It was brutal. Sun goes down at 4:45. We could have been out by 8 o'clock. That's it.
You could have served dinner at 5:30, 5:45.
Did they have cocktails before the wedding?
Yes. Well,
that's an East Coast.
I was a
thing.
little surprised. Now, they're you people now, but he wasn't at one point.
Are they East Coast?
No, these are people from my wife. My wife from here.
It's an East Coast thing.
What?
The cocktails.
Who gets married by O'Hare?
I know. 9:45, they served the rubber chicken. I couldn't believe we waited for that. And the lady asked me, we like, you do the check mark, so many, months in advance. The lady asked me, and what will you be having? I go, are you kidding? I go, I don't remember. I go, the chicken. Is there chicken there? I go, yeah. She goes, yeah. I had the chicken.
Should have had the beef.
See, if they get Tom's approach, you go with pasta.
What's that?
Always go with pasta.
They didn't have pasta. It was chicken or salmon. I know I wouldn't order salmon.
Chicken or salmon.
Your wife doesn't order one of each, then take whichever one she wants?
Totally.
No.
Oh, that's how we do it.
No.
She or the 6 orders, whatever, but one of each, then she says, you're
Right,
getting
you
that.
get-
She
you get
tastes
the
them, and then
leftover.
she's like, you're going to have that one. I'm like, okay.
At 9:45, she would have eaten my shoe. Okay? Wouldn't
That's
matter.
late. That's bedtime.
Late. That's late.
Oh, man.
Yeah.
Oof.
Yeah.
Sounds like fun.
Oof.
Don't you wish you were there? Don't you wish you were there? Hey, before we get to business at hand here, I got to show you a picture of this. I know Sadnov's going to love this. Sadnov?
That's what I'm saying. Sunwat turkey.
Sunwat turkey. Sunwat barbecue turkey.
Let's see
Beautiful,
it.
beautiful, beautiful.
I'll put it up on this board, Beth.
I did.
Oh,
Wait, barbecued or Peking? There's a difference.
It says barbecue BYO turkey event.
Yeah, bring your own turkey. Here, put it up for Tom. Put it up for Scott.
Everyone could see it, Tom.
No, but Scott couldn't see it.
Okay, 1 second.
Oh my God, that's hysterical. Did you see Beth's text?
Did I see Beth's text? No, I have not. I have not seen Beth's
Uh-oh.
text. But I can look right now. It's Laura. Oh.
Oh, you know those two?
I know those tatas too. They look very similar to Bride Daddy's tatas.
Oh
Sorry.
my God.
Sorry.
Okay, just so in case you're wondering if you weren't going to hell before this one sealed the deal. Okay.
I've been staring at those since the Flamingo Club. She used to come to the pool. Scott would have the Flamingo Club before they were married. You don't remember the Flamingo Club?
Here, there you go, Scott.
Flamingo Club in
There you go.
Vegas. No.
Where? Oh, that looks good.
At
That looks good.
that looks good, right?
Where was the Flamingo Club?
The Flamingo Club was at where did Scott live?
These idiots.
James'
Sandberg's Terrace.
James' house.
Sandberg
Terrace at
Village?
the pool. Remember we had a cabana? There was the pink flamingo.
You
Club?
lived there?
No, I lived at the other one on down. He was at James' house. I lived
Oh, but you lived at Sandberg?
Yeah. For a year or two or something like that.
All the losers.
Oh my God. You just called one of your oldest friends and her uncle a loser. And you called me a loser. And I'm in here every day with you guys.
I mean, literally.
Flamingo Club at the pool at the...
And the best thing, we had pink flamingos out there.
If you were fast tracked to being a loser, I can tell you.
You guys are just jealous because you didn't do this stuff. That's
so
all.
was
You
that the
guys-
Cla- was
you
that the
guys were
Clark
too
Street?
busy, like trying to get
Josh
married.
had a place there.
Was that
What's
the
that?
Clark Street bus straight to the exchange?
Oh yeah, LaSalle
I never
Street,
took
right
the
there.
bus. He took the bus. I never took the bus. I'd
LaSalle,
rather walk
LaSalle Street.
the bus. I used to take the bus to high school. I would rather walk than take the bus to work. Okay? He took the bus.
Oh my God. All right, can we do some
I was
business?
at that pool one time. I thought somebody was going to jump off one of those buildings and just kill you.
I think somebody did one.
I know somebody did once.
Yeah.
I was like,
The Flamingo Club was awesome. Shout out to my boy Sony.
you and Slow Joe, and there was like a couple of.
It was more Sony and Slowy. I tagged around.
Was that where they became friends?
I think they. Yeah, I mean that's where they forged their friendship.
I'm more interested in the Sunwa turkeys here.
Me too. Oh my God.
Those are good looking turkeys. You bring those home, you're a hero.
Good looking turkey.
You bring those home to who? To the guys in the pit? Yeah, you're a hero. Bring it to your wives? No, I don't think you're a hero. You're a hero. You're unbelievable. You're a
Top
zero.
15 symbols going through the system.
To me, that's hero worshipping stuff. You walk in one of those things, you're a hero.
Frankie Walsh lives in the Elliott house. Is he also a loser?
Yes. Yes. Yes.
Oh my God. Top 15 symbols going through the system. First 4 minutes today. No broad-based indices or futures. Time for you. Number 15, Mara at a 32. For everybody else, Tesla at a 34. SMCI at a 49. NVIDIA at a 9. PLTR at a 33. MSTR at a 56. Apple at a 7. Coin at a 49. MU at a 59. Meta at a 4. ZS at a 1. AMD at a 4, Intel at a 40, Amazon at an 11, Microsoft at a 5, and number 15 for Tom Mara at a 32, rounding out the next 10. GLD at a 59, Costco at a 52,
CLSK at a 64, and ACHR at a 91.
Good job out of you. Good job out of the team. I'm not so sure about you today.
I tried. I did the best I could.
Scott, parting words. Would you like to say something?
I'm really happy we made it through this one because it did not start off well.
You're right.
Not
you're right.
the intro.
And I'm surprised. And I'm sorry. I want to go on record. Laura, you have an equally nice rack as Bride Daddy's wife. I apologize. We're gonna take a quick 90-second break. Come back. You got more Tasty Live after this. You know what comes up next?
Liz and Jenny.
That's right. We'll be back in 90 seconds. Peace. I stand corrected. I'm sorry, Laura.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
I'm Hold on.
She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our
lives. Same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together.
Yep.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
from the smart mouths at Tasty Live.
He's is looking for long-term strategies for this bear market.
Well, first of all, I don't think we're in a bear market. But if he thinks that there's going to be continuation of 2022 and he wants some bear market positions, if you're doing what he's doing, which is putting away $1,000 a month and maintaining some kind of a core portfolio on that, I would have some positions in there that are not correlated to the S&Ps. That's an important thing. You want some non-correlated or negatively correlated positions to the S&Ps, which might be some, commodity ETFs or things like that. And the other choice would be, instead of being long a stock, maybe you'd be short the stock, and against the short stock, sell put. It's the reverse or the of a covered call. So a covered call is long stock, short calls. A covered put is essentially short stock, short puts.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Everybody, and welcome to the Liz Jenny Show. I'm Jenny. That hot blonde over there is Liz.
You're not kidding me, sister. It is in fuego in here.
It kind of reminds me of the old days. Do you remember at the old studio, there would be times where it'd be really hot?
Yes.
Yeah.
Yes. That's where we're at right now. I need to know the temp. John, our super producer, I'm going to need to know the temperature before I come in here on a daily basis because it really affects my wardrobe.
You just better not get too close to me because I sweat the entire car ride. I bundled up. It was so cold. Bundled up. I've got 2 layers on, coat, mittens, the whole works. And maybe an hour and 20 minutes into my hour and 45-minute ride this morning, I really started sweating.
Okay, so my only question to you is, and I believe this to be factually accurate, you're literally wearing mittens, right?
Mittens.
Yes. So like, these are in, this is out.
I prefer mittens. I always think your hands stay warmer in mittens.
I think so too, but not while I'm driving. You're just like a little kid.
No, I get the mittens that flap.
Oh, even better. So you can look like a hobo?
Yeah. Oh, but you look good. You look good.
Oh my gosh. Well, hey, we're hitting the road here soon.
Oh, I don't know if we can pull it up, John. We are leaving on Friday for Phoenix.
We are.
Come one, come all. Bring your friends. I think this venue is big enough. I don't think it sells out.
I don't think it does sell out either. And I will tell you, I'm very excited. There's no live show for us two on Friday. Just a little FYI, our
flights
are early.
Yeah, our flight's at noon. We board at 11:30.
What time is it in Phoenix?
It's the same as here.
It is?
I think. Huh. I don't know. It could be. I'm not sure. But here's what I do know. We will be in Phoenix Saturday, December 7th, 9 a.m. Come one, come all. Bring your friends. It's a free event. Lots of fun. Someone will have a chance to win money.
Someone will have a chance. Why can't it be us?
It can't be us. I know the answer to the game.
Somebody's going to ask you. I don't know the answer. I don't know. I'm going to say ask Jenny Andrews.
All right, SPOO's down. There's a little rally because when I sat down, everything was red. SPOOs were red, NASDAQ was red, Dow was red, Russell was red. NASDAQ turned green for a blip.
Yeah, I can see that.
Should we jump in the platform so everyone can see what's going on?
Yeah, let's do it. I would like to see what's going on.
The first thing I pulled up here was let me turn my. That's from Frank the Great himself. An hour earlier in Phoenix.
Thank you.
Thanks, Frank.
You ask. You know what I love about this? You ask and you shall receive, Jenny Andrews. Via text message.
Right away.
You didn't tell me. I think I was the one that asked.
Thank you, Frank. Can't wait to see you in Phoenix. Okay, EWY, South Korea. You could see this big move today.
I just got an alert on my phone saying something about them declaring martial law. I have no idea why, but it was. What's the low?
The low is 52.67. It's bounced up. It's 55.58, but the low is 52.67. You see what happens when something like this goes on? 129 rank.
They took the fence off. Remember, they used to cap you out at 100. Now 129 rank.
Let's take a look at if there's anything to do in EWY. 21 million shares.
Look at how wide the market.
Let me see how many
Close
stars.
It. Way too wide of markets. 215 at 480, 230 at 480, 190 at 270.
It only gets 2 stars. But I'm just gonna look just for the heck of it.
I mean, you see the markets, right?
I just wanted to see how far I could go and how much I could get. 140 at 165. Almost 3,000 open interest here. If I sold this for 150, I'm just putting this out there. If I sold this for 155, it's only using $500 in buying power.
Yes, it is.
The buying power looks great.
It does. It looks fantastic.
3,000 open interest.
Yeah, remember the Russian ETF went to 0. Not saying, I'm just saying. We still have it on our sheets.
We still have it.
Yes.
We still have it. You couldn't get enough of that. Couldn't sell enough puts in RSX. Now it's gone. Gone. Maybe it'll come back one day.
Do you think that was 2 years ago?
Oh, huh. I'm glad I came down here because look at Save Q, up 17 cents today.
Wow.
How does that?
I need you to, after the show, I need you to march through that glass door, past the Chinese wall, and go talk to somebody.
And talk to someone. Ask them about selling it.
I'm not going to lie to you. I would go straight to Sasha. I mean, she is fantastic. And I don't even know if that's what she does, but she'll make it happen for you.
No, if you have one of these positions, you just have to call to sell it.
Oh, I know you do. I just don't think you'd call Sasha. I'm pretty sure she has accounts, but still, she can solve all your problems.
Because I know that's what happened with DIY. You just have to make a phone call and say, oh, sell my DD Global.
Do you still have your DD Global?
Yeah. Well, I don't. Logan does.
Logan does. Speaking of, I was so proud of JD. I was telling Jenny, he's been scalping in and out of Tesla, and Tesla is down today. Okay. Yes. So he sold out all of his Tesla yesterday, and then I got a text at 1:15. Do I think Tesla's gonna stay up, or do you think it's gonna go back down? So this morning when I woke up, I was like, Tesla's down. You can rebuy it.
So yeah, good for him.
Yeah,
I'm glad that he's getting in and out.
Well, I like his ability to scalp.
Do you know? And we should know this.
Odd.
Is it 0 commissions for stock?
0 commissions for stock.
Okay, that's what I thought. So I'm getting ready for Phoenix. Went and got my hair colored yesterday, just a touch up.
Looks great.
Just a touch up.
Don't worry, I'll be a blonde in Phoenix. I'm waiting until Thursday.
Now my hairdresser, she's not watching. She doesn't watch. She gets a little crazy. She's the one who told me, I couldn't put up any Halloween decorations.
I thought it was Pam.
No.
Is Pam coloring your hair now?
No. It's the hairdresser.
Okay.
Pam said I couldn't put up Christmas decorations too early.
Okay.
So anyway, Kathy, who I went to get my hair colored, was like, I really want to, she'll tell me, she's the one who, remember when she's like, do you think I should get long gold? I'm thinking of getting long gold. So she's always
And you said no, and I said yes.
Yeah, so she's always asking about things.
Yes.
She's always asking about things. And then she has to call her
broker,
whoever she uses, Fidelity or whatever, call them, talk to them, say, I'm thinking of buying this.
She does?
Yeah. So I said, Kathy, look, every time I'm here getting my hair colored, you're asking me about a commodity or a stock or something. Yesterday, she wanted to get long something else. So I said, I'm going to show you. You just said you want to get long this. I'm going to show you. I opened my phone, platform opened. I plugged in 100 shares of that stock, hit buy, filled in 30 seconds. I said, Kathy, this is how easy it is.
What stock was it?
She wanted to buy DJT. So I bought it at her house. I sold it when I got home. I made $13.
Good job.
And I was telling her, it's 0 commissions. And she could do it herself in 30 seconds. That's what she wanted to buy.
Is she switching?
She needs, this is where you and I get into a pickle, because then she wants
you to
hand holding.
Yeah. But it's just stock trading.
I know.
Which I think is interesting. If I may ask, how old is she?
She's probably 70.
I think they require a little bit more hand holding. Because my son does not, but it's not his money either.
Well, it is his money. You gave him $5,000.
I did.
It's his money.
It is, but in his mind, he doesn't. You know what I mean? Kids do not require hand holding. They press that button so fast.
Yeah. So we've gotten into this before, where we know plenty of people who get us going, and then they want us to keep going over there and helping them.
Yeah.
That's the issue.
You could say, listen,
I'll help you set it up.
When you're coloring my hair, we could talk stocks.
And we could. And at this rate, I'm going every 3 weeks.
Oh, gosh.
Once every 3 weeks.
At this rate in my life, I think I need to switch to your lady because she's so cost effective. Tell her and I'll talk stocks with her too, if she can be fast with me.
You really want to come drive out to my house?
I put like 4 colors on.
Yeah, I just do one.
Yeah,
I'm going with solid one color.
I'm thinking about it. I'm gonna go red. What if I just went red?
Oh, it's not easy.
I know.
I mean, right now my mom's hair is 3/4 orange and 1/4 magenta.
Oh.
By accident. And not by Kathy.
Good times. Hey, look at this. NASDAQ is up. NASDAQ's up.
Yeah.
12. Wow.
Cancel crash. I'm actually rooting for a down move because I still have my leftover put from yesterday's
Your
calendar.
put is the 25, right?
It's not coming.
It might though. Let's take a look at it. So SPX, and while we're in here, it is 10:09. We've gotten lots of emails about the Jajun trade. I mean, lots. To the point where I'm sure the chat is like, stop talking about the Jajun trade.
We don't need to talk about it. We can just put it on silently.
I know. No, but we just got 4 more emails that are from the support, that are tickets that are created, that are like, what is this Jajun trade?
The YouTube chat is going to say, stop talking about it.
Yeah.
Because every day, basically, if someone's been watching our show, they know what it is.
That's just it. Is every day we can be like, hey, check out any show you want, any archived show. We've done it
every day. We do it between 10:10 and 10:15. It's 10:10.
Let's pop it
in. It's 10:10. Let's do it. Right?
Yeah, go for it.
So here we go. 6:30, 60:35, 60:40. It's 3:05.
Huh?
We don't question. We just do it.
In Jajun, we trust.
Oh, but I don't think I got filled. It's still working.
You don't want to pay more than 305. It's working through the phone.
No, I know. That's it. If it pops down, we'll get hit. We're, a quarter of a point away from getting filled.
Yeah, we're a couple cents away. No big deal.
So we'll just let that work and see if it gets filled. Buy it in the money call, selling out of the money call, pay about usually, somewhere around 280, 290.
Wrap it around the at the monies, call it a day. Bada bing, bada boom, Jajun.
You yell it when you get filled. I mean, when you close it.
When you close it, not when you enter it. Although that would be more fun.
Then it would be guaranteed cheering every day.
Guaranteed cheering every day if you yell it when you put it on.
Yeah. So as far as all those emails go, the response can be
check out our show.
Check out our show.
Check out our live show.
We put on this trade every day, and then we push it out on the follow page. Yeah. When this fills, you're going to push it out on the follow page.
We are. Also shameless self-promotion because she's a relative.
Oh.
Those of you who saw The Voice yesterday, Shy, in my mind, is going to be the winner. If not, they're going to be super famous either way. Whether they win or lose, famous is coming their way. This was the quote that Bublé said yesterday. There are 4 voices that are this powerful. What was it? It was
Barbra Streisand.
No, they didn't even say Streisand. Barbara, Adele, Celine, and Shy. That's it. And I was like, holy shirt balls to be in that realm. So,
and that's your niece, your cousin's kid.
That's
your cousin's daughter.
My husband's cousin's kid.
Yeah.
In New York. NYC. New York, baby.
Jajun. Okay, now we just opened the trade. We opened the trade. I paid $305 for it. I'm going to put it in order to sell it for $355. We just tried to take $50 out of it.
Yes.
Paid $305. We're going to put in an order to sell it for $355 and review and send. Send. Do I have this in right? $355, and just take $50 out of it.
Correct.
And that's all we're hoping for. And honestly,
did we ever get to the bottom of the? And I actually, you know what? I'm going to get to the bottom of it today because I've got a team that I can see through this window, and I'm going to ask: does this count toward pattern day trading?
Yes.
It does.
It does.
So, okay.
So if you've got a small account.
So warning, Will Robinson. Yes.
And here, look, I'm being honest with people. People ask how this trade's doing.
Not well.
So, but we're not trying to say, oh, this is amazing. It was, and maybe we should stop because we were doing well for a while. And in the study, it was the months of November and February. Now we're in December.
I still think this trade is one of those where a couple.
So, yeah, I mean, in the last 30 days, we're down $405 fooling around with this trade.
Go the whole year.
Year to date?
Yeah.
In SPX? We're up 910.
I know that most of these, we lose on all of our Delta Busters. So most of these are Jajuns.
Most of that is Jajuns. Yeah,
And we've taken losses on Delta Busters.
Right.
So I'm just...
Yeah.
Put it into perspective. The last 30 days have not been well.
No, the last 30 days, I think if you figure if you're making $50, $50, $50, and we had 2 losers.
Yeah, that'll do it.
But year to date, we're up in SPX. So we're not trying to pretend this is the amazing trade.
No, but I love it. You know what I love about it? And I think it's pretty interesting for me personally. I don't know if this, everybody's got their own rhyme or reason for things. It, for me, is a level of engagement because I know exactly where the spoos are, where they need to be at the time of our show. Do you know what I mean?
Yes.
And so even yesterday when we were talking about this, it's a level of engagement now that I know your strike in SPX just because I'm honed in so much on it now.
Right. So, and that's all I looked at this morning. Like, oh, I need it below 60.25. Oh, it's 60.39.
Yeah, that's what I'm saying. Just because I'm honed in on this. And I do kind of like trading everything SPX. It doesn't have to be this trade. I do like the liquidity behind it. Now, I think there are different fees, but
I wish
it is
the
taxed differently.
SPX and the SPOOs were the same. You know, I wish this were 60. I wish they were the same. See how SPOOs are 60.53 and this is 60.39?
They are not.
I wish they were the same.
They are not.
It would make life easier.
Yeah, it would. But
okay, so we're working closing that. What I did notice, Liz, and I know I like to surprise you with things.
Okay, talk to me.
Today, overview activity. Today, all symbols. 2 GTCs hit for wins. Love the enthusiasm. Love the enthusiasm. And guess unfortunately, we're not on teams, so it's not going to do anything today. I don't think so.
No, it won't.
We're not on teams.
We're not on teams.
It only works when we were remote.
Still. We got to get used to doing it.
I had a board meeting last night, and it was so long, and it was on Zoom, and I was so mad I was on Zoom and
Did
not
you try
on
going
Teams.
like this?
So I was like, doing all this stuff, waiting for, and then afterward.
So wait, this is balloons. Well, how did you get the confetti?
This was the balloon.
This is balloons. How did you get confetti?
I don't remember. No.
This was the rain.
I think it was this.
This was the rain.
This balloons, confetti.
Rain.
It's like we're learning sign language. So I don't know. I must have looked insane in my Zoom board meeting because afterward, 2 of the guys from the board meeting texted me. They're like, "We're so glad you're in our meetings," because I was probably like going like that the whole time.
Gotta have fun.
Yeah.
We haven't been in Zoom in a long time.
Oh, I didn't. You know what? I didn't like it. We fought it tooth and nail, going from Zoom to Teams, and I didn't like going back.
Well, you don't have anything set up for Zoom anymore. You don't have a green screen anymore.
No, I had like the San Francisco Bridge behind me.
Oh, you did. You're one of those. You're one of those people now.
It was funny. So anyway, XLI, GTC hit. And soybeans. I'm going to take a look at soybeans because our GTC hit to close our put spread in soybeans. So I will take a look at ZS, what is going on in there. And then we'll take a look at Z-Scalar.
So we are coming into the close of the year, Jenny, rounding the corner on the close this year, our account is doing pretty well and our buying power is flush.
What do you mean flush?
We've got a lot of it.
So flush means we have a lot of it?
Yes. A flush means you have a lot of it.
I thought flush meant like even.
No, I don't know. Maybe I'm wrong. I don't
know.
Somebody says I'm flush with cash. Does that mean you don't have any?
Or if I'm like, we're flush.
Someone, let us know. I say flush with cash means I got a lot of it.
I say,
you know what?
I got a real flush.
I'm going to take this to the tape.
Someone could let us know. We're going to take live tweets. Send us a tweet. Put on the hashtag LAZJNY. Does flush mean we have a lot of it? Does flush mean you're even? Does flush mean...
Okay, flush with cash means to have a large amount of money readily available, essentially being very wealthy or having a plentiful supply of funds. Flush with cash.
So you think our account is flush with cash?
Right now, our buying power is flush.
Let's take it to the tape. I'm going to take this to the tape. I'm going to go in here, and I'm going to see if I try to sell a put in soybeans, buying power effect 1,800, and what is my available buying power? Review and send. Option buying power, $25,000.
That's what I'm telling you.
I guess that's
we
a
don't
lot.
have much at use.
Hey, listen, if I go to put in the pairs trade, like if I try to put in the Russell ES pairs trade, you're like, we can't put that trade in. We don't have enough buying power.
Well, we have a $30,000 account. We only have $5,000 in buying power at use.
No, our account is probably bigger now. I mean, we've made money this year, so our account's probably bigger now. I don't know. Anyway, get ready, brace yourself, because it could be happening. No, we're not there yet.
What would it? We were down.
Maybe we were just down 8 when it filled.
We were down 8 when it filled because we weren't watching when it filled.
Okay, so back to soybeans. It had, and this is the nice thing about having GT season, because if you look at the day's move in soybeans, it had this pop up today, back down. Popped
That's
up,
why I like GTCs.
filled, down, let's get back in.
I'm in.
74 rank. Let's throw in another put spread in soybeans.
What was our put spread? Can we compare the prices?
Well, we were in the 24-day, so I think we. So 24-day, 989.75. We're moving to 994. I don't know. I kind of think we need to go out to the 52-day.
You could, sure. I just wanted to see. So we were in the 24-day. We had the 950, 960 puts.
What did we buy it back for?
We bought it back for 137.50.
No way.
Yeah.
Now it's 187.
Yeah, we bought it back for 1375. Huh. I don't mind jumping right back in.
The same one? Yeah, I guess. So we're taking in $93, risking 400.
Okay, now what is this? You can go out farther in time if you want, but that's a little scalpy.
That's why GTCs are good. If I made it a little wider, 969, hold on, 960, 940. I just wanted more than $90, you know?
Yeah, I get it.
969.40. This is risking 850.
You can go farther out in time if you want to too, but 50 is kind of far.
I know.
Especially for soybeans.
And then you're going into another future. 950, 960 there is 262.
It's only 131 versus 93.
Yeah, let's get the 93.
Yeah. I mean, that's a kind of a fun little scalp.
Sure. We got right back into the trade we just took off. 950, 960.
Now be careful on this if you have a small account.
This is a defined risk.
No, because I think you're getting right back into the trade you just took off.
Yeah, but we have over $25,000.
No, we do. That's what I'm saying. If you have...
Yeah, we can get in and out. I mean, you're handcuffed. If you have less than $25,000, you just can't get in and out of the same trade in a day. More than X amount of times.
I would just like to state for a record, I got a text from Fausia. You just turned 70. You are the one holding the hands. You don't need hand holding.
Oh, Fausia, you're the one like helping people. You're the one creating rising stars. Our last rising star, who Fausia worked with, the views that his segment had is insane.
It's insane. Yeah. And he's a prodigy of the beautiful Fausia.
Yes. Happy birthday. I wish you wouldn't have said her age on air.
She texted.
She looks like she's 50.
She does.
And I'm going to be 50 in a year. I'll be 49 this March. Then 1 year. What are you going to do for my 50th birthday?
That's usually how it works. If you turn 49, then you turn 50.
Oh, okay. All right. I'm working that put spread in soybeans. Now going from ZS to ZS. I'm going from /ZS to just ZS.
Oh,
Zscaler had earnings down 930. We have on a little baby calendar, and
it's not a full loss.
I can't believe there's even money in the 3-day. That's the 3-day. The 10-day, 60 cents in it. That's weird, right? Zscaler?
How much are we down in Zscaler?
Probably $30. Zscaler, $40. So we bought a calendar.
Let that ride.
For 77 cents. It's $2.17 though. It's pretty far. We bought a calendar for 77 cents. It's worth 36. But there's still
how much call skew is in that? Because if this rolls off,
let's just leave it till Friday and let this 22 cents come out, and then we can sell the 10-day.
Yeah. Zscaler.
Zero rank. We don't need to get in.
We do have quite a few earnings today too, as well.
Okay, we can't get into. I just wanted to see what SMC. I haven't looked at my account yet, and I'm long Super Microcomputer. I want to see what it's doing today. Ooh, only up 30 cents. Dang it. It had a big move yesterday.
Oh, an SMCI, yeah. You're long it?
Mm-hmm. Well, I mean, I started selling puts in it when it was falling, you know.
Yeah.
I'm up on the year in SMCI, but I was down. I was digging myself out of a hole.
Yeah.
Digging myself out of a hole.
I get it. I've scratched my way out of things before too. Okay. So
the only thing I couldn't scratch my way out of was RIP Spirit Airlines. And the bad news, what is the worst news I've ever heard, is their billboards came down today.
The billboard is now an attorney at law. When I saw it, I was like, you're not going to like this. It was like Sam something, attorney at law.
SMCI, though, I want to see how much premiums in these options.
I don't mind telling. Oh, my goodness. Look at the 28 put.
I know. Well, I would.
That's the only thing I can see. It's as far down as I can go.
I mean, I was going to just say, look, you can get $3 for the 34, and the margin isn't crazy.
Well, it's 50%.
Hey, I thought we were flush with cash.
We are flush with cash, but do you still think that's smart? Just because you have it doesn't mean you should use it.
I mean, okay, so let's just look.
So you could buy something.
34. I'm going to make it $10 wide and see how much it is. 34.24. 224. Not bad.
That's not bad.
That's not bad.
Because I mean, look at the 24. When you go down far, if you're literally just going to sell the 24, can you just see how much capital it is? I want to see if it goes down by the amount of because sometimes they'll move all the way down.
It's $720.
Yeah, there you go. That's what I was going to say. So I would rather use $700 and get that $100 instead of.
I know, but this is 45 days. Like, I don't want the risk in SMCI for 44 cents.
That is true. That is true.
Like, I'd rather get paid if I'm taking risk in SMCI.
That is true. But that's why the margin is so high, is because you're at the 22 delta.
How about this? Risking 800 to make 200.
I'm happy with it. I was fine with this. I just wanted to see what the margin was on the naked put.
I'm going to work my darndest today. So tomorrow, Liz can't say we're flush with cash. I'm going to spend half of it by the end of the show.
Breaking news, Frank did say flush with cash means you got a lot of it.
Okay. And so royal flush, different term.
No, flush means you've got it. Like, you've got it. You've got the flush. You have it. I believe.
All right. What else do we have? So SMCI.
I mean, flush does mean down the toilet as well.
It also means that all I can think of is when I used to go to the water park, the Kalahari water park with my kids when we were little.
And go down the toilet bowl.
I would go down the toilet bowl, and I feel like everyone would yell flush or something as the gate would open and you'd go plummeting out of this thing.
It's true. That is true, all of it.
Brings back horrible memories.
Trying to send this out. I can't find.
Okay. So SMCI, we're in. We're still working, getting back into soybeans. And while we're on all the S's, silver is up 42 cents. There's a big move today up in silver, and gold's up a little, but...
Didn't you talk to your money tree about silver yesterday, and this is what happened?
I told you. You think this is a joke. Every time we tell the money tree to help a guy out, it's worked so far.
Yeah, who is this for? Mikey. Yeah.
Mikey. So he
was /SI. SIL.
Micro silver, it's up 58.
2%.
Mikey, you ask, we deliver. It's working. Wait.
2%.
Jajun!
It hit!
It hit.
So we were down 8 when we put it on and only down 5. So 3 points and it got hit.
Yeah.
I think because you were in the, paid a little bit more.
Yeah. Jajun.
I love that guy.
I can't wait till that guy comes back for Christmas break. Is he coming? Is he going to work here?
I hope so. He was on, what was he on the other day? Oh, maybe it was it might have been a bump because you see Tony Batista going,
yeah. That's one of the bumps. Okay. So, nice to see Silver's having a little pop. Happy for you, Mikey. Should we pop into Twitter?
Yeah, we can. I've got it up and running. So Twitter, I'm just going top down. Shahe, haven't seen this in a long time.
Shahe, good to hear from you.
Him and his wife, Taylene, are going to be in Phoenix.
Nice.
Yes. I love it.
Can't wait to see you both.
I know, I love them.
They're so nice.
He was on the trading floor. Were you on the trading floor with Shahe?
I mean, when I was on the trading floor in the 90s, into the 2000s. But it's been a long time.
I was on the floor with Shahe for a while. Yeah, he's a great guy.
I mean, we're back on the trading floor every Wednesday. I recognize the faces, but how do we remember all those? It's hard to remember.
It's hard to remember the names. And I mean, I hope they're not watching because I know all of you and I love you all. It's so hard. Okay, and then Mikey comes in. Happy Tuesday, ladies. I always seem to get in a little early, but always trust in
Jajun. Hopefully Mikey's out. 60-40, 60-45. It's right there.
Yeah, he probably should get out. Okay, and that was 16 minutes ago. Now, this is why I wanted to pop in. And Bob, thank you very much, Bob on Fire. CRM, OKTA. I glanced at that and saw OKLO because I wanted to see that. Marvel, Chewy, FL, Dollar Tree, CPB, Campbell Soup, HRL.
Yeah. So from that list,
Salesforce, I'd like to look at.
And
Marvel is one of my biggest winners on the year.
Yeah, and I got into Marvel too. Remember we were having a discussion on Marvel the other day, and we're both in that. We should look at it.
Yeah.
Marvel Technology. Okay. Oh, it's really just doesn't stop.
No, can't stop, won't stop.
Let's go back on the platform.
Yeah, can't stop, won't stop. I'll keep this up, and we can.
Yeah, then we can
I'll
go
read
back
you the
and
list
forth.
as we go.
Okay, so Marvel Technology. Let's take a look. We're both in it. You've been in it for a lot longer.
I've been in this for a very, very long time now. I have calls sold against 50% of my position, and that didn't work out so well. So I think I have the 87.5 calls against it. So which is fine because that's my earnings play for half of my position, right?
Got $9 expected move,
which could bring me right back to 87.
I'm just curious to see how much diagonal will be. You see these strikes, you go from 105 to 110. So you're going from 105 to 110. You're giving up $1 less, but you're giving yourself $5 more in room.
I almost like the 105 because I think this diagonal is going to be pretty wide.
Well, it's 97, or 98, so it's going to be 98 and 105.
Yeah, which is going to be $8. But you'll make $5 on it, which is a pretty decent.
So 98, 105, so $7 wide.
Yeah. That's pretty decent.
Yeah.
You can make $4, or you can move it and pay $4.
So it's not bad, only $3. So you either have $5 extra in room and you pay $4, or pay $3 and have. It's kind of like it's already gone up so much. Is it going to keep going up? I don't know.
I don't know either.
I was glad we didn't do a diagonal and Z-scalar. That would have been a full loss.
Well, if we did a bullish diagonal, yeah. We don't like Z-scalar. We hate Z-scalar. It's always popping up on our computer.
Oh, man.
We should have done a diagonal to the downside.
Okay, so Marvel, what do we want to do?
I want that diagonal in this account.
$320.
But I don't mind spending the $400 with the extra $500 in profit potential. Can you just show how you can move it? Why don't you make this a little cheaper? So open up the 10-day first, if you don't mind.
Move
just
it
go
to
to the 99. Yep. Go to the 99,
Okay,
and then
I'm going to just start from scratch. So I'm going to go the 99, make this a little cheaper. And then in the 3-day...
Sell the 105.
We were selling the 105 for $2. You could sell the 110 for $1.
Put it in as 105 and we'll move it. So now 375,
Well,
and this is how much profit potential you have now. Now you've got a lot of profit potential.
Now you have $11 wide and you're paying $370.
Yeah.
If Marvel blows it out of the water. If they go down, we could be out $360.
Press that button, Jenny Andrews.
You know, we've done enough of these diagonals. We've had enough winners that if we have some losers, you know.
Well, the interesting thing with this, the risk reward scenario is there, right? If I'm spending $3, I want to make more than $3. Otherwise, I just wrap it around the at the money debit
That's why I made it a little wider.
Yeah.
$11 wide.
But the risk reward, sometimes we're paying $2 to make $4, and that's fine.
Now, we're not giving ourselves room. Another earnings play, which I've been doing lately, is, you know, if I want to make $3, 99, 102, here's a $3 wide call spread for $1.20, and then I can go sell the 89 put to pay for it. This is a way to make $300 if it goes up, but you don't lose until you hit 89, which is probably using options more wisely, but then you have the risk of the naked put.
This is the buffer trade.
Yeah, but I've been doing these.
This
on
is the
earnings.
buffer trade. If you take that call spread and move it over to the other side, this is the buffer trade. Now, just shimmy it so you can see where you're putting on the buffer trade.
Well, but the buffer trade is buying a put spread.
You're selling two here.
Do you see
but
what
it's
I mean?
the same concept, right? Do you see what I'm saying?
So the buffer trade is, okay, we're filled in Marvel. Is buying a put spread. Let's say, where do you want your risk to, and then we're paying $275 debit. So then we're going to sell a put worth about $275. So then we're selling that. So yeah, you've seen profit potential, very similar. Yeah. And it should be the break even down to that. It works out about the same.
Yeah, they do.
Yeah.
Isn't that interesting?
It is. Let me go to something we don't have anything in. What else was on that list? CRM.
CRM, yes. Salesforce, because you have to have a little bit of an expensive product to do it, just to show.
So I'm going to do this 330. Let's say
340.
It's too much because it's too hard to get. Like I try to give myself room. So 330, 335, I can make $500, and I get my break even down to 302. Okay. I just want to look at the curve view and show how this looks similar to the
buffer trade.
Buffer trade. So here's where the stock is. If it goes up, you make money, right?
And if it goes down, you don't lose until you get to that point.
Until you get to your naked put.
Right.
You don't lose until you get to your naked put.
Okay.
So $500 to the upside, no loss until you're put.
Until you're put. And then it's as if you have the stock and you have no credits for it, but that's okay.
Now, if we look at the buffer,
you're going to buy.
Basically, if you do the same, okay? So 330, it was 330, 305. Okay. That's the put spread.
Yeah, and then you're going to sell that 335.
And then you sell, and it'll look the same.
It's identical.
Because you're winning, you're making 567. I was going to say you're winning. Curve,
It's identical.
It's the same.
Isn't that weird? When you were doing it, I was like, you got the buffer trade in.
Yeah, it's the buffer. Using the other side.
But I like the other side better because it's the out of the monies. I like the way you were putting it in with the call spread and the put because you're using the out of the monies. And that to me always has a tighter market.
I'm the out of the monies.
Versus the in the monies.
So the only reason I would ever do this instead is if I'm okay with the naked put. But in this, you've said it before, we're at the end of the year. We're trying to protect our profits.
No, yeah.
I don't want to lose them all in one earnings trade.
I don't. That is the one thing that I do not want to do is make sure that Salesforce is a $328 product. The last thing that I want is for it to, because it could.
Oh, we remember with DocuSign. Like,
Yeah.
I don't want to lose $5,000 on one earnings trade.
Right.
I'd rather have a lower probability trade, risk 350 on an earnings trade, than risk that naked put in CRM or Marvel or whatever. So we're having a lower probability trade, but we have much less risk.
For sure. Yeah. I mean, I kind of agree.
So what do we want to do in CRM?
I don't necessarily know that we need to. To your point, I don't know that we need to trade earnings.
Mm-hmm. And we didn't do Zscaler.
But I do kind of like, and I don't.
Or we did do Zscaler.
We did do Zscaler, but it was a calendar. Yeah. But I will tell you, I do kind of like the diagonals on earnings. I'm willing to donate because you can do two. If you if you make full profit on one, you could probably do two or three of them.
Yeah, because most of the time the loss isn't a full loss.
Isn't a full loss.
Right. So it's like you win one or you make money on one and you can lose on three and it'll even out.
Yeah. Yeah, it's true. So we could take a look at that.
Okay. Now, what else was on Bob's list?
On Bob's list. And then I have a question. Then can we just pop in? I want to look at Chris King because he came in an hour ago too.
Sure.
Let's pop back into Twitter if we could, John. And then we'll go to Bob's list in 1 second. But Chris came in and he says, I currently have a zebra in Uber that came from management of a deep in the money put.
Oh, good.
Well played, by the way.
Nice
well
work.
played, by the way. If I'm still bullish, would it be a good idea to close the December zebra and roll to an at the money put in Jan or ratchet to a new Jan zebra? Let's take a look at all of it.
Okay. I don't know his strikes, if his is a winning zebra or a losing zebra. Let's take a look. What day did he say he got into it? Because let me check.
Management of a deep in the money put. That's all I said. So if you've got a deep in the money put, that's exactly what we talk about.
And then he turns it into a zebra.
And he turned it into a zebra.
So when he talks about ratcheting the zebra, that's usually if it's winning.
So can we pop in the platform so we can take a look at Uber?
Now here's what I'm looking at. I'm in Uber and I pulled it up. What I'm looking at is a 4.5 rank. So usually with 4.5 rank, I'd stay in the zebra.
A lot of times if that rank pops up and there's a lot of premium to sell, I'll bounce back and forth between short puts and zebras.
Now, you can get $1. Now, if Uber just sits here, all year, and we have had years, there was one options like the year from the option gods where the market just kind of sat there and you could sell premium all year and nothing ever moved. I can't remember what year that was. 2018?
Yeah, but premium was so low. The market just sat there, but there was no premium.
Well, so if Uber just sits here, you're better off just selling puts. But with that low rank,
I don't know. I mean, that's just it. Is I don't. I'm really trying to focus on the rank. Mm-hmm. Maybe a diagonal. You could switch from a zebra to a diagonal.
Yeah, you could switch from a zebra to a diagonal. Which, if you bought.
It's going to save you some cash. If you
bought the in the money where you're not giving up so much extrinsic value, and in December
you can sell 75.
So you got the 70-75 for the 365 or the 70-76. So there at least
and you've got sale and sale and sale and sale and sale against it.
If you sell December and then sell Jan.
And in my mind, it's less risk than the zebra.
Now, you like the diagonals real short term.
I love them short term.
And I kind of agree because then you've got that short term theta. I don't love, but Jan and you're sitting on it for so long.
But it's very challenging and I don't think you can get much here.
Yeah.
It's going to be, number one, it's already Tuesday, right?
Right. Okay. So let's just look at this. $72.75 for $1.56.
So you've got $3. That's not bad.
That's not bad. And
it's
then,
the same thing as being like, okay, so I'm going to sell the 72 put, but with less risk.
And then you keep reestablishing each week, and you're getting the positive theta because this has a positive, minimal, very minimal, I guess.
Well, because you are buying one. Wait, you're in the 17-day?
I bought the 17-day and sold
the 10-day. Okay, I was thinking you were going to go 3-day, 10-day. That's how I usually set mine up, but I like to do it on a Monday.
Well, because 3-day didn't have anything.
It has nothing.
Mm-hmm.
Yeah.
But the zebra is probably pretty cheap. In Jan, let's see. Sell $150 Delta, buy $270.
It's not going to be that cheap.
It's not that cheap.
I mean, you're
$9.40.
You're cheap. That's expensive for Uber.
Yeah, for Uber that is.
To wash extrinsic value. So I kind of like the diagonal. But what I loved about this, and this was, who is this? What's this person's name? Chris King.
Mm-hmm.
I actually I think you've got a handle on this. Maybe you just wanted us to talk about it because you can tell by your verbiage that you know what you're doing.
I think if I wanted to keep something going in Uber, it's just tricky because it's hard for the diagonal here. There's not a ton of premium.
No, I did read an article about Uber that it's supposed to be the stock of 2025.
Oh, really?
Uh-huh. But what does that mean?
Again, you know me. I'm not a fan.
The world is a fan of Uber.
I don't like to get in the car with a stranger. I'm not a good passenger. I don't like people speeding. I hate when they speed. Reckless driving.
We know. I've been in the car with you.
We're going to the airport on Friday. I'll drive myself if I can't get my driver.
Yeah, but most of the world takes Uber. So I did read an article saying there was a couple stocks that were going to be the hot stocks in 2025, and Uber's on the list. That's the only one that stuck out to me. The rest of them, I didn't even.
Then we are
But
going.
once again, what does that article mean? I could just be like, the stock of 2025. This is what I'm going to declare right now: is Archer Aviation.
I mean, we also have. This is also a strategy I'm doing. You buy that call spread, 92 cents. Cover. I don't even care if I don't cover all of it. You got $250, $234 in profit potential.
Yeah, that's not bad. But once again, I'm a diagonal fan because you can't lose that much. If Uber decides to lose that much. If Uber decides to fall out of bed, you can't lose that much.
All right, I'll do 17-day.
17-day?
And then 24-day.
Oh, okay.
This won't be that expensive.
No.
$1.67, and you have $4 in room.
Beautiful. Hit it.
We're in. We're getting in with you.
I'm not in. Oh, with Chris?
Yeah. Yeah, you just said be the stack of the year.
Do you know what?
2025.
I said I read an article which should mean bupkis to anybody. It should mean nothing because I just declared the stock of 2025 to be Archer Aviation. I just decreed it.
Archer Aviation. Poor Archer had a rough day yesterday.
It had a real rough day yesterday.
And it's down 37 cents today. Now I'm locked and loaded in 7 puts in the 3-day.
I have the 7s. I have the 6.5s. I have some in the farther out cycles.
Guess who's going to be my Uber driver in Phoenix?
I just saw the text.
Frank, just so you know, you can't speed and you have to watch the road. Who was it? Who was the
Good luck.
Wasn't there a guy who was watching a movie or what? We've been in so many Ubers traveling for work.
Yeah. There was a guy watching a movie.
There was a guy watching a movie while he was
You have to go 10 miles under the speed limit, and you have to brake when going onto entrance ramps.
You have to have multiple car lengths distance between you and the car in front of you.
I know.
You have to follow every rule of the road.
Every rule of the road.
Every rule of the road.
Frank, it's not worth it. No, you are.
And it's paining me that I can't really drive myself because, the Midway Airport garage has been under construction.
Yeah, but you like your driver. Your driver's good.
Yeah. Oh, I love my driver.
My driver just talks to me night and day he talks. Each word more useless than the next.
Oh.
That's an SNL skit, by the way.
Well, my driver, he tells me about how he has X amount of hours in the car, never an accident.
I took your driver once.
Patrick?
Yes.
No. I don't think he's ever driven you.
He picked up my family and I in a minivan.
No, that wasn't him.
He sent one of his drivers, and he was nuts.
No, that wasn't him.
No, he sent one of his guys, and his guy was bonkers.
That's not him. I won't use anyone else in the firm. Only him.
Yeah, because he was about. I'm not being ageist. He might have been 96. He was 96 years old.
It was Patrick's dad.
It was Patrick's dad.
It was Patrick's dad. I know exactly who it is. Okay. Well, all right. What else was on the list?
It was Patrick's dad. Okay, I'm gonna go back to the list. So we looked at CRM. What is OKTA?
Okta.
What is that? Do we trade that?
I don't know.
OKTA.
Go, Spoos, go. I need this down. I need my 60, 25 to come in.
I mean, we rallied up a little bit. We got out of our Jajun trade. You could pop it on.
Down,
No, remember, that was our downfall. Do you remember that one day we made money in Jajun and then we said, let's do it.
Oh, let's do it again.
Let's do it again.
Yeah, and that lost.
No.
Okay, so OKTA, no, this isn't liquid. 3-star. I'm wrong.
I don't know what it
3-star.
is.
I don't know what it is either. Nah, we don't need to trade it. Should we go back to Twitter?
Yeah, we can. So, this is what I was going to show you. Chewy. Did we want to do something in Chewy? Chewy, Dollar Tree, and Campbell's Soup.
Campbell's Soup. Why I hate Campbell.
I mean,
it gets me so mad because I bought Campbell's Soup so long ago and then got out of it when I made a little bit of money.
Have you seen the Jason Kelsey commercials for Campbell's Soup?
No.
They're pretty funny.
Are they?
Yeah. I like Jason Kelsey.
Okay, and Chewy, CHWY.
Yeah, CHWY.
All right, we'll look at that.
So let's go to Chewy. You know what else has earnings? Foot Locker. And I usually don't trade that, but I feel like those stocks have been weird lately.
We can look at Foot Locker. You know, I feel like it was always on Tim Knight's list. Okay, Chewy had quite a rally. From the depths of, 15, Chewy's doubled.
Yeah. But I mean, I still think can you just take me a walk down memory lane real quick and Chewy, just very quickly? Because I still think it was really high before this, wasn't it?
Oh, yeah. I'm pretty sure. I mean, we've been trading Chewy for a long time. But this was during COVID. It was really high during COVID. This is in 2020, probably, 2021. Yeah, $100. That was when no one could leave their house and everyone was ordering their dog stuff online.
Yeah, you're in 2021, but yes.
Yeah. Yeah, I mean, this is the after effects of 2020.
Yeah. Where was it pre-COVID?
You don't want to know. 27.
Yeah, so I guess we're right back to where we were.
Yeah, pre-COVID.
What goes up must come down. It's pretty crazy.
So I don't know.
It's only got a 26 rank. This is one of those where I don't know that I'd go in and do a diagonal.
I don't know.
We're gonna close that.
We're gonna pass.
Will you look
but
at
I want to
Foot
look
Locker
at
and Dollar Tree?
Foot Locker and Dollar Tree, and then I want to look at Campbell's Soup.
FL.
Foot Locker.
Ooh, it's down 4% today. I do like the percentage.
I know. Foot Locker. Now, here's what I decided. This is what I decided
rank.
after all my shopping, my Christmas shopping, because I'm almost done.
I haven't even started.
What?
Not a single gift.
Well, I'm converted to just an online shopper because I had my list from all my like nieces and nephews. And I had the list, and it would be like size 8 white sweatpants, size 16 black leggings. Like these are the lists I'm getting from my nieces and nephews. So I'm searching the racks.
Yeah, you can't do that.
This is for the birds. And then I went home and I'm just ordering everything online.
That's a good idea. If you've got that detailed of a list, for sure order it online.
Yeah, I've become an online shopper.
Yeah.
So Foot Locker, this is for people who go to malls, right? No one's really going on footlocker.com, are they?
I don't know, because I know my son would love, he would always look on those, because he's over this. That's why I don't even know what to get him. This is his last season of basketball. He used to always want like 2 new pairs of basketball shoes each season, and that's over with. I was like, do you want any new shoes? He's like, no, I'm done.
Start getting him stuff for college.
That's why I know what I'm going to get for him. It'll be easy. I mean, he's going to get bedding and sheets.
That's what you're giving him for Christmas?
What else is he going to get? He's going to get his computer and stuff like that, but he doesn't want anything. He also says,
you're going to start stockpiling for him to leave already?
I have to, because have you ever seen his room?
It's kind of like, you're halfway out the door, son. Here's your college dorm stuff for Christmas.
This is all he asked for Christmas, because have you seen his room? He is the cleanest person you'll ever see. So he's like, no shoes, no clothes. And I was like, do you need any clothes? He goes, you buy me clothes, I'm returning them immediately. His room is military clean. So he's
the fun
I
part,
do not want one thing of clothes.
It's fun to go out college shopping with them.
Oh, he's
like,
getting
let's go pick all your bedding and let's go pick all
He's getting it all.
For Christmas. You're tough.
Yeah. I mean, he's always gotten some major Christmas gifts. So I'm sure we'll put something else in there.
Yeah, he needs a hobby. Like every year my son wants a guitar. It's always
he needs
like,
a hobby.
oh, I want to get.
So you can't get him clothes. You can't get him shoes. He's got everything under the sun.
Okay, you start getting him like for college, he's going to want a nice set of poker chips.
Got it.
Okay.
He's got my grandpa's poker chips.
Okay.
And he's got a sentimental set.
You're going to let him take your grandpa's poker chips?
No, he's got a sentimental set, and then he's got one that he takes everywhere with him.
Okay. There's lots of things they want for college.
Yeah, I mean,
they're going to want, a beer dye table.
He doesn't even drink beer yet.
Just wait. Just wait. So a beer dye table.
He's an athlete right now. He hasn't even dabbled in it yet.
It's like a low table where they play this game on it. They all have it in their dorms.
Really?
Yeah.
I'm not going to
I can hook you up with the beer.
I'm not giving him that during the middle of his
Merry
basketball
Christmas.
season.
Merry Christmas, JD. Here's your
chug.
Here's your betting.
And guess what we're gonna do? I'm gonna pour this beer in here. Good for you.
I mean, I got Logan one of those smokers. You know where you go like put in your bourbon and then it's a whole smoking kit where you could smoke your bourbon.
Your kid is 21. Mine is in high school.
I'm not saying to get the bourbon smoker yet, but the beer dye table, they want that and they're for dorms.
I'm not giving him that for Christmas. What kind of a message does that send his little sister? We're gonna play beer pong on Christmas.
We're gonna practice
morning.
So you don't get.
I'll just have beer pong all set up when he wakes up Christmas morning.
How about left, center, right dice?
He's got all that. I mean,
I don't know.
Like dice. Here's your dice.
I'm not sure.
It's hard. He's hard. That's why he's getting his
gaming systems to take to school.
I asked him, do you want a gaming system? He's like, no, because mine unplugs so easy. I want to bring this one because I've got everything stored in this one. Okay. He's so tricky. It's not even funny. That's why he's getting this stuff. He's getting his computer and iPad. Computer and iPad, betting. He's getting
hopefully he's not watching.
Like a mini fridge.
I'm going to call him and tell him, don't watch today's show.
And
he's going to spoil it.
He's going to get like a mini fridge, stuff like that.
Okay.
Yeah.
All right.
Instead of the alcohol that you give
instead of the beer pong table.
But that's the difference in age. Logan's going to be 21.
No, freshman year. So freshman year, the top of his Christmas list was that beer dye table.
But he was already in college.
Yeah, and that's what he asked for his first Christmas.
So he's in college. You can't just be like, listen, Annabelle, when your senior year, I'm getting you all alcohol too.
I'm just going to tell you who's going to be the coolest kid at school when they show up for our first day with their beer dye table. And they don't have to wait till Christmas for it.
What are you getting Lily this year? Is it all alcohol related? You can't give high school
students. The table is a table. It functions as a table.
No, he's going to be okay.
And they play games on it.
He's going to be okay.
Well. All right. What else? It's 10:51.
I'm just looking here with 60.25. It's not bad. It's still worth something.
What's it worth? $1.50?
No, it's almost $2.
Oh, 60.25, $2.
Yeah, that's not bad. I mean, if you get a couple points down, that thing's going to be good.
A couple points down immediately. That thing's going to start decaying very rapidly.
Do you know what's crazy though, Jenny? You know how I've been looking at, I'm so jaded by that end of the day trade where I always said it popped up at the end of the day.
Yeah.
And we were talking about that.
It hasn't been.
No. It's going the opposite way.
Yesterday, the market fell at the end of the day.
Every time it's been going down, down at the end of the day instead of up.
Right.
So it's kind of crazy.
Yeah. I mean, I don't know. But it is far. We're 10 points away. We need SPOOs down 20, which we haven't seen today.
We haven't seen it yet.
We haven't seen today.
No.
The low today is, oh my gosh, we're barely moving.
No, would you ever think
low
of
today, 60.33.
Would you ever think of doing two? Where you'd sell this out, sell a second one, and then buy tomorrow's?
Oh, I see.
Because you'd get 2 times the premium.
So sell 2 of these.
I mean, I don't know that it's kind of throwing the same money into it, but.
And then buy tomorrow's. So I've got $4 into it. Then it's like throwing $4 more.
Yeah, it's like throwing $4 more. I didn't know, because you're getting double the premium if you sell 2 and then buy them.
But I do think like that whole calendar concept. I should have taken. What do we know? 10% on calendars. I should have taken 10% on the calendar. I would have made 10% on the calendar
easily, quickly.
Yeah,
easily and quickly.
But that's 10%. I don't know.
I do think the 10%, but so I kind of like, we were talking about this yesterday and then a little bit in the car today. I like this. I think I like this a little bit more than my morning trade because number one, I'm only risking $500. Number two, 5 or 6 or whatever
But
it was.
it's gotta come back to that. It has to like a half an hour has to pass and come back to that strike. But it has to come back to that strike.
And 50%, or I'm sorry, 10%.
And you're only going to get 10%.
10% quickly. If not, you've got. I'm not saying that this is going to make money, but you've got a shot.
Here's the question: would you go out right now and buy this? No way.
No.
No one would. If someone said, would you go out and buy this? No, they would say, you know what? If I thought it was going down, I would sell this.
No, you're right.
Like I would do something else. I wouldn't go buy that.
So what can you do?
There's nothing I can do. I can try to,
you can sell it out and save yourself $150.
I could sell it and save myself, and which I will when the show is over and I can get to my computer.
I do like your calendar concept, though. I did. I think it was a good way to do it.
When I missed I like selling the iron condors on the open. I like selling the iron condors on the open, but I missed the open. And at that point, I thought, oh, I don't want to sell the iron condor now because already enough came out of it. So I thought, I'll just throw on this calendar. I don't know. I feel like it's kind of, let's talk about the old pool medic style. It's kind of like his. If it strays too far, it can be a full loss.
It can be a full loss.
And the pool medics were expensive. In SPX, he was 10-day. So
10-day. He was 10-day, 30-day. Remember?
10-day
expected move. I wonder 55, what these are with the 7 rank.
30-day. Which
how pool mech
this is going to get expensive. And 59.55. Oh, you've got to do 59.50, and then I have to. It's actually not that bad.
$2,000. This was. You'd get out of this if you get a little move down. That's not bad. That's not bad for that amount of time.
It's not, but I was off a strike here. This is gonna mess.
I actually
it up.
do need a pool medic this summer.
You need a what?
My pool needs a medic.
Why?
My salt system is down.
Oh.
I got Clark replacing it, but
just replace it. That's not that bad. $59.50. I think what was it? Only like $300 or something to replace the salt system.
I don't know. I didn't get a quote yet.
I replaced mine. $59.50. $59.50. $20.95. $59.50, $59.50, $20.95, and look at your theta. $61 a day in theta.
That's what was impressive about this, and we haven't looked at these in a long time.
No, should we just do it in SPY as a small scale?
Yeah, because it should be $210.
Yeah,
it'll be $210, and then we can pop. But the last thing we can do is pop back into Twitter.
So,
but not yet.
So then it would be this $5.95. Sell the $5.95 in the 10-day. Go to the 31 day. Or do we want the end of the year? D's 31st. No, we think it's going up end of year, end of quarter.
Yeah.
Maybe we do the upside. Okay, December 31st, we're going to buy the 610. And then in the 10-day, we're going to sell the 610. $2.
Yeah, that's what we thought it would be.
Yeah.
I like that.
So again, it could be a $2 donation, but if the market goes up, fine.
Yeah, I do, and they're not bad to have on either side. I'm glad you looked at SPY instead of spending $2,000 on them.
But calendars, you're not looking, you're looking to make like
10%.
It's very small, 10%.
Yeah,
if you're paying $2,000 and you're making 10%, you're making $200. If you're paying $200 and making 10%, you're making $20. It's a low, you're looking for a low profit.
But what you can do, number one, is stagger them with the smaller thing. You can stagger them if you need to.
Yeah, if we get the movement, they could all
hit. You could do one upside, one downside, and those could both work. Let's pop back into Twitter. I know we only have a couple minutes left. Okay. I just want to go to this. Jeff says, Liz, UK MB has a couple of tough games this week, now ranked number 4. They do have a couple tough games.
That's what you should get him for Christmas. Tickets to go see, tickets for like basketball games or something fun, or tickets for something. If you can't come up with anything.
I mean, he always gets a Bulls, like we always go to the Bulls game each year for that. Like that's already in there. Nothing to open though. Do you know what I mean? Like I'm gonna be like, your Christmas pile, I need like presents. Otherwise it's like, here's your tickets.
And let's hear it. Mikey, thank you for the money tree. Win on a couple and riding another one up. Please whisper to the money tree that Scott Sheridan should add trailing stocks to the platform.
Okay, and then this is from Frank Walsh. OKTA is an identity verification software.
Okay, and that's from Harsha Varden. And thank you very much because he answers a lot of our questions.
And then I love this, Mikey. 49? I don't believe you.
Thanks, Mikey.
I think Mikey's our age, isn't he?
Yeah, I think.
Yeah, Mikey and his wife
Mikey's
are our
our
age.
age.
Yeah.
All right, well, 10:58. We're out of time. Good show, Liz.
Was a good
you
show.
can go and take an ice bath. I'll dump a Gatorade bucket over.
But aren't you glad? Did you bring your drink in?
I did.
Aren't you glad it's cold? Because sometimes when it's cold, I'll bring a hot drink in here. If I had like a hot
thank God
drink,
you didn't have a hot tea. You would really be sweating.
you just see sweat dripping off my nose.
Oh, man. All right,
okay.
everyone. Thanks for watching. Don't forget to, number 1, sign up for Phoenix if you are anywhere near Phoenix. And number 2, sign up for the digital collectible.
Yes, both of those things.
Yeah.
And remember to trade small, trade often.
Laugh with us, learn with us.
And watch the Liz and Jenny show.
See you tomorrow.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my guy, Mikey Butler. How are you, sir?
Doing great. We got a Lulu earnings preview out in the ether.
Beautiful.
So go check out the Tasty Live News and Insights app for that. But it is Tuesday, which means cherry picks.
Yes, cherry picks will be coming out a little later than normal because we are busy bees here. But we're going to be looking at the U.S. S&P 500 versus the emerging markets. So we're looking at EEM and EWZ and EWJ and all those other ones. There's been a pretty significant divergence in terms of like the returns of basically anything outside the U.S. And that's coupled with currencies basically at lows versus the U.S. dollar. So not only has the dollar been super strong, but dollar-denominated stocks have also outperformed. So it should be a good one, an interesting look. Something I don't think everybody, we don't trade a lot of the EM, EWZ, here and there, but might be an interesting one. I did a little zebra trade in the EM that will be in the cherry picks.
I like
as a trade idea, and a little bit of a short SPY position, which I know. Well, I had to go with the content. The content was kind of the idea that S&P 500 has 3x the returns of basically any other market this year. So maybe there's a tiny bit of like a pair trade to do there.
At least for one day.
Maybe today is our day with E-minis slightly down.
Yeah. That's down 10 points.
10 points is crashing.
But yeah, tastylive.com/newsletters. I've got the link pinned to the top of the YouTube chat. We're streaming live on YouTube. Just go to Tasty Live. You'll see that link, and you can subscribe for free.
Of course.
But yeah, nothing else is really moving.
Yes.
I'm staring at my screen, and it's just like not moving at all.
Yeah, 2 choppy days. We've got E-mini S&P 500 futures 60-50 here. They've been in a 20-point range the entire session. 60-47 to 60-67. So it's been a chop fest back and forth. The NASDAQ basically unchanged here. It's down 12. You got the Dow down 158, and then the Russell really bucking the trend here, down 24. Tesla is one of the ones that's kind of moving to the downside. Amazon counterbalancing that to the upside. Apple has been strong. Google has kind of bounced a little bit. Meta was having a really nice morning here, up $12. So it's definitely been a mixed bag here. Nvidia, of course, near the lower end of where it's been trading recently at 138. So it's definitely been kind of a push and pull here. Oil catching a bid, /CL 70.12, up $2 and change. Scalped out of my micro crude here. Missed out on about $50 there into this move, this continued move, up 3%. Volatility futures just getting smashed continuously. Volatility futures 1470 right now, down 5 cents. You got the VIX itself 1341. Bonds down 13 ticks. You got gold up $11, silver up 2%, 63 cents. And then Bitcoin has had some two-sided action today, about a $3,000 intraday range on the futures. Same thing on the spot, about $4,000 on the spot, but we're sitting around 95,000.
Love it.
Yes.
Yeah, we'll see. We'll see if we can break out of these channels we're in. But as we stated yesterday, not too much expected movement through the rest of the week. We are under 50 points in SPX, 48 points plus or minus for the rest of the entire week, and 100 points, 135 points for the rest of the month.
Yes.
And the month just started.
Includes a lot of time off.
Exactly.
So I think December is the
slow,
the lowest amount of, or the fewest amount of trading sessions, full trading sessions. I think it's something like 20 or 21. So there is a lot of, when you look at that number, it incorporates a lot of holidays, a lot of low volume days. That's part of December. So. For me today, just a couple things. Cleaned up a couple positions, closed out of an NVIDIA Iron Condor. I also closed out of the MCL long contract that I put on, so took a couple bucks out of those, put on the new positions in EEM and SPY. That's for the cherry picks here coming at you in probably an hour or two.
Cool.
Yep.
I haven't done anything today. Placed some new trades yesterday, closed some trades yesterday, but I mean, the market's just not moving, so there's not much to do. Just waiting. I'm waiting for something to happen. Which gives us time to talk about the history of our lives. And we're going to kick it off with you today.
Yes.
So both of us did a DraftKings year-long trade. We ended it a little bit early, but where my position was and where your position was, like there wasn't too much left to get out of it. I mean, we were kind of just delaying doing these segments if we would have held it.
Yes.
So why not just do it, get it out of the way, and then we can talk about next year's year-long trade. But our trades were similar. You started with the strangle, I started with the straddle, but we went on our merry ways afterwards. We kind of ended with a similar result, but that just goes to show that there's no perfect thing. Like we never really talked about like, what are you doing here? What are you doing here? We just did what we were going to do, and that was it.
Yes. We get the question all the time of like, when's the perfect time to do this? Or, why did you do this today and not wait till tomorrow? There's so much subjectivity with directional assumption and, risk that you can hold. We kept these positions very small. We're just trading one contract here, so we could take more risk if we wanted to. You could roll and reduce your risk if you wanted to. So we, there's multiple ways you can go about managing a position. There's not just one single thing to do. And of course, through time into the future, that'll dictate whether the adjustment was good or bad. Not every one of my adjustments was quote unquote good at the time, but by staying small and being mechanical, you can take a position and hold it and manage risk and exit for a winner. So that's the basis of this segment. A year in the making.
Yeah.
All right, so we're looking at my DraftKings Strangle. We'll go to the first slide here. This is just a look at the follow page. So if you type in the upper left-hand corner of the follow page, there's a little symbol search bar. You can type in the symbol. You click on my little icon in the bottom. You can pull up all my DraftKings trades, or at least the last 30 is, I think, what we go back in any specific underlying. So you can see all the adjustments here. You can see like the price of the underlying, the IV rank, the action here, which close or roll, or if I'm, buying the guts, selling the wings, which I did a couple times. You can see all the credits, debits. Doesn't really matter. I don't want to focus too much on the profits and losses at each time. It's really just the mechanics of that trade, holding that position and having a position in that underlying for the entire calendar year. It wasn't the same exact strikes. We moved strikes. I scalped out of puts. I scalped out of calls. I traded the underlying through the whole year, one contract with a very similar position throughout, but it wasn't the exact same position every time. It wasn't like I kept those same strikes. And we'll see that here on the next slide. If we'll jump to slide 2 here, this is the order chain. So this is just on the platform. If you have a Tasty Trade account, it tracks all the rolling and adjustments that you make on a position that are in the same transaction. So it's a really nifty tool. It adds up all your credits and debits to give you a net average trade price. So that'll tell you, how, if you've collected $1 over multiple rolls, what your basis is, so to speak, on your position, whether it be the same strikes or a new position. And then ultimately adds all that together so you can get a running total of your profit and loss. So traditionally, there's 2 buckets of P&L. There's realized and unrealized. And really, when you close a position, which a rolling position is part of a closing order. You're closing one position, opening a new position, opening a, in a different expiration or the same expiration, doesn't matter. But there are 2 buckets. So this basically combines your realized P&L, which is closed options, with your unrealized P&L, which is your open option position, puts them together and totals them for you so you can keep a running track of your position. So it was a great trade. I mean, on $500 or $600 or $700 in buying power to make $900 or $922 is great, but that's not really the basis of this segment. The basis of this segment was showing how you can take a position, continue to roll it, whether the stock goes up, down, sideways, it doesn't matter. You can keep collecting extrinsic value over time, and that allows you to be, to be in this situation of a nice profitable trade. So you can check those out at your leisure. We'll archive those, of course, with the tastylive on the tastylive.com site. So getting over to the third slide here. So one of the things I wanted to highlight, because we always get the question of like, which strike are you going to roll to, or why did you pick that strike over this strike, or how many deltas are you trying to get? We always talk about reducing overall delta exposure by 25 to 50%. And when you think about this from a one contract trade, which I had for DraftKings, the max I could get in terms of delta exposure would be 100. If one of the options went deep in the money, was basically all intrinsic value, the max is 100. And you can see on each one of these adjustments, on the top is the price of DraftKings at the time of each adjustment. On the bottom is the net delta change of each adjustment. So if I'm rolling up a put, it would show a long delta and it would net out that difference. So if I'm buying a 5 delta put and selling a 20 delta put, it would show us 15 deltas in that adjustment. And so the point is here that basically all of the adjustments that I did throughout this trade are somewhere between 0 and 25 delta adjustments, right? 5, 10, 15, 20 deltas, most of those adjustments throughout the trade. And that's because I'm always looking to reduce my overall delta by 25 to 50%. On a one contract trade, I can only get to 100. The max delta, realistically, unless there's some sort of tail event to either side, is probably netting 70 or 80 deltas in either direction. And so rolling to pick up 20 deltas, long deltas, 20 short deltas, it doesn't matter because I'm doing this dynamically with the price of the stock, but picking up 20 deltas is that 25 to 50% reduction in my overall delta. So you can see that in all of the transactions here. They're basically all like that. Now, the ones that are sort of outliers on this, I've highlighted in the blue there on the top with the blue circle there. You can see these big moves in the underlying, right? So we went from in DraftKings in like the middle of June from 37.5 all the way up to 45, okay? That's a 20% or 25% move in the stock in the matter of 2 weeks, 3 weeks. At that point, you have to pick up, you have to make that decision whether you want to reduce your delta exposure by more or lean directional. I took the adjustment of of reducing the delta a little bit more there, rolling up and picking up 30 deltas on my transaction. Same thing. So we went from 45 and then a month and change later, we're trading at 32. So we went 37 to 45 to 32. So it's a 25% increase to a 30% drop in the stock price. And those adjustments, you have to make that decision of like whether you want to lean heavy directional, and in terms of this position, maybe 70 or 80 long deltas, or do you want to reduce that delta? And for me, on this position, most of the time, I was trying to keep a little bit of delta in each way, but reduce it with each of these rolls.
Yeah, and there's always the question of like, how, if you had done nothing, et cetera, but that's you can't know where the stock is going to end up. So you have to make these adjustments, especially in a year-long trade where your number one goal is to just add extrinsic value to the position, reduce intrinsic value exposure, and when you do that, you're reducing your delta exposure as well. So focusing on just compiling as much extrinsic value as possible, taking where the stock price is out of the equation as much as you can, you end up with, at the end of the year, a really wide break-even range, which will be shown in a couple slides here when we show you the visual.
Yeah, and I'm glad you mentioned the why didn't you just do nothing? Because the it's the hardest thing to do. Is that an option for you? Yes. Like, you can make that decision. You know what? The stock has gone up significantly. I want to lean a little bit short. Or the stock has gone down significantly. I want to lean a little bit long. That's totally fine. For this position, you don't know what's going to happen into the future. And it goes to exactly what you said. My goal was to collect premium. I wasn't going to lean super directional in either spot when the stock moves. So it's hard to look back in hindsight and say, oh, well, do nothing and it would have been better. When you take into account the, emotional part of the game, stock is down significantly, you're losing money, you got to do something to reduce the that loss. So it's, you got to just kind of make the decision. And as long as your size is in check, even if it's the quote unquote bad decision or the worst time to do that, you can hold that position long enough to, to manage it through time and collect more extrinsic value. So let's jump back to the slides here and just go through the rest of and all these metrics that you see, all these visuals are from the order chain. So if you right click on the order in the order chains on the tastytrade platform, you can pull up the market snapshots, which is where these are pulling from. You can have them on your own trades. It's totally accessible for you as well. So getting over to slide 4 here, this just, again, a closer look at the delta. We talked through that. Every adjustment, I'm picking up between 10 and 30 deltas or 40 deltas, trying to reduce my overall delta exposure for the position by 25 to 50% is a perfect example of that throughout the year. Jumping over to slide 5, we look at IVR. So again, this trade, we had the idea of holding it the entire time. So, I could have closed the position at multiple times while volatility was super low and just waited for volatility to either get higher or move that capital into something else. We chose to keep this on for the year just to kind of keep this as a year-long trade and just to show everything. But you could see here all the adjustments that I did throughout the trade. They're not all when volatility is super high. Like, you have to make the decision of reducing delta, even if volatility is low. Like, sometimes the position gets too big, you want to add extrinsic value. So throughout the duration of the trade, volatility changes. Which affects some of the credits that you see as well in the order chains. If you look at the order chain slide, you'll see a lot bigger, meatier credits when volatility is high versus when it's low.
Yep, and that's especially true if you're rolling to at-the-money positions, going from out-of-the-money to at-the-money, just maximizing extrinsic value. And that eventually compiles to wide break-even zones.
Yes.
Which is the most important thing.
Yes. Jumping over to slide 6 here. So this is a look at IV because this is another super important thing that we always talk about, the actual implied volatility. So we looked at IV rank, and IV rank tells one part of the story. It tells you whether the current implied volatility, which is what we're looking at now, is high or low relative to itself over the last year. So it gives you the context to know whether this number that you see on the IV is high or low for this underlying. Now, if I was trading in something that has normally, 15, 16, 20% implied volatility, and it gets to an IV rank of 5 or 10, I won't be keeping a position on in there. In something like DraftKings, you can see the implied volatility just for context right now. SPX, the implied volatility is about 13.5%, 13 to 14%. In terms of the option price and the option premium in DraftKings, it's about 4 times as rich as what throughout the duration of this trade, the whole year. It's been about 4 times as rich compared to SPX right now. So when you're looking at high implied volatility, my rolls that were $1, if volatility was a 14 or 15 or 16 handle, those would be 20 cents. 25 cents. So it's a huge, huge difference. And it's a huge difference in terms of the extrinsic value you collect, how wide your break evens get, how much wiggle room you have for the stock to move. You'll see on the last slide that I've got this massive range for the stock to move. And so this is why we focus on high implied volatility underlyings and talking about actual implied volatility, not IV ranks. So the reason we focus on these high IV stocks is because we can withstand, the stock it started at 35 and went to 50. That's a 30% increase in the stock price, almost 40%, just doing rough math. So it goes from 35 to 50, then it goes from 50 down to 30. So it goes, 40% up, 50% down, and then back up another 30%. It basically settled, $5 or $6 higher from where we started the trade. But that's implied volatility, right? And so you have realized volatility in the underlying. Not many stocks go up 40% and then down 40% and then back up 30%. That's volatility. But you're getting paid to take that volatility. And at the end of the day, the stock stayed relatively sideways. And that's why we were able to make so much on this trade, because you're getting paid to take risk on this position, multiples of what you would on something that is low implied volatility. If you're in something that's got 14 or 15% implied volatility like SPX, and SPX goes up 40% and then down 40% and up 30%, there's no way you're making money on that trade via rolling like we did here, or any other stock that's 14, 15% implied volatility. If you see that realized volatility, you won't be profitable because the realized volatility is much higher than implied. Here, the implied volatility was basically the same as the realized volatility. If you have 40% implied volatility or 50 or 60% implied volatility, it's telling you that the stock can go up 60% or down 60% over the next year. It stayed inside that range, but we had those points of realized volatility. And so when you're selling high volatility, you're getting paid to take that risk versus something that is low implied volatility. You are relative to the potential, you are not getting paid as much.
Yeah. Another way to look at it now is like in DraftKings, the December 19th, 2025 cycle has a plus minus $14 move. So if the realized move in DraftKings is less than 14 points, then implied volatility would have successfully overstated realized volatility. Yes. In SPX, the expected move through next year is 700 points. So right now with SPX at 6,000, if we end up at 7,000 to the upside, or if we end up at 5,000 to the downside, then realized volatility would have exceeded implied. And those are long-term expirations, which don't really, they're not exhibiting the near-term implied volatility. So it's even more. Like if you were to compound the 30 days, 45 days, the premium that you would get would actually be more than in DraftKings a 14-point or in SPX a 700-point move.
Yes.
So that's another reason why we like to stick around that 30, 45-day range, because when we're selling premium, that's because you'll always have a heightened implied volatility in the near-term cycles relative to longer-term cycles. But you can look at a longer-term cycle to see what the baseline range is for implied volatility.
Yep. Yeah, it's a great point. And here, even using current implied volatility in DraftKings of 40%, when we did this trade over the year, 35 to right now it's trading at 44-ish. So it's been about a 30% move to the upside from start to finish, just price of the underlying. We've come in, the realized volatility has come in less than what implied volatility is right now with DraftKings. So if DraftKings does another 30% next year, but volatility stays at 40 or 50%, and you're selling premium, you're going to make money over the year.
Yeah.
I mean, for the most part.
Yeah. You have a hard time not making money because those break evens, over time, you started with $2 and you ended up with a range that covered the whole screen.
Yeah. You're getting paid 40 points of volatility when volatility is only being realized at 30 points.
Yeah.
That's it. That's why we look for high volatility underlyings. Let's go back to the last slide, just one more second real quick too. So one of the other things I wanted to show of just some of these adjustments, going inverted, buying the guts, selling the wings, you can see some of those in practice here. A lot of people get spooked by going inverted. It's all about extrinsic value. It's all about selling volatility and ideally having that realized volatility come in less than implied volatility. It doesn't matter that some of my options were in, my short calls were in the money at some points and my puts were in the money at some points. It doesn't matter. Through all these rolls, you collect enough extrinsic value to offset those and roll those forward. And this is just a perfect example of being able to, take positions that might be losing trades, make them into winning trades. I know this is a year-long trade. You hope not to be in that sort of trade on a losing trade, but this is an example of just collecting premium and how much you get paid for taking that risk on a 8 or 10 cycle year, which is what we looked at here.
Yeah, and if you stay in a trade this long, your chart would look similar if you were to plot this yourself. Like the dotted green lines will always expand down and up and to the right because you're collecting more premium, you're compounding premium. Like you started with a $200 strangle, and what was your ending extrinsic value credit?
Like $1,100, something like that. Because I started the year, I got a 215 credit on the first trade, and then I bought back my last trade at 244 debit. So it's basically, I basically just realized all the value I did throughout the year.
Yep.
All the credits I got from all the rolls, buying the guts, selling the wings. I had some scalps in there of calls and puts. That's why some of the break evens break off there. But again, I was, trading what was happening.
Yeah. And I started with a straddle. So I started with $4 in premium. And my total ending credit was $1,800 almost. If it was a low IV product, you're not getting nearly that much.
You're not getting that much.
Because instead of rolling for dollars, you're rolling for cents.
Yes.
So yeah, nice job. Nice work.
Thank you. It's a fun time. It's a good trade.
Yes, finally.
Yeah.
Finally we get one.
Yeah. And that's another example of everybody gets caught up on the profit or loss for our trades. Mm-hmm. You do that $500 or $600 buying power trade, and you make $50 or $60 each time you do it.
Yeah,
it doesn't seem like a huge amount when you look at one trade, but you do that over a year, and it's a really powerful return on capital.
Yeah, both of our return on capital for this trade was
200%.
Yeah,
I mean, we used $500 or $600 and made $900, 150%.
Yeah,
I mean, that's great.
Yeah. So yeah, that's basically the concept.
Yes.
In motion.
Yes.
So yeah, very nice work.
Thank you.
We'll go through mine tomorrow so we can see the differences and similarities. But the chart's going to look very similar. The difference between ours is I took stock because the stock plummeted, and like you said, we can be directional if we want to. Stock plummeted, and I was just like, I'm just going to take the stock and just sell a call against it.
When you are selling a strangle or a straddle, you're saying, for a strangle more applicable, you're saying I want to be long here and short here. And that's totally fine.
Yeah.
So I like it.
Beautiful. All right. We got plenty of time for trade ideas and questions. If you want to join us on the YouTube channel, just pop over to Tasty Live. Let's kick it off with Harsha. I have an earnings trade for FL, 17.5 put, 30 strike call in January, sold for $1.50 a few days ago.
Ooh, 17.5, 30. I mean, you're already up 40 cents. I might just take the money and run. Foot Locker is now one that I have a bone to pick with. I think you've already made 30%-ish of the max profit.
Yeah.
That's a pretty good trade.
Yeah. And if you get a big move, especially because you're in January, this cycle will have a little bit of a vol collapse, but not nearly as much as the weekly or December. So if you get a big move against you, you're gonna reset to having no profit in that trade.
Yeah. Pat yourself on the back for a nice trade.
David, on a debit put ratio spread, is that the same as a debit put vertical and an extra long single put option? Yes.
Yeah, it's
Is one better than the other? They're just different.
yeah.
So a debit put ratio where you're buying two at a higher strike and selling one at a lower strike.
It's a zebra if it's at the money.
Yeah. So that is the zebra setup.
Yeah.
But yeah, you can think of it as literally a debit put vertical with an extra long option.
Yes.
You're using one short option to offset some of the cost on your two longs, basically. And reducing some delta in that sense too.
Yes. When you set these up at the money, we'll do this. It would look something like this, which is a zebra trade, basically a synthetic long or short stock with a capped risk potential via a synthetic long option that you have. So basically this zebra at the money is short stock with a free long call of protection to the upside. And it's free because you're paying very little extrinsic value. You'll have the same sort of risk profile to the downside if you do this out of the money, but it's really more directional than, you're not getting the same 100 deltas. You're only 40 or 50 deltas, and you have that sort of gamma exposure to the downside. And it's cheaper, obviously. But we do these at the money, so as a synthetic stock replacement.
If you start with a strangle and you roll continuously, is that a failed attempt to buy the guts and sell the wings? No. Buying the guts and selling the wings is no different than rolling out and up or down. It's just removing intrinsic value to get a focus back on extrinsic value. You don't have to do it. Like if you're inverted, you could just roll the inversion.
Same difference.
Yeah, it's literally the same trade. An inverted strangle is the same as an out of the money strangle.
Yeah. Buying the guts and selling the wings on a straddle to a strangle is really what I consider buying the guts and selling the wings. It's a way of taking off your at the money, slower moving trade and moving to an out of the money position that's further out on the, as Mikey would say, the umbrella of extrinsic value. You want to be further out on the tails if you want to get out of that position quickly. $1 of value is going to decay quicker out of those out of the money options, 20, 15-ish delta, 15 to 20 delta option versus something that's right at the money.
Yep. Is it crazy to want to sell a strangle in MicroStrategy? Yes.
Yes.
The Jan 800 call 260 put is looking super juicy, almost 20% premium to buying power. I'm okay with the buying power. Thoughts?
Yeah, it's a big boy trade. I mean, that's...
Yeah.
Volatility has come in significantly here, too,
Yeah.
just to keep that in mind. You look at the IV change, over the last 5 days, down 40%.
Yeah. I mean, the problem with this trade is, and we've shown this many times, these products, MicroStrategy, Bitcoin, if there's a huge rip to the upside, not only are you getting the stock price increasing in a dramatic way, but you're also getting an increase in IV.
Yeah.
So this $11 option at the 800 strike can very quickly turn into a $5,000 option, $7,000. Like look at the at the monies now.
Yeah. So
if the at the money at 400 now is $6,800, if you get it moved to 600 or 700, this $1,000 is at least $10,000.
Yeah.
Because that option would be a higher at the money value than a 380.
Yeah.
It would be more than twice.
Yeah.
We're
And
looking at
the put doesn't move
Yeah.
either. That's the other thing.
Yeah.
So like I just pulled up the chart of this option, the 800 strike. When MSTR was 100 points higher, 150 points higher, it was at 540 or 550 at its highs. This thing was trading at 1,000.
Yeah.
Which is 10 grand for that option. So it goes from 1 to 10 on a 100-point up move. On the 100-point down move, from where you're at now, you make $300 or $400. So you got to be careful with these trades.
Yeah. Like this strangle trading for $2,700 can literally turn
Go
into
to
a
10 grand.
$15,000 strangle. And
Yeah.
that's on a move to like 600.
Yeah, even if it's still out of the money.
Yeah. So when you recognize that this product, when it's having its heyday, this product is no different than AMC, GME, volatility product.
It's a volatility product.
It's a volatility product. Like
Yes.
that's what it is.
And the volatilities come in
Yeah.
significantly.
So if you're okay with the buying power, like I would define the risk here if you're going to do something like this. But you could also pair this, like if you're really trying to take advantage of IV, pairing it with stock is a really strong way to do it.
Yeah.
Like buy 100 shares and just sell the call, or buy 100 shares and do a covered strangle like this. If you're trying to get more shares at a lower basis, like if you have the money to do a trade like this, I would pair it with stock, so you have no issues. If MSTR goes to 600, you would be celebrating.
Yes, I agree. I mean, you could color this with, 150 points of downside and 400 of upside potential. Obviously,
That's another good point. If you have 100 shares, it's no different than really just doing a vertical spread.
Yeah.
But like, because the call skew is so dramatic, if you have 100 shares and you buy, let's just say like the 350 put, right? Trading for $5,000.
Yeah.
These options significantly out of the money are trading for the same amount. So you'll always have a skewed upside profit potential relative to your risk.
Yeah.
So that's another thing to consider, especially in longer term positions. But yeah, I would not be selling a strangling here naked. I would define the risk or pair it with stock.
Yeah. Yes. Or you do like a 1x2. Having the static delta is going to help you here, because if you get that tail sort of move, it'll hedge you significantly because you'll gain all that intrinsic value.
Yeah. Let's see. So IV. Okay, so if IV is 30 instead of 60, would you not do as many roll-ups and roll-downs on calls and puts and just focus on collecting theta? Yeah, I mean...
It would just be harder to make the rolls.
Yeah.
In terms of like the value that you're getting paid.
Yeah.
Your credits are 10, 15, 20 cents versus $1.
Yeah.
$1, it's easy to make the adjustment.
Yeah. But... in a product that has 30% IV, not IV rank, 30% IV, like we're not selling strangles in there anyways for the this very reason.
Yeah.
Like if you're not getting paid enough to take the risk, especially on both sides of the market, there's other ways you can participate in that product. We usually go the debit route in that case. Like we do diagonal spread or something like that, where our max profit is probably higher than a strangle. We have a fraction of the actual risk.
Mm-hmm.
Tasty Canada coming soon.
I hear rumblings.
Marvel and EA today. How about a diagonal 95.89 December 6th put diagonal.
Okay.
95.89.
89. Yeah. $400. And that stock's basically at highs. I can do that.
Fading the gaming industry in a time like this.
This is chips.
Oh. I thought we were
It's
looking
not
at
like
EA.
Marvel.
Yeah. EA has earnings.
EA
Oh
is.
no, EA doesn't have earnings.
All right.
Oh, Marvel earnings announcement, EA. Got it. I thought we were looking at EA, the stock.
All right, I got price improved to 436.
There you go. 95.89. Yeah. 6 points wide, $4 debit, plenty of IV in the 3-day cycle, almost a 10% expected move, which is really high.
Mhm.
And then the back month is kind of baseline at low 40s or mid 40s. This 51% will crush a little bit, but it's a cheap directional exposure.
Yeah. I like it.
0-day trades?
I just don't think you're getting paid to take that risk right now.
Yeah, especially not today or tomorrow or the next day. There's just, like, this is such low implied volatility. SPX IV ranks at 6. The VIX is at 13.
Look at the VIX 1 day.
Yeah, it's not good.
I mean, that's
not ideal.
It's lows.
Remember when the VIX was at 65 in August?
Yeah, for
a
12
millisecond?
seconds. Silly.
Silly. Wow. We've rallied at almost 1,000 points from the Japanese yen unwind low.
When the world was ending.
The world was ending for just a little bit.
Yeah.
Oh, okay. There is CRM earnings today. Did you do?
Yeah, I'm short it. I got a lot of short delta here.
CRM or just in general?
Just in general.
A little pullback wouldn't hurt anyone.
Well, I've closed a lot of long positions into this move, and now the stuff that I have, like I have a at the money call spread in IWM. I put on the CRM position yesterday. That's got some short delta. I just did the Marvell one. That's got some short delta. I got a leftover SPX out of the money call spread. I peeled off the put spread because it trades at 70 cents, I think it was yesterday. So I've just, dynamically with the move in the market, I've taken off winning long trades. We're at all-time highs are right there. And now I have a little bit of short delta.
Naturally.
That's how it works.
It is how it works. Let's see. Any other trade ideas, questions? What do you got for us? Do I want to get short with you in CRM? I think I do. We have Dollar Tree and Dollar General. Dollar Tree is tomorrow before the open. So we can look at Dollar Tree, maybe place a sympathy trade in Dollar General if it doesn't move too much. And then we have Lulu tomorrow, or on the 5th after the close, Ulta on the 5th after the close. Yeah, I'll get into CRM with you. Why not?
Oh, no. We can both be wrong.
Why not? 22-point expected move. These things are surging higher. Okay.
Nothing else in the chat?
It's pretty light.
Got
Everyone's
blow everybody's mind
everyone's
with
chilling.
my amazing DraftKings trade.
I think you might have.
Volatility just nowhere. It's unfortunate.
Yeah. Let's see. What did you do in CRM?
I put diagonal.
23.10.
I didn't want to throw a ton of capital at it. I think I did something for like 400 or 500 up, something like that.
23.10.
660 or 693. I'm sorry, more than I thought I did. Intel, a Tom favorite. They fired. What's his name? The CEO. They fired the CEO.
Earnings in late January. $22 stock. Yeah, I don't have any.
You don't like that?
I don't have any qualms with that. Have I gotten even with Target yet? I have not. But I did reduce that loss significantly.
Mm-hmm. You rolled into like a new call diagonal, right?
Yeah. So I still have the remaining long option at 160 from the original earnings trade. The original earnings trade I bought for $595, so let's call it $600. It was the 160, 170, long January, short the weekly. The long 160 is basically worthless right now. So it was immediately a full loss. After that huge move, I was able to get into another call diagonal for a similar price. Did the 120, 130, long January, short December for $525. I sold out of it for $835. So I made $310 on that trade. So that reduces my current max loss of $600 to half.
Yeah.
And right now, Target sold off again a couple days yesterday. So I got back in to the February, January. So just going longer term than the one I did before. Long the 125, short the 140 for 760. And that's up 85 cents. So I'm almost there. Give me another $2 or $3 rally in Target and I'll have erased the loss from that huge red bar.
Yeah. But with contrary to a short premium position, like you were adding risk.
Yes.
This whole time. And so this is why, each one of these trades, I almost forget about the earnings trade.
Mm-hmm.
Like your earnings trade, it stunk. It was the wrong trade. You lost money. You've made money on your other trades.
Yeah.
But you put more risk out there.
Yeah.
Contrary to, the DraftKings position and other short premium trades, the benefit of them is that you're not continuously adding risk. If you're losing money on that trade and you roll forward, it's still the same amount of risk. Each one of these trades, you could have lost more money than your original position because you're putting more money out there. So those are two distinct differences between long premium trading, where you have to get your loss back, you have to outlay more risk. Mm-hmm. In long premium. If you buy a call and the stock goes down and you lose money, you have to buy another call, a new position, to make your money back at some point in the future if that option expires. Short premium, your risk is the same on entry as it is when you roll the position forward. It'll be different strikes, but the notional exposure is still the same. So good job out of you for the trades, but just putting that into context.
For sure. And that's really that's kind of why for earnings trades specifically, we've gravitated towards smaller debit trades, because every single year, there will be a time where we are buying a call diagonal and it drops 30%. Or we're doing a put diagonal. Yeah. Or we're doing a put diagonal and it rallies 30 or 40%. So we would rather have the ability to keep it really small. $500-$600 is well within the wheelhouse. And if you get that huge move, now you have another opportunity to play for a reversal if you want to, because you didn't risk a ton to begin with.
Yes. The DraftKings position, you could manage through a 20, 30, 40, 50% up move or down move in the stock over a year. For an earnings trade, you can't. You don't have that flexibility. It's the position gets too big too quick.
Yeah. Couple quick ones, and we can come back to another comment on that same thought.
Okay.
Sitting on an inverted strangle in UAL, 80.75 with 646 collected.
God, that stock. It's just been 40 to 860. Do we know the expiration?
We do not. Yeah, let us know what the expiration is, but...
What were the strikes again? I missed.
80.75.
All right, let's just say it's January.
Yeah.
So you're short that.
Short the 80, short the 75. Yeah, I mean, there's not much you can do here. This is kind of a wave the white flag scenario.
Roll the put up.
Yeah, you can roll the put up. Your short call, if you're in January, doesn't have that much assignment risk. Even if you're assigned, it doesn't change anything really. Yeah. Because it already has big delta, 90 delta. So if you roll the put up, you have 646 collected. You're out $1,500 right now. If you roll the put up to, I don't know.
Oh, they're in December. So you got to roll that out to.
Yeah, I would roll that out for sure.
Yeah, roll it out to January and go inverted. And even if you get caught into a down move, I'm just going to see where you could roll this.
Even rolling to January, if they keep the same strikes, you're collecting $1.30.
Yeah.
But
or go to like the 80-90 if you're worried about assignment.
Yeah. You could actually move it from the January current trade that you have to the 75.85 in January, pick up 220, and you'd be at 866 in premium. I mean,
you'd love to get out of this for $100 loser.
Yeah. because then you're at the expected move to the downside. If you get that move down 10 points, you're in a much better spot, and you're still leaning pretty short here.
Yeah.
So yeah, I would do that. I would either go to the 75.80 or the 75.85 or even
You
the
could do the
75.90.
80-90 for
Yeah.
a dollar debit. Like
That
you
is true.
gotta do something though.
Yeah, but you need to add extrinsic value to that position, because if it keeps running away to the upside, you are going to be in a worse spot if you stay in December with no extrinsic value.
Yeah.
What do we think of Oracle? Dough funnels. What do we think of Oracle?
Well, it's got earnings coming up the 9th.
Yeah, I might wait till next week.
Yeah.
To trade this one, because any trade in here, like it's pretty low IV, 38% in the back months, 13-point expected move for the earnings cycle. So we'll come back to this next week, I think, and we'll place an earnings trade. But it's definitely on the table for doing a diagonal spread or taking some directional risk here.
Yeah.
Almost a 14-point expected move in the weekly relative to 16.5 for January. It's a big differential. How are we trading IBIT? So this is going to be my year-long trade next year. This one is different than MicroStrategy because it's still going to behave similarly. Like if Bitcoin rallies in a big way, IBIT implied volatility will go up. The IV rank is at -10 in IBIT, which means the current implied volatility of around 60% is setting the new low for the last year. The difference is IBIT is not leveraged. It's just straight up Bitcoin. So even if Bitcoin doubles in price, this type of trade, like selling a 50 strike put in January and a 70 strike call in January, you're picking up $4.
Yeah.
And it's a $50 product. So like even if it goes to 100, if it doubles next year, we'll be able to manipulate this strangle and we'll be okay.
Yes.
So
yeah.
Because the implied volatility for January of 2026 next year is 30 points. So it's projecting it to go up
or down 60%.
Yeah.
50, 60%.
Yeah. So yeah. The difference there is that MicroStrategy is levered Bitcoin exposure.
Yes.
Where IBIT is straight up Bitcoin exposure.
I have a crab trade on. That's what my trade is currently. It's up like $90 or so, but
yeah, I have the Psycho Bull. I taught Ryan the Psycho Bull. He was a big fan of it. We were on one day.
You sold
the 50 put in January.
And then bought the shorter duration call spread.
Yeah, bought the 55.65 for a net credit of $1.10.
Yeah.
So anywhere below, if it stays above 50, I make $110. If we get anywhere between 55 and 65, I have 100 deltas of exposure there in that range. So we'll see, but looking good right now. And then I'll throw on the, I think I'm going to do something like that, like a 50-70 strangle. Or a 50-65 strangle, just a skewed strangle to the upside, take advantage of the call skew.
Yeah.
That's where I'll start for next year, and then we'll just roll perpetually month to month, adjust the strikes as the market moves, and we'll have a beautiful risk graph at the end of the year.
No, I like it. Good pick. I got to figure out what I'm going to do.
Got to do it. Does looking at skew help you arrive at a directional bias? Yes and no. I think if you're bullish and a product is call skew, like Bitcoin or whatever, then your setups are real easy. Because like a call diagonal spread, you can move that call way out of the money. You have a big, nice profit range if you're right. You're still reducing basis in a big way. If you're bearish and there's put skew, it's an easier trade to click because you're same story. You're collecting more premium on the downside. You can move that strike further out of the money. If you get that move, you're going to have a much wider range of profitability. But for us, skew just tells us like about the product.
Yeah.
So like any tech product with significant call skew, you should expect to see big moves to the upside and downside, but the velocity of moves are typically going to be seen to the upside. SPY and the Qs, they traditionally have downside put skew because we see this kind of grind higher, and then you have crazy scenarios where the market drops 10% in a couple of days. So call skew products, if you're bullish, it just makes it easier to make that trade because you're taking advantage of that skew if you have a short premium component on that side of the market.
Well said.
Double calendar and CRM.
Not for me.
Yeah, it's tough because it's just not. There's not much premium in the short options. Like normally when we look at this, we want to collect 50% of the value that we're buying in the long option. So if I'm buying January, I want to be able to sell a weekly option that's 50% of that value. We're just not seeing it there.
Mm-hmm.
Rory Scotty or Bryson Brooks, December 17th. Are they doing a match?
Bryson hit his shot over the house. Did you see that one last week?
Yeah. Love to see it.
Yeah. I thought we would get a broken glass shot.
Yeah, but I guess it's if you're a pro.
I know, but like everyone, you have like that one
shanks.
little quick, something.
I would say Bryson and Brooks because I don't believe Rory. I just don't see him as he doesn't have that killer instinct right now.
Oh.
Scotty does, but Rory has faltered too many times. Bryson and Brooks, all day.
Right.
And I'm not even a live guy. I think we're done.
Cool.
Yeah, a couple more questions there, but if you want to reach out to us, we can answer them on the Twitters.
Yes.
I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got lots more content coming your way on the YouTube channel as well as tastylive.com, so stay tuned for that. But yeah, hopefully you like this DraftKings Anatomy of a Trade. We'll archive the slides if you want to review them in a little bit on the Tasty Live website. Just go to the Options Trading Concepts Live archives. You can find it at the top of the nav bar there. And we're going to do mine tomorrow. So we'll have two that you can compare and contrast and see the similarities and differences there. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No. This is mine.
Take
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want it.
I'm the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly, this is the mayor, and I'm overturning everything, and
You're
I'm
in over
allowed
your
to
head.
buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a Zoology? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue, a beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
We are back. It's still Tuesday, December 3rd, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, is the market even open today?
I know, right? It's kind of how it's been, and not really a surprise. And we need a catalyst, and we know what they are.
If you're listening out there, the market is open on this Tuesday. The holiday is done. No idea why we only have 600,000 contracts traded here on ES. Although I guess it's my fault because I haven't placed a trade today, just kind of watching and waiting as things unfold. Jamal, it's a day where we've had some interesting headlines come out, and yet the market still is pinned. What do you make of this price action thus far as we reach the halfway mark of Tuesday's trading?
I'm doing the same thing, honestly. I mean, look, I'm sure there's plenty of trades. There's a lot of different trades, honestly, if you want to be directional. And I've changed a lot from that over the last few years. I'm not as directional as I used to be. And as a result, I'm more vol-based, or I'm more trading in things that are, I guess, moving around a little bit more exciting, and there's usually more volatility. And so this environment doesn't really excite me. And kind of like you said, I haven't placed a trade. I've had futures trades over the last couple of weeks, but I haven't had a vol trade in the better part of 2 weeks for this exact reason. I mean, we know what's been going on here. We've been watching. We're trading every day. We're paying attention to the fact that the election came and went, and things have been fairly quiet since then, as they should be. But I continue to maintain the fact that we got 2 big events. One of them is later this week, and I think we're just kind of sitting and waiting until that comes.
We'll go through those events in a little bit here as we turn to the charts for today. Commodities are perking up as the dollar's dipping back ever so slightly. The yen draws some interest given some of the news coming out of Asia. But let's talk about the U.S. economic data that came out this morning. JOLTS came in better than expected. And you know what? It's helping glide the economy towards a pretty strong fourth quarter. Job openings are up because the labor market remains strong, Jamal. 3.2% growth reading on the Atlanta Fed GDP Now tracker, 1.81% for the New York Fed Nowcast. Let's just split the baby. Let's say we're growing around a 2.5% real growth rate for the fourth quarter. This has been consistent with the trend of data that we've seen for most of this year that has undergirded the rally in stocks. So yes, the Fed may not need to cut as much as they hope they could next year, but thus far it seems like it's going to be for a good reason.
Yeah, I mean, the economy's in a great place, a really great place, actually. And I don't think the jobs number is going to do anything to destroy that narrative. But I think everybody's trying to figure out where we're going next, right? That's the way it's always been. And obviously some things have changed. We'll see how they all end up materializing. But for now, I don't really see much reason why you shouldn't be long stocks. There might be a pullback here and there. And I think we all don't want to buy ahead of a pullback. But if you're long, remain long. There's no reason to change that narrative.
Not right now. In terms of those data points this week, we're obviously looking forward to Fed Chair Powell's speech coming up. We have non-farm payrolls coming up, ISM services, weekly jobless claims. So there's a lot of fruit to pick here, plus next week's CPI report. And then we have the Fed rate decision on December 18th. This week is the last week that we're going to hear from Fed officials, of course, because the communications blackout window starts on Saturday. So lots more to come. Kugler, Goolsbee still due to speak today. I believe we have Wednesday's Powell speech at 1:45 p.m. Eastern. So while we're in the middle of Futures Power Hour, he'll be talking, and that will provide us something to work with here during the show, because there's not much to work with here today.
Kugler and
Listen,
Goolsbee.
sometimes
those names sound like they're part of the Revenge of the Nerds or something like that. I mean, they kind of do. Kugler and Goolsbee. It's like Wormser.
Right? What am I thinking of, like the Kugler from? I don't know. Maybe that's a Frasier thing. It's just in the back of my head. But it's like, these Fed officials, they're going to be talking, and it sounds like some 70s, buddy cop show. Kugler and Goolsbee.
Yeah, really.
Attorneys at law.
7 p.m. Central, 8 p.m. Eastern.
Right. And then there was that commercial, which, would come on when I was a kid. It's 10 p.m. Do you know where your kids are? It's like, oh, great parenting. We have to remind people where they're, check on your kids, by the way.
Went from latchkey kids to kids on the wild. Do you expect a little bit of bump in GDP at some point, though? Because, again, GDP is two-thirds of GDP is consumer spending. I would imagine there's going to, in the fourth quarter, there's going to be a little bit more bump there going forward. Do you think that's going to throw things off a little bit when it goes forward?
Consumers are still in a fairly strong position. There has been an increase, again, in auto loan delinquencies, credit card delinquencies. We see that consumer credit is starting to go up, but the savings rate has increased. We know that real wages are starting to go back up and sticking higher, despite the fact that inflation's come back down, which is ultimately a good thing. So people still feel confident that they can spend moving forward. And broadly speaking, because of the shift in half of the electorate post-election, the average consumer out there is feeling much better about where their finances will be over the next 6 months compared to, say, where they felt about their finances on November 3rd, 2024. Maybe something happened in terms of the direction of the country for a certain segment of Americans that make them think that things are going to get better all of a sudden. But we've covered that chart, right? How every 4 years, Democrats get really pessimistic or optimistic, and Republicans do the same depending upon who's at the White House. And that, to me, is just so silly. I digress, though, Jamal. 581,000 contracts traded here in ES. That is a snoozer of a day. It is a snoozer of a price action because we are unchanged on this session. Wake me up when December ends, I guess. Not quite the Green Day song, but what are we doing here at the start of this month? Why is there so little activity? Is it just because of a holiday hangover?
Geez. Let's look here. I mean, we know what was going on in August. Everybody was worried about rates. It was a lot of the same thing in September. If you go back to June, I think it was kind of the same thing. And basically at the beginning of November, there is the election. And that's kind of been the year in a nutshell. And so we're not as worried, I guess. I think we are still kind of worried about rates, but we're not sure how we're supposed to be worried about them, right, at this point, because there's been an administration change and there's some expectations for tariffs and all these other different things that are going to drive it. So I think, the market is there's been a clear shift. This is one of the reasons why I've kind of held off on trading to some degree, mostly because volatility is low and I'm mostly a volatility trader. But even directionally, I think there's clearly been a shift and a change. And like you said, December feels like it's all but predetermined that we're just going to continue to drift higher and there's not going to be much volatility for the rest of the year. I definitely think the latter is the case. I don't know about the whole idea of drifting higher every single day in December, but there is no volatility for the rest of the year, I don't believe. And so, I mean, that's what we're looking at in the market. And it's not a strange thing. It's definitely a breather. We've had, I don't want to say we didn't have a volatile year, but it wasn't a boring year. That's for damn sure. We had a lot of different movement. We had a lot of different interesting things happen at times. There were a lot of different narratives. And when you really look at it in totality, it's been a real busy 4 years. Every year, right? 2020, 21, 22, there's been some serious narratives, a lot of different things happening. So This is somewhat of a sort of a breather. It's almost a climax, if you will, after what we've dealt with over the last several years. And I think things are going to change going forward. I think we're going to have probably a couple of new leaders come out of this stock-wise. And I think markets are going to be resilient as always. I'm not here to predict how we're going to end the year next year, down or up, but I almost want to say I don't know if they're going to be as volatile as they were the last couple of years.
2020 was obviously the COVID year, but we still managed a double-digit gain in stocks. 21, we have more than 20%. 22, we lose around 20%. 23, we gain around 24%. 24, we're around 24% so far. Yeah, I mean, expecting another year where we have 20% plus gains would seem unlikely. Maybe it's like what we saw in 2017. The market comes in, and I think, America comes into 2017 with the Trump presidency, and where's this going to go? What's the direction? And yet volatility was on the floor all year long. It was so low. Maybe we're back in that float right now. Since last Tuesday, Jamal, both the S&P 500 and the NASDAQ have had IVRs that have been holding below 10. This is a really, really, really light environment right now. And so on yesterday's Future Power Hour, we were talking about if you wanted to stay bullish, how would you structure that kind of exposure here? And we were exploring how you would do that right now. From my venture point, Jamal, this doesn't seem like the kind of place where, the typical tasty methodology is really going to yield the juice that you want to squeeze out of these trades, simply because the risk to reward isn't fantastic when you get into that 65 to 70% probability of profit in those short put spreads right now.
No. I mean, that's because the traditional tasty methodology isn't necessarily built upon being directional. I mean, that's the thing, right? And there's a multitude of ways you can maintain directional exposure if you want to. Honestly, I don't really love any one of them, and that's why I'm not doing it. But yeah, you could be long the future here, just straight out, right? You could use options, and you could get short closer to at the money put spread. Because again, traditional tasty methodology, this type of put spread is what you want to, not this one per se, but let's just use, you could collect that. That's great, but that's not directional. I mean, but if you really wanted to get directional, you get closer to the money, right? But do you really love that? That's the real question. And you're not selling, real volatility here, because the volatility is on the lower end of the entire year. You could just buy a call spread, which again, things to do when the vol is low. You could buy a call spread with a pop that's greater than 40%, probably 45. You could do that as well. That's more directional, but again, you're exposing yourself. You're paying a little bit more than what you'd be doing in this short put spread. So the short put spread is probably that's definitely the closest to tasty methodology. But I think I, like a lot of different people, don't really want to do that right now. I'd rather wait to see if there's a pullback and there's a little pop in vol on that. And I think you'd see more people pile into those, particularly to the end of the year. Like if for whatever reason we get a pullback on Friday, I think you're going to see a lot of money jump back in for the end of the year ride. No doubt about it.
I know there's been some talk about the VVIX being elevated at these levels. I was eyeballing it this morning, and the last time the VVIX was at these levels, late September 19th, actually, the day after the Fed meeting. You go back into, even points last year, you're not exactly seeing VVIX peaks line up with the top of the market. It almost seems like it's a waypoint to determine whether or not we should continue along the current path, and then we set along that path for the forthcoming weeks. Do you see the confluence, the fact that you have volatility or the volatility of volatility elevated to these levels against a backdrop of non-farm payrolls, a Fed Chair Powell's speech? Is this kind of a perfect storm to get these IVRs out of the single digits right now and produce a volatility bump as we make our way through this first week of the month?
I think it has the chance. I know I'm hoping for it. I don't necessarily know if it happens. But that's what I'm hoping for to some degree. And again, that's just as a medium-term trader, right? I think this is the time period to really distinguish between, what we talk about most of the time. We're talking, I'll just go out and say we're probably talking about a 45 to 90-day window when we're talking about trades for the most part, maybe even sometimes a shorter term. For longer-term traders, this is exactly what you want, and this is fine. I don't know. Honestly, for longer term traders, none of this volatility talk should matter to you. If you have long term stock or et cetera, I mean that doesn't matter. But for what we're talking about day in and day out, whether it's near term trades, whether you're doing zero DTE stuff or any 45 to 90 day window option stuff or just straight out futures, I think I'm looking for some type of volatility out of those couple of events we talked about. I don't necessarily know if it comes. Does that mean I want to buy volatility here too? That's a hard trade in and itself. I just don't know. If you're buying volatility expecting August, that's crazy. I mean, that just doesn't happen too often. That's one of the reasons why when August happens, even a little bit of the beginning of September, you got to lean into those vol selling moments because they just don't happen too often. And a lot of times ends up being like this. I will say, for whatever reason, though, I think it's just in the wake of the election, things have really been calm over those last several weeks. And usually I would trade in this type of environment, but I just don't necessarily have a feeling directionally right now that I'm super confident in. Again, I do feel like the market's going to generally drift higher, but I guess I would prefer somewhat of a pullback. Now, what if we don't get that pullback for the next month and change? Maybe something here or there causes me to trade a few things. We do have earnings coming up towards the latter part of January and beginning of February. I hope it's not that long before I really start any trades, but I don't know, Chris, there's not anything that really excites me. Perhaps I should have held on to my bond trades a little longer. Obviously, bonds have been stronger the last couple of days, but equity-wise, there's not as many things that excite me more recently. And so I've just chose to sort of wait this out in the meantime.
Yeah, I mean, in this environment, just walking through here on the screen, trying to set this up as a mirror image. If we want it to be long the 33 delta calls, short the 25 delta calls for a long call spread, that gives you the 40% probability of profit. The max profit is a little bit more than 2 to 1 in terms of what you're risking to what you're looking to get rewarded here. If we were to flip that over and turn this into a short put vertical where we're doing the exact opposite and we look out to doing the 33, and let's pull you up here. So basically the same thing, right? The 33 and the 25 deltas. Okay, that's a 68% probability of profit, but your max profit is less than a quarter of than what you're potentially risking. In fact, you're risking much less for much more upside, expressing the same point of view long delta. Why do we bring this up? We've got over these data points before, but from 2005 onwards, the studies that we have here, if we were to record the average daily return and volatility of returns of long ES versus the average daily return and volatility of returns of the short ES 20 delta strangles, sold closest to 45 DTEs and managed at 21 DTEs, we see that in this volatility environment, when the VIX is below 15, long ES produces an average daily return of plus 0.135. So 0.13%. Short strangles produce an average daily return of only plus 0.06%. On the flip side, the volatility of daily returns when the VIX is below 15 for long ES, it's 0.5%. And for the short strangle, it's 0.7%. So the point is, in these low vol environments, selling vol is really not the best way to express a point of view, right? You either be long the underlying or short the underlying directly. You're going to have higher, again, history being our guide here, statistically speaking, you're more likely to have higher daily returns and lower volatility of those daily returns if you're simply long ES versus trying to sell the vol if you're looking for that long delta bias right now. And it's tough because you're buying at all-time highs in low volume. It's difficult to justify, but new highs beget new highs. And Jamal, this has been a set of circumstances when you and I have been working through this all year long. If the vol is low and the momentum's positive, put in your trade and just kind of sit back and wait, which is why today I'm still just putzing around, right? The ES call spreads are still working. There's no break in the momentum. No reason to change something if it's not broken.
That I completely agree with. If you've already been long, you stay long. There's no reason to change anything that's been broken. For those who are looking to, maybe you had some on that you were long and you got off and now you're trying to decide whether to get back in. And Chris is right. It is hard sometimes to buy at all-time highs with low volume. Again, that's why in the medium term, like when we're talking about medium term trading and medium term portfolio, that's why I haven't really gotten back in. I've kind of weighted. There are a couple of different things that I have my eye on, individual names, and then there's also looking at where we're trading, whether it's ES or NQ, but they've been strong as they should be, and they're both, trading above short-term moving averages. So, again, it's not bad. I'm not saying there's anything wrong with it, and perhaps I should be getting long, but for now, I'm just kind of, part of it is just me. And I've traded so much over the last couple of years. I've kind of taken a breather. I have 98% of cash on the sideline. I don't think I've had that, and I've had it for this long. I don't think I've done that. I don't know. I don't know the last time I did that. So part of it is an exercise of that for me. I'm looking for a really good trade to get me out of bed and get me awake right now.
Last September, this is going to be a walk down memory lane. Last September, we were looking at the AAII Investor Sentiment Survey. In fact, better to show than tell, just to substantiate this. We wrote something up on the tastylive Traders blog on September 28th last year about this. And we pointed out that when you saw a net 3-month change in bearish sentiment that exceeded 16.5%, that had marked an important turning point and low in the market. And just on the basis that people got too bared up too quickly, we were starting to lay into those long stock positions last September. Now, granted, at the time, the S&P was only 4274. So we have traveled 1,800 S&P 500 points since then. I bring that up because we've seen now a new round of AAII sentiment survey data, which if we can just eyeball that here, bullish is 37.1% and bearish is 38.6%. There are more people now expecting weaker returns in stocks over the next 6 months than those expecting stronger returns. But that's not really the noteworthy point here. If we were to go back 1, 2, 3, 4, 5, 6, 7, 8, we go back 12 weeks. And where does that bring us?
September 11th.
Okay. Well, September 4th, we have a shift of 38.6, 24.0, and that's 14 points right there. And we think about the difference between bulls, that's 7 points. There has been a net 20-point shift towards bears over the past 3 months. And I think about that study that we did last September when we saw that when there's a shift in excess of 16.5 points, it usually marks an important turning point and low in the market. And we've now experienced that once again. So when I think about how this is structured right now, low vol, positive momentum, this is a market that still screams there could be some upside ahead here. So no surprise, Jamal, I have my long calls in ES and Q and RTY. I will be holding them, and I'll keep staying on this ride for now.
Yeah, I mean, that's exactly the kind of market we're in. I guess talking about other ways to get long, I guess another way that I was kind of analyzing today is you could do some cheap covered calls. You could do some cheap calendar calls using the end of the year expiration, December 31st, and maybe, selling various strikes along the way. I mean, it depends on how far upside you want to go. If you want to go, 10% upside and get long one strike, and then, you could get long depends on how you feel, whether it's 6,100 or whether it's 6,200, 6,150. I don't know. You could pick any one strike you want, and you could sell, the near term expirations along the way. You could sell, say you wanted to sell the 6,100 in this expiration and get long the 6,100 and the D's 31. So the end of the year, right? Or whatever your end of the year target is. Say you think it's 6,200. However you want to structure it, you could do calendar calls in that way. That's one other way. Besides, that's probably cheaper than having any future and anything like that. That works.
How do you feel about the first quarter? I think seasonality-wise, we've had a pretty good stretch of the past 2 years where the market has really ebbed and flowed in line with what the typical seasonality is. Mm-hmm. Choppy first few weeks of the year. You get a spring rally into summer. You get a pullback into the fall. You get a fourth quarter rally. That worked out clockwork in 2023, clockwork in 2024 so far. Do you feel like this market's overextended a bit in the short term, that once we turn the page to January 1st, or I suppose to January 2nd when the market reopens trading, we're going to go through a period of deleveraging again? Should we be concerned that we shouldn't be setting those durations, so to speak, well into January if you're a bull, is what I'm getting at?
Yeah, I don't. I feel like it could be similar to what we had last year. Like you said, a little choppiness to begin the year as I look back. And we mostly rallied for the first quarter, right? And then as soon as April hit, actually, it seemed kind of surprising that we were falling in April as it started. I felt like it was, sort of, it was somewhat surprising, but yet and still there were some jitters that came out of nowhere seemingly, and then we resumed the same trend again. I feel like it could be a similar deal, especially as things start to come into play about what the new administration is setting forward, and you start to see somewhat of a shift in some of those different companies and how it's going to affect those underlying indices, whether it's Dow or S&P. I feel like we could probably see the same thing again. But of course, what ends up driving it is earnings, right? Which we usually get towards the end of January, beginning of February. That's what determines sort of our direction for the quarter. And I remember the beginning of last year, we were still kind of on with regard to earnings. It was like, are these companies going to be able to show that they're doing well in an environment at higher interest rates? The narrative now is going to be, I guess, it'll be somewhat of what we discussed at the last time the Trump administration was in office. How are certain companies going to be able to handle tariffs, and how many of them are going to pass those costs off to consumers and their different other partners? I mean, I guess that's probably going to be the biggest narrative going into earnings. But you know what? It seems like companies always, at least the last several years, seem to find a way to thrive outside of 2022, late 2022, 2023. I think we were seeing something different, and those earnings were really rough. But outside of that, I would imagine the earnings are going to be positive, and I think first quarter is going to be another banger.
Jamal, we turn our attention to the bond market here on this Tuesday, and what an interesting morning the bonds had. Jolts came in better than expected, but that wasn't necessarily the move or the news that was driving the market this morning, right around 8:45. We had news that U.S. ally South Korea would be declaring martial law. South Korea's President Yoon Suk-yeol declared emergency martial law earlier today, accusing the opposition of controlling the parliament, sympathizing with North Korea, and paralyzing the government with anti-state activities. And during a televised briefing earlier, Yoon vowed to, quote, eradicate pro-North Korean forces and protect the constitutional democratic order, unquote. So bonds got a nice little lift there out of the news. The South Korean parliament has since convened, Jamal. Martial law is over in South Korea. A whole 3 hours it lasted. I guess we're seeing some sort of crisis there unfold because the Korean won has been going through a bit of its time in the barrel here today, the worst performing major currency. It's helped drive some interest in the yen, a regional safe haven. But in bonds, it helped drive a safe haven move itself. We see that lower yields come into play. This, of course, is short-lived. I guess South Korea is going to go through a change in government. They obviously don't have a problem doing that. They like to jail their former leaders frequently, all the time, for corruption. They have several former presidents who have been jailed. I digress. This little bit of interesting news that, quite frankly, did not inspire much of anything in terms of significant trading volumes. It's giving us an inside day here in ZB, a day after we actually just broke through significant resistance. So perhaps a breather of sorts, getting our bearings to determine the next move is worthwhile. But what do you make of this rally in bonds? I certainly haven't been a participant, and I haven't been tempted to jump in either.
First, I have to say it's really always interesting to me. You get and I'm not saying you make light of it or you smile. It's just an interesting twinkle you get in your eye when you talk about geopolitical stuff. There's something about it. It's alluring, Chris. I don't know what it is. I don't know how you do it. I don't know what it is. It's really kind of it's amusing to me. I mean, but with bonds, I got to say,
my corpus callosum is just cut right down the middle. So it's just
with bonds. I famously got out in the last 2 weeks ago, and the one thing I probably should have done that I thought about doing was selling some vol, but I think that probably would have. I was going to sell the 113, 121 in here, I think, and I ended up getting cold feet. Ended up not doing it. I probably should have when IVR was about 45 or so, but I don't know. I mean, this is another. I'm glad I got out because I'd be all confused in a way right now. I mean, I don't know exactly, what drives bonds as much anymore. Honestly, I really am kind of thrown off by it. I don't know. I throw my hands up to it. That's the reason why I got out. But it is interesting that for the most part, I didn't feel like there was much of an impact on our equity markets what went on over there, but you can clearly see somewhat of a move here and somewhat of a move in the dollar as well. Other than that, it's kind of surprising to see, there was somewhat of a move based on that news. But hey, I mean, I guess, somewhat any instability across seas kind of leaks into, all these markets are somewhat connected and countries are somewhat connected in some way. Instability in that magnitude is something to keep an eye on, particularly if things escalate, which hopefully they don't. But, the bond trade for me, again, I think the best opportunity was to sell some of the vol over a couple of weeks ago, or I should say the last 10 to 10 days. It's seemingly calmed down now, which makes it less of an interesting trade. Of course, it's another one where you'd have to go directionally, and I'm the last person who's going to tell you where bonds go directionally. Tony Batista often talks of himself as the world's worst bond trader, and I think I beat him for that title this year, I feel like.
We can see here that when we get the news out of South Korea, bonds go up. When we get the JOLTS jobs report, bonds come back down. Job openings higher than they were last month in October, 7.74 million. So a nice little bounce back, about 300,000 more job postings than what we saw in the previous period. Again, there's this dichotomy right now, right? That the top level macroeconomy is doing well. There's a reason why we have a 4 handle on the unemployment rate. There's a reason why there's a 2 handle on CPI. There's a reason why stocks are sitting at all-time highs. It's not a coincidence. And the labor market holding up, quite frankly, is a good thing. You and I have both been of the mindset this year that while the market really does like the prospect of lower rates, it also enjoys the idea that it doesn't necessarily need them because the economy is growing so robustly that corporate earnings are abundant. And in this world, if you have more people with jobs, that means there's more disposable income circulating through the economy. Jamal, you mentioned will consumers, continue to power spending through this fourth quarter? Hey, if companies are staffing up, it probably means there's more aggregate demand within the economy at the moment. And that's a good thing. So bonds here, I'm waiting for a rally to sell that rally insofar as I'd like to put on the short iron condor position again. I'd like to get us back to the midpoint of this recent range. Fed rate cut odds are probably at a low point unless you think, of course, recession is coming. And I have difficulty thinking that recession is coming right now, as I have all year long, outside of, a few brief windows where we were examining, hey, is the SOM rule accurate? Like early August, did we have to consider that recession was approaching? And the answer was no. So until that changes, bonds to me at a 13.3 IVR, this does not intrigue me at all.
Yeah, me neither. And again, this is more of a directional trade, and I'm just not willing to be directional in here at this point in time. So no trade for me.
No trade for me either. ZN, ZB, both are giving a similar setup. ZN obviously is the more approachable of the two products for retail traders, half the overnight buying requirement. Tick value is half the size of ZB, and yet it is even less appealing than ZB, Jamal, with the 7.9 IVR. Folks, there's better places to put down capital right now. Interestingly enough, a rates-sensitive part of the market, currency, has very, very high IVRs at the moment. So if you're looking for something rates-related, maybe it's the FX futures that should pique your interest rather than ZN or ZB here. Jamal, let's turn our attention here to metals, which are scratching and clawing off their recent lows. Silver up by 2% or so. We also see a healthy rise in copper prices here today, up by 1.68%. Jamal, volatility continues to come in here, though. This is a 27.7 IVR in silver. As we've seen over the course of this year, contracting volatility is usually a hallmark of an environment defined by softening precious metals prices. So with that in mind, this pullback in silver prices, silver vol over the past few weeks, do you look at today's move higher as potentially something to fade, or 27.7 IVR in silver? Why are we even bothering?
I actually don't look at it as something to fade. For me, I think the main reason I'm still holding on to my silver calls right now is I'm interested to see how it's going to respond around the two big catalysts that we have for the year, whether it's going to be the jobs report or whether it's going to be the FOMC report. I want to see that for either one of the metals. And so that's my reason for holding it. It's not so much, kind of quick trade. I guess it's more of how it's going to respond around those events. And, I think we've seen sort of silver kind of pewter out a little bit, but we could be seeing a resurgence coming up soon, depending on how it reacts. And, again, I think this is mostly related to some of the unrest overseas as well. When you see what happened in here, you see what happened in copper and in gold a little bit. I think that's part of it today. It could be a little bit of that. But I'm holding it for the remaining, big events of the year.
Silver and gold to me look an awful lot like potential head and shoulders patterns, Jamal. And there's really two ways to slice this. Head and shoulders pattern would be valid, but we're going to have to see a break of a neckline first here in gold or potentially here in silver. And if we don't see breaks of the neckline, then they are just sideways chop and ultimately could be continuation patterns, which is why in gold at least, I'm entertaining the possibility that this is just a symmetrical triangle that's been forming here. And that's something that head and shoulders patterns can look like as they're forming up. Which one will it be? Is it going to be rain or snow today? We see the clouds coming in, but what kind of precipitation are we getting? We haven't got the final temperature update just yet, Mr. Chandler. And in this case, we're sitting dead center in a place where we could be teetering over for a top. We could be chopping and grinding into the vertex here, which brings you into the end of December before a rally at the start of the year. Or maybe that's the top, and we see a significant fall at the start of 2025. This isn't a super appealing place to be directional. So I'm still holding on to the gold call spread I put on a few weeks ago as part of that continued chain of trades and rolling up those long call spreads. I'm probably going to close that at a loss here. I'm totally okay with that, given the strategy that's employed in the momentum breakouts. Just, part of the risk you take, right? Hazard of the job. But this is something that requires patience. This is not a place where you bet on the upside right now or you bet on the downside right now. You need more resolution if you're going to be directional here. And the 57.2 IVR, again, just like in silver, volatility continues to pull back as prices come in. We need to see that level out a little bit more before we get really optimistic about long deltas moving forward.
Yeah, that's the one thing. I mean, if you're initiating position here, you're looking to stay long or get long, I should say, in your initiating position here, what you have laid out kind of shows like you might want to be a little bit cautious, and especially the vol thing is you're a little bit acute, right? We all know, for those of us who trade a lot of metals, that most of the time you're going to see the implied vol rank bid, and both of them have come in when you look at silver and gold. So that's probably the biggest warning. Again, I have a small position in both of them, so I'm not necessarily keen to get out just on this move here. It doesn't necessarily make or break me one way or the other. But if you're initiating, this is something to pay attention to. I'm holding again. I want to see if there's something that happens around the jobs report, and depending on how that goes, I'm probably holding through FO, or at least up until FOMC, and determining then what I'm going to do.
Do you have a read on China right now? I know that copper is frequently viewed as a read-through on China itself. And, granted, how it behaved in September when we had all those stimulus announcements, for good reason, people look to it. Of course, since the election, it has seen a bit more weakness. The anticipation of those Trump tariffs not doing any favors here. But we're bouncing around near 405. It's been support in recent months, but for a very minor overshoot at the start of August, which I think we can forgive copper prices for that. Everyone was freaking out at the start of August. So for better or for worse, we can call a line in the sand 4 to 410. Is this a tradable low here with a 40.9 IVR in copper? If you're looking to get away from something like silver, which, Tom has pointed out in the past, copper, more liquid, tighter bid-ask, better futures market than silver.
To your first question, I have zero read on China. I really do. I used to pay attention to a lot of those storylines and what's going on. I mean, I have a high level of it. I really don't get into the weeds of it as much as I used to, because I just don't find it gets me anywhere with regard to trading any of the names, like the Chinese names or any of the ETFs, the famous ones we all know, if it's FXI or BABA or Baidu. We've seen a lot of times where they'll get big pops and then the big fades, and similar deal with some of these metals, right? But particularly this one, I feel like more encapsulates what's going on with China more often than not. So I don't have a read. But again, it doesn't matter. I think when we talk about a lot at Tasty, it doesn't matter if you have the read or not. It matters what's going on with the implied vol rank and with the chart, at least from our standpoint. And the chart, man, I mean, this does look interesting. We saw a similar thing though in August, right? You saw the big bump. You saw the move upwards, and I wouldn't blame anybody for taking advantage of it here, because it looks like it could start to resume an uptrend. But On the other side of that was September and the big fade there. So I guess you gotta, choose carefully whether you're going to move forward and how you're going to move forward, whether you're going to get straight up long the future. Is that what you'd want to do here? I don't necessarily know how much I'd want to sell vol. I personally feel like vol is more interesting to sell in these metals when IVR rank is much, much higher. And I just don't know if this is quite high enough. This is probably indicative of just maybe getting long a call spread or maybe just the future itself as it bounces and tries to get back above some of these moving averages. So that's how I view it. But again, I'm not trading this. And I do, obviously, there's a big connect with China. It's just a matter of how much you want to dig into that. And me personally, I haven't done it.
We don't have the IVR is not pulling in the lower panel here for HGH5. It says an IV rank of 40.9. We could use CPER, the ETF, and CPER.IVR on the platform to pull that up in the main panel here. It's giving a slightly different reading of 24.31, but the general, the general trend though is like we've been seeing volatility edge lower basically in copper prices, and so at these levels here, this is support. Yes, it does matter. Maybe it's a double bottom, but we're also failing today. We're also failing to get through that 1 month moving average today. That's a pretty strong rejection, Jamal. I mean, this is something that's now 10 cents off of its high. I would garner that there is a little bit of a sideways range that's now formed in here. That's a triangle. I want a rectangle. Let's go to the rectangle. We have a little bit of a range that's forming in here right now. And perhaps if we can make an advance to 425, if maybe get a little bit more vol, then you have something of a double bottom and you could trade off of short puts or even, bracket it, short put spread and then a long call for what we'll call this a 20-cent range. We'll call it up to 445, middle of a congestion area that we had in October. Not unreasonable. But this year, again, tight range, low vol. Not exactly the most appealing thing in the world.
Yeah, I mean, it's not for the most part. And it's a little scary, too, when you don't necessarily know everything that's moving it. So that's why I haven't really touched it. And again, the biggest thing that seems to move it at times is what's going on with China, which has been highly unpredictable.
Highly unpredictable, much like energy these days.
Oh, God.
Crude back to $70. We had 4 days in a row of losses. Yesterday, a brief pop, then drop, and today we are back to where we were effectively at the highs last Tuesday. So nice round trip here over the past week, much ado about nothing. It's still sitting in the middle of this multi-week range, which for the life of me, hindsight being 2020, instead of saying, no, this is too tight of a range to do iron condors unless you're a real cowboy. Well, the Cowboys win this one, Jamal, because this has gone absolutely nowhere for the past now 7 weeks. I'm still not trading it like it's a range. I'm not trading it at all, in fact. I want to see if something happens here. And I'm reminded of the fact that when we had no geopolitical risk in this market on October 1st, the market was trading, well, in the CLF5 contract at a low of $65.74 a barrel. That's before Iran launched those attacks against Israel. Has growth gotten any better? Is Europe looking like it has a brighter future? What about Asia? No, there's been no significant improvement. There's been a lot of theoretical, demand that could be coming in from Chinese stimulus. And maybe an end to the Russia-Ukraine war means China has to stop buying oil on the black market, Russian oil that's being sold through intermediaries like India, and it's going to have to buy it on the open market again, so that can help support price, right? They're no longer going to be buying at 55. They'll be buying at 70 like everyone else. I just don't see the appeal here. Natural gas is a lot more interesting because at least it's responding to the catalyst that it should be responding to. We got a really nice improvement in the 2-week ahead temperature forecast on Sunday from NOAA. We covered this yesterday, and we're seeing that continuation here today. So natural gas prices are down, what, Jamal, a healthy 60 cents from where we were about a week and a half ago? Mm-hmm. That's not nothing, right? We're talking about, what, a move in the scale of 16.5% from the highs just over a week ago. Natural gas with only an IVR of 50.0. I have to say, we were talking about chasing this to the upside. I'm glad we did not do that. It's one of the reasons why you don't trust natural gas. When it looks great, it slaps you across the head.
Nah, it definitely does. Yeah, this vol is still kind of somewhat high, and I'm not sure if I'm imagining things. I feel like margin is a lot lower in here than it used to be, because just looking at a strangle, the 215, 395 strangle, it only sets you back about $1,300 in buying power, which is kind of surprising. That's an 80% pop. Do I have the stones to do this trade is the real question. I mean, does natural gas go upwards of 4 over the next month? I don't know, possibly. I mean, it could be a cold winter. That's the biggest scary part to it. Do you just make it, if that's the case, do you just sell the put and make it downside? Maybe. But there is opportunities in here. There's always interesting opportunities for the most part in natural gas. And yeah, maybe this is one where you sell the downside. Maybe this is a little bit interesting. But again, the big appeal about this one is, like we always say, there's nothing that this is really connected to for the most part. So there's no, that I'm aware of, at least as of now. I don't think there's any tariff discussion surrounding it or any of that other stuff. So it's kind of nice in that regard.
And if we think that there's a policy change coming up, deregulations or something that, works with drill, baby, drill, U.S. capacity right now is exceptionally high. So when we look at spare capacity for energy in the U.S., we're talking about how much is online right now and how much could be turned on within the next 30 days. And we're basically topped off. We're pumping the most oil ever. We're pulling the most gas out of the ground ever. There's not much spare capacity to increase things. So companies would have to open up older wells or invest in new wells moving forward. But even if that happens, let's say President Trump comes in, they change the regulations, taxes, credits, incentives, what have you, and we get more of that production. This is already a very oversupplied market, right? We're drowning in natural gas here in the country. There's a reason why it's, barely with a 3 handle right now, and it's been trending lower and lower for the past 2 years. We're awash in it. So that's kind of where we're heading right now. Either the supply stays ample or the supply increases a hell of a lot more. Absent a gas crisis in Europe, which, again, there really isn't one right now, as things pertain. Dutch TTF has come in a bit. No, it hasn't. That's still pretty high. Well, the bigger picture for European natural gas is how much of the European energy inventories are filled up, which is where I wanted to go with this. I've seen some charts going around of people saying Europeans' gas inventories are lower than where they were this time last year and the year before. And that is true, but that's selectively cherry picking the data. European gas storage is about 85.5% full right now. That's higher than the 5-year average of 80%. So we've actually seen that European countries have been stockpiling more gas inventory since the Russian war in advance of the winter months, more than they had been prior to the war, being concerned about those supply issues. So there's ample inventory right now in Europe, unless the flow stops completely. I just don't see a reason to be looking long deltas here in natural gas unless we're looking at like day after tomorrow type freezing conditions to reemerge for the east coast of the United States, which again, NOAA is not predicting for the few weeks ahead.
I'm trying to look here. Where's the rank? Where natural gas has been over the last several months? Since at least. Oh gosh, I forgot. I'm on a 3-year weekly chart. It's even over the past year, it's been between, what is that, 4 and 3. So I guess, when I looked at this strangle, looking at the 290, I think I was looking at the 215, 395 strangle. It's not a crazy idea. It's just, that's a wild thing to do in natural gas. A lot of times we don't usually talk about strangles in there, but it's doable in some ways because it really hasn't strayed too much out of the range. The craziest times that we saw were obviously in 2022, and we really haven't seen a whole lot since then. It's kind of calmed down to some degree across 23 and 24.
It's funny when you and I talk about natural gas offline, I'm like, Jamal, I'm about to do something crazy. And it doesn't matter if I'm getting long natural gas or short natural gas, just the very nature of trading natural gas is a crazy thing to do unto itself. Not for the faint of heart, not for inexperienced traders. Do not dip your toes in that water unless you really know what you're doing. Mm-hmm. And there's a reason why you and I even see, we see these good trade setups and we're like, you know what, not worth it. Just not worth it. And then it doesn't play out the way that you would expect it to. And you go, that's why I didn't trade it, because I don't trust it. And I don't trust it because it does things like that.
Yeah. Yeah.
Natty gas. We'll get to you. We'll get you one day.
Man, gas is wild, man.
We talk about volatility lacking in bonds. That's not the case in currencies. Australian dollar, 45.7 IVR. British pound, 75.1 IVR. Canadian dollar, 83.7. Euro, 73.7. And I suppose the lowly yen with this 51.1 IVR. Jamal, the point is that these FX futures contracts are reasonable. They are requiring much more limited buying power than ZB or ZN would if you're looking at defined risk trades like a long call spread or short put spread. And there's a richness here to the volatility that you just don't see on a relative basis anywhere else right now. We talk about the S&P and the NASDAQ having single-digit IVRs for the past week, at least since last Tuesday. That's clearly not the case right now. And there's a lot of interesting things going on in the currency world as it pertains to what happened with the Korean won today and that spillover effect into the yen as a regional safe haven, or the French parliamentary vote, because now the government is going to no confidence and will be the shortest lived government in the Fifth Republic history. But what does that mean in France? You can't just not have a government, so Barnier probably continues on as a caretaker PM. Either way, though, there's a lot here, and we're seeing at a lot of price extremes right now. The yen itself is perhaps, I'm obviously frustrated with this because I had some 0064 puts deep out of the money when this was trading up near 0070 in September, and we sniffed Valhalla. 0064.03 was the low on November 15th, and it's been a straight line up since then. But I'm more intrigued by the fact that with these higher IVRs and what the yen's dealing with here, I don't have anything on right now, but getting some trade ideas together, we're getting pretty close to the 50% mark of the yen 6 months trading range. And in a number of these assets this year, if it's been the Russell or oil or even the euro, right? When we see ourselves at that halfway mark of a 6 month trading range and you have elevated volatilities, often it's been the prudent thing to do is just to put on the short iron condor. We've done it a number of times in SMH this year since the August pullback, right? I don't think we need to look at this too much for the tasty traders out there who don't care about narrative or momentum or the technicals, right? And you're looking for a rich volatility environment. FX futures have it, and they are exceedingly manageable futures positions to take out in a risk-defined way. Go over to tastytrade.com, look up the futures requirements, the margin requirements to learn more. But this is the part of the pool that I'm most interested in playing in now as we make our way towards the middle of December, simply because it's where the most opportunity may be from that traditional tasty trader perspective.
Yeah, there's been a lot of vol in a lot of these, like you mentioned. The one I think that has been interesting to me is the euro, and I was interested in getting long. I did, was short the dollar in that manner, and I'm still interested in getting long, but I don't know. I do wonder, if there's just sort of things that are going to lend this to trend towards parity. I'm just wondering if that's going to be the case overall. I was looking at potentially getting long the future, but then I remembered you can also get along a micro in here. There's the M6E futures that are very easily tradable, but I don't know. I don't know how I feel about it overall. There's a lot going on, and particularly with the dollar and how things are going to progress over here in the U.S., and it kind of worries me to try and get long the euro when I see the way the dollar's moving. So that's, I guess I'd get a little more interested maybe around 102 or maybe closer to parity, but for now I'm not doing anything.
Jamal, just for the sake of putting some numbers behind this, we talk about the tick value in ZN or ZB rates. ZN is $15.62.5 a tick. ZB is $31.25 a tick. In 6E, it's $6.25. In 6A, it's $5. In 6J, it's $6.25. The overnight buying requirement in the euro, for example, is 25.30. In ZB, the overnight buying requirement is 4,070. So trading the futures, they're more manageable. If you're doing the risk-defined trades, retail traders, tasty traders, vol sellers should not ignore FX, particularly the FX futures here, because this is a quiet week, Jamal. We have made our way through about an hour here on Futures Power Hour. The S&P 500 is down by 0.03%. We have moved 0.03% since the top of the show.
Yeah. It's a
the
really
market
quiet
is
week.
open. People know the market's open, right?
I think so.
Maybe the calendar tomorrow wakes some people up. Tomorrow we have ISM services. We have Powell's speech in the afternoon. Powell's speech is at 1:45 Eastern time. So it's going to be in the middle of our Futures Power Hour show. Hopefully he gives us something to work with. This is a meeting in which he is expected to say something. Sometimes he gives your remarks at academic conferences where he introduces someone and doesn't mention anything about the economy whatsoever. This is not one of those events. He will be speaking and perhaps laying the groundwork for how markets should be positioned going into the blackout window. And keep that in mind. The blackout window is ahead. So these final speeches this week, they are deliberate. They are meant to help shift our thinking. As we wind down the show, a brief bit of education. We head over to tastylive.com, top banner, Learn Beginner Futures, where we find this great coursework put together by the fine folks on the Tasty Live research team. Today, we're talking about introduction to products and markets, Jamal. First off, the notional value of the contract you're trading is the number of units multiplied by the price per unit. Futures products are separated into 6 different categories, including energy, metals, ag, equity index, foreign currency, and interest rate futures. And as we discuss typically on Mondays with the update from the CFTC COT report, there are a handful of market participants with different goals that help create volumes in each of these different sectors. So go learn more, go to tastytrade.com, or rather tastylive.com, top banner, Learn Beginner Futures, or click the link here on the bottom of the slide. It will take you there directly. Jamal, we're done, we're dusted. I know you're out the rest of the week, so good luck with whatever you're doing. Enjoy your time off. More importantly, good luck trading here. Let's just keep this low vol, float higher going. It's a nice, easy December so far. It's not broken, don't fix it.
Yeah, I feel like it's going to end up being the same way, so we don't have to worry about it.
Don't need to worry about Aaron Rodgers. We don't need to worry about...
I thought we were talking about good things for you. Now you're bringing up bad things.
I root for the only real New York football team, the Buffalo Bills, and my quarterback, Josh Allen, is having an MVP year.
Yeah, that's what you're saying with your mouth, but it's not what you feel with your heart. I know it. You bleed green.
On Let Me Explain on Tuesday, the 24th, I'm not supposed to be in. Maybe I show up. Well, maybe the 17th. I have an Aaron Rodgers jersey that's going to look really nice in my fire pit for Let Me Explain. I'm going to explain to everyone how nylon and polyester burn at 400 degrees. In Green Bay, Packers green. In any event, though, Jamal, we're out of here. Dr. Jim is coming up next with From Theory to Practice. See everyone on the other side of a quick break. Jamal, see you later.
Later, my friend.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
If you missed the live show, here's our cherry on top weekly recap.
Hello.
Did you watch Pulp Fiction?
I did. I watched it, but it was not very educational. I think it's pure entertainment. So
That's what movies are supposed to be, Jajun. But if you ever had to dispose of a body, you learn something there, right? So you have to look at what you're learning here.
One thing I learned is you never want to go into a basement, and with a cop there.
That's right. Never ever.
We have an over-under, and when you were going to reach maximum crankiness, coming back.
I'm not cranky at all.
I have new toys, Sosnoff. That's right, Sosnoff. I have new toys. How about that?
Dr. Jim! Hey, Dr. Jim is in the house.
It may be better for me. I don't know. It might be an update. I'm not sure.
We did a little survey here, Sosnoff. You and Scott talked a little bit about my sound effects. You wanted them to go away. We completed a poll. We had 34,000 votes, Sosnoff. 82% take the sound effects away. No, siree. No, siree. Keep those sound effects. Keep the sound effects. I really only use them with you and when Sosnoff is wrong about something. It was 82%. Sosnoff said I should keep it. 17% said
1% said not sure. I think they're on the fence and couldn't figure out which way to fall.
1% didn't want to vote, is what it came down to. They abstained.
They got into the ballot box and couldn't pull the trigger.
Yeah. They just didn't understand the question.
Get the full scoop by checking out the archives at tastylive.com.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show. Welcome back to the show, man. It's been a minute since we have been together, but here we are together again to kick off the month of December. Guys, we did it, man. We did it. We survived the trip to South Carolina. We survived and thrived during the Mexican Thanksgiving, and now we are back in St. Petersburg where it's freezing outside. It's like 64 degrees. I don't know how y'all do it in Chicago, but man, we are doing it. We are moving forward, and I'm glad that you are here with us. So if you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion in real time and communicate with your brethren that are also watching the show. But did you guys keep the market above zero while I was gone? Like, were you guys able to keep this thing in positive integers while I was away? Let's find out. Let's have a look. Let's pop in here. What's going on in the old stock market? So you got E-mini S&Ps down 6 on the day. You got the risk-free instrument, also known as the NASDAQ Futures Extraordinarily High Risk product, up 12 on the day. So doing what we would expect a risk-free NASDAQ Futures product to do. You've got the boomers down 132, and then you've got the Russell 2000 Futures Index down 23 on the day. You got bonds down a couple of ticks. You got notes down a tick. You got what are the precious metals doing? You got gold up 9, and then you've got silver, I believe, is up even more. Let's take a look at silver for our Hunt Brothers fans out there. There's still a few stragglers left. Yeah, silver up, wow, 66 cents today. So pretty big move in silver, where gold hasn't really done a ton, but silver is looking pretty good indeed. And then volatility, guys, what are you guys doing to volatility? Man, you guys had one job to do. And look at this. Volatility futures down 25 cents down to 14.50. And then you've got the VIX. You've got the spot volatility. It's doing a lot worse than that even. Wow, look at this, guys. The VIX is back to 13. You guys had one job. Where I'm gone for 6 days, and you guys send the VIX from 15 to 13. Come on, guys. Like, what are we doing here? I mean, yeah, sure, it's up 7 cents today, but man, VIX at 13, this holiday lull, it might be kind of nasty. And by nasty, I mean it's going to be like watching paint dry or basically Procter & Gamble any day for the last 27 years. So we are here, though. We are back, and I'm glad that you are here with me. If you have a question for me, I would drop it in the chat box, and I would do it earlier rather than later because the expected move on the number of questions I get to per show is somewhere between 0.7 and 0.9. So the earlier you get that guy in, the higher the delta that I will get to that question. So, all right, so market-wise or even market-wide, not a ton going on. Man, look at the portfolio, though. Nothing's really happened. I mean, I really didn't pop in at all last week, to be perfectly Frankie Walsh with you all. And so I came back this morning and took a look at things, and I'm like, yeah, there's not too much going on. I mean, we're going to find some commentary. Don't you worry about that. But looking at the adjustments or the different management that needs to take place, there's not really a lot going on. And then this week, I mean, we've got, December's kicked off. The holiday lull is kind of apparently in full swing here today. And then, of course, on Friday, we have, I've been trading for a while, guys. I can't remember a more important NFP print than the one that's coming out down the chutes on Friday morning. So this could be apocalyptic in nature. This could be the end. In fact, I'd say it's probably 60 delta. I say it's 60 delta. There is no next Monday. There is no next Tuesday. Like, it's going to be Friday NFP. It's going to be Where's Bad in Phoenix on Saturday, of course, which I will be there for all my Phoenix brethren that might show up for the show. And then that's it. Like, it's going to be over. And so let's go ahead and enjoy the final few days of this ride. So, all right, let's go ahead and, I don't know, guys. What do you guys want to do? You want to comb the streets here? Let's comb the streets on the portfolio. Let's take a look at the few things that might need our attention. And then I want to see where you guys are at, man. I see you guys. I see the overachievers that are getting in the chat early. Manny TP, Anka, Theta Trader, Sergio, Grumpy Mike, Rob Banks, James Bond, number 4 is in the house. And, man, I appreciate you guys. And so, real quick, because I know you guys are going to ask, so let me preempt this. The highlights from the Mexican Thanksgiving. I got to be honest. I kind of dominated. Like, if I'm just being straight up with you all, I pretty much, I had them from start to finish. Like, there was nothing there that made me feel uneasy. There were no plays that came my way that I wasn't ready to handle. Like the defense was ready. We were set. Like everybody was covered. Like we didn't let anybody through. Like this isn't the Chicago Bears. Like we kept it tight. We kept it streamlined, and we got through. I had a tamale, and I had a chicken and something tamale. It was pretty good. It was not like it didn't change my life, but it was solid. It was solid. It got the job done. I did the tamale for the appetizer. So I went tamale for the appetizer. Then, and this is not a Mexican Thanksgiving dish, but I have to be honest. I've never had, or I should say, never had prior to the Mexican Thanksgiving. I had never had fried turkey before this past Thanksgiving. I never had it. I always just went with kind of like your standard, your Betty Crocker plays, just regular roasted turkey, like in the oven, whatever. Obviously, honey baked ham, all that kind of stuff. But my man was frying a turkey like outside. He spoke zero English, and I spoke zero Spanish. And so we were communicating with each other, trying to figure out where we were at with this fried turkey. I didn't help him at all. He pretty much had it, buttoned up from start to finish. But this thing was unbelievable. This thing was absolutely unbelievable. So I was like, wow, this is incredible. And this is, of course, is not a Mexican Thanksgiving thing, but it will forever be kind of cemented in my mind as a Mexican Thanksgiving thing. So I dominated the tamale. I dominated the fried turkey. The only thing that kind of had me, like the strike was getting tested. I got to be honest. There were two salsas that were on the table, and it was communicated very clearly to me that the green salsa was the mild salsa. The green salsa was like, have a couple of dips. You won't notice anything. You'll be fine. The red salsa, like that stuff was imported from Mexico that morning. Like that stuff was like, all right, you shouldn't even look at this because eyes are going to water, going to start sneezing, all that kind of stuff. So with the green salsa, just to be a part and kind of, I don't want to be disrespectful, but I want to have some of the green salsa. Guys, I had one chip in this green salsa. I couldn't breathe for 7 minutes. Like I couldn't feel my tongue for 18 minutes. Like it was unbelievable. I couldn't believe the green salsa, but I kept it together, right? I kept it, I kept it within myself, and then I just let Autumn know about it later on that night. But yeah, the green salsa, the mild salsa got me, man. It 100% got me, but nobody knew. Only you guys know now. And it's over now. Like, in terms of the official score, like we already got our W. Like the game's over. So, all right, let's go ahead and let's go through a couple of trades here. So MES. So this is really the only thing that we're going to adjust today. And by adjusting, we're going to take it off because take a look at MES. This is so interesting. And it really does highlight the benefit of short premium. It really does highlight, why we do what we do. It really does highlight, how you don't really have to be correct directionally, and you can still make money by selling premium, allowing time to work for you, allowing volatility contraction to work for you. All the things I'm going to talk about on Saturday in Phoenix, by the way, for those of you that are going to make it out to the Phoenix show. But I digress. If we look at this MES strangle, you can see pretty clearly here that we have a 58.75, 59.70 short strangle. And you've got the index at 60-60. 60-58, but basically 60-60. And so right now you can see we are pretty far above our short call strike. But if you look at the duration that's remaining in the trade, we only have 17 days to go. So we're inside of that 21-day marker. It is an undefined risk trade, so we probably want to do something. We probably don't want to leave this thing as is. Now, that's not to say that we haven't done that before, and it's not to say that we won't do that again in the future. But, coming back from vacation, we want to try to keep things buttoned up, try to keep things a little bit streamlined, right? We usually let the wheels fall off by day 2 or 3. But since it's only day number 1, I'm like, man, let's try to do some things the way that they were intended to be done. And so here we've got 17 days to go in the MES strangle. And so I was looking at this. I'm like, all right, what are we going to do? Are we going to roll the put up to a straddle? Are we going to potentially go inverted? Are we going to do all that kind of stuff? And then it just dawned on me. I'm like, wait a minute. We are actually up on the trade. And this is what's crazy. We are actually green on the trade, even given the fact that the index is so far above our short call strike. Now, you might be wondering, how is that even possible? Like, how is that even possible that you've gotten, torched on the short call strike to the tune of 90 points or so in the index, and you're still green on the trade? You can see it right here. We are actually up, $57 on the trade. Right, we're up about 10 points on the actual strangle price. But remember, with MES, every point is worth $5. And so 10 points is about $50 in terms of, U.S. currency. And so when I look at this, strategy and I look at this position, I'm like, man, that's economically significant. We're inside of 21 days to go. We don't have to roll this out anymore. We can take it off right now. We can be done with it, and then we can just move on and redeploy the capital, somewhere else. And so I am amazed that we're doing so well on this position, given the fact that the index is so far above our short call strike. So of course, you might be wondering, why were we able to do that? How did this even happen? Well, remember, when it comes to, essentially when it comes to option P&L, here, I'll even write this down here on my little blackboard, which is always kind of nice when we have this big, I mean, look at all the space. Look at that. It's amazing. So in option P&L, it's always going to have three components. Number one, there's going to be the delta effect. So this is going to be, whatever directional move has taken shape in the index, whether it's gone for you, gone against you, hasn't gone anywhere, there's going to be a delta effect that's going to impact the option pricing. That, of course, is going to impact your P&L downstream. So there's a delta effect. Number two, there's a theta effect, right? So there's obviously time. If we sell premium, time passing is working for us. If you buy premium, time passing is working against us. And so that's the basic essence of time and theta. And, one of the big things that we do here inside of the Tasty world. For my new people that might be checking us out for the very first time, welcome to the show and welcome aboard. Delta, number one, theta, number two, and then number three is going to be your Vega effect. So essentially, in Vega, of course, is going to be the option price change due to volatility changes. And so essentially, delta is going to be direction, right? That's going to be direction. That's DIR. You would never know that, but believe me, that's DIR. Theta is going to be time. And Vega is going to be volatility. Which, oh, by the way, shameless plug, the new volatility crash course is available on the YouTube channel. So huge shout out to the production team. I've heard that the volatility crash course has really taken off. It's done really well. I think it's been maybe our best performing crash course, to this point. And that's not because of me. Like, you're getting the same B- quality from me that you were getting 3 years ago. That has not changed, right? We are consistent. But the production team and Ryan, our YouTube guy, phenomenal job. Just phenomenal job. Kind of packaging it up, making me look better than I actually am, cutting it where it needs to be cut, like slicing it right where we start with the B- humor. Like, they got all that stuff out of there. It's gone. Like, there's no place for that on the YouTube channel, right? I mean, there's a place for it here in the live stream, but not on the pre-recorded stuff. And so anyway, thank you to all of you that have checked out the Volatility Crash Course. If you haven't checked it out yet, please check it out today. Just put it on a tab that you're not even using and just let it play, man, because your boy needs that watch time. Right? Put it on 2 tabs. Put it on 3 tabs. Right? Just let that thing play in the background. You don't even have to watch it. I think you might get a little value if you do watch it, but even if you don't, just let it play in the background, man. I appreciate you. So Delta, Theta, Vega, these are going to be the 3 impacts or 3 driving forces of option P&L. So here, it's very obvious that on the Delta side of things, we're getting hurt because the index is above our short call strike. Now, my goal right now is not to, try to figure out, like, mathematically, how much have we derived from Delta, how much have we derived from Theta, how much have we derived from Vega. We could do that, and we've actually done that in the past here on the show, but I just kind of want to paint with a broad brush and say, all right, what's going on here? So Delta, we're getting hurt pretty badly. Theta, we've collected Theta every day we've had the trade on, so that's obviously helping us. But the big driver and the thing that's actually pushed this over the finish line has to be the Vega impact. It has to be the volatility impact because volatility is so low relative to where it was when we put this trade on. So if I go ahead and delete that, and then let's see, let's go into, I can't remember. Let's go into the chains. Can we do the market state snapshots with the futures options? We can't. They got us. Rats. So sometimes when you go in here and you right click, I mean, not sometimes, but if you're doing this with an equity option, it always works. With the futures options, the functionality is not quite there yet, but I have full confidence that the developer team over at Tasty Trade is probably working on this. And I wouldn't be surprised if it just showed up just one day, kind of in our stocking like Christmas morning, and boom, there you go, market state snapshots for futures options. But we can go ahead and we can kind of figure this out a little bit. So if we go into, let's see, I don't even think I can do mes.ivr. I'm assuming this is not going to work. Can I do IVR for a future? I don't think I can. Okay, so that's fine. That's fine. Let's go. We're gonna figure this out though. Let me go into MES. Let me look at my chance. All right, so we did this trade on October 31st. This is all I need. We did this trade on October 31st. I just want to go in. I'm just going to go into SPY, which of course is the same index, but it's the equity index. So now we're going to have IVRs that we can look at. We would have market state snapshots if we did a trade in here. And so it's going to be easier for us to figure out, kind of where the index is at. Because you can see SPY IV rank is 6.7. MES IV rank is also 6.7. Like you would expect these things to overlap pretty closely most of the time. So if I go into SPY and I go to actually let's do SPY.IVR, which if you didn't know this functionality was available, it's pretty cool, man. You can look at the actual historical implied volatility rank. So it gives you some nice context around, okay, the implied volatility rank today is X. But where was it 2 weeks ago? Where was it, 3 weeks ago? Where was it yesterday? Like just to give me some kind of idea of where I'm at, in the volatility range of where the stock has been trading. So SPY, October 31st, where are we at here? So the SPY, yeah, look at this. This is crazy. Guys, this is pretty crazy. So this was obviously before the election, right? A few days before the election. So the IVR on October 31st for SPY, remember right now it's 6.7. It was around 35 to 40 that day. Like we can see the range on that day was from 36 to 46. And so it could have been anywhere within there when we put the trade on. We could go in and we could really carve this guy out and figure out what it was to the minute. But it's not important. That's not the goal of what I'm trying to do. This IVR in SPY has collapsed, or MES, same thing, has collapsed from 40 to under 10. And so when you sell premium, volatility contraction is working for you. Like when you sell premium, volatility moving lower is working for your benefit. And so that is exactly what happened to us in this position. We got crushed on the delta effect, but we picked up theta the entire way. And then it was the volatility collapse that has occurred in the market since we put the trade on that has pushed this guy over the finish line. So let's go ahead and let's push this guy. Let's push a closing order through for MES. We'll pick up our 10 points and we'll just we'll call it a day. So so 15 minutes on one position. So we are in mid-season form, even after 7 days off or 8 days off or whatever it ended up being. So let's go ahead and all right. So there you go. We are out of MES. It's over. It's done with. It's like it never happened. All right. So the next thing I want to do, because I want to get to you guys, man. I got to see where you guys are at. I see you guys in the house. Look at you guys. Flower Power showed up. Peter Leger's in the house. Dave S in the house. Man, some really, really good stuff. So let's go ahead and let's see. If I go ahead and, DIA, we're going to do this really quick because there's actually not much to talk about for each one. So we're going to do this kind of lightning round style. So DIA, big boy Scotty S. Iron Condor, not coming back. Like it's just not coming back. We're going to leave it on. There's no reason not to leave it on because we're basically sitting at max loss now. We only have another 20 cents to lose. And hey, if the rumors fall out of bed in the next 17 days, then that would be good for us. And it wouldn't be the last time they've fallen out of bed. And, it also wouldn't be the first time. And so DIS, we have a long 100 put in Disney that also has 17 days to go. That's pretty much done. That's going to not work out. But again, there's no reason to take it off. Yes, you have to stare at, the nasty looking P&L opens on your monitor. And I say that kind of jokingly because, you'll say, it's not that big of a deal. There isn't much more to lose. But it actually can affect you emotionally. Like I know it does me sometimes, and I'm sure it does you too. And so there actually is some value that can be extracted in just being done with the position and getting it off your board so you don't have to look at it. Like I actually do truly believe that. Like we're not robots, at least not yet. We're going to be kind of probably half robot, half human in the next, 9, maybe 10 months. But right now we're all still mostly fully human. And so with that, we have emotions. Like we have, these things kind of running through us that may not necessarily be, optimal for all my Tom Sosnoff fans out there. And so there is some value there, but I actually think with 17 days to go, you just got to pony up and leave these guys on at least until the final week. If during the final week you want to take them off, like I don't have a problem with that. Netflix is not coming back. Similar thing. Like, it's only marking for a penny. No reason to take it off. Just leave it on and just hope for the best. And so Netflix, we're done. NVIDIA is looking okay. We've got 45 days to go in NVIDIA. And the stock's at 139. We're kind of, we're riding the, wait a second. This is a short. Yeah, I thought it was a strangle at first. But then I'm like, wait a minute, that's not a strangle. So this is not looking as good as I would have. Oh, this was from, it's coming back to me now. Yeah, Celine Dion nailed it. It's all coming back to me now. And so 142, 136. This was a short put spread that we put on for earnings. for NVIDIA. We did this trade back on. Let me grab my chains here really quick. Let's see if I've got. Let's go ahead and let's see here. I've got. Hold on a second. Did I? I should be good. Let's see. I've got my NVIDIA. I got my chains here. If I go ahead and let's look at this. We put this trade on back on November 19th. So yeah, so we did the trade on November 19th and 246. Yeah, I thought I had a little technical issue there, so I had to bring in my teams, but I think we're good. Yeah, we're good. So 246, we did this trade back on November 19th, and we still have it on. So right now you can see we're marking right at about even. Like we're down a little bit on the trade, but it's not really that big of a deal. So we're gonna sit tight on NVIDIA, obviously, not do anything, and it just gives us a reason to say NVIDIA a couple more times, which we all know now is the correct way to pronounce that company. So TLT, this is our long call. That is just, man, this thing's it's climbing out of the abyss though. It's climbing out of something. And so right here you can see that this guy was really not doing well not too long ago. And now we've mustered back a mark price of 375 on the trade. So we only have 17 days to go. So we may very well run out of time on this trade. But right now, we got a little something that's keeping this guy with just a tiny little heartbeat. And then UAL. This is a strangle that's also working pretty well. And then Uber, it's just doing what Uber does. And yeah, so all right, let me get to y'all's questions, man. Where are you guys at, man? Let me see where you guys are at. Man, look at you guys. I see you guys in the house. Man, I see Richie M. Andres jumped in at the end there. Look at you guys. All right, let's see here. We've got Data Trader says the Vecchio expert, the Vecchio expects us to believe that not only is he a sports fan, he's going to waste money to not only buy but burn a Packers jersey. Sold. Yeah, maybe so. I don't know much about Vecchio's sports fandom or not. I'm not sure. I mean, I've been a Packers fan since day one, so that would hurt me a lot if he did that, actually. But I'm pretty sure he's a pretty large Mets fan, I believe. And the Mets are in the Juan Soto sweepstakes. Like, it's basically down to Yankees, of course. Mets are in there. Dodgers, just because the Dodgers are always in there. And then the Red Sox apparently are in there too. And so I don't know, man. The Juan Soto sweepstakes, like if he lands in Boston, it's gonna be pretty interesting. I'll be pretty surprised if they spend that kind of money. But yeah, I don't know about Vecchio's fandom when it comes to football. I know he's a big Mets fan though, and so I wish him good luck in the Juan Soto sweepstakes. And by good luck, I mean I hope that Juan Soto does not go to the New York Mets. So James Bond IV, happy pre-ump day. How would you trade SPX with such a low IVR? Do you have any thoughts? Yeah, it's going to be harder. It's going to be tricky. You've got the stock down a little bit today. Obviously, I mean that's a market index. I mean it's going to track ES and the SPY. I mean the S&P 500 is down slightly today, but there's not really a ton that you can do if you want to sell premium. Like if you want to do something that's short premium, you want to do something that's going to get positive theta working for you. This is not really going to be the index of choice. I mean all the major indexes right now are kind of following, I think, the same IVR. Excuse me, IWM might be a little bit higher. But you've got, SPY, which we just looked at, 6.6. You've got QQQ, which has to be pretty low too. Yeah, 3.2. That's kind of brutal. So DIA 15.7. So that's kind of in the mix. And then IWM, I think, might be the highest. 23.7. Yeah. So if I was going to do something in the indexes there, James Bond, I would just go to IWM. That's going to give, if you want to do the US indexes, you could go abroad. You could do some international stuff with FXIs and EWZs and EWWs and things like that. But from a US index exposure, I think IWM is going to give you the best short premium play that's on the board. Now, you could buy some premium. You could do some long vertical spreads. You could do some calendar spreads. You could do some diagonal spreads if you really want to do that. A lot of it comes down to, where is your theta at in your portfolio? I talk about this, by the way, which, wow, we don't have that much positive theta left. Yeah, we got to get some short premium on stat. I'm not going to do it now because I want to get into y'all's questions, but maybe later this week we'll go ahead and do that. And so, but yeah, you want to figure out where's my portfolio theta at? Like, is it high? Is it low? Is it right where I want it to be? And by the way, if you don't know where you want that to be, then check out the other crash course, or one of the other crash courses that we have on the YouTube channel that is all about managing a portfolio. And in episode number 1, I actually work through mathematically, give you a mathematical basis for figuring out what your theta should be. Like what your theta should be, not my theta, Not James Bond's theta, like your theta. What should your theta be? I gave you some things to think about, and I give you some mathematics that can kind of help you find your way and figure out, where it should be. Well, if the number is right where you want it, you can do whatever you want. If the theta number is low, then you're looking for short premium. You're looking for positive theta, which that might be the case for a lot of us now because volatility has come in and we've taken off winning trades and we're looking to redeploy capital. But that's going to be harder to do because the market volatility, as evidenced by, the VIX and VIX futures and whatever, is on the lower side. So you may have to go to individual stocks. You may have to go to some international exposure. But if your theta numbers are high, James Bond, then you could buy some premium. You could, do the verticals and diagonals and calendars to where you're not really looking for theta exposure because you already have what you want, but you want to get some more currencies. You want to get, maybe you have a directional hunch in, SPY or IBM or Procter and Gamble or whatever. And so that's kind of how I would think about that and how I would handle that. So hopefully that helps a little bit. Rob Banks says, "Good day, Dr. J. What's going on there, Rob Banks?" And then Grumpy Mike says, "Barbecued iguana for Thanksgiving." No, man. Like I said, it was fried turkey. We had regular turkey. They had ham, and they had fried turkey. From what I could gather, that was it. That was all they had from a meat standpoint. They had like charcuterie and they had like other things going on, but there wasn't any like chicken, which I was a little bit upset. Of course I had some Daddy's chicken on me because I always have Daddy's chicken on me just in case. But there wasn't any chicken that was actually there. And so, yes, no barbecued iguana, though, either. And so Manny TP's in the house. What's going on there, Manny TP? Dr. J, do you trade poor man's covered call? I do. If so, what criteria do you use for entry and exit? Thanks. Great question. So a poor man's covered call. So let's find some stock. Actually, let's just do like QQQ. Because it has extremely low implied volatility rank. So a poor man's covered call, that's going to be a good option for lower volatility, generally speaking. You could actually make a case that's good for high volatility too, because of the premium that you're selling will benefit more from the high volatility. But the reason why this is more of a low volatility play for me personally is when volatility is high and IVRs are high and the VIX is high and all that kind of stuff, there's so many other things that we can do. Strangles, straddles, ratio spreads, short verticals, iron condors, etc. that I'm not really like licking my chops at a poor man's covered call when volatility is high because I feel like there's better opportunities available from a strategic standpoint. And so poor man's covered call for me is more of a low volatility play. So, a poor man's covered call. So a poor man's covered call is a diagonal technically. And so when you think about, a diagonal spread, like, how do we typically handle a diagonal spread? We typically go front month, back month, and we don't want to pay more than 75% the width of the spread. So for here, if I was going to set up a diagonal, I would sell some option in December and then buy an option in January. So that would be the front month and the back month. And so Manny TP was asking about a poor man's covered call specifically. So I would be buying a call in December that's in the money and selling a call in January. Buying a call in January that's in the money, selling a call in December that's out of the money, and then not wanting to pay more than 75% the width of that spread. Okay. With a poor man's covered call, it's going to set up a bit differently. The first thing that's going to set up is typically you're buying an option that's further out in time. So you're not doing the back month. You might be going, a skipped month. You might be going 2 back months or 3 back months deep. It kind of depends on how long you want the directional exposure for. I typically look for something that's probably between 60 and 90 days. And with the understanding that the longer you go, the more costly it's going to be. The longer you go, the higher the debit's going to be to put the strategy on because you're paying for more time value. And, when you're buying the option, that is essentially working against you. Now, the time value on the super long dated options, they tend to dissipate and they tend to decay a lot more slowly than like 45 days or 35 days or whatever. And so that's why buying it so much further out in time can still be very beneficial and still be very doable. And so here I would probably, I'd probably just plop right into this February option. You go into the February option and you've got 80 days to go. So that's the first thing. This is how I set it up, Manny TP. I go, okay, what expiration am I looking at for my long option? So I go into, an 80-day cycle in this instance. I'm looking for something between 60 to 90. Okay, so now I go into February. Now, how do I pick the call that I'm going to buy? Well, remember, with a poor man's covered call, the objective is to try to simulate what a covered call would be at a fraction of the capital usage. Because a covered call is long 100 shares, and then you sell a call against those 100 shares. A poor man's covered call is a long call option that takes the place of the long shares, and then you sell a call against that long call option. So the short call part of it is essentially the same. The difference is I'm buying an option instead of buying the shares, and that's going to save me a lot of capital, on the trade. Because especially with a stock like QQQ, that's a $500 stock. I mean, in a standard margin account, you're putting up 50% of the notional value of the position to hold those shares. So you'd be putting up 25 grand to hold a $500 per share, 100 share, position on that index. And so you'd be putting up 25 grand, where I'm going to be able to do, a poor man's covered call for, maybe just 3, 4, 5,000 or something like that. So that's the first thing I want to say, or maybe that's like the third thing I want to say at this point. But how do I now figure out which call to buy? Well, this is where, looking at the delta, actually, let me put delta on the inside column. I'll put extrinsic on the outside column. I may not even use that, but I don't typically look at volume and open interest. I think you guys were asking me about that before the break. So I came back and I saw volume and open interest on my drop downs. I'm like, this is not feng shui for me at all. But generally speaking, picking something around, between the, let's say the 80 to 90 delta, right? So right here, you can see you've got an 80 delta, right? That's your 465 strike. And then you've got, the 84 delta is your 450 strike. But look at the cost of this, man. It's going to be pretty significant. You're paying $59 for that 465 call. So that's going to be like $6,000 in terms of the debit that's required to hold this. Now, of course, I'm just using QQQ as an example. The Manny TP, you can slide into something else pretty easily that's a lot lower cost. You can use the basic idea behind what we're doing to kind of fit into whatever it is you want it to fit into. But remember, if I bought shares, it'd be 25 grand. I'm going to buy this 465 call, and it's only going to be a fraction of that. It's going to be what, 20% of that, 22% of that? Like I buy the 465 call, and now my buying power is only, $6,000. So that's like 22% or 24% of, what it would have been had I bought the shares outright and had to put up 50% margin. Okay, so that's typically where I set up my long option with the poor man's cover call, looking for 80 to 90 delta. The reason why you want 80 to 90 is you want this to simulate shares. Now remember, delta shows you, how much is my option price going to move, with the actual stock itself, right? Stock has a delta of 100. So stock moves 1 for 1 with itself. But if I have a long call that has a delta of 80, which is what you have right here, that means it's only going to move 80 cents on the dollar. So if if QQQ goes up by $1, then this option position is going to go up by 80 cents, right? It's only going to move by, 80% of the underlying stock movement. Now, again, there's other things happening. There's thetas and vegas and things like that. But just to kind of illustrate why I'm picking 80 to 90 delta, that's the reason why. So, we go into the 465 strike at an 80 delta. We buy that guy. Now, we minimize February and we go into, you could sell December. You could go, there's only 17 days to go, but if you really wanted to get another opportunity to sell premium, I don't really have a problem with, getting in here and selling some premium, right away, with only 17 days to go. Now you go out to you're typically looking for maybe like a 30, typically selling something between the 30 and 40 delta. I'm typically I'm going to be somewhere between these two markers. So, if I wanted more upside potential, I'd sell a lower delta call. If I want less upside potential, but I want more extrinsic value coming in from the short call, then you pick a higher delta. And so you can go either way. It's gimmies and gotchas. I don't know that there is a point of optimality, Mr. Sosnoff. But yeah, I mean, that's essentially how I would look at it. Now, that's how I set this up. Now, why am I not looking at the width of the spread, and why am I not so worried about how much I'm paying and things like that? It's because that's not the nature of the strategy. The nature of the strategy, again, is to simulate a covered call at a fraction of the cost. The nature of the strategy is not to, try to pay, some percentage of the width of the strikes or anything like that. It's just to simulate a covered call at a fraction of the capital usage. So, if I sold, like the 520 strike here, that would be, I'd pick up $5 on that. Now, some of you might say that's not really a lot of premium, and it's really not, especially not when you're paying, $59 on the back month in February. So maybe you could just go into January, right? You could always just go right into January. And now you can see that the the premiums are significantly higher because now I can sell that same 520 strike for like $10, right? That's a lot more premium that I could pick up with the stock at 515 or 516. And so it would depend on, again, how much upside potential you want to leave yourself. And, you may want to keep the trade down for longer. Then maybe you're buying March, maybe you're buying April, something like that. But again, just remember, the longer you go out in time, the more it's going to cost you. And so that's why I'm generally somewhere between 60 and 80. So hopefully that helps a little bit there, Manny TP. So Sergio's in the house. Good day, Dr. Jim. I hope you've had a good time with the family. Yes, it was great. We had a great trip. I forgot to mention, we got 2 kittens. Forgot to mention maybe the most important part, right? We got 2 kittens. I'm almost at the end of the show. I'll have to share the story behind all that tomorrow or maybe the next day. But yes, we have 2 kittens now. They still have not been named. Gimme and Gotcha. It's not looking good, guys. I'm pushing hard. I'm pushing real hard, but it's not looking good. It's not looking good at all. But I will keep you guys updated as to what their names end up being. But 2 little boys. And so they're pretty cute. I got to be honest. So my kids are like, they're beside themselves. They're absolutely beside themselves. Like they don't want to do anything. They don't want to do school. They don't want to do chores. They don't want to eat. They don't want to sleep. They just want to play with these kittens. And why would you not? I mean, it's so much fun, right? It's so much fun. And so anyway, yeah, we have 2 kittens. So thank you though, Sergio. I hope you had a great Thanksgiving as well. Theta Trader says, Dr. Jim, my AMAT shares had a nice little pop. I think the IVR was getting too low, but with what about a juicy call ratio? In other words, buy 1 and then sell 2 further out. Yes. So AMAT, correct. So if you already have shares, you already have 100 shares. If you add a call ratio on top of that, this might be where you get the name from. I've always called that a juicy covered call. Like on the internet, some people call it like a stock replacement, stock enhancement, stock repair, whatever, stock accelerator. Like there's all kinds of names for this strategy. I call it a juicy covered call because that's basically what it is. It's a covered call that's all juiced up. Like if you think about, Barry Bonds when he was on the Pirates, that's a regular covered call. But then you look at Barry Bonds on the Giants, that's a juiced up covered call, right? Same type of thing, same type of relationship. And so, yeah, we could look at it. I mean, you've got AMAT at 182. I don't know, man. You're thinking, I mean, you go out to January, maybe get yourself a little time. And then, I don't know, you could buy the 190, sell a couple of 200s. Well, you don't want to do it for a debit. You want to pick up at least a little bit of a credit. So that doesn't work. You could do a 185, 195 though, for sure. 27-cent credit. Yeah, it's not too bad. And now you've got the nice thing about a juicy covered call, just to work through this briefly, is essentially in this range, right? So first of all, if the stock goes down, like you're just going to keep your credit that you collect on entry. That's why it's important to do it for a credit on entry, just in case the stock goes down. You're not also getting hit on the, the ratio spread that you added to the share. So, 27-cent credit, whatever. The reason why you might do a juicy covered call is not for the credit. It's not like a typical ratio trade where you're in at 45 out of 21, like trying to pick up the credit, like those kinds of things. No, the reason why you do a juicy covered call, that might consider one, is you want to magnify your gains within the width of the spread. So in this case, the 185 to 195 region, you're going to essentially make $2 on every dollar that the stock moves, provided that you held it to expiration and all the extrinsic value got stripped away from the options. And so a bunch of stuff you might not actually do, but just understanding kind of where you're headed on the strategy, you essentially get double the winnings in the middle of the spread. Right. So you're probably looking at this. If you've never thought about this strategy before, it's not one that I do a ton just because it doesn't really fit with a more active kind of style. But it's certainly something to consider. If you've never looked at this or thought about this, you're like, wait a minute. You don't need to be naming those kittens gimme and gotcha. It sounds to me like gimme and gimme, because I got a gimme if the stock goes down and just keep the credit. I got another gimme if the stock lands in between my spread somewhere. I get 2x the returns. Where's the gotcha? Well, he's always there. I can assure you of that. Anything above 195, you're not going to participate in that. So you're able to double the gains in some range, but then beyond the short call strike, you don't get anything. So if AMAT goes to, 220 or 240, like, yes, you are going to double up in that range and it's still going to be a decent trade, but it won't be as good as it would have been if you just held the shares. So I like it there, Theta Trader. Go for it, man. Especially if it's something you want to hold for a while. and you don't mind kind of taking that thing closer to expiration. Because again, it's not really something that's suited to be traded, like a typical ratio spread. And so Sergio says, do you trade zero DTEs? I don't do zeros because of the simple fact that I try to do most of my trading on the show. And so because of that, it's like, it doesn't make sense for me to pop in at 2 o'clock, right, and do a trade that has 90 minutes to go. Like, I'm not that much of a degen. But I will do some 1 DTEs, like where we put trades on today that are essentially 0 DTEs going into tomorrow. And so that's the way that I look at them. And I certainly do those, especially for, CPI prints and NFP prints and, Uncle J days and things like that. We do that stuff all the time. And so, in fact, there's a really good chance we'll do one on Thursday. I don't know, though, because Friday I'm flying to Phoenix because I'll be obviously doing the show on Saturday. So there will be no From Theory to Practice on Friday just because I got a long trek out to Phoenix, man. Got a long trek out to Phoenix. I'm going to play so much chess on the plane ride. It's going to be unbelievable. Like, my rating is going to get absolutely crushed. Because when I play a lot, I do not play well. When I play like 1 or 2 games, I'm okay. When I play like 9 or 10 or 15, I am awful. I am absolutely terrible. And so we're going to do that a lot on the plane, though. So I don't know if I'll do a trade on Thursday for Friday, just because of the way this week is setting up. But I definitely do that. From time to time. So Manny TP, Dr. J's got a hat on covering his big boy hairdo. Oh, it's still there. Oh yeah, we still got the lettuce back here. Don't worry about that. But yeah, I mean, the hair is still on vacation, man. The hair might be back in the office tomorrow. So we'll have to wait and see. Anka's in the house. Oh, nice. Welcome back, Dr. Jim. What's going on there, Anka? Thank you for being here, my friend. I'm so glad that you were here. I hope you had a great Thanksgiving yourself. And I'm so humbled that you invest so much into, my show and all the shows on the network. Like, thank you so much, Anka. I really appreciate it. Let's see. Sam L, Dr. Jim in the house, the real doctor here. Or are you, wait, Dr. Jim in the house, real doctor here. Are you saying you're the real doctor or I'm the real doctor? Because I've seen some of your comments after the show where you're comparing me to Mike Israel, which is, you had me laughing out loud, man. Like, you had me I think that was you. You had me laughing out loud because I love Mike Israel. He's great. He's a little too crude for me most of the time. But, man, his comedic timing is like, it's exceptional. I got to hand it to him. Like, I really, really appreciate that. And so he's very, very good. Again, he's too much for me in a lot of ways. But, yes, I am a fake doctor, much like Mike Israel. And so I take that as a compliment. That is not an insult in any way, shape, or form. And so even if you meant it as such. But thank you for being here there, Sam L. If you are the real doctor, then that's amazing that we actually have some actual expertise and education on the stream, which is good. And so Harsh is in the house. Dr. Jim, which of your positions do you like the most with no management? Do you like one with no management versus one with max profit? I see. Yes, definitely no management. And I'm just about out of time, but no management because then it's easy, man. That's easy. I'm all about the path of least resistance. I don't want to challenge myself. I don't want to make this hard. I just want to show up and get the gains. I just want to show up and get all the accolades. I don't want to have to work for it. And so, I've got the entitled mindset just of the youngsters these days. Like, it's bled over into my own kind of psyche, right? And so, no, man, no management's the way to go because that's the way it should be. That is the way the good Lord intended for the short premium trades to be. And so let's see. Oh, Peter Leger says, what team do you play for? I don't play for any team, but my team is the Red Sox. My team is 100% the Red Sox. It also happens to be the Commanders, the Steelers, and the Packers. And so those are my squads. And from time to time, the Vikings and the Chiefs. And, of course, the Eagles. But the Red Sox are my number one go-to team. But I am out of time. I got to go, man. I appreciate you guys. Look at you guys. I couldn't get to nearly as many. I see Drew. I see Jim's in the house. Cordova Dave's in the house. Man, Mount Go Rails in the house, man. I appreciate you guys so much. Come back tomorrow. Please come back tomorrow. Get your comment in early. There's a much greater chance that I will get to it. So I appreciate you guys. If you guys want to shoot me an email, I am jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye, bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. This is shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
What's going on, everybody? It's the second day in December, and guess what? Volume is still fairly low, but we're going to try to find ways to do something in this market that continues to drift a little bit higher each day. That's right, the Santa Claus rally's not here yet, but it feels like it could be on the way. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I am your host, Jamal Chandler. I have mostly talked over the last nearly 2 weeks about not really being interested in a trading environment where there's really not much volatility, right? I mean, we're here to be volatility traders. And I got to tell you, I haven't really done much more recently, but I'm trying to change that narrative a little bit. I've done a couple of trades recently that I'll talk about in a little bit. But yeah, for the most part, this is one of those environments where you don't want to have too much on the table. You can get tripped up. I do believe that we're in a market that is devoid of any big news. I mean, the biggest news you got, is the little flare-ups you hear every now and again, and they don't necessarily pertain to our market. Of course, I'm talking about what we kind of heard more recently about South Korea. As a matter of fact, the South Korean president was declaring martial law only to recently change course there. But I don't think our markets were really affected at any given point in time once. Might have been a little bit in bonds, but you could argue what that really did. Overall, volatility has been low since the election, right? We spent most of the year talking about what was going to happen around the election. And to some ways, it wasn't a nothing burger. I mean, because we got a big move, especially to the upside in equities. But nevertheless, it was still fairly... I don't know how to call it. It's not a non-event. It was just one of those situations where it created the environment we're in now, where basically volatility is low, which is not a bad thing. It's a bad thing for those of us who like to sell vol, but markets are drifting higher, which is a good thing. And so good, low volatility and markets drifting higher makes it a little bit hard to find trades that you'd love to do. But I tell you what, we'll look around and we'll see what's interesting here and survey and take inventory of the equity market. So let's go to the platform real quick. I see you guys in the chat. This is a good day. You guys want to jump in the chat, want to chat with me, I'll chat with you. We'll talk back and forth. I am basically just going to walk through what I'm seeing in equity markets. A little departure from normal. Public service announcement. I will be out the rest of the week. I'm going to check on my parents, see how everything's going there with the fam. So this is the last day for Engineering the Trade. I will be out. There's never any Engineering the Trade on Wednesday, right? Thursday, Engineering the Trade, I will be out. Friday, I'll be out Engineering the Trade. And then Monday, I will also be out. I'll be back next week, Tuesday, December 10th for Engineering the Trade. My mom's birthday is on Saturday, December 7th, Pearl Harbor Day, as they call it. Happy birthday ahead of time. Happy birthday ahead of time, Mom. I'm going to hopefully celebrate with her. But you guys are hilarious in the chat. A Wayne Brady sweater? Really? Well, that means, but thank you. I assume that's a compliment for the sweater. I appreciate that. Brett's climbing on the rowing machine. I feel you, Brett. How many revolutions you got so far? Let me know. Man. Hey, Jamal. I've been trying to go long during low IV we are having here, but it doesn't seem to be a clear direction of where we might be going. totally agree, Dave. I totally agree. And that's one of the reasons why I'm not willing to risk too much capital to put it on the line for a market that, while I feel is going higher, I don't necessarily know how much capital I want to commit to getting long. So case in point, the easiest thing to do is get long futures, depending on the size of your account. This may be too big, right, when you look at the buying power for ES. So that's why a lot of us look at the micros, and you could trade these micros, right? Obviously this is 1/10 the size of the ES. So that's one way to do it. Now I spent I actually trade these micros a lot, whether it's ES or NQ or 2K or YM, right? 2K is of course the Russell 2000. MYM is the Dow micros, and these are a little cheaper than the ES, so on and so forth. Nasdaq's the most costs the most buying power. Of course, it's a little more volatile than the rest. You get the idea. Anyway, I just don't feel like getting long equities here just by being long these. I'm not interested. So I've tried to find other ways. I literally just did the trade a little while ago. I did do some calendar calls, and I did some calendar calls for getting long end of the month, 610, 620. I'm trying to get some 615s, and I am short. So I'm getting long the end of the month here in December, long some calendar calls. I paid, I think for the 620s, I ended up paying, what did I pay? For the 620s, I paid 55 cents. Did 5 of them, a little less than 250, a little more than $250 total, right? And I did a similar deal for the 95. So I don't know, what's that, 25, to just under $475 for these total, right? For 5 of these for 95 cents. So I did that. That's a cheap way. That's less than $1,000 to, take part in some long upside for the end of the year, right? And in case it extends to the next calendar expiration, I actually did some for January as well. So that's one way you can get long that, it's not a whole lot of premium, and you can, live with it, I guess. Marty M. Hey, Jamal, I met you in London walking my dog and listening to you. Do you think a calendar bullish trade could work in SPY? Well, I just answered your question. Yeah, I'm doing a calendar bullish spread. Again, we need markets to continue to go higher. I think, I don't think there's going to be that much of an explosion higher. But even if it does, I think these are so far upside. I'm doing the 610. I'm trying to get the 615, and I'm doing the 620. That's effectively saying that by the end of the year, that SPY will be either 610, 615, or 620. I think it's a good way to make those plays. And it's less than $1,000 to do 5 on both of those strikes. I'm trying to do a little bit more. Maybe I get up to, again, I'm looking at it from the standpoint of premium. Maybe I end up having on $2,000 to $3,000 worth of that for premium, about $1,000 worth of premium using the December 20 and December 31 expiration, and then maybe an additional $1,000 for using the January 17 expiration, long January 17, and selling December 20. So I'm trying to sell December 20 for the most part. That's kind of how I'm doing it. I also decided to get in Palantir today. I've been looking at this name. This is a name that I have in a long-term account. I feel like this is one of those long-term plays. For me, I find it interesting. I mean, they have a lot of government contracts. I don't usually study many names anymore. I really don't. This is one of the few names that I've decided to study a little bit, and I'm studying a little more each day. This is kind of how I was with NVIDIA at the beginning of last year. And I'm not saying this is NVIDIA, but I do feel like there's a lot of interest in here. Again, I look every day at equity option volume. It's routinely Palantir is in the most active traded options. It better be in here today, unless I'm making it up. Oh, yeah, there it is. It's number 8 today. Yesterday was number 20. If you see something within the top 10, that's usually kind of interesting to me. That being said, I have seen SMCI in this group as well a lot recently. I would like to play this. There's a lot of volume changing hands here, 181 million shares. You're seeing a lot of volume, I guess, on the option side as well. Sorry, let's go back to table. Meant to do this. Where's my volume? I mean, look at that, 4,000, 2,000, 1,000. Like there's 7,000. There's a lot of volume activity in the options. I find that interesting. I just don't know how to play this one. I'll be honest with you, quite yet. I don't know how I want to do it. It would have been great to buy stock down here if I was really paying attention, but I just didn't pay that much attention to the idea. Manny's asking, hey Jamal, curious, where does the most dangerous show come from? What's the story? It's that's a really good question. I will just say it stems from the fact that it's dangerous because I'm going to drop knowledge on you on options from a standpoint of an engineer, and it's dangerous in that accord, I would say. That's one way of putting it. I got a lot of different reasons behind it, but it's also kind of catchy. I thought it was something kind of cool. You know what I mean? So that's where it comes from. Good day, Jamal. Tasty mechanics mean entering at 45 days and closing at 21 days or 50% profit. Would similar guidelines apply to shorter time periods, i.e., 10 days managed and 5 days or 50% profit? I will say, that's another way you could extrapolate that in a bunch of different ways. I think the important thing is you have your mechanics, right? Like those mechanics come from Tasty methodology, from a lot of the research that we have seen over the years that shows the 45-day window is optimal for decay. When you're going shorter time period, obviously things move a whole lot faster, and you really have to sort of change your thought process. So I for a 10-day to expiration, I really think you'd have to, shorten it up even faster. I mean, look at it from the percentage standpoint. If you have a 10-day to expiration trade and you wanted to, 55 days, right? Like 50% profit, maybe even higher profit because it might happen faster. I don't know. However that may be, it would be, you choose your own mechanics. It's totally up to you. Sorry, H. Montero. I know you were hoping it was Darkwing Duck. I'm a little on the older side of Darkwing Duck. That's probably why it wasn't one of those things. But I do remember Darkwing Duck, though. It was kind of funny when that thing used to come on. So if you had $1,000 and you could lay out 5 calendars, how would you deploy those trades over time in SPY? Tasty Vegas, you're just joining the show. You weren't watching what we were talking about. But it's cool. I'll talk about it again. So what I've done, there are, I did the 610, right? If you look at these, the 610 expiration, selling these 20, and I did it for the end of the year. So buying these, you can see right there, that's, I bought them for 95 cents, 5 of them, you can see $475, right? And then I also did the same thing with using the 620 strike. And I did those for 55 cents, which is $275. So you can see kind of how that ends up playing out, right? You can see, that's basically what I mean when I did it for under $1,000 in premium. You can do more, but again, it's all up to you and how you want to do it. And it's just a different way of, getting long the market without necessarily using any micros, for example, right? Like I'm not doing that situation. You could also do this. I'm sorry, I keep doing ES. You could also do MES, and you can do these micros, $1,600 a pop. And then, of course, these are 1/10 the size. And so, that's one of those ways that you can do it. Back to my Palantir trade. So I decided to, this is definitely not necessarily Tasty methodology. I am selling some vol. It is, an implied vol ranked as above 30. There's no earnings. I decided to sell essentially. I've been debating whether or not I wanted to get long stock in here. And honestly, I said more recently, if it had dropped down to 60, I would have bought shares. I tend to be a little impatient sometimes as a trader, you know what I mean? So I decided to just go ahead and sell a put. Now, remember, when you're selling a put at a certain price, you take that price and subtract your option price from the strike, and that gives you an idea of an effective price of purchasing, where you would purchase shares if the stock were to drop, right? So in this case, selling for $490 minus 70, that's $65.10, which is my effective share price if it were to drop. If it never drops below my strike, guess what? I just keep the premium that I collected. This could end up turning into a situation that I'm thinking about where I just continually roll this at 21 days to the next expiration. I'm thinking about a year-long type of trade that I want to do, and I think Palantir might end up being that trade. We'll see. So I've been playing that game for a while. I mean, other than that, the technicals look great in equity markets, right? I mean, this is a 3-year weekly, but let's just make this simple and go one day, year to date, right? Look, when you're looking at equity markets, this is kind of what you want to see when you want to look at a healthy market. There's nothing going wrong with the economy. Rates seeming are stable, right? I mean, we're on the way, probably bringing them down. I think that's one of the more interesting things left in this year is the FOMC meeting on December 18th, whether or not they're going to cut rates. If they cut rates like they're generally forecasted to do, right now we still have a 73.8% chance of a rate cut. That's actually higher than it was a day ago. 73.8% chance of a 25 basis point cut. That means the Federal Reserve is not worried about what's going on with the potential talk of tariffs, and it's not an inflationary environment, and we're good to go. Now, if they don't, I think it's going to create some havoc in the market. That's just how I feel. We will see. Theta Trader, I do already have leaps in Palantir in a different account. I don't do that in this account. I generally don't trade leaps in this account. This account is more about a 45-day to 90-day window, and I've actually talked often about how I think it's important to have different accounts, whether you have an account that's strictly for crypto, whether you have an account that's strictly for equities and trading sort of a shorter term time period, and then an account for longer term trades, because I think you just have varying degrees of P&L along with those trades. And I think it's nice to sort of be able to look in different accounts and put on a different hat each time you do. So I'm with you on the Palantir Leap trades. Like I said, I have some of those in another account. This account is more of my tasty sell vol trade, and that's what I'm doing here. And so I think this is one where I'm going to, I think this is going to be somewhat of a year-long trade where I just sell puts in Palantir, maybe around the 50 delta. I don't know, 50 to 30 delta. I guess the strategy should be 50. I started today with a 50 delta. Maybe it'll be 50. We'll see how it feels. Is it kind of FOMO? Maybe, but not really. I think there's something interesting about this name. Again, I think I like to trade names where there's a lot of volume, which obviously there is in the stock and in the options. And like I said, right now it's number 8 on the trending options volume. It's been up here quite a bit more recently. This is actually what drew me to NVIDIA more recently. NVIDIA in the past, I was looking at NVIDIA for like a solid year and a half before I started trading it regularly. And I noticed it was always in the top 5 in options volume. And in the last year, it's mostly been in the top 3 just about every day, whether it's 1, 2, or 3. Today, it just so happens it's number 4, which is unusual. But I think it's because SPX has entered the chat. And there's clearly a lot of SPX trades going on today. I didn't know. There must have been a huge SPX trade that went up today because SPX is usually in the top 8. It's in the top 3 right now. I'm guessing there was a big trade that went up in there. So, David Gallimore. Jamal, there are 2 kinds of traders, those who have a rogue accounts and those who lie about not having a rogue account. Totally agree. You got to have a rogue account. It really helps to do that. I've asked on a few shows, but no answer. Any long-term play selling leaps on micro strategies? Premium is huge, like 40% of the stock. Well, I don't know. TA, you tell me. What are you thinking about as far as leaps on micro strategies? First of all, that's a huge trade. I know I think there are some of us who do trade leaps in these accounts. I'm not sure who else does. I don't imagine many do. Like, what are you looking to sell? Give me an idea. Let's join in this idea. Let's join in this ideation together. You got to come up with an idea and tell me what you're thinking. Clearly it's not on any of our radar. But I can tell you, it's, that's the thing. You're selling, the thing you have to understand about vol and something where you go out to leaps. And this is clearly vol, right? Like this is 100% Vega volatility, big time vol. This can move on a day-to-day basis fairly often. I don't know if you've ever traded leaps before, but look how wide this is, right? This is kind of why we don't necessarily do these all the time. These are fairly wide markets, and so this is almost the opposite of what we talk about when we talk about very liquid markets. These are very wide. This is very illiquid. It's out in these leaps. You're seeing, very few contracts trade. That's why there's not as much interest in this type of idea. I could understand, if you want to do that, and that's what I figured. You were talking about maybe selling the call spread. Totally makes sense. It's just, what is the next silly up? I don't know what the next silly up is for MicroStrategies. Is it going to be 500? Is it going to be 600? Whatever that is, it totally, I understand why you do that trade. Just know you're going to be waiting a while for your money, unless this thing turns right around and crashes, which I'm sure you're, planning on as well. I haven't seen a out of money put to cover. So if you sell a call spread, if you sell a call spread, right, and you buy an out of the money put, that's not covering. That's essentially the same trade, just so you know. So just be aware of that. And the out of money, the puts, if you think the out of the money calls are jacked, the out of the money puts are just as jacked in this name. So that's a tough trade is basically what I'm getting at. It's a tough trade. And again, it's going to be pretty wide. It's going to be a whole lot going on there, a lot to move. But let's see. Any thoughts about Okta today? Okta has earnings. I'm out of the earnings trading business as of a month ago, but I'll take a look at it for you. 80. Let's call it 81. Let's look at the straddle. It's where I always start. $10 move. That's greater than 10%. This is kind of a weird tech name, right? What does Okta do? I don't remember. It's funny. I know people are shocked. I look at however many thousand names in a day. I just really don't look at exactly what every company does anymore. It's just more about what business is, what area it's in. And I know it's a tech name. I just don't remember exactly what they do. Sell 6 services, including single sign-on service. Allows users to log into a variety of systems, centralized process. That's needed. I do like that idea. I tell you what, single sign-on, as much as it used to be annoying, signing on to anything is becoming more of a chore than anything nowadays. So I don't, invest-wise, I don't sell earnings personally. I do analyze selling earnings. I do analyze something like a strangle in this case, at the expected move area, 95 and 70. Well, you could look at the 91 if you want and 71. $3 strangle for $800. That's interesting. That's not very much buying power in this. Let's look at the chart. Ooh, the chart is on its butt. It's coming up close. I usually like to play things from the long side, long calls, whether it's long call calendar calls or just long calls in general for earnings, in case there's an upward earning surprise. This one, I don't know. I don't know. I haven't. Let's see. What was the last big move? Last time it had earnings was September, right around the time. This is probably earnings, huh? That was right around the time when the market was struggling a little bit too, I think, or close to. Big down move on earnings last time, huh? I don't know. I mean, if it were me, I would make a directional play. And again, I see you see some volume in here. There's definitely some decent volume ahead of earnings. 3,000 on this 90 line. That's one that I would probably choose, where I see a lot of the volume. And I'd probably do something like that. And I'd put a couple of them on. You can do you can do 5 of these for $100 total. These matter. I mean, if the name moves $10, that's a nice little payday, and especially if it's sitting up there. Now, if it goes over that, $1 to $2, $3, $4 over, well, then it just ends up kind of in the money, and you don't lose much. You lose what you paid, which in this case is $100. It's not terrible. So I've done those a lot. For those who watch the show, they know I've done those a lot. Sometimes they pay out, sometimes they don't. But you don't risk a whole lot of money doing that, which is really nice. Am I finding anything in the commodity market? I'm still long a GC call spread. It's way out of the money. I originally had a further out of the money call spread when gold was in this area. I'm going back to a little bit prior to the election, around the 2,800 level where gold was. I had a 2,900, 3,000 call spread, thinking gold was gonna, boom, go that much higher. Didn't happen. I actually rolled this down and shortened it. So I did 2,800, 2,850. And, it's a small amount of premium. I'm basically holding it through the jobs report and potentially holding it through the FOMC report on December 18th. We'll see how that plays out. I also have silver longs. And again, these have struggled more recently when you look at post-election moves. The narrative has really changed on a lot of different things. Gold and silver are no different. So they've really struggled since then and kind of struggled to gain traction. Not the same bullishness that we were seeing throughout early in the year. I don't know if that has something to do with the change in the rate situation. I'm not really sure. I think a lot of the time, gold and silver, spent a lot of this year moving to the upside because they were expecting rate cuts to come along and make it cheaper for the cost of carry. That hasn't quite happened. Maybe Tasty Vegas does have something to do with crypto as well. Maybe a lot of the funding started changing and going into crypto as the election was approaching and after, knowing that the Trump administration is really sort of favoring crypto and trying to do things to enhance participation. Maybe that has something to do with it as well. I'm not exactly sure, but I know there's been a fundamental change. Crude is something else that I have traded quite a bit throughout the year. Usually when it's under 70, I've been long. I didn't do it the other day. I looked at it yesterday when it was down around here, 67, 68. I decided not to. Big pop today. I don't know what's next for crude, honestly. I'm trying to figure it out. I don't kind of know what to make of it. I'm not sure if it's heading lower. I'm not sure if because of the change and things that's going on with interest rates, it's going to influence it. I know there's always stuff out of OPEC, et cetera. It's just too much to keep up with. So I haven't traded much of crude, but like I said, I do have as far as commodities go, I do have gold, I do have a silver position. That's all I'm doing for now. Did look at nat gas today and saw it's moving around quite a bit. I was looking at a strangle. For some reason, I feel like the buying power is fairly low in here compared to what it normally is. You could put on, for $1,300, you could put on a 80% pop, extrinsic value of $1,100, but it's a little nerve-wracking to sell upside naked in natural gas a lot of the time, so I'm probably just going to sit pat. I have nothing to do with it right now, but that's mostly what I got going on, guys. Really, it's been limited trading. Actually, this is the first of all trades that I put on in a couple of weeks today, and we'll see how those play out. So like I said, no engineering the trade on Thursday, Friday, or Monday. I'll be back in the seat a week from the day. I'll see you guys then. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. I'll see you.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then it.
Blessed. I can't. I almost tell you. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
everybody. Tim Knight here, and it is time for the wonderful world of charting. We've got a pretty blasé day in general on our hands. The ES is up 0.03%. Maybe we'll get another up day. That'll make the past 11 days, 10 of them would be up. And another lifetime high, although just by a little bitty bit. I've got the charts all loaded and ready to roll. Let's just dive in and catch up with what's cooking out there. We zoom in on the old spider, and as I say, it's just kind of just adding a little bit every day. This, of course, the bottom for the past few months was the day before the election. A lot of fear and uncertainty. The day of the election itself, strong day up. I guess the market kind of see what was coming. And the day after the election, a vault higher, which for a few days eased back, burned off a bunch of the post-election excitement, and then resumed. So we hit the bottom here on an intraday basis on the 15th, stabilized and just up ever since. And now, as you know, even the NASDAQ has joined the fun. The diamonds, the Dow 30 ETF is easing off a bit. It had its intraday peak on Friday, which was a half day. We went down a little yesterday, a little down, a little more today. It's all just kind of grinding around, really not much to it. Just there's nothing meaningful in those grinds. So let's direct our attention briefly toward the zany world of crypto. This chart goes back a long way. I've made an effort to get as much history as I could, back to when Bitcoin was a nickel. It originally started, I think, at a penny. So this pretty much captures the entire move with Bitcoin. And you can see we've had some rainbow pushes higher from time to time here. The most recent of which was sort of the mildest one. And it's quite the move because, of course, we had our 2022 wipeout, which destroyed FTX and the lives therein. But ironically, after the FTX blow up, we moved in a series of waves here higher and higher up to the pinnacle of the $6.2 million banana being eaten. Some of you know what I'm talking about. Most of you, I hope. And of course, $100,000 was on everybody's mind. And we almost got there. The peak here on that was $99,655.50. That was back on the 22nd. And, it's kind of cruel. It didn't cross the six-figure point. And then it's just been kind of grinding around here in the 90,000s ever since. Far more dynamic in recent days than Bitcoin has been Ripple, which until about a month ago was nothing. I mean, it was just grinding around here. A month ago, put it this way, a month ago was the same price it was in 2019. Which is how far back my data goes. Maybe that's when it came out. I'm not sure. But it was a complete zero. Nothing to it. For reasons I don't need to know and certainly don't know, it just decided to strap on some rocket boosters and go straight up by about 400%. Intraday, lifetime high today, although it is backing off a little bit from that, but it has been absolute madness. And you can see here on the volume, this used to grind around, trading day to day, $10 million, $20 million, and so forth. Now it's measured in the billions. So you got me, but I will tell you, if the day comes that all this comes tumbling down, there's another book in it for me because this is just any one of these things. You could write an entire book on Ripple. You could write you could write a series of books on MicroStrategy. These are just unprecedented activities, movements. I mean, all the old, Tulip Mania and South Sea bubble, boring. Those things look sensible and prudent compared to what we're going through now. So I tried to update Popular Delusions and the Extraordinary Madness of Crowds, or whatever it's called. I hope I got that right, with my own Panic Prosperity book. But we've so outdone that stuff. Zaniness is in a whole new level these days. And ZERP here is a good example of that. Speaking of MicroStrategy, here it is. Itself, as I said, would be a worthy book or even a novel. And in this instance, this peaked back on the 21st at $543. It's down to $372 now. Still very richly valued compared to its actual holdings. But say a year from now, I would be, well, I hope I am here to talk about what happened in the year later, because I enjoyed this. It's going to be amazing to see in December 2025, where's Ripple, where's MicroStrategy, where's Bitcoin, where's the S&P? What I'm a fan of history, and that's why I love charts, because charts are living history revealed pixel by pixel. You just get to see life open up every little day. To me, these aren't wiggles on a sheet of paper. This is different aspects of the life around us. And they speak to politics, they speak to cultural mores and fads and all the rest of it, and technology, of course. And we are living through some amazing times here, absolutely. And you can take that as many ways as you like. The beneficiaries of the forthcoming regime change are continuing to thrive in many sectors. Palantir, Peter Thiel's organization, is just setting the world on fire here. We have moved amazingly on this. This has gone from a few dollars a share 2 years ago to, you could plausibly talk about a triple-digit stock soon. This is up to 70 at this point. Is lurching again today, above 70, new lifetime high on PLTR. Tesla, which is also a beneficiary, a little calmer right now. It had its day in the sun the past few weeks, and it's rather stretched. The Fibonacci's are still ruling the roost here. As you can see, there's a lot of gravitational pull, so to speak, from that highest fib. And I could easily see it just sort of grinding around there for the balance of the year. Years from now, this could be a fraction of its future price, because it could have a fantastic future. But as for the moment, this entire pop here, I think, is the result of sort of, political realities and cultural realities. Okay, well, my favorite topic, semiconductors. Let's talk about those a bit, because that's a very important sector. Intel, as always, the odd man out here, in spite of having billions and billions and billions of dollars dumped on their heads, they just keep falling. Just strategically, they have blundered so poorly that the market recognizes that. As I mentioned yesterday, the exit of their CEO caused some brief excitement in the morning, and then they realized that this doesn't really change anything. So we sold off all the yesterday. We sold off even more today. This entire pop here, the post-election pop, gone. So we're back to the realm of October for Intel, and just long term, it looks as ill as ever. But other semis aren't suffering nearly like that. But what I closed with yesterday, and we're going to close again with today, is the importance of the trend lines in not just SMH, but the individual components as well. Here's just 2 or 3 of them. Here's AMD, against which I own March puts. Look at what a yeoman's job this trend line is doing regarding these prices. This is just spectacular. This trend line goes all the way back to 2016. Little different back then. And we broke the trend line here on the 13th, and look at this ever since. Oomph, 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 oomph. You can hear those sounds. It's just trying to get to the other side of the trend line. And this is in the context of a NASDAQ that is just vaulting higher. So it's not like the market in general is grinding around. No, it's these individual items and semiconductor sector in particular. So this trend line had been support for 8 years, and now it's resistance, and is doing a formidable job in that role. ARM, this has a much, much, much shorter lifespan than the likes of Intel or AMD. In this instance, it's a horizontal that I'm depending on. This was the peak back on the 25th, and today we tagged it and reversed away. So far, so good on that. So I've got puts on ARM as well. The king of the semi-space here is, of course, NVIDIA, which itself is up over 1%. I do not have a position in this, nor have I, nor do I intend to. It's just an important thing to watch. And what I'm watching on this one is the fact that we peaked on this one post-earnings on the 21st. And this horizontal here, not as important as the others you just saw. It just happens to be anchored to this former high here. Really not very meaningful. It's really just more of a guideline. But for whatever reason, that has held true as resistance to both yesterday and today. Adjunct to this, it's not a semiconductor company, but one item I mentioned yesterday was Supermicro, SMCI, gaps, gaps, gaps. It's all about the gaps. And this gap was crucial for calling the bottom on this staggering tumble when they were talking about delisting the stock. And yesterday I made mention in the other direction of this gap, created an opportunity, I thought, for a bearish play. Well, looking pretty good so far. 46.75 was the gap. Today's peak, 45.98, only 77 cents away. And we are down over 3%. So I like that. So far, so good. So I got puts on MCI as of this morning at a good price. And so that's behaving itself as God intended. So yay. Caterpillar also has been doing pretty well. I've got puts on this. This is down about 1%. And this is very, very lofty with respect to its red resistance. Like so. It also mentioned a good winner continues to be Lumen, which you've seen 300 or 400 times. This goes back incredibly, this top to 1997. And it has been, were it so that I could find stocks that behave like this more consistently, but look at this, just weeks of red and just a token green bar right there. So that's what I like to see, just down, down, down. Pretty stuff. Wing is up today, but I like the look. I continue to like the looks of this because of this broken blue trend line here and a very pretty top. It's fighting back a little bit. It's okay, so long as it stays below that dashed horizontal. So Wing stops looking good. On the long side of things, woof, which I mentioned a week or two ago. Not the cleanest pattern around, but it's got a pretty decent base there. Having a good day. I had a good day yesterday and today. Both double-digit percentage risers, I believe. And one I also like, Compass, COMP, coming off of its own base like. So I'm still very conflicted about silver. Long-term, I'm a fan, almost to the point of being a zealot. And it's having a pretty good day here, I must say. We are pushing off of this dashed horizontal, and so far so good. This is might be kind of shaking itself off and getting some. The reason I'm kind of wringing my hands about this isn't because of the silver chart itself, which here's SLV, looks really good. It really does, and I hope silver does terrific. It's just that I can't shake the fact that gold looks vulnerable. GLD does not look poised to push higher, and it would not make any sense at all to me, in fact, nearly impossible, if gold sank and silver just rolled its eyes and went higher. They tend to be in lockstep. So I would also add that the miners, and this is the junior miners, looking very iffy there as well. So there's the horizontal. So I continue to look at silver with enthusiasm, but not enough to actually get serious about it. I just think gold could kind of spoil the party short term. How are we doing on time? We're at the bottom of the hour. Well, I'll just jump to the end. Here's SMH. Continues to merit close observation. So long as we're below that broken blue trend line, semiconductors are vulnerable. And if we can start to re-weaken and maybe even finish this pattern, then the items I mentioned, like AMD, like ARM, I think could do very well on the downside. So we'll wrap it there, and I will see you tomorrow. Thank you as always for coming by. Bye-bye.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you had to do is look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when, like, you're in a pit back in the day that had like 1 or 2 market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm going to buy your book, what did you mean?
If you're going to buy the book, that means you're going to buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
I want to play a game. It's a relationship game, so I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes! So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing. Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live right here with the closing bell. Even the S&Ps are up 2 handles, Sadnov. Do you know what the range is today? 20 handles. That's not the range today, Sadnov. That's the range overnight into today. 20 handles. 6,067.50 to 6,047.50. Sadnov, we are 3 handles off of the highs. How happy are you?
Well, let me just tell you something. This is what happens if you root for no volatility.
14 and a half, 14.55 on vol. Totally agree.
This is what happens. And, that's it. 14.55. You're talking about the vol futures.
Yeah, vol futures.
The VIX itself is actually unchanged. It's up 6 cents today. It's at 13.40, but that's just almost like a rounding error.
And VIX one day has been the 6, 7, and 8 handles the last couple of days. So, yeah, you're getting low implied volatility.
VIX one day. I haven't looked. Yeah, we're 821 right now. It's actually up 89 cents. It was down in the 7 handle. Pretty amazing. I just caution everybody at these.
When you least expect things, expect them. It could be volatility from either side. It could be larger than expected moves.
Careful here. Careful, Will Rogers. Anyway.
You know what, Sadnov? Why be careful when you could be honest?
What's that?
This is where my Venmo usually comes in.
Oh, I can't stand you anymore. I forgot
said you were going to give me the $20.
I was so freaking busy today.
It was like busy work busy. Like I watched
Hold on. See, I'm good at Venmo because between
you know how to pay like nobody's business.
It's between you.
I mean, this has finally made you honest.
Between you and Scott, thank God. Thank God we didn't have this when we were traders.
Oh my God, we would have been out
all day long. All day long, all we would have been doing is
passing money back and forth like crazy.
They would think we were laundering funds. Okay, are you happy now? You got your money.
I am happy.
You paid Anthony Batista $20.
I am happy right now. Did you put your normal inscription on there? Yes, you did. You did. Luck box. You did. You did. Thank you very much. Thank you very much, Sadnov.
So when I get audited someday and they go, what are all these luck box payments? I go, those are my debts to my loser friends who somehow I lost bets to.
Well, thank you, Sadnov. I'm glad you paid me. Even Francis admitted in the chat that you were wrong.
He took me down.
You had to go to some old traders on the floor to get the real answer, even though we had the article there, but that didn't help. Hey, bonds turned around. They're down 21 ticks, Sadnov, 119.01.
I did not sell any up near the highs because I was waiting. I mean, quite honestly, I'm waiting till they get to 20 and a half-ish. I'm not even selling them at 20. I'm not even covering at 20. I'm sorry, not
get out of some.
Not even going to get out of some. Well, I'm really short a lot of puts.
I'll do it right. Well,
I'm not going to cut
long delta, Sadnov.
Long delta.
How about we just say it that way? We'll just say long delta.
I'm not going to close out any long delta until we get up to about 120 and a half on the bonds, and they got up to just under 120. So I didn't even consider. I am a buyer of notes anywhere in the 110 level. We're a little bit above that right now. So we got to get down a little bit lower. I'm also
going to reload.
I'm looking to reload in the bonds.
It's not like you.
Around 118. So a point lower in the bonds, I will reload. And under 110 in the notes, I'll reload. Right here, I'm just going to stand pat. I do not like the tape action today. Our biggest loser today was the Russell versus the S&Ps. S&Ps up unchanged, Russell down 18. That's not good for the good kids. That looks like it's our only...
I think you had to like Tesla.
That's our biggest loser. That and the bonds are our biggest loser today. Biggest winners today are Tesla by far.
I knew that was coming.
MSTR, SPY. A lot of premium they killed today.
Mm-hmm.
And yeah, MSTR, Tesla, all the ones I was worried about this morning turned out to be the biggest winners today. That's it. It was pretty much a nothing day. It's a positive day.
Top to bottom, all day, all night, all everything, Saz. All everything.
Yeah. Yeah. So
what do you think?
What do I think? You know what? These are the kind of markets that I think are the most challenging because when you have high implied volatility and you're always going to have uncertainty. Nobody ever knows what's going to happen.
Sure.
But when you have high implied volatility, you have lots of options on things you can do. You can sell volatility. You can play as a contrarian. You can play something directional because you're going to have lots of two-sided movement. When you have really low volatility, everything gets very hard because you can't make you're not going to sell as much premium, and you can't make as much of a directional play because
and you use the same amount of buying power, right?
And you use the same amount of buying power. So these are the hardest markets. I love when people talk about, high volatility makes it really hard. No, high volatility makes it actual tradable. low volatility makes it really hard. And we are in a period of low volatility right now, and you can see the difference. It's way less fun. Way less
fun.
Bring back an election.
Harder to find things. You find just going into products like that have higher implied volatility, wider markets. You know,
we need an election.
We need an election.
We need an election. We need something, because this is not fun. We don't have earnings. We don't have an election. We don't have anything going on right now. Are there earnings tonight?
You can look at CRM and Dollar Tree if you want.
I do not like Dollar Tree. I will stay away from that at all costs.
CRM IV rank of 54. It's up $1.25. It's a $332 stock.
Yeah,
Markets in Jan are 15 cents. Good volume, open interest. What do you think?
It's traded 6 million shares. I mean,
Puts or schmutz, but they're going to use a lot of buying power for puts or schmutz.
I mean, you're talking about, let's take a look.
Take a look, we shall.
26% implied volatility going into December with 17 days left to go.
This is just the thing we were talking about just a moment ago.
That is such a low vol to be. I know the IV rank is still 54, but 26 vol in that stock feels to me like awfully low. Let's just take a look. Let me see what ZS did. Down $10. So that actually was inside the expected move by the end of the day. CRM.
What are you going to do?
I hate the stock, just so you know. I hate the stock. What would you do?
I would probably abstain and not press it.
The expected move by December is $26.
$22 tonight.
$22 tonight. Let's just say $26 by December. So if I move $50 away, it takes me down to $280. Right?
280s are getting about $1.60. That's way too much money. Way too much credit for you.
No, the put's 280 in December.
Well, you're going December. I was going January.
No, 280 in December takes you down to 70 cents. That's $50.
That's your wheelhouse. 70 cents is your wheelhouse. $1.60, $1.80. That was no good.
There's a lot of call skew in here.
A lot of call skew.
You go up to the 400 calls. It gives you 5 delta on the calls, 5 delta on the puts. You sell 2 puts and 1 call. I don't even like this trade. I'm just doing it because I'm bored. I didn't do enough today. I literally didn't do enough today. $2.16. Oh, that was too easy. I don't like when I get filled at mid-price. All right, $2.16. I just did it small.
Good job out of you.
I've only made 30. In fairness, I was in meetings all day, so I didn't have a lot of time, but I only did 31 trades so far today, which is about a third of what I've been averaging, about 90 trades a day. So
yeah,
really,
you weren't that active, but the market didn't warrant anything. So.
The market didn't warrant it, and I was kind of doing stuff most of the day.
Taking care of business?
Yeah, you can call that taking care of business.
Did you see the big mover today? Sadnov was Meta, up $18 and change, strong all day. It's about 57 cents off of its highs. Meta, they can't get enough of it, Sadnov, new high.
Kind of crazy. You know, I don't want to tell you what's going through my head, but I have a Meta killer going through my head. I just can't. I don't know if I feel like verbalizing it.
Okay.
But I'm surprised. I'm surprised by Meta's strength.
I am too, and I thought for earnings that would be the one that would disappoint. I always think that Reed Hastings always has like something silly to say, or
it's not Reed Hastings. That's Netflix.
Oh, sorry.
Zuckerberg.
Who's Meta?
Zuckerberg.
Oh, sorry, Zuckerberg. I always think Zuckerberg is going to have something sillier to say.
Get the ambulance to the home ready, okay?
Especially with
that. Get the cart. We may need a cart with a You know what?
This is what you get for taking $20 off. Yeah, I'll give it back to you. That's what I.
Not really.
Is that what I have to do? I mean,
I'm just saying we should get like a little.
I mean, is this why? Is this why?
Padded cart.
I mean, really? Is that why? Is that what I have to do?
Yeah. I mean, it would make things better.
Whatever. I made a mistake. I'm human. I'm human and I'm bored, Sosnoff. I'm human.
Reed Hastings, Zuckerberg, they're all the same.
They're all the same.
Yeah. Well, Bezos.
Rich SOBs. Tesla down 8,000 change, but weak.
By the way, they're not buying. Bezos was not buying the jets. Seattle.
Yeah, he likes. Yeah. He wants to. Yeah, I got an email from
the Seahawks.
Was it Dino?
I don't remember this morning. Could be.
Could be. Yeah. Yeah. No saving the Jets. No saving the Mets. But don't worry, we're here for them.
There might be saving the Bears.
All
right.
Tomorrow you have earnings. Marvell.
Marvell's usually before the.
Marvell's on the close today. After the close today,
I was going to say it's usually before the opening.
I meant on the close today. Then I apologize.
MRVL.
Mm-hmm.
I currently do not have a position in there. The stock has been on a monster tear.
Down $1.20 today. Yes, you are correct.
But I mean, it's basically sitting at all-time highs, isn't it?
It is. Volatility's actually contracted a little bit in Marvell.
Now, here's a little bit more interesting. Let me explain. Can I explain why?
Think you? I'm.
Okay. CRM had 6 million shares traded. This one has almost 17 million shares.
Yes.
So I know it's a less expensive stock, but it's 3 times the volume. Same notional, 3 times the volume.
Okay.
That's number one. Number two, the implied volatility of CRM was 26. The implied volatility here is 67. So you have a much higher implied volatility.
It makes it a lot more interesting.
Yeah. I know the Ivy rank's a little bit lower, but you have a decent amount of volume. You have a much higher implied volatility. You have an expected move on a $100 stock that is about $10. On the other one, you had $22, let's just say, on a $380 stock, whatever, it's $315 stock. Sorry, $332. So this one to me is a little more interesting.
Okay, I'm glad I found it.
I'm glad you didn't overlook it.
Taiwanese sources told me.
Yeah, Taiwanese sources.
Tomorrow you got Chewy, Foot Locker, and Dollar Tree, and Tom's favorite CPB.
None of those are my favorite. Chewy, I would probably trade, and that's about it.
The Campbell Company. That's why you love that. You still got your Campbell soup display, don't you?
Okay. Yes, I do have my Campbell soup display.
Beautiful.
So in this stock, the expected move is $10. The stock right now is trading for $95. That puts it up to the one. If you watched our research today,
you gonna do Jan or Dees?
You got to do Dees.
Oh, got to do Dees.
17 days to go. The expected move puts you at 105 and 85. That's the expected move. The 85 puts are 113. The 105 calls are 209. We call that call skew.
That's call skew.
That's called massive.
329 mid price for the whole thing, pretty much.
What?
$3.29 mid price for the whole thing.
Yeah, I'm probably going to do 2 puts and 1 call again. And the only reason I ever do 2 puts and 1 call is just because.
Puts or schmutz.
Because puts or schmutz, and because if you do it over 2 different stocks, you're probably going to be right one of the 2 times. They have some pretty crazy. They have some weird markets in here going into the close.
In Marvell?
In Marvell.
What's weird about them? 114, 170, 208, 218?
They're wide on the puts. Look how wide the puts are.
Puts are well, now they're 113, 121. They were just 113, 117 a minute ago.
Like the cheaper puts are 50 cents, 150.
Okay. All right. You want to cherry pick one strike, sure. I'm sorry.
I'm just looking, dude. Don't beat up the messenger.
I'm not shooting the messenger. Do you care about Chewy? Used to be one of your favorites.
Yeah, but it's not today, is it?
It's tomorrow morning.
Oh, it is?
Yeah.
What, did you forget all these?
No, but this is when you want to know. This is when I tell you.
Are you just waking up now or something? Come on, Grandpa.
Chewy, FL, Dollar Tree, and CPB, like I told you just a moment ago. Campbell Soup.
Oh, these are all tomorrow.
Yes, tomorrow before the market opens. I told you that 10 minutes ago, but it doesn't register with you. Bet, call the people with the straight jacket, please, will you?
The only one I like is Chewy, and it always misses.
And it always misses. Well, it's on its highs. So here you go.
It's 33.
If it always misses, do a little call ratio spread size because it's going to have call skew. Go a little closer this time. You go to third. You can't even. The markets stink. You ain't going to do anything in here.
Yeah, you can't do anything here. It's only traded 6 million shares. It's got a volatility of 84.
You're done.
Oh, these markets aren't even tradable.
That's what I just said. But I said that like 40 seconds ago. Because
what happened to Chewy? It used to be tradable.
So I don't know if they can say the same about you.
I guess.
Used to be able to get something for a Sazonov. Can't get nothing for a Sazonov these days.
Yeah.
What do you get for a Sazonov these days, by the way?
I don't know.
I didn't think so.
Buy a little Chewy here. Buy some stock and sell some out of the money calls.
Mm-hmm.
That I think you can do. A little delta neutral trade.
Uh-huh.
Buy stock and sell. Where's the stock? 30. Oof. Buy some stock and sell some 39 calls in Dees. Every 100 shares.
You care about RY, my peeps want to know?
What's RY?
I have no idea.
No, I don't care.
RY is Royal Bank of Canada.
I really.
It's on its highs, 124.
I really don't care. So I'm going to buy a little Chewy, and I'm going to sell some.
You're going to buy stock?
I'm going to buy.
You're bearish. You said they always disappoint. You're going to buy stock. I want to see how you turn this around.
I'm going to buy stock and sell 39 calls.
Buy stock and sell 39 calls. That has to be a long delta play.
Buy stock and sell 39 calls.
Well, stock's 33 and change. It has to be a long delta play. In December?
Actually, I can't do this because it can't.
You're going to sell 76.
You can't do it. You can't do it with. You can't do it with ratios. You have to do the calls first.
You can't do more than a 1 by.
No, you can't do more than 1 by 1.
Right.
When you're doing stock trades.
Mm-hmm.
I forgot about that. When you tie stock to options, it has to be 1-to-1 because it sits on an exchange server, and it's really hard. So you got to fill the option side first. So I'll sell the 25 deltas, but I'll only do 3.
Okay.
And to every 100 shares of stock I buy, I'll sell 3. I'll sell 3 calls. It's a lot of work. It's a lot of work, legging all this stuff. All right, I did it small. I'll do some more if I can get filled on some calls.
Awesome.
All right, so I put some crappy little trades on. Marvell, Chewy, and
good. Do your housekeeping real quick. What happens tomorrow? Every Wednesday.
What's your assumption?
Absolutely. Where do people submit their assumptions to?
tastylive.com/assumptions. tastylive.com/assumptions. Send us your Wednesday assumptions. We need some really good trades for tomorrow. We need some good assumptions, but make sure they're liquid underlyings. Don't send us anything that's not liquid. By the way, big movers today. Surprisingly, out of nowhere, crude oil's up $1.90. But
It was up. Yeah, right.
But the premium got killed in there today.
Surprising too on the upside, right?
Yep. Bonds got killed, like you mentioned, and also, what else was I looking at that got? Where's natural gas? Yeah, down 16.7. That's a pretty big move. That's about it.
Been weak all day.
Yeah, it's been weak all day. Silver's been strong all day too. But those are, and the commodities, because some people ask, what's the biggest movers in the commodities? That's pretty much it for today.
Very good. You know what else is it? Enough out of you. We've got these guys waiting in the wings. Where's my overtime crew? There they are, Dylan, Chris, and Ilya. How are you, gentlemen?
Oh, no sound.
That's my fault. Let's put their sound on. There they are. I can hear him, but Tom can't hear you. Talk to me. You don't have to talk to Tom. Screw him.
Tony, I had a newspaper here because apparently when I sit here looking at you attentively while you're speaking to me, that's uncouth. So I ignored everything you just said for the past 10 minutes while we were in the waiting room.
That's fair. That's fair. Uncouth. Haven't heard that in a little while.
Uncouth. So with the skew at a pretty much close to a record at 170. That means that everybody, and including my mom, has been buying downside protection. Today she got filled on all the puts she was bidding for. So 170.65, and the skew is at, yesterday it was 167. Today it's 170.65. That's about the highest it's been, which basically means that the world is protecting itself for something unbelievable to happen, which probably means that something unbelievable is not going to happen.
That is pretty high, man. It hasn't been as high. The last time it was high was in September and then also in February.
Yeah, it usually gets this high right before we go into like this crazy
parabolic move.
No. Like, we go into like some crazy lull state, because it just means that everybody's buying protection. Everybody's worried. We don't crash when the skew's 170. We crash when it's 125. But what do you guys think? Anything else there's no other indicator that jumps out at me that's interesting?
I think this kind of speaks to the idea that maybe the dollar has more room to come down and bonds have more room to go up, just on a general digestion of everything that's happened since the beginning of September continuing. It's already started over the past 2 weeks. You probably get the green light for more of that. All of the event risk this week is Fed stuff. So Powell is speaking tomorrow. That's the big one. He's probably not going to say anything new. There's a bunch more data, obviously. Jobs on Friday, ISM services tomorrow. Those are the big ones. Probably no major screaming, earth-shaking headlines out of any of that. And that's probably a permission slip for markets to keep unwinding into the end of the year a lot of the exposure in the bonds on the short side. So bonds go higher, and the dollar on the long side. So dollar goes down. I'm starting to think about what this means for stocks, though, because, for example, Russell can't make good on a break of its high, and it's kind of wobbling out of its range today. And NASDAQ can't seem to break July's high still. So I'm thinking if there's a correction, it might be down for stocks, not for any trend reversal reasons, but just if everything's correcting, they're due too.
I don't want to correct you and Tom in the same sentence, but NASDAQ made new highs yesterday. It's making new highs today.
I didn't say
it can't close above. It can't close above August's high, though. It's been unable to close in the December NQ future above the high it set back in July. So that high was 21,245. The close yesterday was 21,218.
Oh, technicality. Sadma, skew prints at the end of the day, so that 170 is from yesterday.
Yesterday night.
Yesterday night, like 5 o'clock.
That's the only thing you can quote off. We have nothing else to quote.
We don't know what skew is today because it hasn't printed.
The day before was 167, so yesterday was.
So when you
we're always a day behind. I can't quote tomorrow.
You didn't say that when you were making it sound like it was printing 170 today, and the day before it was 167. If you don't say that it's a day behind, we think you're talking about today.
Are you going to take?
And you know what? I'm getting sick and tired of you. And Dylan, this is the best you've sounded all week. We're going to take a quick 90-second break and come back. We got more overtime and more Dylan after this. Peace.
Oh, God.
If you missed the live show, here's our cherry on top weekly recap.
Nick, I'm curious. On your birth certificate, I've always wondered this. On your birth certificate, is it Nicholas or Nick?
It's Nicholas, yeah, Saint's name. But I will say Frankie in the chat calls me Nikki, Nikki, like a woman's name. And I don't know where Frankie's getting this from. I don't know if it's like just a typing thing.
I had a friend at a previous firm. We were working on the technology development team with a Russian counterpart. He was speaking to a person called Ilya. for 6 months. I go over to St. Petersburg, Russia. I come back. This person asks me, hey, did you get a look at Ilya? And I go, yeah. And he goes, what's she look like? Is she pretty good looking?
Oh, man.
Yeah, he is.
In that moment, I realized that these two have been, for 6 months, this person's been flirting with her. This person in St. Petersburg, Russia. And you know what I told him, Nick? Hey, Tony, you know what I
She's
told him?
beautiful.
I go, she's beautiful.
You ever call a woman by the wrong name?
Not that I'm ever going to admit.
The trick is to just not say a name.
Just be like baby.
Yes.
Like baby.
Yes.
Yeah.
Yes.
Yeah.
Sweetheart, darling,
Sweetheart,
beautiful.
doll face. Yeah. Yeah. Okay. All right. I love it here.
But I got my vasectomy reversed. Okay. Yeah. But I can remember it to this day. Nikki and Gina were both sitting in the back seat of the car, and I was in the front seat of the car. And I go, hey, listen, I got some news for you. I tell you, you're gonna have a baby brother. And he said to me, no, you're not. You slipped. You're clipped. You got no. You can't have any. That's exactly what he said to me. You can't have any kids. I go, well, they don't actually take your. He goes, no, wait. He didn't believe me for the longest time. I mean, like a week or whatever.
Well, I looked at my father who was 50, and I said, good joke, Dad.
48.
I was like, Dad, is this the smartest thing to do?
Dad, you've done some dumb things in your life. This is the dumbest.
Is this the one?
Rich sent me a picture of Tom. It is perfect Tom. So how do you think he's in a cab?
In a cab, he's like this. He's either one of two things, like this.
Oh, he's talking to me.
Oh,
He's talking. Yes. Yes.
First of all, what is he wearing?
That's
3 layers.
Are those Corinne's shoes?
Those are Corinne's.
Get the full scoop by checking out the archives at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Oh, yeah. Tasty Nation, good morning.
Another lifeless day in stocks, but a pretty interesting day in the news. It's Tuesday, December 3rd, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this hour as we wrap up the futures trading day. Market closes at 5 p.m. Eastern. Of course, if you're joining us here on the Tasty Live platform, join us on the YouTube chat. Come over to youtube.com, check out the Tasty Live show. Or if you're on the Tasty Live show chat, come over to the website at tastylive.com, see what we're all about. Guys, it was another lifeless, dare I say, day in these markets. I look at the S&P 500 most of the day, and it's closing up here by 0.04% on fairly light volume, 881,000 contracts traded here today in ESC4. This is the case in the NASDAQ as well. Bonds, they twist and turn, and there was a little bit of a bounce this morning after we have news of a South Korean military curfew. We're going into a state of emergency. That was interesting. It lasted all of 3 hours. So much for that. JOLTS reports was out this morning as well, and that proved to be better than expected, or at least better than last month. We make our way around the commodity world, and oil was higher, silver was higher, gold does bounce off the lows, but not quite as much as its other metallic counterparts. In the world of currency, the dollar, which was down more during the day, bounces back, and the yen loses some favor. Guys, we have Salesforce earnings here after hours. Maybe that does something, but let's just go right to the charts and talk about a market where the S&P 500, technically speaking, is closing at a new all-time high, 63.25. But it was a day of lifelessness, Ilya. I guess we're waiting for the kit and caboodle, that is the Fed Chair Powell speech tomorrow, ISM services, ultimately culminating in non-farm payrolls this Friday before anyone makes any sort of decision here henceforth.
It certainly seems like it. There's a very strange lack of reaction to what's been going on in Korea now. Mainly that seems to be because the president called martial law that can only be overturned by an act of parliament, which parliament promptly did, and the leader of the president's own party said, "Yeah, this is not happening. No." So it's an interesting situation. Korea has been something of a political firestorm recently. The president and parliament are of opposing sides, and they've done nothing but bicker for basically his entire term. So there's no attention being paid to this, strangely, today in markets, perhaps because the martial law got overturned so quickly. But of course, were these kinds of things to continue to create instability in Korea, it would be a tremendous risk, not only regionally, but more broadly. I mean, this factors into people's outlook for China. It factors into what the incoming Trump administration might do, because of course Korea is a huge part of the global tech supply chain. So it was very interesting not to see any of the tech names respond really in any kind of way to this, because they're right in the firing line if there's instability here, much like in Taiwan. And so the situation sort of seemed to get written off. Markets seem to be asleep. The event risk starts tomorrow. So I suppose we'll see what things do then. Probably the only interesting chart that I'm really looking at today is the Russell, which may be starting to look a little double topish. But that's about it.
Dylan, you are a man of many words, but have said very little today. Tell me what you think about these markets.
But let's go in reverse order. First, don't you find this whole South Korean situation mighty perplexing? I mean,
I do.
South Korea is irrelevant, and I'm not that we want to get too spun up on South Korea. Who cares? But it does make me think about, we always sort of walk around as if we have identified the sort of relevant political risks, the obvious in Israel or the obvious in China or Russia. When an entity or when a region that is of zero perceived political instability sort of shoots off a randomized martial law institution / retraction on a random Tuesday evening, or maybe it was a Wednesday morning in Seoul. It just makes you wonder, what else are we not seeing in the world? Like I guess it provides evidence of it would be sort of the definitive black swan, right? Like if South Korea,
it's not that random, in the sense that if you have been watching Korea for the past 2 years, you know that these things have been escalating. The larger question is, should the markets care? And I think we see here today, not really.
So you're suggesting that political volatility in South Korea is not to suggest that there's, like, again, did people see Syria coming last week, Ilya? Was that, everybody saw that after?
I don't think, well, it doesn't seem like.
My point is there are things that appear to have been dormant for years or non-existent that are suddenly quite active, and shame on me because I haven't been studying Korea for the last couple of years, so for me it was a surprise. But I think that most people haven't been studying Korea closely for the last couple of years.
Sure.
But I also don't think people have been studying Syria closely for the last 2 years either, and didn't expect Aleppo to flip over. I understand the markets don't care right now, but I am slightly perplexed by the fact that, the world is more politically unstable than I think the average human being would like to believe, or that at the very least that the perceived political instability is in known locations as opposed to unknown locations, whereas, it may emerge anywhere. With that said, obviously the markets could give a damn, and I don't blame them. It's not seen as relevant. I did see some headlines worried about Nvidia a little bit, but even that seemed to be a reach. And if anything, the December rally hypothesis, which the three of us have been sort of cultivating is materializing before our eyes.
I mean, I would certainly agree that the majority of the world is not paying attention to the fact that there is political instability in many more places and has been festering in many more different theaters, if you will, than we typically talk about, because we're so focused on Ukraine and the Hamas thing. And frankly, the Hamas thing came out of left field, and people aren't really appreciating that what we're in the midst of is a much larger realignment that, Chris, I know you and I have talked about quite a lot, with the U.S. basically reformulating its role in the world, and that being a bipartisan thing. And the demise of globalization, at least of the 90s phase of it, and the changing of the sort of post-World War II consensus for how the world is run, that all of this is starting to kind of create a multitude of consequences everywhere, all at the same time. And things like this come out of left field. In the case of Korea, I think what could have been market moving and maybe wasn't because it was quickly arrested was the idea that, yes, there's been acrimony in Korean politics for 2 years at best. That's sort of a generous version. It's been longer, but the real kind of aggressive acrimony has been about 2 years. I don't think anybody expected that it would go to some sort of a martial law thing. I think everybody expected that there would just be argument and then elections and then more argument and then elections, and eventually things would sort of democratically settle on a path. And that it was very quickly undone maybe sort of kept that narrative alive today. Because a martial law situation is different. Korea was a military dictatorship, South Korea, until the 1980s. Democracy is not old in South Korea. So this could be a strange thing yet. If we look at Syria, I mean, that I think everybody's staring at all of this and seemingly not seeing that the Syrian civil war never ended. And everybody's instead watching Hezbollah.
And also North and South Korea are still basically at war.
That's right. They're de facto at war. And one side of that is currently sending its military to help Russia in Ukraine. So all of this is a live theater.
Maybe that explains the oil bid that Sosnoff was mentioning earlier, although I'm not sure exactly how I would get to the oil bid. But other than oil, could maybe it's a bid on the perceived marginal increase in political instability.
I mean, it certainly would be an interesting coincidence and a volatile coincidence of events if at the same time that North Korea is actively supporting Russia in its defiance of Western sort of sanctions and Western support for Ukraine, the immediate kind of spying apparatus and U.S. bulwark facing North Korea were to start to have internal domestic politics become a major stability concern. It would be a really bad time for something like that.
Mm-hmm.
Yeah, the Korea
and
news,
yet the markets don't care.
Well, yeah, we were talking about this and let me explain this morning. S&P 500 companies derive about 1.5% of their revenues from South Korea. And so when we look at the significant reaction, if there was any one place to look, it would have been in semiconductors initially.
Yes.
But that's quickly shaken off as the day goes on and moves forward. Samsung provides chips to NVIDIA that go right into some of their GPUs and processors for AI capabilities. So any prolonged turmoil there could be problematic. But, you know, again, martial law is declared and then it's lifted 3 hours later. So this South Korea is also a country where they have had zero compunction about prosecuting people that they think have run afoul of law and society. That they've locked up executives from the Samsung company itself, which basically built South Korea in the modern age. But Dylan, I want to revisit something that you said here. What you mentioned before, that we're in the midst of this December rally, which stocks continuing to extend their run here after hours. NASDAQ now up 0.43% on the day. It feels like we've done more in the past 25 or 30 minutes than we did all session long. I want to revisit something that we talked about not this time last year, but pretty darn close to it. Last year, we were talking about how market sentiment was getting too stretched. This was posted on the Tasty Live Traders blog, September 28th. Dylan, you may remember this as a place that we began discussing what happens when the market gets too bearish too quickly. Now, at the end of last September, the AAII bull-bear spread, the net change over the course of those 3 months was 16.5%. In the preceding 4-year period, whenever we had seen the AAII bull-bear spread change with more than a 16.5% swing to the bears at any 3-month interval, that was typically a sign of sentiment being overcooked to the bearish side. It was a sign that the market was bottoming out. Now, that was a little bit early in September, right? The market ultimately bottoms out 3.5 weeks later. But getting long on September 28th when the index was at 42.74, if you kind of just bared it out for the last few weeks, you're looking pretty good right now. This was the last time that we've seen, now over the past 5 years, last September was the last time we had seen this bull-bear spread widen out by more than 16.5% over the span of 3 months. You know when the other time that we saw it occur in the last year? It was this week. AAII bulls and bears have flipped. Bears now outnumber the bulls 38.6% to 37.1%. And when we go back 3 months, we see that the net change is now 21.9%. That is well within the threshold of what we've witnessed in recent years, or now over the past 5 years, as sentiment being perhaps at a place where bearishness is overcooked. We talk about a December melt-up potential right now. If history is any sort of guide, the next few weeks probably have a decent path ahead of them still. And the momentum that we're seeing in these markets, low volatility, strong technical momentum, low volumes, Ilya, this is the worst kind of market to fade if you're a bear. So I think when we look where the table is set right now, yeah, we have something like South Korea come on, and it's an unknown, and it kind of shocks people. But nevertheless, the story here in this market right now is markets that are just breaking out to yearly highs, just breaking out to all-time highs. And a lot of people who have missed the rally this year, Bloomberg's hedge fund tracker of the world's biggest hedge funds, only 2 are beating the S&P 500. Those that track the S&P 500 as a benchmark. This is a month of window dressing, I think, until evidence arrives and proves us wrong otherwise.
The only question that I have to sort of challenge that view is today's performance from the Russell and how that fits into this narrative. The Russell has been an underperformer. Obviously, most of what we've seen this year has been driven by tech, has been driven by NASDAQ. NASDAQ has been a little bit soggy. We can see here since July, it has struggled to make new highs. That's certainly not the case for the S&P or the Dow. They've not struggled. They continue to look stronger. And that has been a kind of conversation about the broadening of the rally, the rotation out of tech, and the sustainability of the rally overall, as capital says, okay, well, tech might be overcooked, but Dow has room to go up. S&P 500 as a whole then has room to go up because only some of that is tech. So you rotate into a more kind of broad positioning where more of the market participates and the thing can go on. That's borne out so far, except for when you look at the Russell, not only over the past several days, but especially today, where it seems to be falling out of the tight congestion range that it's been occupying. What you see is a reluctance to break higher, even though it's been a laggard and is ripe for the kind of reshuffling and the kind of rotating in the tech-led move that you might expect. So if this is window dressing, and if we're just gonna try to juice performance into the year end, what's the Russell about here?
Good question. We've been seeing the baton switch hands in recent weeks. There have been days where the Russell leads and the NASDAQ fades off, and then the NASDAQ leads and the Russell fades off. But net, both are ultimately moving up. Both are continuing to move up and are holding near yearly highs after the election. The Russell's pulled back over the past week, but materially down. I don't know. This kind of looks like a gap fill to me here today, where we have the gap.
But also, isn't the sort of the political agenda, whether it's the deregulation agenda or the tax agenda or whatever it is, more beneficial to large tech and large cap companies? And
I think it might be. It might be.
What was the top performing sector during the first Trump term? Information technology.
Mm-hmm.
The Metas of the world. Why would that change here? And this is kind of,
well, and that one's stuck. I mean, I think to Dylan's point, it's the Dow that's outperforming of all things.
Industrials are going to be well supported, and I'm of the mindset that all this talk about repealing chips in the IRA, it's not actually going to go anywhere, because Trump's going to take the opportunity for the photo shoots for all the groundbreaking. Oh, we're just opening up another factory. All the money that was passed under Biden, but Democrats didn't do anything with the money, didn't build the EV chargers, and projects didn't get off the ground, wrapped up in processing and environmental review and, making sure endangered honeybee badgers aren't, exterminated. And so Trump's going to take credit for all of it. You get all the permitting reform, Dylan, and all of a sudden all the red tape that prevented all of the IRA and CHIPS infrastructure spending money from going to work in the economy, it's just going to start to flood through. So one has to think that, industrials here for the next few years, that money that was clogged up, that stocks were rallying in anticipation of, may actually start to come down the pipeline. Even if, for lack of a better phrase, like, the pig of fiscal stimulus is mostly through the python at this point in time. And the real question is whether or not we're going to get the tax cut extension, which one would think we will. And how did that tax cut extension do for the big companies? Again, mega cap tech was the best performer during the first Trump term by far. COVID did add something to that in 2020, no doubt. But in 2017 and 2019, tech was still the leader, if you go back and look at the sector performance those years. Yeah, the NASDAQ is looking really good this week, guys. Another 0.5% gain. It didn't feel like a 0.5% gain today. This is all really coming here in the after hour. This is why we do overtime, because sometimes that's when the points are scored. We can see here that since the market closed, when meandering around all session, hey, what's another about 100 points between friends here in the NASDAQ over the past 20 minutes? Dylan, what's the, we keep talking about this because we need to have a conversation about something, seeing as how the market is still open, and I guess we are moving a little bit now. But what's the big risk now? Do you think the market cares for non-farm payrolls on Friday? I mean, if it's just another...
I don't know. I think the inflation. I think inflation stays. I think inflation is the answer. I think that the risk is inflation. I think the two big risks right now, not that there's a tremendous evidence one way or the other, is inflation risk and political instability. There's a chance of global political instability in more places than we realize, although the market doesn't care, but it is a risk. And then there's all sorts of issues around potentially around inflation. But barring other than those two things, I just don't see it. I guess you could have a shocking sort of decline in the labor market, and that would obviously be a risk, but we haven't seen a lot of evidence of it. But yes, the jobs number matters, because it always matters.
Elliot, it looks like it's going to be a big jobs number this week. It looks like it's going to be a big jobs number this week because of a give back thanks to the hurricanes.
Yeah.
Should we read into it?
Depends what you're reading into it. So if you read into it that, or if you think the markets might read into it some sort of substantive change in Fed policy, no, I don't think that's what's likely to happen. I don't think there is anything for the Fed to take away here. So consider the outlook for Fed monetary policy for the rest of this year was effectively locked in September. And we continue to see evidence of this. In November, the Fed cuts by 25 basis points, even as the rhetoric changes to the Fed saying, yeah, okay, maybe we kind of overreached on the dovish side. But anyway, here's a cut. The minutes from November's meetings says that almost all participants thought that a December cut is likely. That's after all the evidence since mid-September that the markets think the economy is reflating, et cetera, et cetera. 4 months of standstill on inflation numbers, 4 months without disinflation. All of that. And the markets get Fed minutes where they go, yeah, data is going to be volatile, but we are still firmly on the path, and everybody thinks that the December is a go. Okay. So the object of speculation is next year. December is whatever. If the object of speculation is next year, well, that outlook has been cut in half. In mid-September, the markets thought 130 basis points. Now they're baking in 60. So is there really anything to be changed here by what Powell might say tomorrow, by what the ISM does, by what you get from the NFP number? Not unless the number is so brutally shocking as to upend the apple cart completely. And that seems almost inherently unlikely, because those kinds of surprises very seldom actually occur. Things surprise at the margin. They don't surprise by earth-shattering amounts, typically. And you typically don't get a Fed that changes everything on the basis of one number, especially after they've told you that you need to be mindful of data volatility here and not overinterpret it, which is what the FOMC minutes said and why they are so confident that they're still going to 2%. So for me, it's not that these things will change stuff, it's that they won't. And the markets will react to them not changing stuff. They will react to event risk passing without things going haywire, which probably means you have more room to correct lower on the dollar, which probably means you have more room to correct higher on the bonds. And if stocks get the permission to correct, they might correct for lack of new upside catalysts that represent any meaningful change in anything.
Quick note here, Salesforce earnings did come out and the share prices are rallying fairly sharply here after hours. Last seen at 357, closed at 331. I will say that the earnings don't look that good on the top line. EPS was 241 versus 244 expected, but the revenues were 9.44 billion versus 9.34 billion expected. So that's an increase of 8% year over year during the fiscal third quarter. And the net income was up 1.5 billion in the quarter, up 25% from the 1.2 billion. So there's your catalyst for that broad tech rally continuing. If software enterprise companies are making money, then I guess it really is a bull market, Dylan. One thing that draws my attention here today, of course, if we're talking about individual companies, it's what's happening with Tesla. And like him, don't like him, Elon Musk has obviously positioned himself quite well for the next few years, at least if he stays in Trump's good graces and vice versa. Tesla has seen a tremendous boost in its share prices in recent weeks and months. SpaceX, which is out for funding right now, is talking about an IPO in the range of $250 billion valuation. Not any longer. That got a nice little 40% bump up to 350 billion since the election itself. But as much as I personally think that Elon Musk has some less endearing qualities that remind me of P.T. Barnum, I got to say this news that we saw yesterday, it just doesn't sit right with me, Dylan. For those that don't know, Elon Musk's $56 billion pay package was shot down. In 2018, Tesla's board approved this compensation package that was really unprecedented in size because it was designed to be the largest compensation plan in U.S. history for a public executive. It was based entirely on merit and performance. So he received no guaranteed salary, cash bonuses, or equity that vested over time. Instead, his compensation was tied to achieving specific milestones. Now, this package included 12 tranches of stock options, each tied to Tesla, achieving a combination of various market capitalization and operational targets. For each tranche to vest, Tesla's market cap had to increase by $50 billion, and the company had to meet one of several revenue or EBITDA goals. Musk met them all, and then some, obviously, along the way. In January 2024, a Delaware judge ruled that the compensation plan was invalid, stating that Musk had too much control over the board and the terms of the package. In June 2024, this year, Tesla held a shareholder vote to ratify the 2018 pay package, hoping to address the court's concern. But then the judge ruled that this vote did not change the original decision because it could not retroactively validate the flawed process. So as of yesterday, Musk's request to reinstate the pay package was denied again by the Delaware court. The judge reaffirmed her earlier ruling, emphasizing that the shareholder vote could not rectify the initial issues. So there are going to be some immediate next steps. It sounds like Tesla is planning to appeal the Delaware court decision, which means Musk and his legal team will continue to challenge the ruling and seek a more favorable outcome in the higher courts. That probably takes a year or so. Tesla also has the ability to move forward with a new compensation plan. But Dylan, this is a company that Elon Musk has said that if he doesn't get this compensation, he may naturally find his time going elsewhere, towards SpaceX, towards XAI, towards the Boring Company, maybe even towards Doge, now that he has favor with Trump in office. I find it a little ridiculous that this judge, though, can rule that a private corporation whose executive has met all of the goals that were set out ahead of time in a clear, transparent manner isn't entitled to that money. Like him or dislike him, Tesla has become a behemoth in the American auto industry and clearly enriched its shareholders along the way. What am I missing here? Why shouldn't I feel this way, or why am I right to feel this way, Mr. Radigan?
No, I mean, I think you are correct to feel this way. The only issue is the issue that is unknowable, which is the degree to which a board of directors and its CEO are actually two different entities. And that's an issue that's bigger than Tesla. The reason that this is an interesting discussion is not because of whether Elon Musk deserves a given pay package or not, but the reason why it's being brought up for debate is because of never-ending questions about governance in general with private companies that use public capital and receive public subsidies, public benefits, bank holding company, permits, environmental, industrial, whatever it may be, and the degree to which all of the companies rely on the perception that there are effectively, multiple levers of power on those corporations, with one of the levers being a board of directors and some sort of a voting mechanism for the board of directors to exert a point of view on large scale governance, and then a CEO or a president or a manager or whoever, whatever the title may be, and the degree to which boards are functionally captured by their CEOs, and the degree to which they are perceived to be different but not different, And so I think that that's really what that's the issue this judge is bringing up. And because Delaware is the keeper of good corporate, of the law, the standard law of good best practices, corporate governance, it's a situation where superficially it seems absurd, in my opinion, for the court to interfere. But for Delaware is the keeper of the authorities of corporate governance, and they may be asking valid questions about the independence of a given board of directors. And I think that's really the question here, which is the claim is that I am not paying myself this money. I have been awarded this money in a negotiation with an independent third party that is the board of directors, and that is why it is a justified payment. And then the judge is saying the board of directors is not independent, and it was not an independent process. They were effectively coerced, or who knows what I shouldn't say they were coerced. There was a conflict in that process, apparently, according to the judge, and I'm not here to say otherwise.
There are myriad reasons why having a CEO and head of the board, or head of the board of directors held by different people, is a good reason. Harvard Business Review had a survey a number of years ago, right? Why do various people on the board of directors misbehave? 34% of their incidents involved a report of the CEO lying to the board or shareholders. 21% involved a sexual affair relation to the subordinate. 16% involved CEOs making use of corporate funds. 16% involved CEOs engaging in objectionable personal behavior. And 13% involved CEOs making public statements that were offensive to customers. Which is like, okay. So yeah, Musk being the person who's on the board, right? He can obviously interfere with these things, but nothing that the court said is like, well, Musk was not operating independently. He was doing all these objectionable things in his role as CEO, and therefore, as the head of the board or being on the board, it could no longer hold that independence to actually compensate him in a way that's appropriate. Because if it was independent, all these objectionable personal things he'd done, that would denigrate his standing within the company. He would never receive the compensation in the first place. That is not the claim being made here. And we've all heard the stories about Musk and his various dalliances and multiple families he's raising on apparently an estate in Texas. Leave that all aside. That's not part of the issue here, right? This is not about his character. This is about the governance of the company. And in terms of misconduct or, the company not, him not meeting his fiduciary responsibilities, I don't think that Tesla shareholders along the way feel like he has not met their fiduciary responsibilities. Some things have been ridiculous, right? Private funding secured at 420.69. That's obviously nutty, but he met the mark here. I'm worried about
but the judge's objection is just it's too much money.
Just not enough independence. Not, it doesn't matter what the shareholders said. This was done too late. Reinstating the pay package is inappropriate because it doesn't change the flawed process. It's kind of like fruit of the poison tree.
But what was the flaw in the process that the judge claims?
That Musk had too much influence over the board for them to arrive at the compensation package independently.
The board was working for Musk. The board works for Musk.
Right.
But let's assume that the board does work for you. Is that illegal or is that just bad?
No, it's not.
Unethical?
That's the other thing about this. It's unethical, sure. But it's not illegal in the United States. In the UK, there's a corporate code of governance that stipulates that CEOs and the board of directors entirely cleaved off from one another, like you said, so you can feign independence when you're seeking that compensation. But in the United States, it's not illegal. Should it be? Perhaps, right? But is it? It's not. I find these kind of things discouraging, so to speak, because it's a problem that's endemic within Europe. Right? If you are a business founder in Italy or in Sweden, some of these countries are able to tax unrealized gains, for example. And so if you're a startup founder and you have shares that are worth nothing and all of a sudden they become worth a lot, your incentive to stick around is very, very minimal. If you're going to found a company, you're probably not going to want to do it in a place like the European Union. You want to do it in a place like America. So, Musk's antics aside, I find this, quite frankly, egregious. Is it a lot of money? Yeah. Is it more money than any of us would know what to do with in a lifetime? For sure. But this is a contract that's agreed upon, and we need to uphold the laws in this country. And part of what makes a strong market is recognition and the upholding of laws. That way, people who invest in those capital markets have reassurances that they have recourse if something goes against them. In this case, I think this is actually bad. I think Musk is going to get his money. I think this judge is, if we want to make a law against CEOs and the director of the board being different people, then do it. But that's not the case here. Anyway,
it sounds like what this might be is a precedent that then activates. And Musk has referred to himself as the first buddy. That's been his kind of favored moniker
title
for himself. He still remains that. The two of them have not had, at least publicly, come to a clashing of the egos yet. And so, if anything, this seems to create a vector for this kind of a thing to get federal attention. And to the extent that it gets federal attention, and to the extent that the incoming administration is probably favorable, not only were this Musk, but just philosophically favorable to say that the company can pay its executive what it wants. You probably have some sort of action that follows to lock that in. So I agree with you. I think he's going to ultimately get his money. The real question is, does this have any implications for markets? And it's unclear. I mean, it probably depends on how much political capital, and this is probably the only kind of macro layer to this thing. How much political capital is Musk going to spend with Trump on getting this money? And then will he spend any of the political capital that he'll then need for Doge to be some sort of a practicality or some sort of a success?
I mean, I would think if as first buddy, he's willing to split the 56 billion, 26 or 27 billion each. I bet you 27 billion is probably more than Trump has total by quite a good amount.
Well, so therein is, I think, the question. That's where the clashing of egos comes into the forefront. If Musk basically says, to Chris's point, we had a set of rules by which I was going to get this money. I fulfilled my obligations within the set of rules.
But Trump is a known, right? But Trump is also a open and known con man and wheeler dealer. Like, what if I was Trump? I'd say no problem.
Which is where this gets really in.
Give me $20 billion and we don't have a problem.
I mean, that's where this gets in.
Or give Don Jr. $20 billion and we don't have a problem.
If Musk is going to be a principled, this is mine and only mine because of the principle of the matter kind of actor here, but he needs his president-elect buddy to effectuate this.
You guys got to stop calling it buddy.
He did it himself.
That's who he is. He's the first. I mean, can I just go a little deeper on this? Because at this point, in the context of like the Hunter,
don't call me buddy, pal.
Haven't we reached a point where basically the entire, it's obvious that the entire federal government is openly and objectively, the office of the president is a massively corrupt institution, as it is in every country. And so whether it's the Biden family doing backroom deals with Ukraine and then pardoning their son after he does the deals, or whether it's the Bush or the Trump family getting Jared Kushner into a few billion out of Saudi money, or whether it's the Kurd family in Iraq that gets paid off. Like every presidential office is now openly corrupt, and obviously so. So it's such that if I am the first buddy, of course the first buddy's going to get paid. Like that's the reason.
But that goes back to Bill Clinton, right? Bill Clinton in his final hours issues all of these just crazy pardons, and then Dick Cheney comes in with his, the vesting clause, of Article 2 for the unitary executive theory that the executive branch should have like sole discretion over all of its power, and then Obama comes in with all the executive orders. And at this point in time, the Supreme Court says, hey, the president's basically a king when they're in office. They're immune from anything as long as it's an official act. So, yeah,
which means if the first buddy wants to kick some money off to the big man like that, it just makes America much more similar, I think, to pretty much every other executive office of every other government in the world. Going back, and Bill Clinton, began that process. But the point is that Elon Musk will get his money. He just may have to tip out the big man on the way.
He will tip out the big man on the way. This thing about Tesla bothers me, not because, again, I'm no fan of Elon Musk for myriad reasons. Politics, quite frankly, have nothing to do with it. I just, again, I've been calling him P.T. Barnum for years before he made his big political turn. I'm reminded of what was said on the top of my poli-sci building in college. The guy who built or funded the building in the 1920s was an avowed capitalist, F.M. Kirby. And this was being built during the Great Depression. And, in the area, there was a lot of pinkos and communists, and they were protesting the building of this building. So on the top of the building in stone, he had inscribed 4 different quotes. Matthew 20:15, is it not lawful for me to do what I will with mine own? As in, if I want to take my money and build this building, you can't tell me I can't do it. Herbert Spencer's, every man is free to do which he will be provided. He infringes not the equal freedom of any other man. I don't think Elon Musk infringed upon the freedom of people here and shareholders here by enriching everyone along the way. Every man is an architect of his own fortune, from Pseudo Sallust, and whatever so thy hand findeth to do, do it with thy might. Ecclesiastes 9:10. So like in my head from going through college, there's been always this attitude, right? If you have the means to do something and you want to do it, and it's within the law, who is anyone else to tell you otherwise? That's the beauty of America, right? There's no cap, right? It's a blank script. It's a canvas that you can paint on your own. And so when most shareholders approve this, it just, something about it really rankles me the wrong way, Dylan.
I understand why. I understand why. And
it's worth being bothered about because there's only 800,000 contracts traded on ES today. So what else are we going to talk about?
Well, I mean, I'm just interested in what the judge. We don't have the answer. I want to know what the judge's perceived flaw in the process is, because even if it's a captured board, it's still not illegal.
It's not illegal.
So I don't understand how the judge even has I don't understand how the Delaware judge has the right. Did someone file a piece of civil litigation objecting to the payment?
Shareholders did.
Yeah. So that's that. So then, they must have had some reason.
They probably weren't long enough Tesla.
Flawed process. What's that?
So they probably weren't long enough Tesla along the way, right? It's like, why should Musk make more money than us? Hey, we're the one providing the capital here. We can move off this, guys. We have about 10, 15 minutes left here. Let's swing around gold and silver. Ilya, when you and I were talking yesterday on Futures Power Hour, we were talking about how these are dead markets in terms of setups. You could be in a head and shoulders. You could be in a symmetrical triangle. You don't know which way you're leaning right now. So placing directional bets here seems like a fool's errand. As much as a fool's errand it may be in something like silver here too, which while having a fairly good day today, up 2.09%, it still is more or less churning in the midst of a multi-month range, just like gold is. As we look to non-farm payrolls later this week, are these instruments of interest to you right now? Are you expecting something more meaningful to occur, say, tomorrow with Fed Chair Powell's speech? What's your read on the situation right now? Because quite frankly, I have losing positions on in gold. I'm flat everything else. I don't like the setups right now. And so I'm just kind of treading water.
Yeah, I mean, I don't have anything on here at the moment, and I'm not looking to have anything on. I'm looking to see what Powell says and what it does, because to my mind, and I think I keep kind of circling back around this, I don't think he's going to say anything that's earth-shattering. I don't think he's going to change the baseline, which is that we're going to get a cut in December, and we're going to have about a 2-cut consensus for next year. Maybe the Fed will say it's 3 cuts when they update the SCP and only take away 1. Maybe they'll say it's 2, and the markets will broadly say, yeah, okay, that's about right. I don't think those things are going to change on the basis of anything Powell says, because I don't think he wants to rock the boat here. The FOMC minutes seem to clearly indicate the Fed wants to look through data volatility, and there's no reason to go out on a limb right now, especially with NFP coming up on Friday. You could look very wrong very quickly if you come out here and jump out the window with something. So I think you get the same kind of Powell that you got in the wake of the November FOMC. I don't think he says anything different. It's more like, we're not on dovish autopilot. We're going to take it step by step, et cetera, et cetera. But I think that has market consequences. The markets have been working on that, et cetera, for 2.5 months, which is why yields have risen, and bonds, at least let's say the 10-year note, fell by something like 6% in between the middle of September and the middle of November. The dollar rallied by something like 8% in the same period. The markets have been busy with this adjustment. If he doesn't give them fuel for the adjustment to continue, there'll be a tactical reason with basically 2 weeks of real market action left. for the speculative froth in some of these moves, such as it is, to come off. And so you get a weaker dollar, you get higher bonds, strictly because Powell didn't say anything that rocks the boat.
I don't know if we care that much. I mean, let me put this a different way. I care so much because we're going to be on air tomorrow during Futures Power Hour while Powell's speaking. So I would encourage everyone to care.
You got to come watch.
Come out and watch.
What will he say? What will he say?
What I mean I don't care is I don't know if Powell can tell us anything that the market doesn't already know. We're talking about two cuts.
I agree, and I think that's the catalyst. I completely agree. I think that's the catalyst.
And like the market reaction that we had, or lack thereof, for non-farm payrolls last month was widely, I think, in my opinion, was largely due to the fact that you could kind of like wave your wand and say, okay, this number can be explained away. Yeah, it was really weak. Right. And you know, we were talking back in May, June, July about how the NFIB small business surveys were in a direction where historically you'd expect to see, you know, potentially negative NFP numbers by the end of the year. But that's not why we got to where we were. When you look through the data series, you go, oh, the Southeast. Oh, this big spike in jobless claims. Oh, hurricanes Helene and Milton. Okay, let's see if this is going to roll off soon. And sure enough, in the jobless claims data, it unwinds over the course of a few weeks. Jobless claims are back down near the yearly lows. All's well that ends well. And so there's a give back expected here. And so if we get a stronger than anticipated non-farm payrolls report, does it really tell us anything? I think you're really worried about a weaker number, right? We have a bias. We're expecting a bounce because there's a give back from the hurricanes. If that bounce doesn't materialize, that's where you get the resuscitation in those Fed cut odds, which have been nailed to the floor in recent months. We look at the SR3H5 contract expiring in March of next year, and while Fed cut odds have started to rise, they have fallen off meaningfully from where they were at the end of September, when the market was more or less pricing in a 3.4% Fed funds rate by March 2025. Now we're back to what, 4.175% right now. There would be substantial room for this to rise. And if we do see a bump up in the SR3H5 contract, that probably is going to spill over into a parallel shift higher across the curve in terms of bond prices, a shift lower across the curve in a parallel manner in terms of yields. So I wouldn't be playing any 210 spread there. But that is the context I think we need to be worried about. Hot number. Well, Atlanta Fed GDP now is growing at 3.2%. What do we expect? Bad number raises an eyebrow. Bad number on Friday, sell stocks. Good number on Friday that leaves stocks weaker. Fade it, fade it, fade it, fade it, fade it, fade it. The economy being strong is not a problem for corporate earnings. I insist. Guys, we have 7 minutes left here, so let's try to figure something to talk about. But I know that you guys have something to talk about because Dylan.
Well, what about, you haven't talked about oil, you haven't talked about gold, you don't even care.
That's where we're walking into because I know that you like oil. Okay, 2.66% rally today. We're still in the middle of this range. Where are we going? Are we going to leave it anytime soon? Dylan, are we setting up another fade opportunity, or do we just not care when price is discontinued?
We are. No, the fade is coming. The fade is coming. You got the weather, you got the winter, you got Syria, you got 3 hours of martial law in Seoul, Korea. You have probably too much optimism for a Trump peace treaties. And I think ultimately the Trump makes the probabilities of peace treaties higher, but I also think that the market's too optimistic that it'll be easier than people think. And I think all that sets up a nice oil rally going into December that will be a great opportunity on the other side. I was happy to see the little bid there today, but it's obviously not enough to get terribly excited. But I just feel like oil is in a good position to get a little bit of a zip coming into the end of the year, which could be another shorting opportunity.
Yeah, I mean, I'm watching this closely and I'm wanting to be short, and I see no reason to want to get short here and now because we're still locked up in this tight range. And there's no reason to think that anything happens until it does, because here we are. There's been the takeover of Aleppo by the rebels. That doesn't seem like it matters for oil, but it absolutely very much does. It's not easy to see why. Perhaps if you're going to look at Syria and go, well, Syria doesn't have any oil, this doesn't disrupt anything. And then you go, well, wait, Syria is a client state of Iran and of Russia. All of this is interconnected to everything that's going on with the ceasefire in the Hezbollah theater for Israel, where essentially Iran and their patrons in Moscow have taken a little bit of a pounding and were basically forced to yell uncle. And so that's encouraging. We maybe have an encroaching issue in Jordan, but we'll see what that looks like later. It's not actively kind of screaming out of control at the moment, but it is building. Iran is kind of quietly starting to build themselves some new proxies there. But as all of this develops, oil could care less. And it's very difficult to ascribe today's wiggle higher to anything other than oscillation in the same range where it's been oscillating forever now. So that to me says oil wants to break down. If it can't even make hay of this, it wants to break down. Even the stubbornness of the rest of the market seems to have recognized what the three of us have recognized for a while, which is it doesn't pay to overreact to geopolitical risk. So if anything, I'm looking for oil to break the bottom of that range. That would also amount to a breaking of longer term support. That could be a real juicy sell-off ultimately, but it's not actionable yet.
I got to learn more about what's happening in Jordan. And
I'll send you an article.
As a quick anecdote here as we wind down the show. In 2004, I was selected as a student from New York to attend the George W. Bush inauguration, and I was seated at the table with the then Crown Prince of Jordan, Hamza bin Hussein, which I have a picture of, happy to share. He was removed as the Crown Prince of Jordan a few years ago because he tried to foment an insurrection against King Abdullah. So hopefully,
was that something that you suggested to him at the time? Were you like, you're better than this? Were you winding him up?
My lawyers have advised me not to comment on the situation, nor should I travel to the Middle East anytime soon. With that said, overtime is out of time for this Tuesday, December 3rd, 2024. We'll be back tomorrow, same time, same place here on Tasty Live. So for my friends and colleagues, Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. On the other side of a break, there's more Tasty Live coming at you, so stick around. First up, Macro Money with Ilya Spivak at the top of the hour. And then stay for longer because I'm on with Victor Jones for The Price of Truth tonight at 6 Eastern, 5 Central. So see you there, folks. Macro Money coming up next.
See you there, everybody.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there. It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. Like, I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
The markets continue to tread water. It is a quiet day once again as we continue this slow waking up from the Thanksgiving holiday for U.S. financial markets. But now comes the event risk. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we are facing the first batch of what will be meaningful macro risk facing investors this week. So what we are going to do here is take a look exactly at what that is and attempt to unpack what it might do for financial markets all across the board. So not surprisingly here, what I am talking about is, of course, a speech from Fed Chair Jerome Powell that kicks us off. We are going to also get a bit of economic data, which we'll touch on as we go. But it's really this speech that captures the market's imagination here because, of course, we have a situation where the outlook for the Fed has been a dominant consideration for investors for much of the year. And of course, very clearly a driving source of the narrative for the past 2.5, 3 months. So what we'll do here first is we'll take a look at what all of that has looked like and why the markets have done what they've done, and then consider what Powell could say to change the landscape, if anything at all, that is. So here is what the Fed rate cut cycle started with, which is really the essence of the most immediate part of this narrative, in September. This is the latest update to the Fed's forecasting for where rates are going. Note here, first and foremost, the outlook for 2024 is for rates to be at 4.4%. Now, this is, of course, the central tendency. You can see that here. So don't get stuck on the specific number. The key here is the implied trajectory. And at this time, rates are at 5.3%, which is the effective medium or median between the 5.25 and 5.5 setting that is there before the cuts begin. So in saying that we're going to go from 5.3 to 4.4, what the Fed is saying is there will be 100 basis points or 1% in rate cuts this year. It does this as it delivers 50 of those basis points up front in September. That leaves 2 policy meetings and 50 basis points to meet the forecast. That's 25 basis points apiece. The Fed could not be clearer then in announcing this when they do, that the path for the rest of this year is pretty well set. They then look at next year and say, we're going to go from 4.4 to 3.4, meaning the following year is going to have another 100 basis points or 1% in rate cuts. This is where the markets look at what the Fed has said and go, right, okay, does this sound right? Does this sound reasonable? And of course, by then, they look at an economy that is beginning to show some steady signs of improvement. We see here that from late August, U.S. economic data starts to improve relative to expectations. And the economy starts looking increasingly strong. This is where the Fed meets, second half of September. By then, the market is already looking and saying, well, okay, they're going to cut 50 basis points. They're going to basically talk their way into 50 basis points more by the end of this year. And with only 2 meetings left, there's not a lot of discretion there. So that's probably a given. And they're telling us 100 basis points next year. But if the economy is getting warmer, how likely is that next 100 basis points? Well, if inflation goes up because they're cutting rates at a time when the economy isn't cooling, that probably means that whole 100 basis points won't happen. So what you see in markets then looks a bit like this. Here's where the Fed rate cut cycle starts. So you figure that 233 basis points here include 100 basis points for this year. Here it is. And another 130 basis points then for 2025. Here's the 50 basis point initial cut. That gets you over here. You then get a further cut of 25 basis points in November. And you are almost certainly looking at another one coming up in December. While this says that the likelihood is only 12 basis points here, this is a bit of a bit of an inaccuracy in the sense that what it tells you is the likelihood that you'll get a cut at some point in December, but if you were to actually line this up to when the meeting itself is occurring, that is the probability that there is a cut on the date of the meeting, well, that starts to look a lot more certain, 70-30 in favor. And so the cut there seems pretty much a done deal. As the Fed would have anticipated, then over here, that gives us 100 basis points in rate cuts, and at least that much seems uncontroversial. But look at what's happened for the rest of this. If of this 233 basis points, we can see right here, about 100 is a given and off the table now. 75 basis points done, another 25 basis points almost certainly in view in about a week and a half. That leaves 133 basis points here in rate cuts for 2025. That's in excess, by the way, of what the Fed's own forecast says, which is 100. In that time that the markets have assessed this against this improving economic data, what's happened is we've basically halved that and gone to about 60. So the markets have noted what the Fed did, interpreted it, and said, this means that you're not going to do all the rate cuts that you think you're going to do. And indeed, we can see this adjustment taking place over the past 2.5 or so months. This up here, these are inflation expectations implied in the bond market. They're break-even rates, so-called. They represent the adjustment that it takes to get from nominal yields, which is what you typically quote when you talk about just the Treasury bond yield, and real yields, which are TIPS yields on equivalent Treasury bonds that have been adjusted for inflation. If you take the difference in those yields, you get the inflation adjustment. So you get what the bond market expects inflation to be. In this case, we have the 5-year break-even here, the 10-year break-even here. You can see they've been rising, showing this increase in inflation expectations through September and basically going into now the middle of November. Only recently, only in the past maybe week and a half, 2 weeks, have we seen a bit of a backstep. So you can see here the markets are pricing out higher inflation. That's giving you higher yields. At the bottom here, we have the 2-year yield and the 10-year yield. So we have a parallel rise in yields across the curve. The dollar also rallies because, of course, higher yields give it a juicier yield advantage against other major currencies. And so with this, you get the sense that it's not really the December meeting that's controversial at this point. That much, again, seemed to be relatively baked in here. In fact, speaking after this September meeting at the press conference, Powell was asked where people should look for next steps, and uncharacteristically said, oh, just look at the summary of economic projections, which is not usually something that the Fed it goes out there to actively promote as a source of truth. It likes to instead say, oh, well, these are just our forecasts. And in any case, they're not group forecasts. They're policymakers' individual forecasts. And then we take a central tendency and a median. So this could vastly change. And in fact, if we look at the breakdown here, we can see that there was quite a bit of consensus around the call for 2024. Most policymakers felt pretty good about that 100 basis points. The dispersion for 2025 is much more subject to change. It tells you that there was a lot more diversity of views here. And indeed, we see that while the markets still clearly think the Fed is going to deliver on the 100 basis points that was promised for this year, The outlook for next year, much more so on the move as we get this readjustment. So really the question here is, will Powell say something when he speaks this week? He's due at the New York Times Deal Book Summit tomorrow. Will he say something to keep this readjustment going? And the temptation might be to say, well, that yes, maybe he will. We have now had 4 consecutive months without disinflation. You can see here, looking at the breakdown for the consumer price index, the most recent update on inflation numbers that we have. And we can see here, most inflation lives in the service sector. It's generally gone from both energy and from the goods side, and the food side is relatively stable and small. Inflation at this point lives in core services. And over the past 4 months or so, it has stopped going down. It has either gone sideways or ticked up a little. And so what you have here then is the kind of thing that might get the Fed to go, well, maybe we don't need to cut as much. Maybe we don't need to do all of what we said. And were this to be novel, perhaps that would be market moving. But of course, the markets have been doing this already. And as we've heard from the Fed itself, it has generally agreed. In fact, Powell himself, in speaking after the November FOMC, seemed to acknowledge that the Fed doesn't need to run away with anything aggressive here, that things can happen incrementally and that they're not on autopilot. We heard the same sort of forceful repositioning in a speech just a week later, where he had a policy speech in Texas and talked about we are not on dovish autopilot. We are going to take it step by step. We still very much want to get to 2% inflation. And although we don't at this point seek to weigh down on economic activity any further, so we're in cutting mode, nothing is to say that we have to move at any given meeting, and we're going to be data dependent. So we've heard the pushback already. And the market has seemingly sniffed that out because, as we just alluded to moments ago, we can see inflation expectations have come back down. The dollar has pulled back a little bit. Now, of course, the trend moves here are very much intact. It's just that new momentum seems to be absent for now. In fact, bond yields have started to edge back. And so really the question here is not so much will Powell admit that the Fed was too dovish in September. He's already done so on multiple occasions, as have other policymakers. And indeed, November's cut, despite being a cut, carried a significant revision in the verbiage, as it were, that suggested the Fed needed to walk back some of its more overt dovishness. So how likely then is Powell to rock this boat? Is he going to say something that reiterates perhaps with greater conviction that the Fed is still very much minded on inflation, that the Fed is going to perhaps give markets reason to dilute rate cut expectations further beyond having them from basically 130 basis points to now 63 for next year? And the clues to the answer seem to show up in minutes from November's meeting, which have just come out. And the way that these meetings are recorded in the minutes, we get a kind of editorializing and then a sort of coded language that says how consensus a given view is. So it might refer to several policymakers thinking XYZ thing, some policymakers thinking something else, And then when you get a signal of, let's call it conviction, rather than referring to a few or even many policy makers, you might get reference to most. You might get reference to a large majority. You might get reference to almost all. And this is where I get some of these choice comments here that I've pulled out that I think give us a sense of where the consensus is. So first, almost all participants judged that the risks to achieving the committee's employment and inflation goals were roughly in balance, which is to say that despite inflation getting a little bit stuck on the way down over the past several months, policymakers still think that they're on track to get where they need to be going. Next, almost all participants judged that though month-to-month movements would remain volatile, incoming data generally remained consistent with inflation returning to 2%. This takes the point further and says, don't get stuck on volatility in the economic data. Which is to say, even though we might get some stickiness in inflation, even though we might get a wild swing in the jobs report, of course, we'll see how that goes with revisions this Friday, but October's jobs report at only 12K was a massive outside of consensus, outside of norms kind of number, which was very quickly written off as being a function of hurricanes and strikes, mainly at a company like Boeing. And so the Fed is very clearly saying here, don't over extrapolate any near-term twitch in the data this way or that. It gives you a consensus saying they are indeed still biased to cut. And then furthermore, a large majority of respondents had a modal expectation of a 25 basis point cut in November and December, which is to say that there really is no risk to the near-term December view, at least, as we've surmised here. All of which is to say, the Fed does not look primed to want to rock the boat, and the markets have already moved to take out half of the 2025 forecast. Which is to say, Powell probably has no reason to want to get any more assertive and is likely to say not much at all. At least not much that is new for investors. With that, you also get a piece of data seemingly following in a similar direction. The first bit of notable economic data also comes tomorrow. It'll come ahead of Powell by way of the service sector ISM report. The expectation here is we're going to cool down just a bit to 55.5 from 56. 56 in the previous numbers was, of course, the fastest pace of service sector growth that we have seen in over 2 years. The expectation here is that we're going to come back just a little bit from that and remain, obviously, at an economic setting that is quite robust. Now, we got the manufacturing side of this equation earlier this week. As we can see here, it's in contraction mode still, and as expected, below 50 on these PMI numbers means that sector activity is contracting. Above 50 means it's expanding, and the further you go in each direction is a indication of pace. So the further you go above 50, the faster the expansion. The further you go below 50, the faster the contraction. In this case, we were expecting a faster contraction in the manufacturing sector, 47.5. We got 48.4. So contraction, yes, but nominally better than expected. And indeed, if we take a look at the internals here, we can see that the price component actually came down. That's encouraging. Meanwhile, new orders grew for the first time basically since January, and employment shrank at the slowest pace since mid-year. So it's contraction, but the internals seem to suggest that there's some green shoots happening here, all of which is to say we're unlikely to get something that is tremendously negative out of the service sector side. It doesn't look like the economy more broadly looks to be hampered in some sort of way. Moreover, as we saw earlier here, U.S. economic data has tended to surprise on the upside, but maybe has started to see those economic models at the basis of the forecasting start to readjust for the disparity, which is to say, if the economy keeps beating expectations, at some point people need to revisit the expectations. Say, well, the economy is very plainly hotter than we thought. The model itself needs fixing. That typically gives you a period where the data starts to cool relative to expectations because the expectations themselves have increased. That may be happening here, or starting to happen, as we go through the 20-day or about a month-long moving average for this index. It tends to be about a month's worth of data that starts to get the dials turning on a model readjustment, because there's about a month's worth of a data cycle that analysts need to look through to get the conviction to do those things. So when you look at all of this, you get the sense that chances are you get a relatively supportive ISM, but probably not one that's a barn burner. Probably not one that meaningfully changes policy expectations. And so if you get a relatively staid speech from Powell and a relatively benign ISM number that doesn't ultimately change the calculus, what you end up with is exactly the kind of stasis that allows a correction like this to continue, because the speculative narrative still looks to be out of fresh fodder. And if you've been riding these moves for the past 2.5, 3 months, maybe you're minded longer term, or maybe you're just looking for a tactical opportunity, and now the narrative on that tactical opportunity has been fully baked in, at least in its sort of initial phase, pending further evidence. And in the absence of that further evidence, maybe the dispersion continues and that tactical money continues to come out of the market, which is to say, you get a further pullback in the US dollar, a further pullback in yields, and a rise in bonds. And that's assuming neither Powell nor the ISM do much of anything at all. That is macro money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm on with Chris for Futures Power Hour Mondays and Fridays. On with Victor Jones for The Price of Truth tomorrow. Back with Victor and Tom for First Call on Sundays. Writing for the news and insights portion of tastylive.com. In fact, this very analysis will be there in written form today. I am also opining sporadically on the platform formerly known as Twitter and on Blue Sky at Ilias Pivak. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
If you missed the live show, here's our cherry on top weekly recap.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me. Yeah, he could go down under,
Tom's gonna give me a hard time for this.
can't believe I'm going to say this. I'm in a vulnerable state right now, so I'm going to say it. Taking tap dancing lessons.
Hold on. What? The two of you are doing tap dancing.
Yeah.
Oh my God! I want to come watch. Please, can I come watch? Don't make me come to your rehearsal. What do they call that? Not your rehearsal.
Oh yeah.
Oh yeah, you're coming.
Graduation, like his graduation.
My recital.
Your recital.
Yeah, when I do my recital. Yeah, you're coming.
That's the freaking best thing you've ever said.
You're coming.
Come.
Ew.
And how do you cook them?
Oh, I have a system down. I cook them in.
Jesus, blessed. I can't. I almost fainted. I took your crap all freaking day long. I am not taking this. I want to get to Johnny Trades and I want to go.
Get the full scoop by checking out the archives at tastylive.com.
What is going on? And welcome back to the Bad Taste segment. Today's Tuesday, getting closer into that Santa rally. It's December, first week of the month. How are we doing today, Julia?
I'm good. I'm not about to go against the Santa rally. I have, Gus called it my middle school portfolio because it's literally all market indices right now, which is great. But it's been a pretty boring day for me, actually. How's everything going with you?
I hear you. Pretty boring day. I mean, was trading Starbucks a little bit, but other than that, I feel like I always trade an elementary school portfolio then if that's the case. So
kind of, right? Yeah. I mean, it's a lot of shares, to be honest. I have a couple put spreads on. I have a put spread on in SPY. And then I got this gold position that I've been trying to get filled. Maybe that's a sign. You know, the last time I couldn't get a gold position filled, once I finally did, it took a big loss pretty much immediately. Don't love how close we're getting to, interest rate decision, because I'm expecting, we've had more, decent amount of volatility in gold as a result of those announcements. But that being said, It seems like markets kind of pricing in what seems to be at least the most likely. So maybe it won't be that bad, but I don't know. Loan, organic farming, awesome to see you guys. How's it going? How's everything going with you in the indices, I take it?
I mean, took off some of the positions in the indices. I mean, one played out really well. I had a out of the money put spread that I had sold. I took that off the end of last week. And, the Santa rallies, helped into my favor a little bit in there. But other than that, I usually am always having either a QQQ position on or a SPY. So I need to get one of those on there this week. But we're already near all-time highs. So I've never been a fan of it. I've never been a fan of trading all-time highs. I'll do it. But it feels like one of those trains where it's like, all right, I want to jump on, but I don't really know when. I know I'm not, trying to time it, but that's how it feels trading at all-time highs. So I'm not fond of it, but, I'll take what I can get. Yeah.
I get it. I wanted to do a piece about that, and then Tom kind of poo-pooed it a little bit. But it's a really interesting concept. That? Well, so I wanted to look at, because I'm on Bad Taste tomorrow morning. Instead, he said like, it's kind of a boring piece. So I'm going to torture him instead. We're going to be talking about quantile plots. I'm very excited for that. But it was going to be, I hear this a lot, right? I hear it a lot on social media, which is that like markets are at all-time highs. I feel weird getting in right now because or I've heard this before, like, NVIDIA's at X price level. I feel weird getting into it. And what I have found out, or what I've at least studied, at least with the market indices, is that just because something's at all-time highs doesn't mean it necessarily stops. When something hits all-time highs, there's like a 70, at least for SPY, like a 70-something% chance of hitting all-time highs again within the next 2 weeks. But that being said, it's just positive drift, right? In action. And the positive drift doesn't typically care what price level we're actually currently at, which is actually a really interesting problem. Nothing protects against positioning, though, appropriate position sizes. And that being said, when we're smashing through all-time highs, right, like vol can be quite low, which we're seeing actually exactly right now. VIX is at 13.3. That doesn't necessarily mean it's juicy for premium, and you just have to be even more cautious about sizing in that case. But it's a really interesting problem, or really interesting thought, yeah.
Was that the piece that you kind of wanted to get into tomorrow? You should do it.
I thought it was a cool concept. I wanted to look at, something, if the market's at all-time highs, does that, provide a basis for a directional assumption? And Tom's like, meh, it's just positive drift. So I'm like, fine, you're getting quantile plots instead.
Yeah. So wait, wouldn't that still be positive drift? Wouldn't that still be an argument for one side of the argument that maybe that there is something there when trading all-time highs, whether it's positive drift or not. But anyways, the data would be really cool to look at.
That it doesn't necessarily look at how fast the market's gotten there, right? So if like the market's up 30%, if it's up 10%, or sorry, if it's up multiple times its annual percentage in the last so for example, this year it's up 30% approximately. The S&P is up 30% year to date, which is about 3 times more than what it returns on average in a year for historically long-term averages. If that level of price growth, is that indicative of directional assumptions, or is that indicative that we might see a reversal or a continuation? It's all very, I don't know. It's not for every style of trading. If you're kind of more of a long-term investor, it kind of doesn't, the short-term sort of noise doesn't really matter as much. But it really depends on your style of trading. I think what I might talk about a bit more tomorrow is market regimes. We talked about that today on Bad Trader. It's a really interesting conversation, which is sort of recognizing that the market tends to transition between different states that tend to exist for a sustained period of time. For example, a bull market, that's a type of market state. And we don't know how long the bull market's going to last, but we have tools that we can use to identify that regime. And then when we switch into a different regime, when we switch into a bear market or a sell-off or crash, those have fundamentally different properties, right? And so there's interesting tools for kind of detecting what regime we're in and whether or not we've transitioned into another one. And it all kind of ties together with some of the cool models that we use. Quantile plots, I think, are a cool way of showing that. But yeah, it was a really interesting conversation and cool piece today over on Bad Trader. We're going to upload that later. Listening live from Costco, Lynn, that's awesome. But we've gone through pretty much every regime that you could imagine, actually, just in the last 5 years.
Yeah. When you say regime, is it more so just the current market environment, or? Yeah. Okay.
If you think of a regime as a way, it's the market's state. So and there's no really known or agreed upon number of how many states there are, but academics, financial professionals kind of agree on somewhere between 2 and 4 market states. So when I say we've gone through every type of regime there is, in 2020 we had a crash. And then we had kind of we had a bear market in 22. And then now we're in this crazy bullish rally, right, that we've had for the last over a year now, right? And we've also had sideways markets, right? So we've kind of had every kind of market regime that you can have just in the last 5 years, which is great for learning. It kind of sucks for trading. That's the whole point of Bad Trader, isn't it?
Yeah, no. I mean, I guess there's the pros and cons. I mean, I guess being able to trade through all those regimes, it gives you a little bit more experience, a little bit more of a taste of the unknown, I guess. Because one thing that is a shock, I know I got into selling options, what was it, early 2021? The market environment completely different from when I first started. So just going through those few years, it gives you a good taste of, things don't stay the same. Things are always adapting to something. So anyways.
For sure. But that's part of why I love what Lone just said. I have 2 states, stonk and donk. Those are the 2. But I think people who have been trading for a long time, they kind of have an eye for recognizing this. And but it's still tricky to do, even if you've been trading for a long time. And I remember back in 2020 when, the market crashed 30% in a month. We were having some really dramatic moves. But I remember the conversations around the office of I can't tell if we're in a sell-off yet, even after we've, had a couple big down days. So even if you're experienced as an investor, you've maybe come to recognize these states, but it's still really tricky to do in real time. So that was kind of part of that broader conversation. How can we use math for maybe this regime detection? I'm deciding how much I want to torture Tom tomorrow. Tony's usually a pretty good sport about it, so we'll see.
We'll be looking forward to it, Julia. I think the all-time high. I think that's a very relevant topic right now, especially with the Santa rally. I feel like that's been the talk of the town, especially in the Bad Trader chat. So I think we'd all find interest in it.
So we shall see. A whole lot going on. Actually not. A whole lot could be going on.
I did get into steel today. That is something else that's
you got into US steel?
Yeah, we got into some US steel. The premiums are pretty decent. I sold them at the expected move for about a 73% pop, and then we're just going to try and manage best we can. That one of those extremely sharp sell-offs, I got caught in live on stream, which was crazy. But I was like, you know what? Although it happened once, yes, it can happen again, but I'm not going to let that make me not touch the product again, but I did sell a strangle on it. January 17th cycle as well.
Dude, these premiums are pretty. I mean, I will say the spreads are not great. I wish the spreads were a bit better, but these premiums are pretty juicy. This is an interesting find.
They're pretty juicy. The spreads definitely could be a little bit better. They were fluctuating, a lot as we were putting the position on, but we got a decent premium for it, and it wasn't too bad. So we're gonna take a shot at it and just manage it on stream. So if anybody wants to tune in and see how we manage this, whether it's a green trade, red trade, we'll do the best we can, roll the untested side, see whatever we can do. It is a strangle, so I got to stay a little bit more on top of it, but it's a cheaper underlying if you do have a smaller account and wanted to, go undefined risk on something. Steel is usually the one that I choose.
Yeah, I'm going to check this out tomorrow actually on the open because I'm looking at this. The spreads are not great. But that being said, it's
best.
Still just at the expected range. It's also within the range that it's kind of been trading in since August actually. This is a really interesting find. E, good job.
Thank you. Yeah, we'll see how it works out. I don't have the best time with steel again. I think that last sell-off, there was some type of deal that didn't go through. That sharp sell-off, I forget what month that was, but I got caught in that one a month ago.
Yeah, it's got a stink.
Yeah, we managed it live on stream, but we always at least learn something from it. So we'll manage it best our abilities this time around.
Neat, yeah. Oh man, this is kind of cool, especially when we have the market indices trading at very low vol levels. Ivy rank for SPY is 6, for the Nasdaq it's 3, for the Russell it's a bit higher, it's around 21. So yeah, just finding stuff to trade right now. This is a neat find. Nvidia is at 6, AMD is at 2. Oh man, y'all. SMH is a little higher, around 20.
SMCI,
I don't know if I have a death wish. Around 49, down another 4% today. Man, I kind of got a little FOMO in this, man. Especially when it jumped 30% in a day.
What were you talking about, from a couple days ago or what?
It was yesterday.
Yesterday?
Yeah.
Any type of significant news, or was it just that sector was just a little hot yesterday?
It's SMCI. There's always news kind of coming.
It's SMCI.
It's just SMCI.
Valid answer, yeah.
Crazy mover, this one. This was the Tasty Fast Movers list. Let me see this real quick. There's sometimes Palantir. It's been popping off. Let's see, Micron, Broadcom, Oracle, VST, one of our sleeper builds, has been truly all over the place. Actually kind of in a sideways channel as well. That's kind of interesting. What else? Yeah, my positions, I'm just I'm calling this the middle school portfolio, which is just, put spread and SPY. I'm trading IWM, QQQ. Gold, I think, is an interesting one. Because again, I feel like we have, the market seems to have the next interest rate decision priced in pretty well, in my opinion. And it's been in a sideways channel. I'm expecting inauguration day to be another major catalyst beyond interest rate decision. That being said, looking at the January 17th contracts, that's if you're managing halfway to expiration, that's pretty well before inauguration day. So I thought this could be a really interesting one. When gold moves, it really moves, but it's actually been relatively sideways, which has inspired a little bit more confidence to have a bit more of a directional assumption. It's this kind of run up, this kind of momentum, I guess you could call it, where I have a harder time making, especially a contrarian directional assumption. But when it's been a bit more sideways and the binary events surrounding this underlying seem a little bit, in my opinion, accounted for, I'm a little more comfortable trading it. So I think this could be an interesting play, but my position, unfortunately, did not get filled, which is very sad. Or maybe a sign. Maybe this is a blessing. Oop, we lost E. That's okay.
Oh, there we go.
Hi, you're back.
I think we're good to go. All right, there we go. No, what I was saying was whatever is meant to happen was supposed to happen. So maybe gold does something crazy, but hey, you got your 3 indices on, and I think you're in a good spot.
We're doing okay with the middle school portfolio, but we have about 15 minutes left. I want to make sure we have time for everything and a tradle if we possibly can. So do you want to hop into some slides?
Yeah, let's do it. We got a couple trivia questions for today. Under the title, or not the title, the theme Santa rallies. So one's about the equity market, and then the other's about the crypto. So that's what we'll get into today.
I got screwed on the Santa rally last year, so I am not underestimating it this year. But let's take a look. First things first, we do have an app over on the App Store and the Google Play Store. We got some really cool trading features on there and some cool updates that are hopefully coming out this week. We'll see. But if you want to come find us, we're in the App Store and the Google Play Store. We would love to have you. And then as well, if you want to come throw your trivia answers in chat, you can find us on Tasty Live's YouTube channel at Tasty Live Show. If you want to follow us on Twitter, it's at @BadTraderApp. There's some pretty cool pieces of information that Luis digs up and puts on there. So you can find us there. So we got Santa Rally. Let's get into it.
Yeah, Santa Rally for today. Number one, what year had a surprising absence of a Santa Rally with the market declining during the expected period? Number one, we have 1999, 2002, 2018, and 2021. I felt that a multiple choice answer for something like this would be a little bit more useful, helpful, however you want to call it. More appropriate.
Actually.
I think that's the appropriate word.
Okay. With the Santa Rally from Lone, we got 2021, our first guest coming in. This is tricky.
Okay.
Tricky. Okay, because could have been 22, because like the dot-com bubble, I believe, was still popping in 22. So it could have been, that would make sense to not have a Santa Rally. 99, I feel like the dot-com bubble was raging pretty hard. So that one would make sense for a Santa Rally. 2021, I'm trying to remember. We were rebounding from the COVID crash still, I think, in 2021, towards the end of 21. And then I think it was like right at 2022 when I've looked at this data so many times and I'm just trying to remember. So yeah, 2021, I feel that we were still recovering from the COVID rally. I don't remember if the COVID sell-off. I feel like we were having a strong rally then. 2018, I don't remember if it was noteworthy or not. But I'm pretty sure.
I think 2018, I wasn't even looking at indices. I think 2018.
I was definitely not looking at indices, but I'm pretty sure it was like 2017. We had like a crazy bull year. Like for whatever reason, that number, I could be mistaken, but for whatever reason, I remember 2017 being a really, really, really strong bull year. So it would make sense for 2018 to maybe cool down a little bit. But I'm trying to boo. Organic farming, thank you for joining us, has also said D. And someone's joining us from Costco. I think Lone is over in Costco right now, which is great. And everyone's just gushing about Costco in chat. Okay, guys, let's see what we think. I don't know. I feel I might be a contrarian. I don't know. I feel like 2002 is maybe rationally at least the one that makes the most sense to me. So I'm going to say 2002. Could that be the guess?
We can jump to the next slide. You hinted at it, Julia, and I liked your thought process for it. But this one was C for today. Fun fact, 2018 concerns over Federal Reserve rate hikes and trade tensions overshadowed the usual holiday optimism. And then obviously a Santa rally isn't like the optimism and you can pretty much what I'm saying is you can bring many reasons why maybe we didn't get it that month, but this is just another fun fact to add to the question. So 2018 for the first answer.
We're learning a whole lot.
Yeah, we did have a really, 2017 was a pretty solid year. I remember that's the year I graduated, and
that's a great year.
That's the year I discovered what the stock market was, actually, 2017.
The best year ever, or maybe the worst year, depending on how it went. Very cool.
Perspective.
I'll love it. Amazing. Okay, let's go on to the next one. Here we go.
Cool. Which year saw Bitcoin's strongest December performance, contributing to the idea of crypto Santa rally? Of course, we have to throw some crypto in it. Crypto is very relevant right now. But we have A, 2013, B, 2017, C, 2020, and D, 2021.
This is hard. It wasn't 2013. I think it was created in 2012 officially. We have a poll running in chat, so if you want to go through your answers over in chat, feel free to do that. What do we think, chat? Which year saw Bitcoin's strongest December performance contributing to the idea of a crypto Santa rally? We got B from Lone. I think that's a really good guess. C is 2020. Okay. D is 2021, and then A is 2013. And I'm trying really hard to remember the first time Bitcoin like really popped off, and I think it was 2017. But that does not.
Did you?
What?
Were you familiar with crypto or Bitcoin 2013, 2014, that kind of era before, like pre-2018?
I actually was, because I went to school for engineering, so I had a bunch of friends who would like mine it for fun, who, if they found their drives, would probably be very wealthy right now. So, but it was still like, so I knew about it just because, I was, friends with people who were interested in it. But otherwise, like I wasn't out here buying Bitcoin. It was still kind of I think back then it was still basically for like dark web stuff, like drugs and whatnot.
But you were familiar with it though,
I was,
Yeah.
But what are you going to do? What do we think, chat? Oh, that just made it so much worse. Oh, my God. We'll deal with that later. We have C because crypto starts with C. I love that as well. We got two Bs, 2017. It's not 2013. Pretty sure there was a big rally in 2017, but I don't know if it was the strongest December. I'm trying to think when it really, really popped off. It might have been 2020. I'm also trying to remember when Nvidia popped off, because I remember when like everybody got into Bitcoin mining. That's when for me at least, Nvidia started to really take off because everyone was getting GPUs from them.
Yeah, that's when Nvidia became relevant into my life.
That's when a lot more people started paying attention to it. But I think investors had been sleeping on Nvidia for years, and here we are. But so 2017 or 2020, it could be 2021. No, Bitcoin, didn't it sell off in 21? Oh, poop. I don't know. I'm just going to go ahead and give my guess. Two people said 2017. Mike said 2020 because crypto starts with a C, which is, I think, great rationale.
I like that.
I do like that. I also kind of think, for whatever reason, I feel like the really big pop to like 70K was in like 2020 for whatever reason. So I'm going to say, is it C? Is it 2020?
Let's check it out. I like the rationale. C for crypto. In December 2020, Bitcoin surged to its all-time high above 28,000, driven by institutional adoption and retail interest. So whenever we got to these levels, it's almost like we saw, again, a little bit more adoption from bigger money in the market. So it is interesting to see how, as we take the newer highs, which was around, 70,000, it's cool to see bigger institutions and other corporations like MSTR still believing in the future of crypto and Bitcoin as a whole, based off of them still loading up positions, and then their stock performing really well because of that. But anyways, we are correct on the day. It
Very
is
cool.
C.
Oh, we love that.
Yeah.
Good job, guys. Grumpy Mike got it for the dumbest reason. But it's okay, guys. Really great job. Poll actually got it. Poll said C was their answer when we actually ran the poll over in YouTube. So thank you for doing that. Oh, super fun. Oh, these were good. I think I'm 50%, but it's better than 0%.
Yep, no doubt.
Hey, great job, guys. Really well done. Know their stuff. People know their stuff. Do we want to try to do a tradle?
I think we got time for that. We don't need to have a hole in one. I would like to have a hole in one, but we have a few more minutes left here. So I think we'll have enough time to really critically think through this one.
Let's give it a go. Okay, let's see if I can share my screen. It should be adjusted now if y'all want to pull it up. Can you see that okay?
Looks great. We got 7% corn, seed oils, refined petroleum. We got everything. Insulated wire.
Yeah, this is going to be a hard one because it's $5 billion is what we are dealing with. But okay, everybody, if this is your first time joining us, we like to play a game called Tradle on the show if we have time. So this is very similar to Wordle, where you have to take the export distribution of a country and guess which country it is. So this country has about $5 billion in total exports. 7% of that is corn, 10% of that is insulated wire, 11% is petroleum. It looks like we have apples and pears in here. We got wheat, we got nuts, we got grapes, we got sunflower seeds. Looks like we got some textiles, women's coats, women's suits, knit t-shirts, house linens. We have some industrial products in here. A lot of wire, actually. Electrical transformers, air conditioners, wine, fruit juice, liquor, so some liquidy stuff as well. We got seats and mattresses. I don't know what seats means. I'm trying to picture like a seat right now. Is that like whatever?
Okay.
But
that's an
we're gonna make a
category.
guess. What'd you say?
No, interesting category. Moving on.
Dude, apparently just export classification is wild. I want to get into it at some point because we'll maybe make a piece about that. It's kind of cool. We also have some vaccinates, whatever this is. chemical products, pharmaceutical products as well. And so now we got to guess which country this is. 5 billion's small. It's not the smallest we've done, but I'm kind of the corn. Is it corn?
Corn. Where do they farm a lot of corn? Where is that? Like Idaho?
It could be Mexico, but I feel like Mexico would be a lot bigger than 5 billion.
I would say so too.
You want to say Mexico?
5 billion. Mexico's got to be. I mean, we could say Mexico. At least it'll give us, a starting point so that we can get an idea of where we're at.
I feel like Mexico should also have a lot more cars. I think Mexico's a lot bigger.
Yeah.
Cars. Oh man. Insulated wire. Yeah. Famously known for their insulated wire. Maron. Okay. Well, we can start with Mexico. I don't think it's Mexico, but we can just start with that just to get a guess on the board. Okay, we are nowhere near Mexico. So we are 50% of the way there, about 50% of the way there. It's 10,000 kilometers directly to the west. To the east. So we are very west of the target country. I'm trying to think of it's like literally on the other side of the world. It's like exactly on the other side of the world almost.
Okay, how many questions until we have the ability to pull up a map?
Well, so the house rule that I use is if we get more than 90% of the way there, we can pull up a map.
Okay.
So
valid.
I don't know, chat. What do we think? It's right on the other side of the world. So that's is it close to Bangladesh or something? I feel like Bangladesh would be a lot bigger and it'd have a lot more textiles, but that's kind of on the other, right? On the other, ooh, I don't know my geography. You want to try Bangladesh just to get a bit closer?
Yeah, it should be better than 46%. Bangladesh.
Okay, it's not even
70.
Okay. Yeah, my geography.
I mean, that's better.
It's better, but it's not. I thought it was going to be a lot closer. Okay. So we're to the northwest of Bangladesh. We're 6,000 kilometers away. We're 70% of the way there. Like Nepal? No, Nepal is further away. No, it's further. I think we're in are we in Eastern Europe at that point? I think we're pretty close to Eastern Europe. Is it like Albania or something?
Albania.
Famously known for corn?
Albania. Where is famously known for corn? We have 11% petroleum, 8% seed oils.
Right? I'm not getting a lot of. We got sunflower seeds, pitted fruits. India, bro. I feel like India would be way bigger than this. We're dealing with a $5 billion exports, $5 billion in exports, which is pretty small. Is it are we in Eastern Europe? Or are we in the Middle East? Moldova. Do we want to just try Moldova?
Yeah, let's try Moldova.
Let's try Moldova.
Garbage Mike's having 2 conversations. Any good snacks and samples at Costco?
Oh my God, it's Moldova!
No way.
What the?
What is going on right now?
What the fuck just? How did you get that? Oh my God! Organic farming got it immediately. That is awesome. Oh my God. Moldova.
Yeah. Who needs a map? We didn't even get a 90% or an 80%. We just.
That's crazy. How did you get that? Oh my God. That's wild. Oh my goodness.
That caught me off guard so much.
That's such a good guess. I don't know. Okay, I don't know geography. Apparently, that's crazy. I can't get over that. Oh my God, that's amazing. Great job, organic farming. You know your stuff.
See, organic farming needs to be the new Bears head coach. He makes better decisions.
Dude, the next time I'm just going to ask them up or down. And then depending on what they say, I'm just going to lean my entire portfolio that way. Up or down. Yeah, there you go. That's crazy. I can't believe. And 3 guesses, too. That's got to be one of our. Well, we got one right immediately, first guess. I don't think we're never going to top that. But 3 is pretty good. We usually take at least 4 or 5.
Especially with the first 2 being 46%, then 70%, and then 100.
That's crazy, dude. Oh my God. Really great job, organic farming. I'm listening to you for geography advice or I don't know, information. Oh, that's awesome. Well, great job, guys. I feel like I learned a lot about Santa rallies and Moldova.
Honestly, just imagine the geography education. You're accumulating slowly. Now I know. 4.9 billion in exports, Moldova.
Famously known for corn and insulated wire.
And seed oils. Yep.
That is absolutely hilarious. I can't, dude. I'm never playing this game again. I'm just gonna stop here. This is the peak I will ever get.
When I saw it load all the way to 100, I was like, what the heck?
Amazing. Oh my God, I can't. But guys, thank you so much for joining us. Is there anything that you want to leave on before we get out of here?
No, that'll be it. Again, as always, thanks for taking the time to hang out with us today. We'll see if we continue the Santa rally, but the markets are looking pretty bullish so far, so we'll see what we get. But that'll be it for me.
Hey guys, thank you so much for joining us. I'm going to be back tomorrow at 8 a.m. On Tasty if you want to catch us over there. We'll be back on Thursday after taking a Thursday off. So thanks again for joining us. Thank you everybody for joining us over in chat. It was awesome to see everybody here. We'll catch you later and see you soon. Peace.
Peace.
If you missed the live show, here's our cherry on top weekly recap.
Nick, I'm curious. On your birth certificate, I've always wondered this. On your birth certificate, is it Nicholas or Nick?
It's Nicholas, yeah, Saint's name. But I will say Frankie in the chat calls me Nikki, Nikki, like a woman's name. And I don't know where Frankie's getting this from. I don't know if it's like just a typing thing.
I had a friend at a previous firm. We were working on the technology development team with a Russian counterpart. He was speaking to a person called Ilya for 6 months. I go over to St. Petersburg, Russia. I come back. This person asks me, hey, did you get a look at Ilya? And I go,